Hey,
Hey,
how are you, my friend? Welcome to Forex Focus. I don't know, first-time viewer, long-time listener, or what do we say here? How are you, Frankie? Good to be back with you. Third day, third show.
you're insane.
What?
You're just so
pumped.
jacked up.
We just saw the Grand Maha came by and
I know.
gave us the wave.
Yeah.
It was exciting.
A lot of curse words. There were a lot of curse words exchanged.
What there was an
you guys aren't
exchange
doing good
was
enough.
a pie. I went leaf peeping over the weekend.
Wow.
I drove all the way up to, I don't know, it drives all the way up to, what is that place up in northern Wisconsin? That is way too long a drive for what you get.
Northern Wisconsin?
Yeah.
I don't know, Door County?
Door County.
Okay.
Yeah, where he comes back with all these pies. And I guess I'm on the no pie list. So
I did
no
notice.
No fly list, no pie list.
I did notice that you and I are here, toiling away, grinding day and night, early morning, and he comes over and he says, "Oh, how's the morning show going, guys?" And he drops a pie off for Scott.
Yeah, I saw. That was nice. So, it's good to see where we fit. You know what? I'm more interesting before we get in the markets. How'd you do on the apology quiz? Because that I find fascinating. That actually blew my mind. And I made the mistake of telling my beautiful wife Michelle about this, and luckily she knows me well enough not to actually want me to go in and complete it. But
Sure.
She goes, "How do you think you would have done it?" I said, "Oh, fantastic, honey, you know that." But how did you score on your apology quiz? That you're
It was a minefield. A lot of
Was it?
trick answers. You know, when you got the multiple choice, and
it seemed like the questions were all, do I grovel here or grovel there?
Yeah, it was a lose-lose situation for me, I think. But I made it out neutral, I would say. I did the quiz. I sent it to my wonderful girlfriend, who I also found
Are we
out
leaving her nameless at this
is
point?
watching the show, because she watched yesterday and she loved our back and forth about exactly this. I passed the quiz. We actually had very similar scores. I pushed it a little bit. I can't help myself. And I did tell her after we exchanged, "Oh, yeah, baby, I did the quiz, whatever." And then I did push it and I said, "Unfortunately, I don't care wasn't an answer for any of these questions. I couldn't hit the I don't care button." And she responded, "So you don't care about apologizing?" And I was like back in the trap once again. But I passed.
You can only 127 hours yourself. You're going to run out of limbs at some point and just be a stump. I'm going to have to carry you around like a pillow. Wasn't the old bumper sticker, "Love is never having to say you're sorry"?
Interesting. I'll bring that up today.
See, you've got to do the reverse pivot once in a while. You can't do it all the time.
Dude, I can't.
But you've got to navigate. See, I'm fortunate. I mean, I found a woman who's put up with me for 32 years. So that puts her in a very small circle of people.
Mother Teresa.
Yeah, and then
Dalai
she's
Lama.
not in jail for killing me in any one of those 32 years, because there would have been justifiable homicide. She'd never go to jail.
Yeah.
But
it would be warranted.
It was a fascinating exercise to see you go through that.
Yeah.
And your commitment to actually doing it speaks to Frank 2.0, which is pretty impressive.
I'm learning, instead of calling it, being soft or like folding or giving in, I'm just calling it being compassionate. I'm taking the positive. I'm just gonna say, I'm gonna tell her what she wants to hear.
She definitely is listening to this
and I'm gonna
right
be,
now.
I'm gonna be nice about it, because you know how all of my past experience have gone when I've tried to be Frank 1.0. It doesn't go so good. So I'm gonna apologize.
You're working within the framework. I like that. That's
so
very good.
I passed.
Did a wonderful
and
girl.
I made it here.
So what about these markets? Wonderful or not? Dollar exhibiting some strength. We're seeing it across the board. Yesterday, we had the Grand Maha of the Fed come out and obviously walk back the idea that 50 basis points is a sure thing in November, and the dollar got some bounce. Now, the dollar reacted that way. I don't think it's because of Powell's comment. We were at the high end of the range. We talked about that. Whether or not we were going to sit at areas like 134 in cable, and it's interesting for me as a trader when I see something trade outside its range like that. Mm-hmm. If it holds for a bit of time, there sometimes is an extension to be had. This was one that really didn't. It kind of sat there a couple of days, which gave you a semblance of maybe there's some legs to a new range.
Yeah.
But between some of the geopolitical stuff in the Middle East, and that traditionally has always been, oh, the dollar's a safe haven. I don't put much stock in that anymore. Do you?
It's funny because I couldn't agree with you more, because you pointed this out yesterday. We're watching all these different markets, and I mean, not to, of course, not to diminish, what's going on in the Middle East. Whatever. You have to say that before you say anything. But you're like, how is this worth? All joking aside about like, oh, buy the dip, and you can't hold the SPOOs down or whatever. How is this worth 2% in the NASDAQ when it doesn't necessarily affect so much of the goings on in U.S. equities?
Right.
And you made the very salient point of like, well, it's obviously a risk-off move, war going on in the Middle East, and though it might not have to do very much with Apple or Sterling or any of these markets, they're all at the top side of their range.
Right.
Almost every asset, gold, and obviously gold was actually one of the ones that moved through the upside of its range, but crude at the downside of its range. All these different markets looking for really any reason to maybe move off of its recent highs or lows. And what was really interesting to me is, you had the move here in pound. You have euro just sticking right to its lows from trading yesterday. Aussie and Kiwi, interestingly enough, a little bit of continuation through from these highs here, traded all the way up to 64, now trading under 63. What was most interesting to me, Pete, is this dollar yen. You would have expected, okay, we've talked about this already in our first two and a half shows. There's a spectrum of these Forex markets, and you have from one end of the spectrum, risk-off currencies, and the most risk-off being your Swiss franc and Japanese yen. Right. And then as you move along that spectrum, U.S. dollar can be viewed as a safe haven, especially relative to Australian dollar, Canadian dollar, and some of these more risk-on commodity currencies, whatever you want to call them. And so you would have expected, Pete, yesterday,
testing a 140 dollar yen.
Amid
Absolutely.
all of the geopolitical and everything of all the news yesterday,
right,
that, okay, dollar sure might gain 100 pips on euro, might gain 100 pips on pound, might gain 50 to 100 pips on Aussie and CAD and everything else. There was no bounce whatsoever in this yen.
Right.
And now today, dollar is putting in 130 pips on the yen. So I think you're exactly right that we're testing these boundaries of dollar lows from the last couple of weeks coming off of that 50 bip cut. And it doesn't look like the market wants to move into a new normal, right, or a new range, so to speak. So many people thinking that, oh, the Fed is cutting 50 basis points. They're going to cut faster and further than everyone, and this dollar is going to retreat to historical norms here in the dollar-yen market, 100 to 120.
Right.
And it's holding in right here at 145, not able to move any lower, even though you have this huge risk-off move, and you'd expect yen to be up a couple hundred pips.
Right. And you know what? It's really interesting to see. You look at the pullback here from the high 160s when we put in multi-decade highs in the yen, and you would think 140, 142 is cheap. This is what I love about FX. Put a little context around that. 142 is cheap for the last 6 months. For the last 2 years, it's a very different story. Yeah. So what does that mean for me? What does that mean for a trader? There's opportunities on both sides here. Can this market correct more? Can we get back to what do we deem normal, 120 to 130? Sure. And that's still the upper end of the longer term range, but we've moved quickly to the downside. So what a market like this presents is two-sided opportunity, depending on which way you want to lead.
Yeah.
And I like that. I think that is really a rather than something that is giving you just one-way action. And I mean, the move from 130 through 140 up to 160 was quick, painful, and pretty much one directional. Now we're getting some two-way action, and that is what traders tend to thrive on, is the ability to trade both sides of the market.
Yeah, it's super interesting because again, I think, and now we're looking at sterling here, got up to 134,
Right.
and like I say, when everybody is on the same side of a narrative, it tends not to go that way, and it seemed like everybody when euro hit 112, pound hit 134, and I mean, listen, they're only 100, 200 pips
Right.
away from those highs, could absolutely get right back up there. But when everybody's on the same side of that narrative of, oh, finally the dollar is going to crash here, it's going to come back to where it normally trades. The Fed is gonna bring rates lower. We're not going to see this dollar relative strength. It doesn't end up going that way most times, and so it's really interesting to see the back and forth here. Obviously, a lot of it tied to the Iran-Israel story. But I don't know if it's actually the developments in the Middle East or, to your point, some of the price action here off of some extremes. I do want to check on Swiss franc here because not even Swiss franc able to get a little bit of bounce as dollar went down and traded 84. I missed this.
Yeah.
And is now bouncing back the last couple of sessions. Even you see yesterday's candle here, and let me
But
look at
on a percentage move, dollar Swiss there was a much bigger move than the dollar yen move in the percentage terms. So when you really you want to, one of the things I love about FX is, sure, we all look at the majors. We look at yen, we look at euro, we look at sterling. But even, I mean, Swiss is still a smaller traded currency in terms of the amount of notional it goes through every day. Different set of extremes, though. And it does play that more traditional role of safe haven in and out, especially within its region and time zone.
Well, and the news coming out right around this time frame, you see that play out. And I'm sure if we brought up the 15-minute chart for dollar yen, you would see some similar wiggle. Where's my dollar yen here? If I bring that down to 15 minutes, you're going to see some, similar back and forth here where the news is starting to develop yesterday morning, and the yen, the safe havens, the flights to quality want to rally on that news, and obviously all the algos and everything that are saying, hey, gold's up, NASDAQ's down, bonds are up, this should translate to yen up, tried to do that, but the dollar strength remains, and I think you're exactly right that it's a little bit of, hey, it was a 50 bip cut. Powell has already come in and said that we're not going to be as aggressive as the market is projecting right now.
Right.
And this dollar trading, flirting with 140 in the yen, flirting with 112 and 135 in the euro and pound, respectively. I mean, those are lows for dollar for the last 12 months, in some cases more, and you're seeing a little bit of that reversion off of those.
Right. And, stay with dollar yen for a second.
Yeah.
If you've ever looked at futures, there's a yen future that is quoted the reciprocal of this. So it's yens per dollar. So we always got to understand what we're looking at. And this is dollars per yen. So this is basically saying that each dollar buys us 144 yen. It is just the reciprocal of what we're looking at in futures term basis, some cost of carry that we're not going to worry about right now. But this is really, when you look at dollar yen and you've traded dollar yen, whether I've traded it institutionally and things like, this is the traditional way you quote dollar yen. Futures are quoted in a slightly different manner for the way they were constructed. But when we look at dollar yen right now and we see this rally, what it's saying is the value of the yen is continuing to decline a little bit here.
Yeah.
The dollar is relatively stronger to the yen. So we look at that base currency and that quote currency, and that's how we determine that. So things like dollar yen, dollar Canada look a little bit different than you might see if you're looking at a futures chart, but it's the same representation, just flipped around. You have to understand that quoting convention is going to be slightly different.
And if you're looking at the futures chart, it's literally going to be a mirror image of this chart, and you're going to see when yen futures made their lows, dollar yen made its highs, and and there are different nuances obviously between the futures and the spot forex market, like the carry and everything else, which we'll get into at certain points. But it's the same trade.
What did we see out of Aussie Canada? Because that was what we talked a little bit about yesterday. And again, one of the great pieces that I love is, we all like more product to choose, and the ability to construct it easily and capitally efficiently. And we can look at the pairs trade here. So this is Aussie Canada. We've removed the dollar component. There's no longer dollars against something else. This is talk about second and third level diversification. This is taking the dollar out of the equation, and I'm expressing my opinion on a relationship between two currency pairs, non-dollar based. That sounds confusing, but it's actually pretty straightforward and pretty simple to do here. I mean, the quote is there. The relationship is tradable. It's chartable.
Well, and if you went in and you looked at, okay, I've got my Aussie dollar here at 69 cents, let's just call it, and I've got my dollar CAD here at 135, and you flipped this dollar CAD to have Canada be on top of USD, and then you compared it to this Aussie, you would see that CAD is trading a little bit over Aussie in dollar terms. Right. And that sounds like a lot of math. You don't have to do it, because this is all to say when you pull up this Aussie CAD chart and you see that Aussie is trading at 93 cents relative to CAD, it's below parity with Canadian dollar. And so you're just taking the US dollar piece out of it. The pair itself does the math, but it's also, when you take the dollar out of it, it's just the exchange rate, right? Like if you had a Canadian dollar and you wanted to convert it to an Australian dollar, then you would get a little bit more Aussie for your CAD, or vice versa, a little less CAD for your Aussie, given this 93 cents. But what's interesting here, Pete, from a price action perspective, is in this cross and in the other Aussie crosses, and I want to pull them up. I know we have a couple of minutes left here. Aussie has stayed pretty strong compared to these other currencies, and I can't help but look at the safe haven, the emerging safe haven Chinese equity market that is holding up this Aussie market, because I mean I was very surprised that Aussie wasn't the worst performer yesterday of the dollar pairs. And also, I mean, you look at Aussie versus CAD and Aussie versus Kiwi, and relative strength in the last couple of days amid all of this volatility around Iran or around the US dollar strength, whatever. Aussie holding in better than most, and it's got to be some of this correlation to China.
I couldn't agree with you more, because I think we were both surprised to see U.S. equities take a hit yesterday. FXI, JD, the usual suspects, all continue to
2 to 3, 4%.
Yeah, look how happy you are. We're wondering which side of the market, Mr. Caperna.
I have like 150 shares, dude. Like, I'm not. It's not gonna be that good.
So, no recommendation there whatsoever. But what I really like about that is, so these commodity currencies really exhibit an independent behavior. Now, if you're trading, again, a diversified set of equities, on that downdraft, you saw bonds rally. You saw U.S. equities come off. The dollar responded in fashion a little bit. We saw some dollar buying, i.e., when we see dollar buying, that means currency selling. So Euro USD traded lower, pound traded lower. Aussie Canada kind of sat, because a different set of drivers. And again, we never attach one driver as being the gospel.
You can't. Yeah.
It's an ebb and flow, but we do rely on certain things to be correlative and to have a certain amount of consistency to them. And this is one that kind of was able to remove itself from that whole what's the right term to say? The whole move yesterday in terms of
Yeah,
the
yeah.
risk off,
Risk off, yeah.
risk off, and then risk back on post missile event, and really maintain its own tradable opportunity, which is really interesting. So the ability to get to those products that give you that diversification are really exciting. I think.
Well, and just as I bounce back and forth here between euro, dollar, and Aussie dollar, just look at the last couple of days. I mean, because everything, like we talked about, dollar bottomed out last week, let's call it, just at some point last week, differing among the major pairs. And you have euro dollar barely getting up and touching 112 intraday, and then coming off to yesterday it traded 110 half. I think it traded under 110 half. The Aussie here
110.46, yeah.
got up to 69 is really the 112 in this market, and it's trading
Right
trading
back.
69.
Yes.
And so this Aussie continues to be strong. And let me do something that I don't think is normally done. Let me see if I can even
Is
call
that like
it
an
up.
apology quiz? Because that would not be something normally done. Are you apologizing for?
Look at this Euro Aussie chart,
Yeah.
Pete. And this is probably not a very highly traded market, although, I mean, these are both really liquid and low margin markets. Trading all the way down to its lows on the Euro front, and Aussie trading through its highs. I want to see what the extreme is in here. Yeah, this will be really interesting to see, because Aussie not only beating up on U.S. dollar amid this U.S. dollar lower rates and yada yada story, but it's beating up on these other majors, and it's beating up on on some of its currency on some of its commodity currency crosses. Will be really interesting to watch this Aussie, because it is traditionally, one of the more, when I say, it's one of the more volatile pairs.
Yes.
It moves back and
It's
forth.
great, got greater volatility, greater elasticity, and I think that's an important thing to start to understand as you start to watch these markets. What is, and you and I have done in our 7-8 years of working together, a lot of work around defining trading ranges, and I think one of the things we're going to be looking at in the future is bringing back some of those 1 standard and 2 standard deviation
sure.
trading levels.
For sure.
And again, what is it? It's just a reflective tool. It's to be able to look at range and context for each product, to put some scope around. A product with a volatility of 6 is going to have a 1 standard deviation move, much different than a product with a volatility of 14 or 15, and it gives you a good guidepost. So we'll be looking at putting some of those pieces together.
As a final note, I mean, back of the envelope math for me is always euro dollar and sterling tend to move 50 to 70 pips on an average day. And yesterday you saw that euro dollar market and that pound dollar market both move lower by 70, 80, 90 pips, and then start to see some back and forth. I mean, they didn't move lower by 80 pips and then bounce all the way back, but that 1 standard deviation move is not only essential in options and creating expectations for those trades, but also in all facets of trading. But Pete, we'll get into that as we go here. Definitely want to bring in, I'm glad that you called that out, because we should bring in those standard deviations.
The probabilities are great, and whatever you find to let you understand markets better, whether it's drawing lines on charts or the statistical analysis we like to use, let that be part of your decision-making process. Where people tend to get in trouble a little bit is when they rely on just one thing, and it's like, well, the market's wrong because my indicator's right.
Yeah.
It's
more than that.
Right. Let's try to keep a little bit of a balanced methodology as we evaluate opportunities. I mean, what I want to look for is markets that move, markets that have liquidity, and where I can find sometimes non-correlated opportunities against the portfolio of other things I'm trading. And I think, this is an interesting way, a capitally efficient way. These are leveraged products, so there is risk to them, just like there is with any other leveraged product. So good. Let's finish up here, because Friday we've got a non-farm payroll numbers coming up. Again, I don't care. When I say that, I don't care. I think they're looking for 142,000.
Yeah, and we'll cover it. We'll actually be able to cover it before the number comes out, which will be great. Right. So let's not so much in the next 24 hours per se. There's a ISM. There's some PMI data out of the U.S. and some Fed speakers, but we'll be back tomorrow morning to cover all of that. And yeah, that'll be fun. Friday morning. Yep. Right before the non-farm number comes out. Pete, thanks as always, man. Always a joy to be in here with you. And Tom and Tony are coming up next with Vanetta, of course. Tasty Live. Thanks, everybody. Peace.
If you missed the live show, here's our cherry on top yearly recap.
I bought a Westinghouse TV for my gazebo outside.
Oh, look at you!
Yes, and I put up Roku. I would watch the game. I got my apps all done.
So you're outside and you're pulling
Yes.
Can you see it from the hot tub?
Yes,
wow.
yes.
Are you going to invite Tom over?
No.
Yeah, that's going to... There's a spider on my desk. No, kill it. Oh my God.
Where is it?
It's on my microphone.
I don't see it.
Thank you, Bat, for coming to my aid.
You're welcome.
And Tom, where's your firecracker popsicle?
Yeah, really.
When did you see that?
On every single Zoom call you've ever been on, you're pounding
I didn't want to spoil
firecracker
it.
popsicle. On any Zoom call I've ever been on with you, you've got a firecracker popsicle rocket pop, and you're not just like licking it, you're literally like biting it off of the thing.
And I don't know who was taking pictures of me.
Anton,
Hey,
if somebody's on a Zoom call and somebody's eating a rocket pop and they're just like biting into it, somebody's gonna notice and somebody's gonna be like, what is going on here?
I'm doing this just for you this one time.
Yeah, you got to put it against your white shirt. There it is.
It's disappearing. You see that? All right. There you go. No, that's all you get.
Oh, but getting back to our soda machine, which does work. It's the greatest feature we have because it makes nice ice cubes. And
Got a lot of reports. It's out of syrup by 9:30 in the morning.
I just use it for the ice, and then I get water, which we
you
do
got
have a water
ice?
filter.
Don't be showing off. Don't be showing off.
Do you know what kind of ice we have?
None.
Mid ice.
He learned that on TikTok.
I learned that yesterday. That was my whole lecture. I got lectured.
It's like mids.
I said,
Hey, the ice, it ain't bussin'. I'll tell you that much.
I said,
Nikki,
I said we have ghetto ice here, and I got lectured. And I go,
You should get lectured.
we have mid ice.
Yeah, no cap on that.
So does Tom get to take his paw and stick it with the scoop, or do you just go in and grab it? See,
There's a
we
cup
got
right now. Wait.
Hey, it's not a cup, it's a mug.
No, that's right. We have a ceramic mug that chips off on the ice that you can use. But Tom's already used his hand in all the ice.
And that mug, it's...
Nobody thought about putting a plastic cup in there or something like that. It's a ceramic cup with chips in it.
It's one of the old mugs from like 12 years ago.
Oh my God, has anybody died here recently? Has anybody died?
The ice is so old, it has like that like old ice smell. You know, like the ice that sits in the refrigerator or the freezer.
Nick, it's called mold.
Like it has like kind of that stale smell to it.
burn.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Get the full scoop by checking out the archives at tastylive.com. Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
I'm gonna start decorating your desk, Bat, because it's mine now. I have squatter's rights.
He's got a lot of tchotchke stuff there. Like I have a clean desk. Nothing.
Ooh, wait till I bring in the stuff to decorate my desk for Halloween.
Oh God. Your desk is already against all protocol.
why aren't you here today?
Oh, you haven't told her yet, Sosnoff?
No, don't tell her. He's
can't tell you,
allergic to
Vanessa.
he's allergic to Lou Malnati's.
What? That's not a reason. I was allergic to roadie, but I still came into work when it was roadie day.
You didn't hear me yesterday when I talked about Little Beat?
I did hear.
Oh, you did hear it.
I did. I was
that's
there. I had to suffer through that very painful story. Yeah, little beat.
I had probably the worst food experience in New York City I've ever had.
What happened?
No, just for like 2 days in New York City, I didn't have.
It was just miss after miss.
Well, I didn't go out for one meal, but I had like cheap Chinese, gross.
You had halal street cart.
Wall Street cart, gross.
Greek diner.
Gross. And what else did I?
mean, you're one of the biggest foodies I know, or at least you used to be when you were a real man.
Gross pizza.
Well, wait, where'd you have gross? Why didn't you go down to Prince Street?
I mean, time. I was like in Midtown. Gross.
So where'd you go, Sbarro? Where do you go in Midtown for pizza?
You know, some Italian place with.
Like just to get a slice, or is it like sit down?
Let's get a slice.
All the slices are good in New York. There's no such thing as bad pizza in New York.
Let's just put it this way. It wasn't. There was nothing. It was boring. It was horrible.
You were such a diva.
I'm not a diva either. I'm not a diva. I just had bad.
You're like, how many Michelin stars does this slice have? You're like, when I was on the streets of Mexico City or when I was in Copenhagen. You're insufferable, man.
I'm just telling you, I was walking around. I had no extra time.
You're telling me there's a bad slice in Midtown.
Yes, 1,000%.
Midtown is not the food mecca of New York.
No, it is
Midtown is mid.
Midtown is mid.
Less than mid.
Yeah. Yeah.
There's no such thing as like a bad slice.
Yeah, there is. There is. In Chicago, they don't have bad slices because there's not that many slices.
Yeah, there's not that many places you can get slices.
So all the places that sell slices are pretty
Wait a minute,
good.
time out. Every slice you get in Chicago is bad.
No,
because there are no
Festa Italiana. Shout out to my peeps on the south side. They do great slices.
You go to Art of Pizza, they're good.
Yeah.
Oh my God! You're talking about one pizza joint in the strip mall on the north side of Chicago.
Festa Italiana on the south side. They do slices.
You go to Zaza's, it's good. There's a bunch of places, they're good.
Yeah. Now I want pizza.
Okay, don't be a Johnny. Don't show your colors. Okay. Don't show your 40-year-old Brooklyn roots that are so they're like half the places that you think are still there, they're gone. I'm telling you, they're gone. They're not there anymore.
Well, I tell you one thing: my 40-year-old Brooklyn roots that are gone wouldn't go to the 5 places you went to eat this weekend if I was.
No,
in
you
New
wouldn't.
York.
You
I'll tell
would.
that much.
If you were where I was by yourself, you would have. You had no choice.
I would have called up my friend Shark and gone out to dinner with him.
Of course you would have, but I was tired. I couldn't. I had no bullets left. I had nothing left in the tank.
What time did you get back last night?
I got back around 9 something.
Okay.
So I've been going nonstop since like last Friday. So
You were just so secretive about what you were doing in New York.
No, I was.
Were you auditioning for Fashion Week?
He's going to be the Golden Bachelor. They're going to do that next year. The Golden Bachelorette is doing so good.
I was doing a bunch of interviews and I was doing a couple podcasts.
Oh,
Yes.
I see. That's cool.
Yeah. So we'll see how they come out, but they're fun. And
wow, you'll fly to New York to do somebody else's podcast, but you won't hang out with me and do my show with me every Tuesday and Thursday. Option trades today. That's right, where we look at winning trades.
I don't know what's happening either. But I also did some interviews with some financial media outlets.
Yes, they are all based in New
trying
York.
to promote the brand.
Oh, that is very. Did you pass your media training?
Not really. It's funny, there's no question that some of the answers I give are not the answers that they expect.
Sure. Oh, sure. Yeah.
You see the look on, they're like, what?
It's like, yeah, we can't air that. Although, I will say Tom did come in clutch. Look at these, what I'm holding, just a small sample. Tom did bring me black and white cookies.
Oh my God, Sosnoff, did you phone it in? I mean, it's
there's more on my desk. I got a big one too.
No. I got the big one too.
This is nice, and I'm appreciative. So, they're from Zaros.
a sealed black and white cookie size muffin. We want the ones that come from a bakery, okay? That they wrap in the paper and put
First
in
of
a
all,
box.
I wish I could. I couldn't find a bakery.
No, these are good. It says New York, New York, made in New York, New York.
Yeah. Anyway, they're not.
Yes,
it's not my favorite.
White Plains, New York.
It's not my favorite one, but I got her some big ones too. And I brought in the cherry pies, and I brought in fudge, and I brought in everything today. So
You got fudge?
every year I buy Brittany fudge.
Oh, well, so it's not communal fudge.
I'm sure she's not going to eat a pound of fudge. You can have some fudge.
Better not have nuts in it.
Yeah, I'm sure you'll be fine.
All right. Well.
Okay.
I can eat. I like fudge, but I can eat like a corner of one before I go into a diabetic coma.
It's so like my favorite is like Mackinac fudge. You know, like when you get from
They're all the same.
whatever. But it's so good.
I mean, I like the Door County fudge.
I'm not a child anymore, so I don't eat fudge.
So I like the whole cherries in it. Dark chocolate and cherries.
Yeah.
That's what I like, but you can't eat it.
Whoa. You don't mind when fruit touches your chocolate?
Not cherries.
What about oranges?
Oranges? I've never seen oranges in fudge.
I've never seen oranges.
Well, not fudge, but oranges in dark chocolate.
Oranges in dark chocolate's quite delicious.
Okay, there you go. All right. Your palate is.
I like cherries, raspberries, blueberries, and and I think I've had orange like once or twice. Yeah.
But you don't like almonds or cashews in chocolate?
No.
That's so weird.
No.
It's so weird.
I don't like almonds anywhere. Like when they give you.
You don't like almonds anywhere.
They give you almonds on the plane. I take them all out. I give them to Tony.
It's true. And by the time they get back to me and Coach, there's hardly any left.
I'll eat the cashews.
Yeah.
I don't eat the almonds.
Interesting. All right.
I'm not an almond person.
Well, we're glad that you're back from your whirlwind visit of New York just in time to set things right. But the high holidays start tonight, so Shana Tova, if I'm saying that correctly. Right? No, Rosh Hashanah starts tonight. Happy New Year.
Yeah.
Yeah.
The I got a loaf of challah bread from your boy. Jimmy
from
bread.
your Italian friend Jimmy Bread. That's right. You know where it is. Check it out.
Algonquin, Illinois.
Jimmy makes.
Hey, he had a couple of people stop in. He had 2 people stop in from the show.
Oh, that's great. He made a challah bread. Dropping it off this morning, so I can't wait to try it.
Challah.
I love. You know what? Challah French toast.
Ooh, challah French toast.
It's great.
Ooh, it is good. It's so eggy and rich. Yeah.
The bagel makes it really good.
Yeah, that is.
Challah French toast. Yeah, but anyway, I love challah French toast.
I want some challah bread.
I'll bring a piece tomorrow. I'm gonna. Oh no, I won't.
No, tomorrow's the bake sale. Oh.
Tomorrow's bake sale.
Remember,
here?
you were supposed to bring something in, Tom.
Oh well, you take that cherry pie and put it in the bake sale.
Okay, I will. Because we're raising money for cancer, so.
When the show's over, so if nobody takes a piece of it, tell Josh. Josh, don't take any of the cherry pie.
Too
it's
late.
For charity. It's too late. It's too late.
Yeah. Okay. Take that. And we'll put it in the bake sale.
Okay. Nice. Give it to the ladies. Bat, how are you? How was your evening?
My evening was actually wonderful. Kind of an early night. It's my morning that hasn't been that great. Vinny's following in the footsteps of his older brother Nick and is having his first teacher conference in the morning.
Oh, is that why you're home today? Oh,
he's gonna learn about math on a one-on-one basis right now. He's a little too social in class. I don't know where he gets it from. His mother must be, too much of her influence on him.
Where could he have gotten that from? Your kid, he's just too much of a Rizzler. He's too much of a Rizzler, Bat.
Mm-hmm. Yeah. He's gonna get some algebra tips this morning. Mm-hmm. It's gonna be fun. He's really looking forward to it. It was very easy to get him there.
Oh, Vinny. Oh, so this is like one strike. One strike, huh?
It's an early strike. He'll be able to foul off a couple of these balls soon. It's fine. It'll be okay.
That's hilarious. Did you ever get in trouble in school?
Did I ever get in trouble? No, I was a perfect child. I mean, I never got suspended.
Whoa. Time out. Let me be straight here. He's not in trouble in school. He's just getting some tutoring for math in school.
No, I never got tutoring, but I got
reprimanded.
I got in trouble for just being obnoxious. I never got in trouble for I never got in trouble for academics. I've always got in trouble for just being annoying.
I got you. There's nothing wrong with that.
Yeah.
I think that's funny.
All right, I can't pronounce the first name, but I just got a message. I'm gonna say it's like I'm gonna butcher this. This is so bad.
It's gonna be real racist, isn't it?
Yeah.
Yeah, go ahead, do it. Let's see.
Majeko Sandalak. He said he went to Jimmy Bread. It's awesome. He was there last week. See, that sounds enough. We got viewers. You are helping a small business. That's right, Jimmy Bread in Algonquin.
You should support small businesses. That's great. Thank you.
He's got a 4.9 rating on Yelp and Google, so he's great.
Jimmy Bread?
Awesome.
Yeah. That's cool.
We
should have him on the show.
Can't now.
If you're gluten free, you can't be here. He's all covered in flour.
He's all covered in flour. That's
Can't be near any of our gluten free people.
He would leave a trail of death wherever he walks.
Leave a trail of flour. I go, do you just roll around in flour all day? He goes, basically, yeah.
Well, it takes out all of your wives.
Takes out my wife for sure.
Yeah. Oh, no.
Yeah.
That's no bueno. No
gluten.
Bueno at all. All right, well.
I don't even know what gluten is. It's just something.
I'm not a nutritionist. I can't.
I don't know, Sadnov, but if you, let me put it this way, you would be the gluten of human beings.
Did you hear what he said?
Yeah, I don't even know what that means.
Hey, we got playoff baseball. Are you excited? Are you watching? Detroit Tigers won a playoff game for the first time in like 10 years. So congratulations to the Detroit Tigers. I mean, the Lions are decent. The Tigers are in the playoffs. Better than Chicago.
I didn't watch anything because I was on a plane last night.
Oh, that's true.
So,
are you excited about playoff baseball? In general.
I mean,
I know there's no Chicago teams in it, but there's
no Chicago teams, but I do like playoff baseball.
Yeah, okay. How about for you, Bat? You excited for playoff baseball? You want hockey to start? Like, what do you
Hockey's
want?
already start. Hockey, they've already played 3 preseason games.
Right, yes.
And basketball's about to start.
Yeah.
No, they haven't, son. They've played 2 regular season games where 1 win and 1 tie. We're going to Pekin, Illinois this weekend.
Not you.
We're not talking about
you and your
hockey. We're
and your
talking
merry band of 14-year-old losers. We're talking about a professional.
Hey, if anybody in the audience is in Pekin, Illinois, come on up to me. I'll buy you a beer.
I don't even know where that is.
I don't even know where Pekin, Illinois is.
I don't know. It's like 2.5 or 3 hours south of us or something. I don't know.
It's your freaking Pekin.
You know, Pekin, Illinois has more bars per capita than any other city in Illinois.
I've never heard of Pekin, Illinois.
Wisconsin would like to have a word with us. Wisconsin says, "Hold my beer."
Does that mean that's 3 bars?
Yeah. How many is a lot for Illinois?
They have 30 residents and 3 bars.
I don't know.
How do you spell Pekin? Is it P? How do you spell it?
Yeah, just the way it sounds.
P-E-K-I-N?
I don't know.
P-E-A-K?
Yeah, Pekin.
Yeah, that's good job out of me. Look at me, Quiz Bowl, spell
all right, I'll
champs.
find out for you
Well,
right
knowing
now.
him, it's probably Pecan, Illinois.
Okay, all right.
It is Pecan.
We've lost the plot.
It is Pecan.
We've lost the plot.
How do you spell it?
Pekin.
Pekin.
Just the way it sounds.
Pekin.
They got the American Foreign Legion bar post 44. They got the Eagles Club. They got Applebee's. They got like a lot.
Oh, there's you. There you go, right there. You're staying at the Marriott and having dinner at Applebee's.
Yeah, and then
it's
get some more drinks.
Square miles.
Get some more drinks at the VFW. There you go. That's a day.
Life is good for the Batistas this weekend.
Life is good.
You're gonna get more than you can handle.
Hey, Just to note, we will get this show on the road. Hey, we hope you are enjoying our expanded programming. If you're new here, Tasty Trade is now going bell to bell live programming for 12 hours. So right before us, we have fluffers now. Frank and Pete on Forex Focus are on before us. If you haven't been able to see any of it because you're asleep, you can still check it out on the live site. Give the boys all of your support. But yeah, we were expanding the programming and we're keeping it going with Tasty Live this morning. At the top of the 8 o'clock hour, we got an options jive. SMCI, the 10-for-1 stock split, happened on Monday. I guess you're going to do a breakdown of what
I got a position on in there too. I forgot.
You forgot that it's split.
I forgot I had a position on there. Now I got a lot.
Didn't tell anyone you were going to New York, secret squirrel.
I got a lot of contracts now in SMCI.
Whoops.
I forgot about the 10-for-1 split.
Okay.
But don't forget also we added a half hour at night too.
Yes. I was going to get to that. I'm getting to that. And then because it is Wednesday, it's assumed the position Wednesday here. So at 8:40, we got What's Your Assumption? So where Tom and Bat get viewer submitted trades where they have an underlying, where they have a particular directional bias. That's going to be at 8:40. Then 9 o'clock, Skinny on Options Math with Jacob. Yes?
Yes.
Is skew versus skew. Spy versus spy. I rarely understand his titles, but this is nice and easy.
Skew versus skew?
Yeah.
That's the old Spy versus Spy.
Yeah, good job. Good job.
Do you remember Spy versus Spy?
I do remember Spy versus Spy.
Mad Magazine.
Yeah, Mad Magazine. Yeah, the little.
And there was a cartoon for a little while.
Yeah, the black and white. Yeah.
Yeah, that's Spy versus Spy.
Hey, and then my personal favorite, live from the trade desk, Big Boy Scotty S. Scott Sheridan, counting down all the top trending tickers over at Tasty Trade. And then my other favorite, Nikki Batista. We can't have both Batistas in office. We've got at least one coming in. Nick is going to share his trade ideas with you at around 9:45. And at 1 o'clock, we got Tom and Dylan for Truth or Skepticism. What are you talking about with Dylan today?
Today we are debating whether is your job safe with AI?
Okay. Are these just individual performance reviews and you're starting with Dylan or what? Like what? Can you help me out?
There's a lot of discussion over whether we're all going to be commoditized.
Sure.
Due to
right, or it frees us up to do other things.
There's a lot of different ways to look at it.
All right. Well, that will be at 1 o'clock live here at tastylive.com or on the Tasty Live YouTube channel. Make sure you hit that like and subscribe button on our YouTube so you never miss any hot, tasty live content, and say hi to us. But be nice in the YouTube chat and shout out to Frankie who runs our chat. But hey, that is our run of show for today. Also, we added longer time to Victor and the Price of Truth. Are you going to be on Victor's show anytime soon?
I am going to be on Victor's show, but not for I think about another week or 10 days or something like that.
Okay, great.
Yeah.
Then we will look forward to that. Hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah, all right, fake it. Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Our leading story. Top story. Just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's October the 2nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Sure, fire away.
Ready for the news.
U.S. dock workers are on strike, halting half of the nation's ocean shipping. The U.S. East Coast and Gulf Coast dock workers, represented by the largest union, began their first large-scale strike since, I think, 1977.
I don't remember the last time.
Yeah, I think it was 77. Halting the flow of about half of the country's ocean shipping. The strike blocks everything from food to auto to a bunch of dozens of ports from Maine to Texas. What can we do, or is there anything nothing?
Tradable?
Yeah.
No.
Okay.
At least I don't think there's anything tradable with this. I think the market.
But the effects to the economy, Vecchio
there's some things
spoke
there's some
about
things tradable, Sadnov. You can go to Costco, buy some toilet paper now and some paper towels.
I don't know how that's tradable. You can do whatever you want. If you think
then you could sell it on eBay.
Yeah, you should go to Costco, you little prepper. load up your truck, and go buy like 100.
What makes you think I didn't the first time I saw his tweet go out? That's right.
Well, Chris Vecchio, when he was on yesterday, he very eloquently laid out sort of the drawn out, risks and costs to the U.S. economy that are associated with
Saz doesn't believe in those. It doesn't fit the narrative.
Overblown, already priced in.
There you go. See,
doesn't fit the narrative at all. Stock market doesn't care.
Okay. But
Stock market doesn't care. Stock market cares how many chips Nvidia sells. Stock market doesn't care about longshoremen. Okay.
They were offered a 50% wage increase and a 30% benefits increase over 6 years, but they rejected that proposal. So deals are still in
They'll settle this. It'll be an absolute non-event, and not even thinking about it twice.
Okay.
Market does not care.
Hey, nice little sign of strength in the labor market as job openings, the number of available jobs in the U.S. grew in August, signaling an undercurrent of strength in the labor market at a time when its vitals are being carefully monitored by the Federal Reserve. You had JOLTS come out yesterday. I want to talk about treasuries and what they're doing as we're, midweek.
Doing absolutely nothing. They're right where they started the week. They had a big up day yesterday, and then they're down almost an equal amount today. So we started the week just over 124 in the long bond. We're just over 124 right now, so it's an absolute non-event.
A key U.S. Vanetta in English. A key U.S. overnight funding interest rate jumped on Monday in a sign of tighter liquidity in the money markets. The secured overnight financing rate, a measure of the cost of borrowing cash overnight collateralized by Treasury securities, rose to 4.96% from 4.84%. Does this matter?
No, that's just a squeeze.
The squeaks?
A squeeze, a little overnight liquidity squeeze. It happens. It happens all the time. You get a little liquidity squeeze it could be for lots of different reasons, but you get a little liquidity squeeze and it pops up short-term rates. They'll normalize within a day or so.
You can't arb this?
Oh.
I don't know.
I mean, unless you have a couple of $1 billion or hundreds.
Can I borrow some cash?
Can you arb this?
Hey, but the big news yesterday is oil. Oil prices shot up huge after Iran launched a missile attack against Israel. Oil prices spiked after Iran fired a series of ballistic missiles at Israel, pushing prices to the highest level. Oil's up like around 5% at one point in the session, 8% from like the start of like Monday. Let's just talk about everything that's going on. Luckily, didn't seem like a ton of targets were hit in Israel. Their defenses did seem to hold, but now, of course, there's an escalation.
Oil's up big again today.
Up $2.08. Vanetta, you have to look no longer than yesterday when oil was trading under 69. It's 71 and change right now.
Yeah.
They also pumped a lot of vol in today.
Yes. So let's talk about that. What do we do?
What do you do?
Mm-hmm.
Nothing. I mean, you can put positions on now because it's rich as hell, vol-wise.
In CL?
Yeah.
Okay.
CL, USO could even become a play.
Yeah, I mean, you got CL up to, IV rank up to 80, 81.
Sure.
These are big numbers. 80 in crude oil you don't get to very often from an IV perspective.
The move doesn't seem weird relative to the amount of oil that Iran actually produces, though. Because, like, I mean, I get that there's instability and that there's questionable things. But if you look at how much oil Iran is responsible for, especially because the U.S. has just been so good at being energy independent, I was just curious about the magnitude of this move relative to the size of their production.
I mean, oil's up today because Israel's going to retaliate.
Sure.
And when they retaliate, they're going to go at the heart of you don't shoot 100 ballistic missiles at Israel and not expect retaliation. When they retaliate,
sure,
they're going to go.
But Iran was saying this is the retaliation for Israel killing.
For their retaliation.
Right.
Israel,
but then we're just going to retaliate.
Israel doesn't give a crap what Iran says.
I know.
So, and Netanyahu's generally not the kind of person to sit back and say, okay, now we're even.
Sure.
That's not how his mind works.
I did want to look at XLE.
Ooh,
because it was up 2% as well.
I mean, it's
XLE
going to be
trading $91 and change is up around $2 or so.
yeah.
Yeah.
It had a big day yesterday.
They're all up. They're all going to have higher volatility because they want to see.
I would like to offer some different ETFs because we can't all just trade straight CL futures.
You can do is trade whatever ETFs you want. I mean, the problem in XOP and XLE and USO is they're not as liquid as CL or MCL.
Sure. What about micro oil or something?
MCL.
Okay, all right, that could be something.
Yeah.
Hey, how about this? A gold rally is crippling physical demand in key markets. Let's talk about gold.
I mean, it did rally big, and now it's down big today.
Okay.
Down $20. Tom,
do you think people are pivoting out of their Bitcoin and into gold?
If they are, they're stupid. I don't see what one has to do with the other.
Did you answer the questions on the podcast like this and on TV?
I mean, why would somebody sell Bitcoin to buy gold?
No, I was just.
I mean, if you're selling Bitcoin to diversify some into gold, sure, but gold's at all-time highs. I mean, what's the point?
Sure, I was just curious if you thought that that's what the tape or the market was indicating. That's all.
There are people around the world that like to buy gold and hold it.
Yeah.
And there are people around the world that like to buy digital assets and hold them.
Yeah.
I don't understand the logic in either, to be fair with you.
Okay.
Doesn't make any sense to me. Neither of them have any reason to have embedded positive drift. It doesn't make any sense to me. You know, it's not like a stock market or an economy or something like that. So, you know, listen, they're both. I mean, Bitcoin's right around record. It's not. It's where's Bitcoin
well,
right
61,000
now? Yeah,
change.
it's 15% off record highs, and gold's at record highs.
Sure. I was just seeing if there was any, I guess, correlation for lack of a.
There's no correlation between Bitcoin and gold.
Okay.
They're both in our world. We consider both of those assets dead money.
Oh, what's dead money?
Dead money is when you buy something and it just sits. It's gone. Like you buy gold. You just whatever you do with it, you just stick it somewhere. You buy Bitcoin, whatever you do with it, you stick it somewhere. That's all. They just don't get traded. You buy it,
hoping that it goes higher.
Yeah, hoping it goes higher. It's kind of a defensive play. It's a flight to quality.
Okay.
But Bitcoin is down 5,000 in total over the last 5 or 6 days.
Yeah, it is.
Thank you.
Yep.
Yes.
It's down another 700 this morning.
What about Coinbase? Ha ha ha! Snuck that.
Down a little bit.
Oh, you're
down
good.
$3.
You're good, young lady. Well, you would imagine coin would be lower this morning too, and it is by about $2, 163 and change on the bid.
What are you doing in Coinbase? Got a nice IV rank.
It's okay. We're short premium in there. That's it.
Okay.
Got a little chopped up
It does
last
a
couple
52
days.
IV rank.
Yeah. Hey, JP Morgan has plans to capture a significant chunk of Canada's retail investing market with the launch of a new ETF and a hiring push north of the border, eh? They're looking to tap into the flow of savings out of mutual funds and into products with lower fees like ETFs. JP Morgan is announcing a new structured ETF for Canadian retail investors.
Oh, I think Canadian retail investors are going to be so happy about it. Probably they're not going to be able to sleep tonight knowing that JP Morgan's offering an ETF in Canada.
All right.
JP Morgan's on the job.
Praise the Lord, JP Morgan.
Yeah, all right. Well, it's something. Yeah. 3 dominant players in Canadian ETFs control 65% of the market. So that seems
sure they do. Probably
balanced.
TD, CIBC. Yeah, I don't even know the last one.
Yeah, RBC.
RBC.
Yeah, Royal Bank of Canada, BlackRock, and Bank of Montreal.
Oh, I forgot about Bank
of Montreal. Yeah. Okay. JP Morgan. It's been moving around this week.
It's down around 50 cents, but the market's a little bit weaker right now. Even the S&P down 16.
Hey, let's talk about bad news for the sports retailer Nike. Nike just straight up withdrew their guidance. They're like, you know what? We don't even know. And they're postponing their investor day as they gear up for a CEO change. Nike withdrew its full year guidance. They did beat earnings expectations by 18 cents, but fell short on revenue as they work to fix its product assortment. What did you do in Nike? How do you manage?
I have a strangle on in there, 82.5, 97.5. I don't know what the expected move was, but I think $7 has got to be inside the expected move.
It's just about inside the expected move at 82, closing at 89. You're right there at $7.
Yeah, I think I'm going to be either up small or down small on it. I don't have it on that big, but I'm going to roll down the calls and keep the position on.
Bat, how about for you? Any potential for a post-earnings Nike play?
Nike markets are good, not great for an $80 stock. So I'll have to take a look after the markets open for Nike.
Yeah, I am going to have a post-earnings plan there, but I think my earnings play is going to be a wash.
Okay. All right, good to know. Hey, Microsoft's mammoth AI bet will lead to over $100 billion just in data center leases. That's up than more than $100 billion in 2 years. The leases are geared towards building out data centers that can handle AI workloads. If you also remember, Microsoft is partnering with 3 Mile Island to bring back nuclear power because all of these AI models are just massive, just I don't know, sponges for energy. Is that wild to you that the outlay of capital is $100 billion just for data centers?
No, and none of this is wild to me. And
but it's all data center plays. Like,
the thing that I think people miss about all this is like the shift is taking place right in front of your eyes. This is why like the longshoreman strike doesn't mean anything, because the size of Microsoft, NVIDIA, Google, and the bets that they're making into the economy dwarf a bunch of...
But it does mean something, because one of the tenets of the longshoreman strike is that they don't want any automation. So it's like, how do you negotiate around that? I'm not...
Think about how stupid that is.
Dude, unless you're in the trenches every day...
I know, but think about how stupid that is.
Why would you vote to replace yourself?
I understand, but think about how stupid that is, because you're not going to turn back technology.
Sure.
It's not going to happen.
Sure.
So it's just, you might as well deal with the fact that they have to deal with the fact that technology is going to play a role in what they do.
As a consumer, can I say that, like, I didn't ask for everything to be AI everything? Internet search is so bad now, and I'm so frustrated by Google and by all the other, like, and I'm just like, everything's like got all this AI, and I'm like, look, I just want dumb appliances. I want a dumb...
Then go back to Bing.
I want better search. Like, I'm just so frustrated that they're spending all this money, they're using all this energy for stuff that we didn't even ask for.
Yeah,
it's not bad. It's not, nothing I've seen so far is just better.
I understand that, but you're comparing apples to oranges. They're two different oranges. Yeah.
Then beta weighted.
Bat, what's Microsoft doing this morning?
Looks unchanged, down 15 cents or so, 400 and change. Microsoft is mid-range. It's not near its highs. Its highs are closer to 460.
Michael Dell, the CEO of Dell Technologies, has recently executed a significant stock sale, divesting over $1.2 billion worth of the company's shares. The latest transaction brings his total stock sales for September to $2.3 billion. He offloaded 10 million shares, Dell down 4.5% yesterday.
I feel better now.
Dell down another 20, 30 cents this morning if it opens right where it traded.
I feel better, though, that he's financially secure now. He's got $2 billion to work with. He should be okay.
That's bonkers. Are you doing anything in Dell personally? No. Okay.
It's one of the more difficult tech stocks to trade.
Okay, that's interesting. Good to know then.
You wouldn't think at $115 stock that it would be that hard. Markets are about 15 cents wide, and they seem to trade by appointment.
Yeah, it's one of the worst tech stocks to trade from an option perspective.
That is good to know. Hey, Boeing is considering issuing $10 billion in new shares as their own strike lingers. For investors, is a question of when, not if. The stock did edge higher Tuesday after news that they were considering raising at least $10 billion by issuing new shares as they work to bolster cash reserves that are being depleted by the hundreds of millions by the day because of a strike. What are you doing in Boeing?
Boeing, we're delta neutral, a little bit long. I take it back, a little tiny bit long.
What do you think of this move?
Boeing goes down a little bit every day. It just stair steps down. Down another 50 cents.
I was on a new Boeing. I was on a new jet last night.
Okay, yes, back to you.
I was on a new jet last night.
Okay, which one was it?
It was a 737. I don't know, the 737-900, the new one though.
Oh, okay.
I like the new layout.
Did you fly American?
United.
United, yeah, there you go.
I like the new layout.
Okay.
So
Oh, for first class.
yes, very nice.
Okay, that's very nice. But the rest of us have budget cuts. But yeah, okay, great. Cool.
And it's funny.
No
'cause
pepperoni on the pizza today.
We have people in New York. We wouldn't have to fly in to do these meetings, but
Yeah.
who knows?
You know what? Yeah, no pepperoni.
No, but I eat pepperoni now. I want pepperoni.
No sausage.
That's fine. Hey, Apple.
Hey, Vanetta, you're used to not getting any sausage.
Yeah, that's true. That's true. A U.S. Labor Board has issued a complaint accusing Apple of violating employees' rights to organize and to advocate for better working conditions by maintaining a series of unlawful workplace rules. The NLRB, in the complaint announced on Monday, claims Apple required employees nationwide to sign illegal confidentiality and NDAs and non-competes, which the NLRB says, no.
Oh, I mean, that's Apple's whole thing. But which
a lot of corporations.
Which is worse, at Tesla sending the managers to your house to see if you're really sick, or signing the documents? Think how good you guys have it.
What are you guys doing in Apple? I'm gonna leave that there. Bat?
Wait until Tom Sadnoff comes over to your house and does a wellness check.
It's like, look,
That's
if
gonna
you
be
want to
good.
find out if my cramps are real, have at it. Have at it.
Apple looks down about $1.50, $224.90.
Hey, here's a blast from the past. Like, I literally forget that this is a publicly traded company. Peloton. Yes, Peloton. One dismissal of a lawsuit claiming that it defrauded shareholders by concealing how demand for its home exercise equipment, which surged during the pandemic, was declining as vaccines became available and as gyms started reopening.
I forgot the symbol. PL.
Nope.
PTON.
Oh, PTON.
Yes.
Teton.
Yes.
$4.27 on the bid, basically unchanged.
Wow.
I mean, it is off of its lows of $3, but
okay.
If you think there's a play there, you got to.
Yeah. Okay.
I just literally forget about it.
Yeah, I haven't traded this since. I mean, when it got to like 20, I thought it wasn't going to go any lower. When it got to 10, I was out. When it got to 4, I deleted. I Control-Alt-deleted the symbol out of my brain.
I know. But also, it maybe just gives the fact that these shareholder lawsuits rarely bear any fruit because it's hard. I mean, I understand the grievances of shareholders when they sue these companies, but it's hard to win these lawsuits because
They don't try to win the lawsuits; they try to settle.
That's true, I guess. Everyone gets a free Peloton. Hey.
You're a lawyer. Oh, you're a lawyer now too, Tom?
Sure. Thank you.
I want your thoughts on this and maybe future conversation down the road for you and Dylan. CNN is launching a paywall, and they're going to charge $3.99 a month for some users. The move comes at a time when several publications have already launched and seen success with subscription models, but especially the time when we're in an election season,
sure.
We're during a state of heightened disinformation, where some sites, certain sites, they will always be free because lies are always free, but other sites now are putting up paywalls, they're going to subscription. But when it comes to news and to journalism, shouldn't there be more free and fair access of information? Because otherwise, the consequences, if the only sites that you can go to that are free are maybe.
So it's an interesting topic for debate. Because the alternative is if you launch a paywall.
Yes.
And you don't have any conflicts with who the advertisers are, then, I mean, in theory, you can deliver more objective news. If you don't have a paywall, you have to pay for it somehow, right?
Sure.
So you have to pay salaries, you have to pay all the costs.
Sure, no, yeah, I get it.
So if you don't have a paywall and you want to deliver everything for free, then you have to rely on advertisers.
Mm-hmm.
And if the advertisers decide they don't want to participate, or the advertisers decide that they want you to be to talk about certain topics and not talk about other topics, then you're conflicted. So is it free and then you're at the mercy of the various brands and advertisers, or do you charge for it and then you essentially get it commercial free and then it's completely objective? I'm not advocating for one way or the other. I'm just telling you there are two sides to it.
Right.
Somehow you got to pay for it.
Right. No, as a writer, I like to be paid for my work. But also, though, as a consumer and people, I think an educated public is a good public. And I think...
Still, you got to pay for it.
Right. But
how you're going to pay for it. The free is tough to, every free model, you have to pay for it somehow.
Sure.
Tasty's free because we have a company where we make money.
Here, you get David Muir to make an OnlyFans.
An educated consumer is our best customer at Tasty Trade.
Which is free. Like, we're free. And so we found a way to make it work.
And don't quote Cy Sims. He's dead, okay?
We found a way to make it work. Hey,
poor...
And just so you know, they went out of business before he died. So, like, that saying didn't really... I loved it when it came out, but it didn't really work.
Here's something else that is a hot...
You got a suit from there.
Here's something...
No, I got 3 suits from there because if you bought 1, you got 2 for free.
Ooh, that's a deal.
Cy Sims, an educated consumer, is our best customer.
Hey, here's something that is kind of a hot button issue in the wake of the Supreme Court largely dismantling everything around affirmative action, around higher education.
Yeah.
The state of California now says it will soon be illegal for public and private universities to consider legacy applications. So it's going to be illegal to consider an applicant's relationship to alumni or donors when deciding to admit them. This is sort of the other side of that coin. People are like, oh, it should only be a meritocracy. You should get into college just based on, how smart.
Okay, so do people have a problem with this?
People do have a problem with this.
Okay, why?
I've never.
Do you have a problem with it?
I don't. I think it's like a nice way to balance things because then you're looking at just like generational.
Yeah, agreed. Yeah.
But some people do have a problem with it.
Okay, that's fine. I mean,
No,
I'm just
the law
saying.
will take effect September 1st, 2025. It's the nation's 5th legacy admissions ban, but only the 2nd that applies to private colleges.
Yeah, I mean, I'm all in favor of this.
But some people say, hey, it's my right. I went to Stanford. I contributed. I'm an alumni. And part of that consideration is, hey, when it's my kid's turn, that they should be, bumped up or given some.
So even though they don't necessarily deserve it,
No, I'm just playing devil's advocate.
I understand.
Because otherwise.
I understand. No, I mean.
But yes, that's the argument.
I know. I'm all in favor of this. I think this is a good bill by Newsom.
Okay, there you go. Bat, any thoughts from you?
No, we don't get to go to college in my neighborhood.
Okay. Pepsi.
No, come on. There should be no legacy administrations. I mean, that's silly.
Okay.
I mean, you should get in on your own.
Exactly.
merits.
Exactly.
Agreed.
Exactly.
But people were saying that this was like kind of like the big open secret of like the whole side door.
This is Hollywood, but that's been.
Yeah, I understand. I understand what it is. I'm just telling you.
Right. Because everyone wants to, cry foul for.
I mean, if you give $5 million to the library, you want your kid to get in.
Right. Yeah.
I got it.
Yeah. Hey, Pepsi is buying a tortilla chip maker, Siete Foods, for $1.2 billion. Siete's tortilla chips and other products are made by a Mexican-American food company, and the packaged food companies are turning to deal making to drive sale growths. They have grain-free tortilla chips. So they are paleo, vegan, healthy, all sorts of things.
Good for them.
We don't talk about Pepsi a lot. PEP.
We don't talk about Pepsi because it's a very difficult stock to trade.
Sure.
So.
What's your favorite beverage? You're a Pepsi boy.
I do, but I don't really drink that much soda anymore. But now who owns Dr. Pepper?
They were their own.
Oh, there.
It was like Keurig sort of owns Dr. Pepper, and then now I don't.
So my favorite diet soda is Diet Dr. Pepper.
Okay. Duly noted.
But if I have to drink a Diet Pepsi, I will.
Diet Dr. Pepper is your favorite?
Yes.
That's what he likes at the machine here.
That's my favorite in our machine here, and that's by far my favorite. But I will drink a Diet Pepsi.
You know why? Because it's got prune juice in it.
Is that what it is? I don't know.
It's 23
That's always been
secret
the urban
ingredients.
myth.
I don't know.
It's got secret ingredients, is right.
Ingredients.
But Diet Dr. Pepper is the best
Prune
diet.
juice.
I'm a Diet Coke girly, but that's just me.
Diet
It's your own
Coke.
preference. It's your own
Yeah,
preference,
Diet Coke
man.
doesn't do it.
It's all full of chemicals. We're all gonna die anyway.
Right.
Hey, Boo Buckets! Boo Buckets are coming back. Fall favorite returns to McDonald's Happy Meals this month. The Monster Boo Buckets that come with Happy Meals can be used for trick or treating, and the Boo Buckets will be offered starting October 15th for a limited time. The pails will come in a new colorway, the blue, replacing last year's purple color. MCD bat, is this enough to scare up some life in McDonald's stock? See what I did there?
Oh, I do. McDonald's looks unchanged, maybe down about 70 cents this morning, but it is near its highs. Just made recent highs the other day at 304 or so.
This is the greatest story ever. I just love this whole environment of just no accountability. So a former financial manager for the NFL's Jacksonville Jaguars who stole $22 million from the team and has been prosecuted for that crime. He is suing FanDuel for $250 million, saying the company preyed on his gambling addiction. Amit Patel, who's serving a 6.5-year bid for, stealing from the Jaguars, filed a lawsuit in federal court claiming that FanDuel ignored its own anti-money laundering protocols and responsible gambling principles because he was an addict and the company never stopped him.
Oh,
And that's what caused him to steal from his company.
Of course.
So he is a victim in all of this.
Right. This is gonna be a tough one.
The lawsuit claimed that FanDuel gave Patel over $1 million in gambling credits and besieged him with enticements to gamble more.
That's why gambling is a net. There's no mathematical
a net loss for the consumer.
There's no mathematical way you can win when a guy who you give him, he steals 22 million. He probably gambled, let's say, 20 million of that or 18 million of that. You give him 100 million in credits because you know that he can't even win if you give him 5 times the amount of money he's going to lose in credits. He's still going to lose.
Yeah.
Yeah, right.
Yeah. Yeah.
The whole problem with gambling on these apps is that the whole problem with gambling, sports gambling, is every time you lose, you have to make
it's a multiple of what you bet.
It's a multiple of what you did. So if in the world of trading, it's the concept of law of large numbers works.
Sure.
Because there's no negative edge.
Sure.
Right? Like markets, you can trade $100,000 worth of Apple and you give up 1 penny, $1.
Right.
So there's no negative edge there. So you can go back and forth all day long. And it essentially, if you're just thinking about that way, it's a zero-sum game. In gambling, if you go back and forth all day long, it's just like a casino. It's worse than a casino. Sports
You're
gambling.
down 5 or 10% or more on top of
That's
it.
why.
I think we're not even yet at the tip of the iceberg of the devastating, catastrophic effects that legalizing gambling is going to have on our
The
economy.
sports gambling is impossible because you can't make back the vig. No matter what happens, the more you gamble, you can't make back the vig. In Vegas, the reason they have limits at every table is because they don't want you to bet a lot. They just want you to bet.
Oh, interesting.
So, because if you bet over time, you can't win either.
Right.
And so that's the whole game. So that's why there's a minimum and a maximum at every table.
Sure.
And in sports gambling, you don't need that because you're going to lose anyway.
This whole thing is just terrifying to me, and I think it's just going to be
Well, it's
devastating.
It's not
I think
terrifying.
It's devastating to a generation of young men who are literally mortgaging their futures.
Well, if we taught everybody,
I don't think we're talking about it enough.
if we taught everybody to trade, we would have far less issues.
Sure. But anyway, hey, real fast, Milk Bar is opening in Chicago's Fulton Market. New York City pastry chef and TV star Christina Tosi will open the first Midwestern outpost of her popular dessert shop this fall in the Hoxton, the
Not a
hotel.
fan.
Nice.
You
Not
can
a
get
fan.
the compost cookies and the cereal milk soft serve. 200 North Green Street at the Hoxton Hotel should open late fall to early winter. So
It's
she
right around,
also
it's right around the corner from us. But
she's
I'm not a
also
fan.
going to have a few Chicago-specific specials, including a savory pastry wrapped hot dog bun.
I thought Milk Bar was that guy David, whatever his name is, the Momofuku guy.
No, there's two. That's I think they have similar names.
That's Milk Bar.
I thought it was that Momofuku guy, Milk Bar.
I don't know all the ins and outs of the. She did make desserts for David Chang.
Oh, that's the guy.
Momofuku
Yeah,
Bar,
that's
right.
Oh, okay, got it.
She opened Milk Bar Bakery in 2008, so she
I got
came from
Got it.
Momofuku.
Okay, that's what I thought. Okay, so I've only had their famous birthday cake.
Okay, yeah,
We bought it for Liz.
yeah,
We were in Vegas.
yes.
And it was okay.
She said they make this cereal milk soft serve. That to me, because it's, you know how like when you get to the end of a bowl of cereal, like it's that sweet milk that's,
Yeah.
and I've never had it, but that sounds good.
I can't imagine there can be a better cookie than those
Levain.
Levain.
Yeah, I like how
Those
I
are
read
the-
your mind.
Best. Those are the best cookies I've ever
I
tasted.
do like Levain, but I like how Chicago is getting all of this regional stuff. You know what I'm saying? Like, because we have a Levain, and we're gonna have a Milk Bar. We have a Voodoo Donuts. We're getting a Prince Street Pizza. Like,
And Voodoo Donuts.
Yeah, we get everything after the fad
Voodoo
is gone.
Donuts doesn't do anything for me.
okay, well, I'm just saying, but it was.
Levain cookies, Milk Bar will be good.
Yeah, Prince Street Pizza.
Prince Street Pizza. Where's that opening here?
Yeah, it's gonna be on Randolph, I think.
Prince Street Pizza will be good.
That's a game
Where?
changer.
Have I ever been? I don't know if I've ever been to Prince Street Pizza.
I took my parents when we were in New York.
How was
We,
it?
Like waited in line. Well, my dad stayed in the hotel. He's like, "Y'all just bring me back some pizza." So my mom and I waited in line.
How was it?
It was really good. It was really good.
You got a whole pie or slices?
Yeah, we got a whole pie and then we got like a couple of slices. And my mom was just like, she's like, I can't believe people wait in lines for food. And she's like texting her friends and she's like, oh, this is so exciting. We're in New York. She's just happy to be there. She's just.
There are one thing you realize when you're in New York that you don't. There's so many people on the streets.
Yeah. Well, it's a dense city.
It's a dense city. There's just so many people everywhere.
Hey, finally today, because I'm already over my time, I love
Oh my God, you're way over your time.
Halloween, and I love even more Halloween decorations. I wish I got trick-or-treaters where I live, but I just don't because I live in the city. But I wish I would decorate for Halloween, and I wish I got trick-or-treaters. But I love the integration.
Try keeping your lights on.
I love the integration of technology now in Halloween, displays. Check out one of my favorite pieces of meme audio in this Halloween display. It's very cute. Watch this.
No.
No.
Can I pet that dog?
No.
Can I pet that dog?
No.
Can I pet that dog? Can I pet that dog?
You can go to sleep.
No, I can't go see because I need to talk to that dog and I'm doing it right now. Can I pet that dog?
No.
Can I pet that dog?
No.
Can I pet
Isn't
that
that
dog?
amazing?
No.
So you can sync it to like any audio and the mouths will move.
Can I pet that dog?
You can go to sleep.
Oh, that I want.
Right? Oh
Yeah,
my
that's
God.
not gonna be too annoying.
That's good. Come on, that's good.
I'll pet that dog. Anyway, hey, that's my time. Pat, what's coming up next?
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. Bye for now.
Can I pet that?
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby. But this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
You know, my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and 7. But before we do it, I know we're running a little bit late. Let's just take a quick look at the market. Even the S&Ps are basically unchanged, down 8. NASDAQ is up 3. The Russell's down 10. And the Dow is down 58. Volatility is completely unchanged. The big movers, I guess you got to say the bonds down a full point, under 124. That's the first time we've seen that in about 4 or 5 days. 123.29. Bitcoin's also had a little bit of a sell-off over the last couple of days by about $5,000, down to 60,800, down around 700 right now. On the other side of the coin, you have oil up to 204. That's almost a 3% move. And net gas is doing the same, up around 8 cents and change. Sad enough, I'll leave it at there, and we'll get to confirm and send, and then we'll take a look at the market before it opens here in about a half an hour.
Yeah, we're running late. Let's go. Let's do a little confirm and send. So these are emails that came in to us from customers. It's Wednesday, October 2nd. Can't believe it's October already. Based on the 0DT market measure from Tuesday, would you change strategies from selling strangles, iron flies, or diagonals to just selling out of the money puts, and if need be, rolling them to the next day? Because it seems like eventually you'll become profitable.
Yeah, I actually think I asked you this question during that market measure, and your answer was no, it's not going to change anything. And it doesn't change anything for me either. Listen, looking back and seeing what has happened in the past is a wonderful tool to, maybe help your assumption moving forward. But I can't think that forever this is going to be the case. So for me, nothing changes. I'd rather sell both sides. And I think if I did that throughout my career, I've said many times, I'd be much better off than I am today.
Yeah, Jacob did a really good market measure showing that for the last 18 months, just selling puts in the 0 days has been a very successful strategy. Like if you do the 16 delta, it was like 97%. If you do the 35 delta, it was like 92%. It was a crazy successful strategy because we've been in a bull market. Will that continue? I don't know. I mean, it's in hindsight, it's really easy to say, will this change what we do? Not a chance. Not a chance. Let's go next slide.
Yeah.
Literally not a chance. On a day like today, I think they're talking about yesterday, when the market falls quite a bit, I get nervous. Is that something that gets better in time, or do you still get nervous?
I wouldn't call it. I can remember back in the day, you know, when the market first had, you know, some big moves, and I was a new trader. You know, maybe you were a little bit more nervous and apprehensive. I don't think that nervous is the right thing to say in this point in time for me doing this for almost 40 years or more. It's more like jittery, kind of looking where the opportunity is. Than being nervous. I think it gets a lot easier as time goes on, as anything does.
I think
look at golf. The first time you went over water, you thought, this is surely going to lose a ball, and now you're going to lose the ball, so you just bring two.
I think that anytime you do something, the more you do something, the less nervous you get about it. But do we still get nervous about markets? Sure. Like, that's the most beautiful thing about this. It never gets old. Every day it's like, yeah, I still get nervous about it, or curious, or
I get nervous. You're going to say day one and the market's going to turn the other way. That's my biggest thing I get nervous about.
We get anxious for sure. The nerves never change. I mean, you get more comfortable with it. I mean, like anything else.
So what is it? You get more comfortable with it, or you get nervous? Because you said both.
You get more comfortable being nervous. How's that? Let's go to the next slide.
Fine.
Is there a threshold that if markets move beyond in a single day, you hold off on adjusting? In other words, if the daily expected move in the SPX is 35 points and we move 2 times that, 70 points, do you hold off on adjusting and attribute the move to being hysterical and likely to calm down in the next day or so?
No, I am inclined to keep a little bit of delta, thinking that we'll have a little bit of a reversion back to mean to the expected move. I mean, I've been guilty of doing that. But by the end of the day, if we haven't reversed back, and especially if volatility is expanded, I'm pretty quick to roll down.
Yeah, no, we don't make any assumptions like that. I mean, in a perfect world, obviously we'd like the market to come back and stay inside that range. But if you get a move that's 2 times the expected move, we are likely going to, if it's an up move, we're likely going to adjust at the top. And if it's a down move, we're likely going to sell the bottom. And we're going to, tweak our positions and neutralize them there. And that is the nature of the business, because when it goes from 2 times to 3 times or 4 times, at least we would have made the right adjustments. If it rallies back, we get double whammy, so be it. But that's just the nature of the business. I thought that's what was going to happen yesterday when they were down 80, and next thing you know, they're down 35 in the afternoon. I'm like, oh, great, we just got double whammied. But no, we are not likely to back off. In fact, we're likely to get more aggressive when they're down 2 times. Let's go to the next slide. What is your opinion of collaring long stock? Collaring long stock, by the way, just means, so if you own a stock, it means you sell a call and buy a put. It doesn't have to be the same strike. It could be anywhere. Selling out of the money call, buying out of the money put, whatever you do for a credit. Call that a cashless collar.
That's the key. That's the key for us, for a little small net credit.
Yeah.
It limits your upside, obviously, with a covered call, which I prefer to do. It also helps enhance your downside to a point because you did it for a small credit, that you have no risk to the downside. I mean, I don't hate the strategy. Not something I do. I don't have a lot of naked long stock to do this with. I would prefer to use the option strategies to accomplish something like this. I mean, I don't hate it. For those who want to be a little bit more risk adverse, sure, go right ahead. A little small net credit.
I think in the last 5 years, I've collared 2 stocks that I owned for a very short period of time, and I hated doing it. It drove me crazy. The last stock I did it on was Reddit, and it absolutely drove me nuts. I couldn't wait to take it off. And before that, I can't even remember. I did something else. I don't remember what it was. This year, the only stock I've done it on was Reddit, and because I was long some stock, I sold a call, I bought a put, and I couldn't wait to take it off for a profit. So my opinion of it is, if you want to do it, sure, go ahead. It's not my thing. Like I said, I think I've done it 2 times in 5 years. Not my thing. The only reason I would rather reduce the size of your position. The only reason somebody collars stock is because they either they have a tax consequence they don't want to deal with or something like that. I'm not sure why. I'd rather reduce the size. Let's go to the next slide. This is my first year of trading full time, and as we get closer to the end of the year, I'm starting to think about taxes. I've been fortunate to have had a good year, but will likely be looking at a decent tax bill. I'm wondering if moving forward, it makes sense to focus on eligible products and pay quarterly estimates. When they say eligible products, I think they mean 1053B, which are index products and futures products that have a max tax rate of 60-40 split, 60 long-term, 40 short-term. And so how do you handle that? That's how futures options and index options are taxed, with a max tax rate of a 60-40 split, which is a 1053B eligible product. And the other one's the quarterly estimates. So how would you handle that?
I'm not an accountant, first of all, so you know, take that with a grain of salt. I pay quarterly estimates, so I can only tell you what I do. I mean, here, I don't focus on anything that has a favorable tax benefit to me. Like you said, you've been fortunate enough to have a very good year. I hope you continue to have those, and talk to your congressman and everybody else to get your taxes lower. I mean, for me, this becomes, you know, more of good and better. But I don't look for these things to pay lower taxes. Sorry.
Yeah, I don't make a trade based on the tax consequence of the underlying index. So
if you had this kind of brain and you could work it, I mean, fine, go right ahead, right?
Yeah,
I don't have that capacity.
I mean, when we were trading in the S&P pit, this was obviously, you know, one of the advantages of the particular product we were trading is we had a max tax rate of, at the time, of 28%, when short-term rates were closer to 40%. So, and this is something that the futures world and the stock index world have negotiated and lobbied for years, and it's stuck. So, yeah, it's a nice advantage to some things about trading, but we don't make a decision on what we're going to trade based on whether the product has eligibility towards that discounted tax rate. And sure, if you're, I'm not an accountant, but if your accountant's asking you to pay quarterly estimates, then you should.
Yep.
Let's go to the last slide. As athletes age, a lot of them will say that their skills might not be what they once were, but that's compensated for by knowing more. I've heard a number of them say things along the lines of, there isn't a situation I haven't seen before. Is the same true for traders? Do you think your hunger or drive diminish at all, but that's made up for in that you're smarter?
I mean, listen, it's always, first of all, it's always different. I mean, I'm a different trader than I was when I was 21 years old than I am today. I'm different capital usage today than when I was 21, which was different from when I was 40. So it's always changing. I mean, trading, unlike sports, I think is always going to throw you a loop that you've never seen before. I know I've said it, you know, you've seen everything, and then there's something new that comes out. Unlike baseball, there's not new pitches. There might be better pitches. There might be somebody who hides a pitch better, but it's still the same. I don't know. For me, I think it's an ever-evolving, changing game. New products, which make the game different. Different monthly and weekly strikes that have made the game completely different. I love it for that, and I think it keeps everybody fresh.
I think that I'm not sure. I don't know if we're smarter. We know more, meaning that we've seen more. We probably know more of the nuances. I don't think that makes us have any idea what's going to happen next or be any better in that sense. I think what we do have is enough experience so that nothing really scares us about the industry. But I don't think it diminishes your drive at all. And I think one of the nice things about trading is that, you can do this until you're in your 90s or whatever. I don't see, I feel like our drive isn't diminished at all. I don't feel like we're smarter, but I feel like our nuanced know-how gets broader.
Okay, I can live with that.
Sure.
I'm gonna take a quick 90-second break and come back. We got more Tasty Live after this with Option Jive.
If you missed the live show, here's our cherry on top weekly recap.
We also went to Universal Studios, which was really fun in Hollywood. So we drove to LA with our rental car. You can't do that if you don't have a rental car, can you? No, you can't.
Drove from Vegas to LA.
Well, actually, my wife drove because I had food poisoning. So
I have heard it all. Heard it all. I am done. I am done here.
You live in Florida.
Yeah.
Don't they have Universal by Disney? I know they do.
That really sucks. No. They don't have Super Mario World, and they don't have the trolley tour. They don't. Can you just listen? They don't have the trolley tour, which was my favorite. That was pretty cool.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful. It's not always a profit. When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it!
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same
16
team.
inch?
12 inch.
With gloves. Because
gloves.
We were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him, he was a charity case.
It's option. Jive.
Tomas, you are correct. It is time for an option, John. But before we do, Tesla numbers, the moment you've been waiting for, Sadaf, the moment we all been waiting for, Tesla numbers came out. Tesla's down by around $9 to 248 and change. Nasdaq's only down 29. Even the S&Ps are down 10, and volatility is down a nickel. Buy the rumor, sell the news, Sadaf.
Yeah, well, I think I'm a little short Tesla here. Well, we'll see. I don't know. Anyway, we're running late. It's 8:16. It is Wednesday morning. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. And hopefully the rest of the day. Hopefully you enjoyed Pete and Frank. They kicked off their new show this week, so we've extended Tasty programming. We start now at 6:30 in the morning Central Time in Chicago. We actually start at 1:30 in the morning Central Time in London with Angie and Rich. And then we kick it over to the Chicago team at 6:30 a.m. Central Time with Frank and Pete. Then we come into Tony and myself at 7 and Minetta. And then we go all the way to Victor Jones. I think we should change the name of Victor's show to Jonesing It. Or, yeah. I'd rather have it as
okay, Boomer.
Jonesing than The Price of Truth. But we go all the way to Victor Jones' show.
Jonesing It. It's off the hook.
Yeah, so I'll figure it out. I got to brand this kid.
Sure.
He needs work. He needs help. And Victor Jones going for another 30 minutes at night now. So we're going all the way until all the way to 6:30 Central Time. So we start at 6:30 in the morning, finish 6:30 at night. 12 hours a day of programming in Chicago, followed by 5 hours out of London. All right, let's do this. SMCI.
1256 was the contract you were looking for.
Oh, 1256. Right. What did I say? 1053. Yeah, I'm out of my mind.
Yeah.
It's been so long. 1256B. You're absolutely right. 1256B. I apologize.
It's okay. I was
my bad.
reminded too. I didn't get it.
Yeah. SMCI just did a 10-for-1 stock split. So it's kind of weird to see a stock do a 10-for-1 stock split at $400. Because rarely does a stock go back to. Let's see. I have a position on it.
Well, it was $1,000, Tom, when they were talking about this.
I understand, and now it's a $40 stock. I got a lot of positions in SMCI overnight because I didn't even have very big positions on, but now they're big.
Right. One contract became 10. 10 contracts became 100 if you're doing options.
Yeah, I'm not even sure what I have on in there actually, but SMCI trading at $40.55. All right, Beth, let's do it. Let's go to the first slide. So we're going to talk about stock splits. So on October 1st, SMCI completed a 10-for-1 stock split, meaning the number of SMCI shares increased tenfold, while the value of each share was reduced by 1/10 of its pre-split value. The day before, SMCI stock price was trading near 416. After the split, the new stock price would be 41.6. If an investor had one share of SMCI before the split, their position would convert to 10 shares of SMCI worth 41.6. So no change. Your net lick doesn't change at all. You just have more shares of stock. Let's go to the next slide. This is all stuff you already know. So why do companies split their stock and how does it impact investors? Here are the reasons. First, companies like to make their stock more affordable so that more people can play. A lower share price can make the stock more accessible to smaller investors who may not have been able to afford to buy it before. It improves liquidity in the underlying. No question that more people can trade it. It's easier to trade. Obviously, the option markets get tighter, everything. And it's a signal of confidence. A stock split can signal management's confidence in the company's current and future performance. And by the way, a reverse stock split is the exact opposite. When stocks get too cheap, they want to make them more expensive. And so they do a reverse split and reduce the number of outstanding shares. When stocks get too expensive, they do a traditional stock split where they increase the number of shares. Let's go to the next slide. This year, SMCI stock reached $1,200 at one point, almost 6 times higher than the average price the year before. This could have been one motivation for the company to conduct a split. I'm sure it was. When they were talking about it, I'm sure the stock was a lot higher. Let's go to the next slide. So here are the top 5 most anticipated stock splits this year. The most common stock split ratio is 2-to-1 and 5-to-1, but because these stock prices are so high, the ratio has been adjusted to 10-to-1 or higher. NVIDIA did a 10-for-1 split. CMG did a 50-for-1 split. ABGO, a 10-for-1 split. Walmart, a 3-for-1. And LRCX, a 10-for-1 on October 2nd, which is today. Then you can see the post-split performance. Walmart's been up big. ABGO's been basically unchanged. So is NVIDIA, and CMG's been down 12%. So there isn't any, it doesn't mean they're going up, doesn't mean they're going down. It's just, it doesn't mean it's a lock that they're going higher. Let's put it that way.
Sure.
But it also doesn't mean that they're crashing and burning, because ABGO and NVIDIA are about unchanged. CMG's down, Walmart's up. Okay, and we'll see what happens in LRCX and SMCI. Let's go next slide.
So no real tell there, no real play.
No real tell. Since the beginning of the year, the SPX has surged 20%, outperforming most of the split stocks. For instance, NVIDIA's stock price increased by 240% in 23, but has only marginally moved since the split. This raises the question, does a stock split really boost the price upward? Let's go to the next slide. The data shows that a stock split doesn't necessarily guarantee better returns than simply holding the SPX within a year. And the volatility of the individual stocks is often much higher. And you can see here we have the SPX and we have the individual stocks and the SPX. And we can look at their returns, and also the volatility. And the volatility in the underlyings, the SPX has much lower volatility than the individual stocks, and the returns are equal, if not greater, in the SPX. So it'd be hard to argue for going the individual stock route post-split compared to just buying the index outright. Let's go next slide. The index outright, just so much better in this case. Now let's take a look at Apple. Apple's had 3 splits since 2000. We recorded the performance for the 12 months directly after each split and compared it to the average performance of randomly selecting 12-month periods. Let's see Apple against itself. Let's go to the next slide. So like some other stocks, Apple yielded a positive return, averaging 10% of the 12 months following a stock split. However, it had an even better performance during the randomly selected periods of the same length. I think this is one of the most interesting slides of them all. So if you take the 12 months following the splits, Apple's up almost 10%. But if you randomly select any 12-month period in the last, 20 years, you end up with a 38% return in Apple. So yeah, this is what we mean by there's nothing predictable about this. You just don't know. Randomly selecting 12 months worked out better. Let's go next slide. These observations tell us that while the initial signaling of a stock split is generally positive, it does not guarantee a better performance. Even if their returns the following months are positive, they should be compared to the stock's long-term average performance. And let's go to the last slide, Beth. So stock splits provide various benefits to retail traders, including more affordable stock price and better liquidity. They often send positive signals to the market as well. However, the action of stock splits does not necessarily indicate future performance. So, basically, a stock split a post-stock split is pretty random.
Yeah, for net outcome of what's going to happen.
Yeah.
But the other factors that they make there, by true. I mean, look at SMCI. It had $3 and $4 wide markets, which would be 30 and 40 cent wide markets post-split. And if you look now at SMCI, the markets are 10 cents wide, and I'm sure we'll only get tighter than that. So it's the equivalent of being $1 wide post-split. I mean, that's significant for a retail investor to look to trade.
Totally agree.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with the moment you've been waiting for, the opening bell. We'll be back in 90 seconds.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
90% goes to S&P index funds. 10% straight to
Is 20th Century Advice driving your 21st century portfolio? tastylive has joined forces with the CME and SIBO to offer the industry's first multi-exchange trading collaboration. Our new live event, Building a Complex Portfolio, puts active traders on the path to modern portfolio creation. Tom Sosnoff and other tastylive personalities will cover strategies that'll help you integrate futures and options into your portfolio. Sign up at tastylive.com/events and see where we're headed next.
Don't die like squirrel.
Tomas, we are back, my friend. You know what that means. The opening bell is imminent here in about 90 seconds or so. Even the S&Ps are holding steady, down 11. I think every time I've quoted them, they've been in this range. NASDAQ's down 37 or 36. Russell is down 10. It was just green for a quick second. The Dow is down 5.
Yeah, they've been flying around all morning. I mean, they had the NASDAQ up pretty good. Now let's see. Where's your little Tesla? Down about 11.
Tesla numbers came out. You are correct. Tesla is trading 247, down 11. You are correct.
And now that we changed our quotes on our system, I'm so confused.
I am too, to be honest with you.
We're
They're
showing
floating pre-market, which
we're showing pre-market and yesterday's close back and forth.
Yep. As they tick.
As they tick, yeah.
Yep.
It's based on customer requests, but I'm not used to it yet.
Chinese stocks seem to be higher. Baba was up by about $4 or $5. Looks like it's up around 2.5 right now. Baidu was also up. Baidu it looks like it's up around 5. It was up 7.
Yeah, I got out too early.
Big runs in Chinese stocks. I got short too early. There's your opening bell, my friend. Let's see what's going on across the world here. Tesla down 9, Sadnov. PDD, on the other hand, up 9. Take a look at that. Yep, up 7 and change. Crowd up small. They're all bouncing around. I gotta wait, Sadnov. Give me a minute. Oil up $2.35. That's a big move.
I gotta wait, Sosnoff. Give me a minute. I am going to cover. So I sold a strangle in SMCI because we were just talking about it before?
That's correct.
So I sold a strangle just to see how it would work. Remember we were talking about it?
Yeah, I pushed you into making the trade. I remember. You sold it at like $15 and
No. I sold it $29.59. $29.59 at let's see, a $1.73, so $17.30. It's now trading at
$15.20.
yeah. So it came in $2 ish.
That's better than a sharp stick in the eye.
Yeah, I guess. All right, let's take a look at Nike. So we short a strangle in there. Is it? It's nothing.
NKE for earnings down $5.50 inside the expected move.
Yeah, we have the November 82.5, 97.5. So we're gonna have to buy back the 97.5s and sell the. What'd you sell in here? The 85s, I guess. Yes. I don't know.
You can try.
You can try is right. I don't know if I'm going to get filled. I got filled.
You got filled at 228, I believe.
Yes. So now in Nike, let's see. NKE. So it's actually a pretty good winner.
Oh, bueno.
So it worked. All right. SMCI. SPOO's down 18. You make anything yet of this market?
Yeah, I was set on the close last night when I was talking with Chris. I thought we would see a little bit of weakness today, and it seems like we're getting that a little bit. Volatility's only up by 20 cents, but you look across the board here, even gold, which was down $20, is only down $10. But silver, on the other hand, is up for. I would think the Dow, I would think the Nasdaq would be a lot weaker, and it's not. It's only down 24. So I actually thought we'd be weaker than we are across the board. So maybe there's a little bit more strength here. I don't know. Going into the beginning of the day, I'm still a little bit bearish.
I am taking a look at Tesla here. We're short some call spreads. I'm going to cover them, and I'm not actually going to get filled.
You know, volatility is sneaky here. It's only up 20 cents, but it is trading 20.75. Remember that.
So this Tesla move actually worked out okay. So where are the problem children then this morning? USO, SMH, problem children.
Problem children.
Ooh, Baidu, Baba. Oof.
Yeah, I mentioned those early.
Oof. Yeah. And crude oil. Crude oil is my worst position this morning. They must be pumping a lot of premium in it.
Oh, they are. The Ivy rank is high. It's up $2.40.
Yeah.
No bueno.
Yeah, no buenos, right. Netflix up $10. This is a weird market.
Yes, yeah, it is a weird market. I agree with you. Meaning just that it's a mixed bag. Even though we're not doing anything. Like you got Apple now down $1.60. You got AMAT up $1.90. Like you've got Netflix up $9. Let's see what Microsoft is doing. Let me see where I can find that. MSFT down $1.60. Yeah, it's mixed, but I don't know. Take a look at volatility hanging in there up 20 cents. Let's see what that does.
Yeah. So no question. No question. The challenge today is crude oil stocks.
Crude oil stocks and Chinese stocks for me. Yes, agreed.
Yeah. So anyway, I'm going through all our positions just to see if there's anything that we need to do here. And like you mentioned before, I'm going to say probably not. Probably not. Yeah, these Chinese stocks. Wow. I didn't realize I got a little short these things up here. Not realizing it.
Yeah, PDD is up $7. I mean, this stock has gone from around what was it, $90 to $150 without stopping.
Yeah.
And volatility expanding. So if you sold puts, they don't move that much.
Yeah. Yeah, I got to roll up some. Oof, here, putty. Yeah, we got to roll up some puts here. They're coming for this stuff. All right, what else you got for me?
That's it, my friend. We can take a quick 90-second break. We got What's Your Assumption next. We got 10 trades from our viewers. So I don't know if you want to do that.
The NASDAQ's giving it up a little bit.
NASDAQ down 62. Even the S&P down 17. I mean, everything's down 0.25 percentage point, Tom. It's not that big of a move.
Yep, got it. Okay.
We'll take a quick 90-second break and come back. We got more Tasty Live after this. What's your assumption next?
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this. Like, it's hot as hell in here. I'm like sweating. Like, it smells.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Hey doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
from the smart mouths at Tasty Live.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February. And just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
If you have any questions, feel free to toss them in the chat.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this. What's your assumption? That's right.
It's hard.
What's your assumption there?
It's hard for me to buy into. I don't know why, but I'm not sure if I'm totally sold yet on this sell-off today.
Really? Even though volatility's up by 50 cents, even the S&Ps are down 31.
Yeah, well, I want to be totally sold on it. I mean, I'm rolling down the calls now. I'm doing the dirty right here.
You're doing the nasty?
Yeah.
Omaha.
Got it.
Getting a little ugly.
Easy.
Don't like rolling down. Just looking to see. Don't like it.
Don't like it, Sam. I am.
Yeah. S&P's down 30, NASDAQ down 100. Russell down a little bit. Rare. Well, it's good to be home. That's what I'll say. I haven't been here in a while. Feels like I've been gone for 3 days, including the long weekend. Feels like a long time.
You've been
I'm
busy.
I'm glad you feel at home.
I like being back in the office.
You look great.
I'm glad.
All right.
I'm glad you're glad.
What do we got this morning? Bether. What's your assumption? This is trade ideas from people all over. Crazy people, smart people, great traders, horrible traders, everything. Throw together everybody. People that think Tony's a good trader. All the above. SMCI.
You went for all kinds.
All kinds of people. SMCI. I just covered my short strangle in SMCI. I would say that the trading in there is okay. I was short a strangle. We took $2 out of it, so I can't complain. But now we have on a fairly wide iron condor, which, let me see where we did this. We did it for 30. Oh, we did it for 330. It's currently trading for 270. That's not bad. So the post-split stuff worked in there. So
beautiful.
I can't complain. Let's take a look. Asina L from Menlo Park, California says he is bullish on SMCI in the weekly time frame. They have until September 29th to file their 10K. They recently are in the news for fuzzy accounting, but the CEO claims all is fine. Sure, of course he does. How do you view this news to impact price? Or does Tom think the 10K results are priced in? I do think the 10K results are priced in. Because I'm an efficient market theorist. I think everything is priced in. That said, how would I play SMCI in the very short term? Well, my only positions are in November in there. And I had November strangles, and I covered those. What I will say about SMCI is that it's kind of hard to... Let me see the markets before I comment.
Yeah, why don't you do that?
November markets, they're 10 cents wide.
Yeah, like I said earlier this morning, which would have been $1 wide post-split when they were $3 or $4 wide post-split.
What would you do in here? 44 IV rank. Stocks had a pretty decent move to the downside. It's been a little ugly.
I would say, yeah, well off of its highs, even post-split 120.
Yeah.
It's 40. I would say it got decimated.
Okay. What would a new subscriber do?
November 6th. You know me, Sosnoff. In a case like this, I would try to do a wide, if I could, $3, $4 1/2 ratio spread on the put side. You might have to go 37, 34 would probably be my play.
So if you did, if you're a little bit bullish, you could do a put ratio spread. Stocks down today.
You could do a $10 wide put spread by a $5 wide call spread. You could do like a Jade Lizard if you wanted to.
You could do, which would you rather do, a put ratio spread or a Jade Lizard?
Probably a Jade Lizard.
Okay, so let's do this. Let's go to the 25 delta put, which are the 34 puts, which are $2, okay? And let's go to the expected move in here, which is, oh, it's $9. That's pretty big by November. Let's do the 49.51. I like to go to the expected move. So sell the 34 puts. I'm going to actually move the put strike one more strike away. 33 puts. 49.51
for over 220, 218, something like that.
220.
You won't get filled at 220.
Not a chance.
218, you got a shot.
No shot.
Well, you need a little bit more of a downtick, you'll get filled.
Can't get filled anywhere.
All right, leave it in at 217 and see what happens.
I'll leave it in at 217, see what happens. All right, I'm trying. Lulu, Russ from New Jersey. No earnings announcements coming up, and the IVR is 48. I'm betting the stock will trade between 240 and 300 for the next few weeks. Let's take a look at Lulu. Stock's down $5 today.
Taking a look at Lulu.
Stock's down $5 today. The expected move is $26. Stock's trading for $260. Let's go $30 away to the put side, and let's go $30 away to the call side. I'm actually going to go 290. I'm actually going to go 310, 220.
Okie dokie.
I kind of like this trade. The volume in there is a little light, but the fills are better than in SMCI. That's for sure. Filled in Lulu. Russ, I did a wide strangle in there. I did the 220, 310. So I'm a little outside of your range, by pretty close. Let's go next slide. Chewy. Our boy John down in, I don't really think he lives in Trouser Snake. That's probably, that's a made up Tony Batista name, but.
Is that Tony?
It's not Tony, no.
But he does hunt snakes. He does hunt snakes.
He's he's our legit crocodile hunter.
He's a Crocodile Dundee from down south. You're correct.
No, he's a Crocodile Dundee for sure.
Mm-hmm.
He's more of a man than you and I.
Yep, I'll give you that.
Yeah, try some python stew. You know, he sent me a picture of this python that he killed, Beth. And I'm like, what do you do with a python? You really make python stew? I mean, I hate to sound ignorant, but like, what do you do with a dead python? Do you eat it?
You make boots. You make boots out of them.
I mean, can you eat python? I don't know. It's chewy. People apparently eating everyone else's pets, and the stock performing exceptionally this year off its lows. How about a bearish to neutral debit strategy in this with an IVR of 7? Chewy Cocoa Bum. Stock's down 92 cents today, John. It's a tough one for me. With an IV rank of 6, I kind of liked your downside play. I thought the stock was closer to 31. At 28 and change, I don't like it as much. I'm sorry. I'm going to pass. I would get shorted into a rally, but I'm not going to get shorted here.
Oh, all right. If that's your thinking.
Let's go to the next slide. Martin from Singapore. K-Web's getting closer to 2-year highs. IVR is 100 plus. Not fading this move, but trying to collect some rich premium. Haven't traded K-Web all year. Have traded a bunch in the past.
Maybe you should look at it. It's up another $2 today. This stock, Sosnoff, was $26 about a week ago.
All I'm going to say is that with 121 IVR, I'm in. So we're going to go to the expected move, $6. Stock's 38. We're going to sell the 32 puts. We're going to sell the, wow, is there a call skew in here?
Yes, sir.
We're going to sell the 48. You can do so much with this call skew. 32, 48 for.
You mean you can get very wide, is what you're saying.
32, 48 for 168, 169, 167. I don't know. 168. I think my first price was right. Nothing done at 168. But 167? No. Damn. What are you making markets in here today? Can't get filled. Tony must be making the market in here.
That ain't right. That ain't right.
Is anybody in this pit? 165. And I'm trying to do more.
All right, mid price was 167. What do you want?
I can't get filled anymore.
Oh, when?
The Dow is actually up. The Russell's only down 2. I can't get filled on more. What the hell? There you go. I like this trade so much because it has 120.
Oh my God. What can go wrong here?
I did 2 tranches. I'm trying to do a third. I didn't realize that 120 IVR can't get filled. Okay, I did 2 tranches though. Trying for a third. Let's go to the next slide. All right, Harold, our crackpot from New York, is looking at Apple. All right, Harold, what do you got here? In
looking at Apple.
New York, don't waste your time eating for those trucks. You bring along those $23 you want from Dr. Jim and take yourself to the 1, 2, 3 burger, where it's $1,
right.
$2, $3. What?
That's right, in Brooklyn.
1, 2, 3 burger in Brooklyn?
Yep.
Never been there. All right, what does he want to do here with Apple? Recent move, accelerated IV. Yeah, it's up to 51. I agree with them. And we have on currently in Apple, we have the 220, 230. I think you add to the position, but you can do better. You can do the 215, 235 or the 210, 240.
It's actually in New York, but I made a mistake. But yes.
210, 240 in Apple. I think this strangle on Apple is, with the heightened volatility, is going to be good.
Volatility is heightened everywhere.
Yeah. 6, 1. Oh, hold on. What did I say? What did I just fill here? Apple. 638. I'm trying 639 to do an extra tranche and nothing done. 638. I did 2 tranches in there. I did 2 tranches in Apple, 2 tranches in K-Web. Trying for a third in K-Web, nothing done. Went down even a penny to 165, nothing done. Okay.
What could go wrong?
I don't know. I'm trying, man. I'm being very aggressive today. Let's go to the next slide. Rivian. Raj from the Bay Area. All right. Raj, I have a Rivian position. What is it? RIVN. You start to see a lot of Rivians out there, you know?
Yeah, I do too. You're right. Yeah. Yep.
It's a pretty distinctive card. I actually don't have a Rivian position. Bullish long term.
There's a reason for this, Sosnoff. Rivian, a $10 stock, $10.60 right now. So I think you have to be directional here. As earnings coming November 5th.
Okay, so I think the only thing you can do is sell the 10 puts. I offered him at 98, nothing done. 97, take a fill, Phil. 97, and we missed, unfortunately, SMCI. Stocks rallied. I tried. So I'm going to cancel my SMCI order because I didn't get filled on the Jade Lizard, and I'm going to go back into the ratio spread, Tony.
Okay.
I like to do it at expected move, but it just doesn't make a lot of sense. So I'm going to do 34, 31. You know, it's hard to get filled in this stock.
In SMC, I haven't traded that much. I haven't traded post-split at all.
It's hard to get filled. I'm trying ratio spreads. I'm trying Jade Lizards. It's not good. But Rivian were filled. All right, let's go to the next slide. From Athens, Greece. Dios, I think. Deos? You're Greek. How do you say it?
Well, I have a little Greek in me, I guess. One time.
I mean,
I'm going to go with.
I mean, you worked
Deos.
in a Greek diner. Once you work in a Greek diner, you're kind of like, you know.
All right, I'm going to go Deos.
Deos. Okay.
I call him Big D.
I really want to short this. I'm not sure if it's too early. IVR is extremely high. Maybe a put ratio spread. Well, a put ratio spread wouldn't be shorted. Deos, I would go with a put diagonal if you want to get shorted, not a put ratio spread. A put diagonal in BABA, and I understand wanting to get shorted. It's up a lot, and the IB rank is super high. So a put diagonal here.
Ratio spread, broken wing call butterfly would work in there. A lot of things you could do.
Yeah. I'm just looking at some of the puts to do potentially a put ratio spread. I'm going to lean in November on your broken wing call butterfly in BABA.
Okay.
Which one would you do? 125, 130, 140?
You do it for a small credit?
Yeah, 46 cents.
That seems to be up your alley.
I mean, I don't know where. Actually, they just downticked the stock, so maybe 40 cents? No. Of course they had to downtick the stock. I had to get there a couple minutes late. 39.
Beautiful.
Take a fill, 39 cents. Let's go to the next slide. Rich from Fort Myers is looking at Airbnb.
Airbnb.
Yeah, the comments didn't get in here for some reason, but Airbnb have not traded this rich in a while. Being one of those who's pretty much banned from there. Markets are okay.
Thank you, Mrs.
Thank you, Mrs. Sosnoff.
125 and change really hasn't gone anywhere. IB ranks only 38, Sadov, going into earnings. This would be a marginal trade for me, maybe an iron condor if you're doing anything.
I think it's pretty marginal. I think it's an iron condor at the expected move. $145, 110, 105, 150. It's a cheapy iron condor at around $120. I don't love it. Oh my God, my prices were off too. 126. Weird. Okay.
Well, the market's 80 cents, 162. I mean, markets aren't great in there.
I can't get filled in SMCI on anything. I got to cancel it.
That's disheartening.
I know. Let's go next slide.
Meta, bearish, less than 20 days. You know what, Tim? I'm bearish in there too, from Knoxville, Tennessee. What about a bearish call spread? How many virtual worlds can we live in? I agree with you. I think if any stock that it's down $5 today. Meta. We currently are short the 600, 605. I will add to that position. I'm comfortable adding to that position. Sell the 600s, buy the 605. It's trading at 182. We started putting it on at 183. So we've held it now for like 3 weeks, and we haven't made or lost a dime on it. Selling the 600 calls in November, buying the 605s. I'm going to leave it in.
That means volatility's been upticking. It has been across the board.
Yeah, and the stock just the market just downticked. No wonder. So I'm working a bearish call spread in there. The 180, the 600, 605 for 182. As soon as the stock rallies about $1, I'll be filled. Let's go to the next slide.
You got the memo?
Yes. George from Detroit, Michigan is looking at APP. What is APP?
Yeah, you know me.
What is it?
APP is App Lovin' Corp Ordinary Shares Class A. Never heard of it.
Me neither.
Take a look at the markets in November. They're 30 cents wide, south and off. Taking a look at the open interest. This stock must have had a good rally. It has. This stock has gone from around 85 to 130 without stopping. I think you abstain, but that's just me.
Well, I always like to try new things.
Really? You ate cart food when you were in New York. You weren't trying anything new.
I'm a cart food. Meta filled.
Oh, nice.
See, as soon as they rally.
Even the S&P is only down 4.
Yeah, what the hell just happened? They're just down 17. Hey,
you said something to the effect of, I'm not buying this. That was the problem.
All right, George, I'm working this, trying it. APP. I'm going to try this at 366 on the strangle. Nothing done yet. I'll give it another penny. I've already moved it a nickel. I'll work it for a few seconds. I'm working it. I don't trust this stock. It doesn't trade. I've never traded it before, so we'll see. All right, what do we got here? All right, SMCI, Beth, I did nothing in there. I canceled it. We didn't get filled. Lulu, we got filled. Chewy, we did nothing. K-Web, yes. Apple, yes. I'll go through these in a second. Rivian, yes. Baba, yes. Airbnb, yes. Meta, yes. App, APP, nothing done. The last one. So just looking at the fills.
7 out of 10, but you did a couple of tranches in there too.
Yeah. Meta, we sold a call spread. Airbnb, we did an iron condor. In Baba, we did a broken wing butterfly to the upside, so a little bearish. In Rivian, bullish, we sold naked puts. In Apple, we sold a strangle, the 210, 240. We did 2 tranches of that. In K-Web, we sold a strangle, the 3248. We did 2 tranches of that. Tried for more, we couldn't get filled. In Lulu, we sold the 220, 310 strangle, and that's it. So
I would say it was a successful launch, Sosnoff.
For sure.
Awesome.
For sure.
Let's take a quick 90-second break. We'll come back to the skinny and options math with Jacob right after this. We'll be back in 90 seconds. Let's take the live.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter and twist. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What?
Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick.
Retweet.
Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I'll make it real easy for family to talk. I'll make ex-girlfriends real easy to stalk. I'll show you life in real time that's completely amazing. I'll show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars, Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got a million customizable backgrounds.
It's so totally boring.
My card's on the table, hash mark. Facebook is disabled.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You made me print out something for you in 40-point font.
From the smart mouths at Tasty Live.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there. Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tomas, we are back, my friend, but enough out of you. We've got this man, Jacob, in the house, the skinny on options. Matt, how are you, my friend?
Good morning, Tony. I am well. How about yourself on this fine day?
I'm doing great. No complaints.
Yeah, Chicago's still nice. You got a couple more weeks.
Oh my God, we're in the pool. It's October.
Yeah, it's perfect, right?
Yeah, no complaints.
Excellent. Yeah, you know, Chicago's got its good parts, and one of those is early October.
Yes, one of those early October, and then that's it. We're done.
Well, yeah. But enjoy it while it lasts.
I'm trying. Just like I'm going to enjoy this.
Yeah, you enjoyed this, catch up on your emails, all the usual. But the people at home should hopefully get something good out of it. How you doing, Tom?
I'm perfect.
You there?
Very happy today.
Yeah, it's a good day for the good guys.
Not yet, but it will be.
All right.
I'm
Just
sensing.
believe and hope. You're sensing. Do you have an index with which to sense? Because today we're going to talk about how indexes can help us make predictions about the market, rather than your abstract sense and intuition. Yeah, let's get into it, Beth. If we can pull up our title, we're going to talk about skew and skewness today. So skew, S-K-E-W, all caps, is an index published by CBOE. Skewness is a property of random variables or distributions that expresses how asymmetric they are. And ideally these two things are going to be pretty tightly related, and they will be, but it's going to take us a while to get there and show this. Beth, I can't see the slides, should I? Sorry, I can follow you. So skewness in theory, let's start there. I can't see where we are in the thing, but so after you have the mean, which is the expected value, and sort of expresses the center of mass of a distribution, right? Looking at the bottom, I've got 3 pictures of distributions. We've got their mode, which is just their single most likely value, labeled. The median, which is the 50% lies below, of the mass lies below, 50% of the mass lies above, and then the mean, which is the center of mass, right? Because while the median has 50% of the mass below and 50% of the mass above, mass that's further away from the mean pushes more heavily, right? You're trying to balance something on a point, and so the mean actually tracks that, right? The mean follows the tail compared to the median. And so when the mean is above the median, that's a positive skew, and the mean is below the median, that's a negative skew. Long ago, this was how the definition for skew ran. It was like the median it was the mean minus the median divided by the standard deviation. It's been sort of rigorized and brought into more standard mathematical language by making it the third moment. And it has a very similar effect, but it's the third moment. So it's the expected value of the cube of the difference from the result to the mean in terms of standard deviation. So you divide by the standard deviation, or the square root of the variance, to get the total. And so the mean finds the center of mass. The variance, or standard deviation, describes how dispersed it is around that mean. And then skewness tells you how asymmetric it is. So that's the general concept. Let's look at how it applies to the market. Yeah. Roll forward one, thank you. So these are some charts pulled from CBOE's initial white paper when they introduced the skew index. So it's all pretty outdated, but it's still relatively accurate. So while the Black-Scholes model has log returns of the SPX as normally distributed, the normal distribution is symmetric and has 0 skewness. Real-world market returns demonstrate a significantly heavier downside risk. So that's that left graph there, where the dark purple is just a perfectly average normal distribution graph, and then the orange is the actual realized S&P 1-month log returns. And so you see that it's got that sort of typical negative skewness picture, where it's got this heavy tail, right? More results out, not that many results way out to the negative side, but there's way more of them than there would be in that normal distribution, which totally vanishes over there. And then also those are balanced by a larger occurrence of things slightly above the mean, right? That those orange peaks over the center of the bulk, that shows that the most typical outcome is something slightly above the mean, but then it's balanced by a higher than normal outcome, representative outcomes for very far, multiple standard deviations below the mean, right? That if everything was normally distributed, then you'd say, oh, well, 3 standard deviations below the mean is only 0.5% likely to happen. We don't have to worry about that much. Everyone calm down. In reality, the market does go down by more than 3 standard deviations, not every day, but more than 1% of the time. And so this is seen in both the historical reality of these, historical log returns, and in a forward-looking way. If we look at the volatility smile, before 1987, no one really cared that much. They trusted Black-Scholes a great deal, and the volatility had a bit of a smile because further out the money options were a little bit rich. Usually this was written up to something like rounding or discrete effects or hedging or something like that. the 1987 crash happens, everyone has to reevaluate where they perceive risk to be. All of a sudden, puts start being way more expensive than calls at the same distance from the money, and you get this smirk or this skewed, this much more steep volatility smile to the downside. So these are the two ways you can see that the real market does have this negative skewness, either by looking at its historical returns, log returns, or by looking ahead and checking the option prices and seeing the put skew in typical underlyings. So because of this, it then becomes interesting to try to measure how much skewness is in the market, because we use Black-Scholes for a lot of our underpinning mathematics, but we know that it's inaccurate, right? We know that, in fact, the market disagrees and historical returns disagree. They show a much heavier downside tail and put skew. So how do we try to express this in a single number just for people at home to use? And now we've got our hard slide is the next one. These are pictures. This is the mathematically dense slide. People can review it on their own time or not, or check out the CBOE skew white paper if they want. But I'll do a really heavy piece in like a month, going over, really dialing in on what's going on this slide. But I'll spare you that today. To give you the less dialed in version here, Tony.
I appreciate it.
So we'll let R be the 30-day log returns for SPX, mu its mean, and which is something like the risk-free rate timescaled, and sigma its standard deviation, which is something like the VIX or the volatility. And then we just do a little bit of algebra to expand out the skewness definition, and remembering that constants can come out of expectations, but cubings and squarings can't, and you get this term on the right. And now here's where the heavy math comes in. And this is the same heavy math that goes into the VIX construction. So if people want to see how it goes, they can check out some of our old skinnies. But so given an arbitrary strike availability, you can make an arbitrary piecewise linear payoff function as an option strategy. That's not that complicated, right? Options make flat and then a bend. If you scale them by a constant, you get flat and then a bend that's not one-to-one. If you then start adding them together, you can build them into different things. You can make a big sum of them and make sort of any graph that you make that's just all piecewise straight lines, you can build as a big option portfolio. It might be a goofy option portfolio to anyone to actually trade, but that doesn't matter. The point in theory is that you could construct it. And then piecewise linear functions, so we can now make any piecewise linear function, are dense in the space of continuous functions. So these continuous functions like r squared and r cubed are still approximable by piecewise linear functions and therefore approximable by portfolios of options. And the way that those approximations work out is on the right-hand side here. R is the risk-free rate, T is 30 days, time till expiration. The sum is over the available strikes, and then the CBOE does the same trick they do for the VIX and say out till they find two zero bids, and then they stop looking just to save themselves computation time. KIs are the strikes. QKIs are the mid prices for the out the money options that strikes, or the average of the two at the monies if it's at the money. And then delta KI here is not delta in our Greek sense, but is delta in the displacement sense. It's the spacing between the strikes, right, which matters for the weighting. And then so this lets you construct the expected value of R, the expected value of R squared, and the expected value of R cubed, all as portfolios of options, right? Because they're option prices, those QKIs, times constants and put in a sum. And times constants is just how many of them you buy, put in a sum is combining them into a big portfolio. And so now we've got this incredibly messy looking portfolio, but it does this nice job of it's supposed to have its current value and the skewness should very closely align, right? There's a couple of approximations that go on. There's approximating arbitrary payoffs by linears. There's approximating using every available strike with every theoretical strike with all actually available strikes. And then there's, because it's all supposed to be 30 days, but reality doesn't always have 30-day options, there's a linear interpolation is done between near-term and next-term options. So, if it's 15 days and 45 days, it's 50-50. If it's 29 days and 59 days, it's almost all the 29-day and a little bit the 59-day price, but it's just a straight average. And so that gets you this big portfolio price S, which measures the skewness. We can go forward and get it out of here. Beth. So this process constructs a portfolio of options whose price by the efficient market hypothesis should very closely match the skewness of a 30-day log return SPX. Right, this is the whole algebraic rigmarole. CBOE looked at this and went, and like just plugged it in and went, historically, well, for one thing, we expect it to be negative, right? We've seen historically an input skew that we expect negative skewness in the market. And it's a pretty small number, right? 0 would be exactly normal distribution statistics. And between 1990 and 2010, it ranged between minus 4.69 and minus 0.1. So because traders don't like small negative numbers, they like big positive numbers, the CBOE does a pretty simple thing where they take, instead of using this portfolio S, they take 10 times it just to make it a bigger number, and then they subtract it from a cash account. Right, so then the actual skew index is 100 minus 10 times S. And so what this results in is an index where if it's 100, that would fit with market expecting 30-day log returns to be normally distributed, or at least symmetrically distributed. And that the higher it goes, the more put skew there is, the more the market is preparing for a downside move, sort of great in excess of a normal distribution statistics. So the things to think about here are that, one, from 1990 to 2010, the skew index was never over 147. I think, Tony, if you look right now, it's like 160 or something.
Yeah, you are correct. The skew, 158 and change, but whatever, it floats, 159.
Yeah, right. And sort of in the past several years, it's sort of spiked up to around 180 and very rarely gone below 140, which is all to say that the market has sort of changed its perspective. I think sort of 2008 is around when the shift happens, where skew kind of went from being something that fluctuated between 100 and 150 to being something that more fluctuates between like 135 and 180. But this measures sort of how much you should expect downside statistics to be worth. And it's all EMH, right? It's all efficient market hypothesis. So it's not saying that anything is a bad idea or a good idea. It's saying it's based on the fact that the puts are expensive, saying that, well, if these puts are expensive, that means that the market is expecting, or is at least prepared for, a large downside move. And maybe this is a thing that I think sometimes people, right, even CBOE likes to talk about the VIX as a fear index. And I think that's maybe even backwards. Right, it's more of a preparedness index, right? When the skew is high, it's not because we are going to have a big downside move. It's because market participants are hedging against and preparing for large downside moves. It's maybe even like sort of the opposite of a fear index. It's a statement of like, well, everyone's ready for a possible big crash when the skew is really high. Not that a possible big crash is about to happen and everyone's afraid of it, but that everyone's sort of prepped, right? Their basements are full of canned food, things like that. So that's, I think, all we're going to cover today. That's the skew as it's constructed and skewness as it actually is for distributions and the relationship between the two of them, which is that 100 minus 10 times the skewness is the approximated relationship. Perfect. Let's do takeaways. Skewness, the third centered moment of a random variable, serves as a measure of asymmetry. Negative means the tail is heavy to the downside, and positive means it's got a heavy tail to the upside. The skew index is published by CBOE and follows a very similar methodology to the VIX, right? The actual papers that construct it use all the same references. Approximating skew, approximates rather than approximating the volatility, approximates the skewness by using market prices for a carefully constructed basket of at the money and out of the money SPX options. In practice, the skew index is approximately equal to 100 minus 10 times the skewness. And then remember that skewness is negative, so minus 10 times it is adding something. So larger skew means a heavier downside tail. 100 would fit with normally distributed log returns. When skew was first released, it never had data outside of 100 to 150. Nowadays, seeing it down to 100 would be bizarre, and seeing it up to 180 is not. I mean, 180 was like where it spiked during the pandemic crash and such. But that's sort of its upper range these days, and things sort of change. By being mindful of skew, right, when we're deciding how to trade our options, we can always check on the skew index and see where the market participants are prepared for downside black swan moves, right? That these black swans that are never supposed to happen, in fact, do happen, and people are now prepared for them, right? By trading heavily in these far out of the money put options is really what's happening. That's what really drives up the price of the skewness, or the skew index, right? Drops the skewness, drives up the skew index, and gives us this nice reading. But I think in terms of people's actual day-to-day trading, the thing to recognize is that the efficient market hypothesis says that the options are fairly priced, and that if you're using the standard deviation to sort of place your strikes out there, this is a good call. But when skew is really high, you shouldn't think that 2 standard deviations is like 5% safe, and 3 standard deviations is 1% safe. Those are sort of your normal distribution statistics. But the higher the skew indexes, the further away from normal distribution statistics we are, and the more the market's prepared for a big downside move. And so the more you should be prepared for a big downside move. Not afraid of, but prepared for.
So, what do you think about preparation? You're a prepper.
So I'm not a prepper, but that's a weird, I wish we had that definition before, because it makes sense. Whenever the skew's high, we never seem to crash. We always seem to, it always seems to have the biggest, most violent down moves when the skew is really low. Yeah, I never thought of it in terms of that's really more of a reflection of how the market is prepared for that event than it is for that event to actually, like, we always looked at it as that, okay, this means that they're buying a lot of protection because they're scared. But the reality is it just means the market's way more prepared for it than at any other time.
Yeah, right. And the other thing is that, right, even when skew is really high, it's not saying that a big downside move is super likely. It's saying that instead of 0.01% to have a huge, like a 4x standard deviation downside move, it's like maybe 2%, right? 2% is many times greater risk than, your 0.1%, but it's still a pretty unlikely thing to have happen.
Yeah, no, that's good. But just a reflection of preparedness for that kind of event is a better way of explaining skew. Totally agree.
Yeah, especially the skew index, I think.
Yeah.
Good stuff.
Good job out of you. You know what? I'm gonna let you go. We're gonna take a quick 90-second break. NASDAQ just turned green, Southnoff. We'll be back in 90 seconds with Joy, your friend of mine, Mr. Scott Sheridan, followed by Johnny Trades.
Fun.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up. I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at tastylive.
Rock, paper, scissors? He just played paper. He'll do it again. No, rock, Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
The beauty of Thinkorswim was that we were different. From the name to the front end technology
was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tomas, we are back, my friend, and you know what that means. Enough out of you. That's right. Your friend of mine. There's that handsome devil. That's right. Mr. Scott Sheridan, you are my best friend today.
I appreciate that, but I do have to say, there's something that's very nice about having Mama Bear crack the whip and everybody falls in line.
Are you talking about Beth?
I'm not naming names, but she gets everybody in line fast. Okay, we could be all over the place. As soon as she snaps the fingers, boom, everybody get in line. There we go. Nice to see you too.
And Sazonov goes like this sometimes, just out of habit. He goes like this.
Have you? I can't ask Tom this because he doesn't believe in it, but I'll ask you. Have you done any stretching? Have you done it? Like I don't want injuries today.
Oh, I'm injured.
Where are you guys playing?
You're injured already?
I'm injured. Oh, yeah.
You can't be injured.
No, I'm injured.
What's the matter?
Well, two things.
Oh, no. Oh, here it comes. So I need more strokes. Go ahead.
Oh, I need more strokes.
Right, go ahead. I'm not believing it. Was this getting on the plane or off the plane?
No.
What'd you do? Slept funny?
No.
What do you got? You're leaning. Is this?
Yeah, no.
What do we got? What's the injury?
My two injuries. One from my rock climbing the other day.
Rock climbing?
Well, I went on a hike and I didn't. I went down a very.
He tripped over a rock.
Path is no rock climbing.
Rock climbing's cute, Tom.
Incredible. Rock climbing, you get the.
I had the ropes, the rope.
Belay on, like that sort
of. Go
thing.
ahead. So what? Wait. So what? Your toe, your foot, your ankle.
So I went.
What is?
When I was in northern Michigan, I went down a trail that I went down a trail that I shouldn't have gone down because it said difficult.
Yeah, to the beach house restaurant.
It did say difficult.
Yeah, it said difficult, and
okay. And
I had done it.
Of course, you said.
I had done it.
Oh yeah, sure.
15 years ago with my kids, and I thought I could do it again.
Okay.
And I didn't remember how hard it was, and I couldn't really.
Harder than the bump and grind?
Oh yeah.
Really?
What's the bump and grind?
Yeah. Oh, you gotta go.
Harder. It took me 3 hours.
Palm Springs for that. Beth can hook you up. She can hook you up on the
bump and grind was really hard. This took me 3 hours though.
I thought
was it equivalent, like just a little longer than?
No, it was rocky. This was rocky. This was harder for me. Big roots.
I don't know, Sadnov. After 40 years of marriage, I wouldn't think the bump and grind would be so hard for you. But whatever. I think you'd be used to it by now.
Okay, so what hurts from that?
Oh, that was
Achilles.
That was a lot of leg injury, but that's not the.
A lot of leg injury.
It's not the worst thing. The worst thing for me is I pulled my rotator cuff or something like that.
And you need that too.
I got a clip. Yeah, trying to get out of. I don't know what I did. I get out of the garage or something, pushing my hand out the, Anyway, I messed it up. It's been bad for like 2 weeks, but it's not going to affect my swing because I don't need my left hand.
Hey, it's a little
chilly. You don't need your left.
Is it chilly today?
No, it's going to be beautiful, low 70s. Here's the question.
A little windy and
what when you turn, you get your shoulder this way. How do you not need your left?
I don't need to turn anymore.
Oh, just straight arms?
Yeah.
So what do you rip at, like 60 yards?
60, 80.
60 to 80, but straight down the middle?
Right down the middle.
The bump and run game, though, is...
Could you throw the ball as far as you can hit it?
I mean, I wouldn't be talking a lot if I were you.
Well, I'm just wondering what I'm walking into.
No, I'm going to be fine.
Okay.
I'm going to be fine.
Scott, can you do me a favor? When we throw up balls, will you make sure my ball lands near yours?
I'm just taking you, and it can be Tom and Steve.
I can't be in a cart with him.
No, you and me.
All right, beautiful. Beautiful. Thank you.
You're welcome.
So I got to ride with Steve?
Yes.
No, he should take his own cart.
You get to ride with your friends.
No, he's too slow. I can't ride with Steve.
I just think he'll wear you down.
He wears me down.
He will, so that's why.
He does. He wears me down.
Right.
He wears me down.
He's not that
I'm sorry, that's the way it is.
He just wears me down. Too many questions.
It's me and Tony against you and Steve.
No, we'll throw up balls.
All even.
We'll throw up balls.
Throw up balls?
Yeah. You can give the bat a couple strokes. I don't care. He stinks.
Tony, how does it feel? It's already starting. We're not even out there yet. You stink.
Starting early, but I'm okay with it.
Oh, he's a country club guy now, right? So I forgot.
Nobody ever loses because of the bat. Just remember that.
That's right.
Is that where you guys are playing? The par 3?
Yeah.
No, we're gonna play more.
We should play the par 3. You know, you're too young, but they used.
I like a good par 3 because you can play fast.
Yeah.
Yeah. So they used to.
I play the Des Plaines one.
Right.
Quite often.
It's fun.
So they used to have a par 3 right downtown in between these buildings.
Randolph by Randolph, right?
Right under the highway. Yeah. Right out of the under where there's now there's big giant building condos.
He's correct on this.
Wow.
Do you know where they put up like the Aqua, like all those buildings?
You would go to from the lower Wacker Drive. And anyway, it was right.
Like $20.
Talking about like loop in the loop.
Right on the lake, like just on the west side of the drive.
You would hit into the lake. Like it was almost like you were hitting into the lake.
They had they built a driving range, a really nice driving range, and then next to it they built a par 3 course with like an island green.
It was the 9th hole was an island green.
Yeah, it was 9. And so we would go from the exchange.
Bring lunch.
You bring 2 clubs. You bring up maybe 3.
Sosnoff would make his best trades on this golf course. He took slapping
You take your
for
putter.
so much money.
You take your putter, a sand wedge. I think you really only need a putter sand wedge, but maybe
a wedge.
Maybe like a
wedge.
pitching wedge or 9 iron.
Definitely not a 9 iron.
No, not a 9
Not
iron.
a 9 iron.
needed a driver though.
Okay.
No, it was like putter, sand wedge,
Yeah.
and maybe pitching wedge for like Tony.
Yeah.
And and it was great. Now
Actually,
anybody ever get a hole in one?
No,
I've never had one. I've seen a couple. I've been on the wrong side of them, but I think that's where they were putting up. That's where they were supposed to put up the Spire, the ginormous building that didn't get the money, and now they are building something there. You know exactly.
Yeah, no, I know where it is.
Yeah, you know exactly where it is. Yeah,
it's kind of by the
Outer Jive East.
They built that like way to get kind of like onto Lakeshore Drive from there, right?
You sound like Tom. They built that thing as a way to get on to Lake. It's Randolph. It's just north of Randolph.
Okay.
Yeah.
it was fun, but the greens were slow, so it would mess us up because they were super slow. And we putted back in those days. We built an indoor putting green in our office. So we had a office.
It wasn't really a putting green. It was more on carpet, and we drilled holes into the carpet, into the concrete. So there were holes, but
flags.
With flags. But the best part about like an office floor, when you go out on any office floor, it's so uneven.
Yeah.
And fast, and you just get like it's like.
Yeah, but you learn it.
It's like putting.
Learn the way.
Well, we did it originally.
It's like putting on glass.
We did it originally because we wanted to get into.
The office.
Who gave it away? Yeah, the office putting championship. It was a trip for
Glenlivet.
Glenlivet. It was a trip for 4 to Scotland. All expenses paid, great golf, hotels, everything else. We know the guy that won it on.
So before they publicized this whole thing, like when
it was at
for indoor golf,
it was at Navy Pier.
This one kid that was a clerk on the floor,
he stinks.
He stunk. He wins, and he got a free trip with like 4 people.
Because the reason he won was because they didn't advertise. There was nobody there, and they literally grabbed him. They're like, "Do you want to be in this?" He's like, "I don't know what it is." They're like, "Can you putt?" He's like, "Yeah, I can putt," and he won. So then we took it seriously.
We practiced for a year.
And we had a whole board in our office, like the knockout rounds of who was going to represent. He wins. But here's the
Defo too.
No, but he won. But the problem, Defo came in second. But the problem was we were out of town on a business trip.
Oh yeah, that's right.
We were on a business trip, and the plane was late, and we were stuck coming in from Midway. He's like, "I'm not going to get there." So Defo's like, "I'll represent," and then he went in, and he blew it.
He's a good putter though. He was a good putter.
Good putter.
Yeah.
But they brought in the Sharks for year 2.
We had.
Because everybody knew.
Everybody knew.
There was pros in there.
I can't tell the guy. We were drilling the holes at like, I don't know, the building came up like 6:30 in the morning, 6:30. They're drilling the holes. Some guy comes upstairs and says, "You just cost me $500,000 because I couldn't see or anything." We're like, nothing's moved. Okay, nothing has moved more than.
We got a lot of trouble. Got a lot of trouble for drilling holes inside. We had somebody in there with a jackhammer to come into the office to drill holes. We got a lot of trouble because they're like, "You could have caught a cord, you could have smashed, whatever." We're like, "Oh, please."
Yeah, we didn't.
Oh,
We set
please,
up-
some structural damage. Oh, please.
We put holes everywhere, like under the receptionist's desk, like everywhere. Like
Why don't we bring that back and have it in our?
it was pretty good.
It was good.
It was good.
We can make like a full course.
It's not really good. It's not really conducive to a good work environment.
I know, but fun. We have fun occasionally.
Yeah, I know this was.
Like the Papa Shot. He's saying Papa Shot and ping pong. That's all we're getting.
That's it. All right.
That's it.
You're lucky you're getting.
You're lucky that.
Papa Shot.
Well, I contributed to the ping pong table.
Very nice. I did
So
too.
it's partly mine.
Oh, by the way, I don't know where we stand on this. I got to talk to Tori about soft service on the way back.
That's ridiculous.
Really?
Yeah.
'Cause that thing's gross. Because it wasn't even good. If it was good,
We can always count on Scott.
I tell you.
Take care of.
And then Margin Island, we put them in charge of all the toppings.
Ooh.
So then,
Are we gonna have like a topping bar? Like
yeah, I think so. So you'll have the different sauces, some sprinkles, some cookie ground up stuff. We want to listen. We take.
It would have been nice to have it for the summer, but
I got it, but
beggars can't be choosers.
the maintenance was an issue, so we got to work on this thing. But anyway, then we go over to Margin Island, and the best part is then you get to listen to Tom complain about all the crap. He's like, nobody wants to eat any of this crap. Just give me straight up ice cream, which he says he's not going to eat, but he's going to walk out daily, a nice big scoop. The only person I really care about is his daughter, because she loves it and it puts her in a good mood. We need her in a good mood.
Good.
She loves soft serve.
I think we parlay that into the Tasty Live kitchen here. We can make that a whole fun.
You clearly have.
I think you can hire Tony's son because he's experienced now with the cones.
Yeah, Tony. You know
That's
what?
actually great.
We should. You don't know that.
Vinny can be an intern.
We should have
Vinny
Vinny
can
here.
We'll have Vinny as an intern. He'll be the ice cream.
Some people have baristas. We have an ice cream.
Our ice cream cone intern.
Yeah,
But the Tasty Live kitchen, we can make it.
But
an ice cream bar, a coffee bar.
No, it's spoken for.
What is it?
It's a need to know basis. Apparently, you didn't need to know. It's gone.
Oof.
It's gone.
What's gone?
The kitchen. Donnie.
Oh yeah.
Yeah, it's out.
Yeah,
It's out.
Putting Donnie in the kitchen?
It's gone.
You couldn't get him a freaking office?
Hey,
office.
Hey, Nikki.
Wait. Was the closet taken? Is that why he's in the kitchen?
Times are tough. He's got a nice view. He's got the best view in the office.
It actually is a great view.
Yeah.
Does he get exclusive access to the balcony as well?
No, we're putting in another door.
Okay, good.
Yes, we still have access, but so no, whatever your grand ideas are for the kitchen, done on those. Anyway.
But just doing a building, you can have the other building if you want to buy it.
Other building? No. I already told you. You might wake up one day. My lease is up at my apartment in a month, and I might just be a squatter at 19.
We'd love to have you as a squatter.
Would you? Well, you can't kick me out.
I could have had that as an issue. Actually, it's a little sensitive topic right now. But I went to our house, which I haven't been there a long time because we still got so much crap in it.
You had a squatter?
Well, let's just put it this way. The 6 was not happy. I opened the door. The alarm's not on. Lights are on. And the front door was unlocked. And the last person that was in there was about 2 weeks before I was there.
Was Jules in there?
I'm thinking if somebody figured out that door was unlocked.
Careful, he's in the office today.
Okay.
That could have been the best thing to happen to you.
Would have been the best thing. Just gutted the whole thing. I'm like, all right, nothing left to move. Okay. Whatever's left doesn't matter anyway. Oh my God. Yeah, 6.
Oof.
That's
Ooh, I don't know who left the door open. I don't want to be that person.
No, you do not want to be that. There was a text chain going on. I'm like, can we dial it down a little bit? We need that person doing some work in the house. Okay. All right. Should we get to some business? Because we have real business.
Thank you.
After the fake business.
Thank you. I appreciate that.
You're welcome.
Johnny Trade's coming.
All right. Here we go. Top 15 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Time for you, number 15, HUM at an 82. For everybody else.
HUM. Love that stock.
Me too. Tesla
The
at an
stock is down
87.
$44, Tom. Sorry.
HUM. Hate that stock.
Problems with Medicare.
Oof.
Sorry.
We good?
Yes,
Are we
partner.
getting color commentary on each?
Sorry for the interruption.
Thank you.
Scott.
You could
Yes,
still
chef.
have ice cream. They got to go. They're going to the back of the line now.
Yes, chef. He gets bold when he's remote. He gets a little too bold. He's usually pretty.
One more comment. We're throwing up balls. How's that? Buff. Tesla, Nike, Nvidia. Okay, here we go. Nvidia at 33. SLV at an 81. Baba at a 112. Apple at a 49. KWEB at a 130. Meta at a 56. TLT at a 14. Costco at a 37. PDD at 61. AMD at a 63. Sorry. Baidu at a 108. FXI at a 142. And number 15 for Tom. HUM at an 82. Rounding out the next 10. MU at a 40, Microsoft at a 56, Amazon at a 58, Coin at a 51, XOM at a 49, ENPH at a 67, JD at a 120, NEO at a 107, and SMCI at a 40.
Tony, I'm selling that K-Web Strangle now. I couldn't sell it before 165. Now they're paying 178 for it. How's that for crazy?
Volatility.
I know.
Tony, it's going to all be your fault, whatever it is.
It already is.
It already is, Scott. It already is.
All right.
Thank you for your time. I'll see you soon, my friend. I appreciate
Thank you for your
it.
participation. You get a participation award.
Okay, I'm turning it over to the real talent. Goodbye.
One last thing, the ice cream selection.
Yes.
Vanilla chocolate. Do we have like any?
No. Seriously, we only have one flavor at a time. It's not a dual unit, so we could rotate, but you can put suggestions in.
Nice. Like do a vanilla chocolate and then.
I think it only has one container. I don't think you can swirl one container. Like if you swirl it, just
the worst ice cream machine I've ever seen. It doesn't even taste like
Yeah,
ice cream.
we can call up Jimmy to get him.
It's
help with
great.
this. We know.
How about this?
I know a guy. He knows a guy.
How about this? The one that just said it's the worst ice cream ever. He'll be the first in line every day.
I always tried it, but it was always gross.
It's the same stuff that you get at Dairy Queen.
No, it's not.
Okay. I need Vinny. Okay, Tony, we need Vinny to come in to confirm it's the same stuff at Dairy Queen.
Oh my God.
I'm gonna get. Tom just wants a T-shirt that says he's part of the curl crew for the Dairy Queen. That's all he wants.
What's the curl? What's that?
The little curl
curly
on top of the ice cream.
Yeah.
You know, the Dairy Queen. That's a Dairy Queen thing. Don't you?
Come on, you don't know anything.
Vinny.
Scott doesn't do his own curls. He has somebody, curls ice cream for him.
See, I'm thinking curls. I'm thinking more like payas. Okay. All right.
Goodbye. Goodbye.
All right, play some music.
Tree trade ideas. You ready? You want some?
Give it to me.
Let's do it.
I'm ready.
First one. We're going. We're moving, man. Come on. First one, oil. Little Johnny trade in the oil futures. It's rare that we get to do this, but
Some oil.
I mean, it's had a nice little bounce here. Vol is on the higher end of where it's been, an 87 IV rank. I did a little iron condor in the November 15th expiration. I sold the 64.63 put spread, the 81.82 call spread. I did a 30-cent credit, which is a $300 credit, $700 in risk. Used about $400 or $500 in buying power.
I'm getting killed in oil today.
It's had a huge move in vol is exploding. So even if you were long delta, you're probably getting a little bit, there's some vol getting pumped there. So if you had meteor puts, you didn't get paid as much as you thought you would.
I got hurt in there because this was an insane vol pop today.
Yeah. Well,
That's just what my son said to you.
I know. I heard him the first time.
Yeah. So I'm trying to take advantage of that. Delta neutral iron condor, playing the 65 to 80 range that we've been kind of chopping between for the better part of.
I don't hate it. I just have that. I had that strangle on.
Cool, great. Yeah. Well, I do this for the Johnnies, but the second part is to give you trade ideas. First part is for the Johnnies.
Thank you, sir. Thank you.
For the peeps, man of the people. All right. This one, I don't know if you'll like it because of the move that we've had, but Baba, it's obviously had an insane move. The call skew is off the charts. The calls are trading 3x to the put.
We did a broken wing butterfly into this morning.
I'm doing a crab trade.
Okay, what's that again?
You're doing a bullish spread. He did more of a neutral to bearish.
No, I did a bearish spread.
Yeah, mine is.
You're doing a
very
bullish trade
cheap
there?
Long delta. What?
You're doing a long delta trade in there? No interest.
It has a small amount of long delta.
I've been bullish in there forever.
I know, but you paper hand it. You papered it.
No.
You wet paper toweled it. Not even a paper hands. A paper hands, it stops a little bit. You got wet paper towel hands.
Oh my God.
You couldn't hold for anything. You've been waiting. I've been listening to you talk China for 4 years. You finally got it. You could have got to a scratch. I mean, all right. So I'm long the 125 in December. I'm selling 2 of the 140s in November, buying the 155 wing. It's a cheap $3.45 debit. It plays the upside, but it's like a neutral / slightly bullish upside play here. It's really just playing into the massive call skew.
Yeah, no thanks.
All right.
Not for me.
All right, that's fair.
What else you got?
Tesla.
Okay.
Big move today. I'm looking at broken wing butterfly on the upside here, on the call side. Did this for a small credit. Plays up to about the 295 level, which is basically the highs that we've seen. 265 is my first long strike. I'm selling 2 of the 280s, and I'm buying 1 of the 305s. So it's a 15 by 25 long to short spread. So you have $1,000 in max risk here. Small 37-cent credit. So you have no risk to the downside, but really just playing for a little bit of a vol crush, maybe a little bounce from here. See what happens.
So I'm in the 190, 335 strangle with a little bit of long delta.
Mm-hmm.
That's
roll
how
up the puts into it?
What?
Did you roll up the puts into the move today? I mean, you got like a $12, $15 down move.
I came in long put spreads and short strangles.
Yeah.
And it actually worked because the strangles got hurt. They hit the premium in there.
The calls were way juicier.
Yeah, they killed them.
Yeah.
So I adjusted my strangle because that was up money, and I covered my put spreads. Cool. So it actually worked out.
Are you in November?
I'm in November.
Nice.
Yeah. Okay. Today, Tesla's my biggest winner today.
Yeah.
And I didn't really play for the.
It wasn't really a vol play. It was the call
just
got killed because you had the event or the numbers that came out this morning.
I agree with you.
Oh,
I agree.
Good trade. Good job on it.
All right, what else you got?
That's it. 3.
Oh, all right.
I know I gave you 4 last week, so.
Well, I had the Tesla play on. I don't like the Baba play, but I had the first one on that you did. What was the first one?
Oil.
Oil. I had that already.
Yeah. Interesting. I think oil's an interesting trade now.
Yeah.
Okay. Very high.
All right. Good job. Good job out of you, son. Good job out of you, Tom. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We just had all 3 or 4 indices higher. They're only the evening S&Ps are down 4 right now. We'll take a quick 90-second break. This is Tasty Live.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on tastytrade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the tastytrade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yes.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't high school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette is Jenny Andrews, and we are live from our favorite place on earth, not Disney World.
Oh,
the SIBO.
The SIBO, live from the SIBO, Wednesday, our favorite day of the week. Hopefully we get some action behind us. It's kind of slow, and I'm surprised because we've had a wild market the last couple days.
We have had a wild market the last couple of days. We have been all over the place as of yesterday. And yesterday, Jenny, 10:15, where was the low of the day? We gave our predictions on where everything was going to end. We met in the middle because I think we ended down 50.
I think it was ended down 57, 55.
50-ish, yeah.
54.
Yeah.
54.
I said 48, you said 90.
I said
we met in the middle.
You were closer.
We met in the middle. It's the same. I thought it'd be up from there.
You were closest without going over.
But I will tell you, the low of the day, the low tick of the day, we painted the bottom.
10:15. Our 10:15 trade was I think the bottom. We were down about 88 when we put on that 10:15 trade. We are referring to a study that was sent in by our research team, I believe on Monday, and I think that piece was done by Jajun.
It was done by Jajun. You think you know? We just looked it up. It's Jajun.
And people have been loving this trade. The study just came out on Monday, but Monday, Tuesday.
No, the study came out on September 4th.
Oh, but you brought it to our show on Monday.
The study came out on September 4th. When I was on the show with TP on Friday, someone had called in and said it was one of the best studies they'd ever heard. We went back and looked at it. The study came out on September 4th, and it's a market measure study if anybody wants to go look at it.
All right, well, 2 down, 2 days, 2 wins. We'll see if today can be the third. Although I'm not sure what our SPX trade will be today because we have another study, a new study made by the research team, by the amazing Anton, talking about selling SPX 0 DTEs and the looking at VIX 1 day. So that's coming up today.
Yeah, and we are going to do that. I just jumped into the SPX because I want to see where it actually finished. And you know what we were looking at, Jenny, was SPOOs. When we look at SPOOs. That's what we were saying. I just want to see what the closing print was yesterday.
I know it was down 54.25. Like that was the amount that it was done.
Yes.
I had the 55.70 put. Or 55, where was it? Let me see. I had a put.
What put did you have, pray tell? In SPX now you're talking. We're bouncing back and forth between E-mini S&Ps and SPX.
Yes. The 57.20.
And
57.20.
How did that end up for you?
So at 230 or 240 something, I bought it for 260. Was $12 at the end of the day.
Oh, that's not bad.
No, wasn't bad.
No, that's not bad at all.
I like this end of the day. They've been more expensive than usual because we've been getting a lot of movement.
And you have to pick a direction, which I think is interesting because yesterday when I was looking at the close, not at the close, maybe 30 minutes before the close, we actually turned positive, which was crazy. And then we wound up being down 55.
I bought this, and it was a loser at some point. I bought it, I paid $260 for it, and then the market rallied, and I said to
But do you put this, do not put a GTC in for those. As God is my witness. What is it? What is? I know that's from a famous movie. I will never go hungry again. But as God is my witness, I will never put a GTC in for those ones. Now you'll see if we put something in right now, I'll put a GTC in to take $50.
Now, right? If we're doing our 10-15 trade. But no, I think I bought it. Market rallied, and I said to myself, that was a donation. Closed my computer, and at 3 o'clock, opened my phone to see where SPX was. Pleasantly surprised that it had turned around.
Woohoo! Congratulations!
It's not congratulations. I do these all the time, and I make plenty of donations.
We make lots. We do.
This came from Anton. This came from a study of don't sell these 0 DTs at the end of the day. So I said, if we can't sell them, maybe maybe I'll buy them.
Correct.
You're right. You have to say like, oh, I'm gonna take it. It's kind of like going and betting on black or red.
And we're in the platform right now. So what we're kind of talking about, instead of saying at the end of the day, these are very, very expensive and they will decay. But I'm going to assume when you were doing the 57.20 that it was just the out of the monies, right? You were going to the just out of the monies. Here, if we're looking at the just out of the monies, this is the 57.10 right now, and it's $10, $11. That's too expensive. I'm not buying that right now. That's a lot of decay. As we get near to the end, there's still some decay in there, but it's not that much.
Around 230, that'll be about $3, depending on how busy we are.
Right.
Depending on the bell, depending on the action we see. So that's just it. End of the day, those just out of the monies trade for $2, $3. And
do you know what I love? We have a clock with a second hand right there, Jenny Andrews.
Oh.
So for our 10:15.
When we do the 10:15 countdown. And you've got to pick a direction. And if the market's not moving, it's not going to work. But But the study showed that they're not worth selling at the end of the day.
No, they're not worth selling at the end of the day.
Too much risk in selling.
Yes, true. True.
You know.
So now here's my question, because we got to keep an eye on time. Now we're time sensitive with our 10:15. Do you want to try to do the study and then break at 10:15?
Sure, we can pull up this. Let's pull up the study. We're talking about SPX. We're talking about VIX. Let's pull up the study that Anton sent us yesterday. So thank you very much, Anton. We appreciate it. Here's a brand new study. Let's jump in.
And this is the VIX one-day effect on 0DTE, which we think is topical because yesterday we saw a spike in volatility, a big spike in volatility. I'm going to go back and forth.
We've been seeing vol keep its wings up. Where is the vol now?
So the VIX, only because we're talking about VIX, I'm going to go to that right now. You can go to VIX futures too. Is 1875. So we're down 51 cents today. But VIX
it's still keeping its wings up. It's not like 15 or 16.
Right.
Yes.
Yeah. And so I go to the VIX one day, and the VIX one day right now is 1165. But if you look at the chart, I'm just going to show you. This is what we're going to be assessing right now.
And that's the volatility.
This is the volatility one day. This is what our study's about. VIX one day effect on 0DTE.
Okay.
So I just showed where everybody could see what we're talking about in the VIX one day.
Okay. Let's cue up slide 1. All right. The VIX one day is calculated using the same procedure as the VIX, but using one-day option prices in place of 30-day option prices. One-day volatility is roughly 4 times more volatile as 30-day volatility, which means when it spikes, we may want to consider selling premium in the one-day or 0DTE options. How much higher does VIX one day matter for profits when selling premium?
Okay.
So this is what we're looking at. Is it important to look at the volatility, the one-day volatility, when you're selling those 0DTEs?
Okay, so I do think I love the research. I love the studies, and I appreciate Anton. And I think a lot of our viewers like to know why they're doing what they're doing and when they're doing it. So Jenny and I kind of know. I will look more at the prices. To your point, you said yesterday it was more expensive. This is just our feel. She looked at it at the end of the day. She's like, it's more expensive than it typically is. That means there's more volatility than there typically is.
The last couple
yes.
days, I'm looking at those every day. Every day I start trading 2:15. 2:15 I open my computer, turn on tonight. That's when I start trading.
And you can kind of get a gauge of what price they're trading for wrapped around then. So it is great. I love this. And this is, the research team does a deep dive into this to understand why. Right. We kind of look at it from a feel, but we've been doing it forever.
Yes, and if you look at the same underlying, same options every day, you'll get a feel for what seems expensive to you, what seems high. You know, we have rank now, which is awesome. It tells you if vol's high or low compared to itself. And in the past, it would just be from experience. You would get a gauge of, there seems like there's a lot of premium in here, or it seems like there's not enough.
I'm just showing what she's talking about. IV rank is right here next to SPX right now, and SPX is a 28.2. Is that volatility high or low versus itself in SPX?
Okay.
So the study is using 52 weeks of data in SPX 0DTE options collected every 10 minutes. You consider selling at $10, $20, and $30 out of the money strangles and capping the wings. Okay.
And that's important. Capping the wings with $20 wide wings. We need to. SPX is too expensive for us to sell naked strangles. So buying $20 wings, wherever you place your shorts, make it a $20 wide iron condor.
Yes. And then the trades were closed when they reached 25% of max profit. And then they contrasted. This is where the study is different. They contrast the performance based on the VIX one day,
which is going to be interesting. I'm interested to see these results.
And Jenny and I actually read through this, and I'm glad we did, on the prior close. So we're going to look at what the study says, not just looking at where the VIX one day is right now.
Right.
On the prior close. So that means yesterday's close.
And so for people who are, and we've got plenty of people who do sell the 0DTs on the open or near the open.
Yeah.
So a good gauge of should I sell it on the open or not is look at the one day, the prior close of the VIX one day.
So I'm going to go to the VIX one day, and we're going to see where the prior close was. And we're going to go on with the study. I like going back and forth where we're going to have these numbers. So yesterday, let's do this. Yesterday, it was 10-1, right? 10-1. The close was 1463, okay?
1463.
It opened at 1031. Its high was 1692. Low was 1031.
Well, and it makes sense that it had a little spike at the end of the day because
there's a little down move.
We had a down move, pretty swift down move in the last 5 minutes. I want to say SPOOs went from like down 40 to down 55.
Yes, I agree.
So I can see why we had that spike at the end of the day yesterday.
Okay, so our close for yesterday's VIX one day, let's keep this in mind, was 1461. Okay?
All right, moving on to slide number 3, Liz.
Okay. This is showing the VIX one day with less than 10.
And we saw yesterday close 1463. So if VIX one day closes under 10, you can see if you're placing your short strikes in the 0 DTE, $10 out of the money on either side and doing a $10 wide iron condor, your win percentage is 75% and your average P&L is $25 per trade, or 84% on the $20 out of the money, but your average P&L is much less. And then $30 out of the money, higher percentage, higher win rate, much lower average P&L. And you might question, is the risk worth these profits?
I don't think, I am questioning if the risk is worth these profits. And this is just saying, it's kind of like you said, if I'm going to sell something for less money, so we know you're going to get less for it because the volatility is then lower, that's why the profits are lower. That's kind of where I'm leaning at with this one.
Right. And maybe we wouldn't think that if we didn't look ahead and see the next slide, because I've already seen the next slide, and the average P&L is much better. So it makes you think, oh, maybe I should keep an eye on the VIX one day, because the average P&L really jumps when you see a VIX one day between 10 to 15 instead of on the lower end.
Instead of on the lower end. I'm going to go back and forth so you can see this. And all these slides will be in the on-demand tab if you want to go back and watch it, and you can see all this. And I'm just going to kind of go forward, and then we can kind of go backwards, because Johnny and I know that this is where we kind of want to land, and it's interesting. So VIX one day between 10 and 15 on the prior close. Check. We're here.
And we were even here even with the 11, even with the 1060, even with lower prices, because we are in a period right now of a little bit higher vol.
Yes, correct. So I'm going to go to the third study, and then we're going to kind of go backwards, and I'm going to jump in the platform.
But I do want to make notice here, the win percentage is very similar.
Which one are you on?
I'm on slide 4.
Slide 4, okay.
Okay, the win percentage is very similar to the previous slide.
It is. Meaning like VIX less than 10, the win percentage is very similar.
77, 85, 87%, all high probability trades. Your average P&L really jumps.
Keep in mind, though, too, these are iron condors. These are not picking a direction in the market like we do at our paint the bottom trade in 3 minutes. These are picking a direction in the market.
Right. So
these are not picking a direction in the market. Is what I'm saying.
These are just iron condors. So we'll take a look at these. We will take a look at these. But right now, this doesn't look bad to me. When you've got a VIX one day between 10 and 15, I kind of like the $10 out of the money, because I know with that one you're going to take the least amount of risk.
So let's go into the platform.
Sure. I mean, we can go. Do you want to go? Should we go to the next slide just to take a look?
Yeah. So here's the last slide. This is greater than 15. You notice that your probabilities go down quite a bit, but your actual profit, 73, 60, and 44, jumps, but your probabilities go down. Now this makes sense to me, because if you've got a real high VIX, no one knows where it's going.
The market's all over the place.
It's all over the place.
And when you're selling those 0 DTs, you don't have a lot of room to be wrong. So when we have had markets where we're up 40, then we're down 40, and
we've had 100-point swings in the most. Yes.
So when you're having those swings, you almost don't stand a chance with some of those one days. When you're having super high vol, huge market swings, you don't have any room to be wrong when you're placing those 0 DTs.
And keep in mind, these are just iron condors, so you're not picking a direction versus our paint the bottom, which I love somebody giving us a time frame to say which direction to go to. So I'm just going to jump in the platform.
I do kind of like the idea of looking at these when we have the VIX one day between 10 and 15, where we get that higher average P&L, but it's a high enough win percentage.
Agreed. Okay, so right now we've got the VIX, the SPX 0 DTE at 57.08. So I'm going to just kind of split the difference, okay? So I'm going to say to the put side, it's 05. So if I'm going to go $10 wide, I'm going to go to 95.
Okay.
And then on the call side, I'm going to say it's 10. So then I'm going to go to 20. So 57.20 and 56.90 are our shorts, okay? Now the $10 wide wings, which you said...
56. Because if you go $10, are you going $10 down?
56.95 and 57.20. 56.95 and 57.20. I split the difference of where they were in there. And then if you're going to go $10 up, you're buying the 85.
Well, they're $20 wide.
The $10 wide is first. Oh, they're all $20 wide?
They're all $20 wide wings.
Oh,
they're all
good.
$20 wide wings.
Okay.
So in every scenario, $20 wide wings.
Okay. So then you're buying the 75 and the 30, the 40.
This is the one I mentioned I prefer because you're risking less, because you're collecting the most.
You're collecting $870 on a $20 wide. So your risk is $1120.
Right.
That's not bad.
That's not bad.
I don't know that I would touch this with a 10-foot pole right now.
Well, the way the market's been moving, when we watched yesterday where we were down 88, then up, then down 55.
I prefer picking a direction and scalping in and out of it. Right now, I love the study. I do love the study, and when it is going to be a little bit more less of a geopolitical things on the horizon.
Did they mention what they're looking for out of this trade? Did they
25%.
Oh, 25%.
That was in the study, 25%. So this is option A. Now option B, and I'm pretty sure I can do this. I'm just going to take the strikes and separate them.
So we would be going, if you're going to widen everything?
You're going to take it $20 up and $20 down. So I'm going to go now 57.30, 57.50.
Yes.
57.85, 57.65.
It shifts the whole thing up. So,
no, I just moved it manually. So and now we're getting $5.84. So you get $8.80 or $5.40. To your point, to Jenny's point, the drawdown is $1,500. Back of the napkin math here versus $1,100 in the other
you get more room. You get a little more room to be wrong, but your risk is more. And honestly, this isn't bad. It does give you a little more room to be wrong. So it's almost like a case-by-case scenario. You have to take a look at it, weigh the pros and cons. This one doesn't look bad. I thought you're collecting more than I thought you would be.
And then versus, hold on, I'm just going to go down a little bit more.
And then
versus we're going $30 out of the money. You're getting, it's the 57.40 is your short, 56.75, and you're getting $3. So it goes $8, $5, $3.
And that's pretty far.
Those are far.
I think with those, on a day when the vol is high, you can get, I didn't expect to get much at all for this.
Okay, we got to put a pin in this. Where are we right now? Oh, we're up. I was going to say, if this is the low of the day, do you think we're only going to rise from here?
No, I don't know that the 10-15 low of the day is going to work today. We've got too much going on.
But all we're looking for, and we talked about this yesterday, all we're looking for is a small bounce.
Small bounce.
Because we're looking for $50 on it.
Sure. Go ahead, put it in. Well,
let's put this to bed first.
Yeah, let's finish this down.
So I don't know that I would want to put this on a day like today. I'd prefer to pick one side or the other.
I would say.
So let's go to the takeaways, and then we'll go back in. Hold on,
let's go back to the study and go to the takeaways. Because honestly, for me, I almost prefer this a little bit earlier. I think you're getting more. I prefer this a little bit earlier.
10:15 is pick a direction. 8:30 is an iron condor.
I think that's a good rule. If you're on the open and you're doing these neutral spreads on the open, 8:39 when you're getting more, risking less. I like that. 10:15.
Pick a direction. That's kind of how I feel too.
That's going to be our
Liz and Jenny takeaway is
pick it at 10:30, 10:15, pick a direction. Okay, then you could get out if you get the movement in your right direction.
Yeah, but these takeaways are right here. So because the VIX one-day effect is more volatile than normal volatility, you can sell it via the one-day 0 DTE options when it gets elevated. Depending on the strategy you use, you could get 3 to 7 times greater P&L when you trade the elevated 1D VIX.
And you can see it because if I told you, hey Liz, that a couple hours into after the market opens, you can go $30 down, $30 up, and sell a 0 DTE iron condor, do you think you would get $3 over $3?
No,
I didn't.
No,
you need that elevated vol.
You need the elevated vol. And so think about it from this perspective. What would it have been at 8:30?
It might not have been too bad. Not looking too bad. So I do a lot of these SPX studies, and I'm happy we're on at 10. I wouldn't want to be on at 8:30 to be doing these trades on the show. I'm not an early riser. Our show actually used to start at 11.
And this is too early for the 10:30.
And then they're like, hey, can you guys move your show to 10?
This is during COVID.
Yeah.
That was during, no, it was before COVID.
No, it was during COVID. During COVID, they shifted our show up to 10 o'clock. Yes.
You're right.
Because they removed bootstrapping. It used to go Tom and Tony, bootstrapping, us, and then they moved us. First we got the phone call, can you guys move up to 10? I don't know.
I was like, I'm in. I'm up so early. Okay, but wait. Let's put this to bed. Here's the gotcha. So when you have the elevated P&L, which is great, you get 3 to 7 times greater P&L, your win rates drop.
Your win rates drop, right? But you're making it
as it well, should. Like
you're going to have some losers.
You're going to have some losers, and your win rates do come down. And your win rate, from that perspective, I kind of like being, having it narrower because your drawdown is less.
Can you go back to slide 5, please? I just want to. So you take a look at this, where your average P&L $73. That's average over time. If you do these all the time,
every day, every 10 minutes, collecting data. By the way, by the by.
And I will say, these 0 DTs are new. So when we're looking at the data on this research, it's only a year. These are new. These have not been around a long time. So our research doesn't go back that far.
Yeah, but this is a lot. So it's 52 weeks of data in SPX collected every 10 minutes.
52 weeks of a bull market.
52, but every 10 minutes. So it's looking at this is decent amount of data. It's not. It's every 10 minutes.
I know.
It's not like we just did this twice. Like our paint the bottom tape. We're 2 for 2.
But I don't think it's bad. It's kind of cool when you start doing using the back testing product, back testing tool that we have, and doing the research. It is very interesting because you can see there are certain periods of time where the market will really be going straight up or dropping straight down, and you'll have a short period of time that really reduces your average P&L.
Yeah.
So do we like
I just say I do think I do think there's power in the back testing. I really do. But with power comes great responsibility because you have to make sure you have the parameters in. You can get whatever results you're looking for.
I know we've had a lot of questions about the back testing tool coming back, and it is.
It's going to be awesome. But with great power comes great responsibility. What movie is that from?
But it's from a movie. I have no idea what movie. I didn't own a video store when I was little like Liz did. I'm sorry. What movie, Liz?
I think it's Star Wars.
Maybe.
You don't even watch all the Star Wars. Ladies and gentlemen, I don't even think she's seen all the Star Wars movies.
I'm not a Star Wars fan. I'm sorry, I'm not.
But didn't you watch it when you were a kid, a teenager?
No, never.
Wow.
I was more into Barbie movies than Star Wars. I'm sorry.
I don't think they had Barbie movies when we were kids.
I've seen them all, every one of them.
But they came out when our kids were kids.
I don't know. Anyway.
No, I am keeping an eye on the SPX because it's up 8, so it was only up 4.
It wouldn't have. It would. We need about an 8-handle move.
No. I'm just saying I want to see if it's going to go up from there. That's the low.
We'll see. If you want to put in your paint the bottom.
We can't. We missed it. We missed it.
We didn't miss it. Anyway, I do like the 0DTs. Knowledge is power. Another study to have in your back pocket is not a bad idea. It makes you want to double check. Hey, what was the VIX one day before you look at putting in the morning trades in the 0DTs.
It does. And you can take a look at this. You just type in VIX.
And shout out to Anton for putting this study together for us. He's down in Florida trying to survive the hurricane.
So, if you take a look at this, it does based on the close, but look at this. I've got the chart pulled up and I pulled it to where 10. So between 10 and 15, it's almost always there. Now it's based on the close. That's what I was going to say. It's based on the close. So it's always like the VIX one day has been in that range since the beginning of.
Yeah, it's just the volatility of those one-day options.
Yeah. So it's good to keep an eye on it.
Okay. So it's 10:23. We actually have a lot to do today. We are taking live tweets, so send us a tweet. Include the hashtag LIZ JNY. We're taking live tweets. It's Wednesday. What's your assumption Wednesday? Tom and Tony in the morning take viewer assumptions, and they come up with their trades. They have huge accounts, unlimited funds. Then we look at those assumptions and try to scale them down for smaller size accounts.
So that being said, Jenny, we are doing a takeover on October 18th when we are in studio.
Yes.
And every time I've been on the morning show, I get to trade with Tom's money. So I'm hoping on the 18th they have fast market. We get to trade with Tom's money.
October 18th.
And it is fun because you're just zinging strangles.
October 18th, the ladies take over.
Buying futures, selling futures.
All day on Friday, doing the morning show.
Yep. Yeah.
What time do we have to be there?
But that's what I do love. I love
6 a.m.?
6 a.m. But I do love our What's Your Assumption because we do take a different take on it. I think that you're going to look at us being a little bit more capital conscious of things. And we are a little bit more creative because we do have a smaller account.
Okay. So we also have a few things to manage. PDD, Pinduoduo.
Pinduoduo? Let's look at it.
Pinduoduo.
45% in one day.
Okay, all these Chinese stocks won't stop going up. They go up every day. Every day that ends in Y, they're up. Pinduoduo up again. We sold a put spread. Let's just close that world. Do you see this chart?
That was JD, but I'll go to Pinduoduo. They all look the same though. Look at this chart. It's the same thing. The Pinduoduo chart, everything is skyrocketing.
It's so hard. It's so hard to.
Tim Knight was bearish this yesterday. I hope he didn't put it in until today, after this?
Well, it's just so hard to stay in something when it's going up so much. What was it, a week ago? A week ago when I said, oh, I was just out with all these kids celebrating a 21st birthday, and the kids were asking me how to get long Timu. So we came up with a diagonal and
it was
Pinduo
here.
Duo. It was last Wednesday. And how do you hold on? How do you say, oh, I'm going to get long at 107 and now it's 150 and you're still holding on? It's very hard as a trader to just hold on to those positions.
So I will tell you, this is what we did do. So Pinduo Duo, we have reestablished three times. I pulled up our activity for Pinduo Duo for 1 week.
Put the diagonal on, maybe put on a new diagonal, sold a put spread. So we've been trying to stay in. But at some point, when do you say, I'm going to take off our position and wait for a pullback?
So what's interesting, and I kind of like this about the diagonals and the zebras for that matter. The zebra, you keep ratcheting up, ratcheting up, ratcheting up. Just if you're willing to, so when things keep moving, and I remember this from the Women of Facebook, on Women of Tasty Trade on Facebook, when things are going up and you want to get into it, you just have to make sure you're not risking that much. So moving those diagonals is taking risk off the table, and or the zebras, where you can ratchet them. There is something to be said about that.
I agree, and I do like that. So now we're taking our third trade of the weekend, Pinduo Duo, off today because it's hit 50% max profit.
This was just a put spread.
It was just a put spread. Yes.
I wish it was a diagonal.
We started getting more conservative because we thought, well, how high is it going to keep going? How long is it going to keep this run going?
Yeah, this week it's harder to ratchet up a put spread than it is a diagonal. So we're going to close this for 50%.
We'll close this, and one trade that we do look at if something's run up and we want to stay in or get back in on a pullback is the buffer trade, which we will look at that, and maybe it's worth looking at.
But those have to be in the very, very near-term trades. You can't do them long distance. Long distance meaning farther on time. November's too far. The buffer trade would be buying a put spread, buying a put debit spread.
So how far would you go out in time with the buffer trade?
9 days.
9 days.
I mean, because 2 days is too little.
Okay.
And so what you're doing here is you're going to buy...
It's not bad, Liz. It's honestly not bad.
It's expensive.
So...
It's going to cost us $3,500 for the buffer trade.
All right. How wide did you make your put spread?
So the put spread, it's going to cost us $4,300 for the put spread.
She's just looking at buying power on a naked put. Buying power on a naked put
because
is expensive.
But it's in the money naked put, so it's expensive.
Let's just explain the buffer trade. So for any of these underlyings that people feel like they want to get in, they don't want to miss the move, they want to still be in, just explain the buffer trade.
So the buffer trade is buying a ratio spread, or I'm sorry, buying a put spread. So I bought the 52.5, 46.
Okay.
And I'm making sure that this green bar goes all the way down. So, and then you are selling an in-the-money put, which is a synthetic covered call to pay for it.
Okay.
And all you're trying to do is whatever you purchase that put for, see what the call value is, and go and sell that in-the-money put. This makes no sense right now.
I like to look at the buffer. I just want to talk about the benefits of it. In this trade, it's a way to keep a bullish trade going, but move your break even.
Your break even's only in this trade down to 145.
So the break even would be 145, where it was yesterday.
Yeah.
But if it keeps running up, you can make $1,150. The buffer trade is worth looking at. It's a way for people to say, if I want to be in this, but it's already run up, how do I get back in if it pulls back a little bit?
And like I said, these are discussion points.
You're still in it. It's not like a ratio spread where you collect nothing and you get in way down low.
I almost feel, Jenny, and I've said this multiple times, and I've done this handfuls of times on earnings, and I think 9 days is too far. I almost think if you're going to do this, you got to do it in the 2-day. Because I do. Because it's what happens that day. It's you're in this trade, you're out of this today or you're not. I think this is a day trade, personally. And every time I've ever done it, I've used it as that. And I will use it as something's got earnings and it skyrockets up. Do I think it's going to continue during the day? And then I'm out that night.
And I have used them as I want to be long this, but give me some room in case it falls back down.
So now, so this scenario, well, yeah, this isn't very good.
Well, it's a day trade. It's a little bit different because you're only taking the risk for a day.
That's exactly it. You're taking the risk for a day, and that's how I like to use the buffer trade. I've tried to even go. I thought 9 days would be short enough. It's got to be almost the weeklies.
I don't know what to do with all these Chinese stocks. They've gone up so much. If you want to be in them, I don't know what the answer is.
I don't either. But I did like what I think it was Claudia. So if she's in them, she'll take and buy just an out of the money call spread. Being like, hey, if it continues to go up, great. If not, it's a small donation.
Right. I made enough money in it running up.
Yeah.
Out of the money call spread. To your point, small donation. Those out of the money call spreads, I also think need to be closer.
Yeah, I mean, you can do.
I mean, not 2 day, but.
But you can do the 52.55. If you think it's going to run up for the day, sure, do the 52.55. You're 76 cents.
If you think the run's going to keep going on this week.
Yeah.
It's tricky. I'm out of PDD right now. I had to, at some point I said, I got out, I'll wait for a pullback and get back in. I haven't seen a pullback yet.
So I can't get out of this put spread.
Really?
Yeah. I'm paying 103 right now.
You should be able to, shouldn't be that wide. Just, I thought you were filled already.
No, I'm trying to pay 105. Because the market, if you look at the market is 75 cents at 137. It's wide.
Well, that's what happens when something goes up, $50 in a week.
So we've got that in as closing order.
Don't look, our 10-15 trade would have been out.
I know. It's the paint the bottom, Mikey. I love it. I love the name, and I'm going to start doing it.
And I'm also going to say, don't even look at MES M2K.
Well, that I'm closing before the end of the day. So right now, MES M2K.
I just said, don't even look at MES M2K.
You can't say it's okay. Once again, ladies and gentlemen, it's just like when she had 11 of us come to our house, and she put a sign on the door that says,
you don't need to tell the story, don't open the door.
Don't touch this door. What did everybody do?
Don't look at the MES M2K pair. Before the show, it was up $115. That pair from yesterday.
Yeah.
Now it's down $42. That's why I said don't look at it.
And then before the show, it was up $40. We just went up that much.
29.
Either way, it was still up. But like I said, we're gonna close this because it moves so much. We've got 29 minutes. Keep an eye on it.
I'm HODL, holding on for dear life to mine, keeping it.
Okay, so we need the capital back in this account.
We don't.
You should hold on.
We don't. We have $13,000 in buying power.
You should hold on for dear life and years, but this thing, is he gone? We talked about it yesterday. You said tomorrow, no matter what happens, we're going to close it.
When I said we can close it tomorrow, I had my fingers crossed.
I'm just going to show how to do it so it's queued up. So you got the M2K MES.
What?
Just in case it hits to go positive again.
You could put it in for a better price. Put the price you want.
Sure. So I'm selling out of 2 M2Ks because I'm long, and I'm buying 1 MES.
We would be buying one. We would be buying back 1 MES, selling out 2 M2Ks. Now, when this trade is looking good, is when
I don't know what price I would put it in.
Well, we can adjust it. We can adjust it later.
Yeah, I don't know that I would put that in because I don't know how to adjust that price. It's a notional value.
Anyway, that's a pair we put on yesterday. We said we were going to keep an eye in. We said we closed it if we needed the buying power back. I don't think we need the buying power back, but if we need the buying power back, if you feel like we need the buying power back, you can close it.
I'm going to keep an eye on that. If it becomes a scratch, I'll pop it in. Okay, so do you want to pop into Twitter and go into what's your assumption?
Yeah,
what do you want to do next? Is there anything else that needs to be managed?
No, I don't think so. I really don't think so. I glanced through the account. I don't think there's anything we need to manage today. But I would say go into Twitter because we have a lot to do. Okay.
Okay, so I'm gonna go top down.
Tap down in Twitter. All right, Groove Moves. From Spider-Man. With power comes great responsibility. Liz,
Spider-Man, yes.
Spider-Man.
Yes, Spider-Man. Thank you, Groove Moves. Love it.
Groove Moves.
Perfect. I'm reposting these. Okay, what's next?
All right, James. Good morning, ladies. The quote, with a great power comes great responsibility. And here he is, from Peter Parker's Uncle Ben. Spider-Man. Thank you, James.
We're getting a lot. Don Dude, also, Spider-Man, thank you. Thank you.
We should have hopped into Twitter sooner.
Oh, yes, look at this.
Oh, my God. Let's snap this picture.
I promised I wouldn't post it, but I did send it to an uncle.
So... Look at how cute. We had a couple of our favorite guys filling in while they were working on lighting.
Yes, these were our stunt doubles, as I like to call them. So yes, they were filling in. There's Jeff's. I said I would not. I promised I would not post it, but I was going to text it to an uncle.
But there's Frank's wonderful nephew.
That's awesome.
On the left, and then they were so cute.
Okay, then Dan O'Mell comes in. Can you? Oh, here's the VIX 1 day.
Okay, he's got a chart. Look at the high, 16. He's got it marked, 1692.
VIX 1, is that 1 day chart? There's
Fixed,
1 day, 5
5
day,
day,
15 minutes. 5 days.
Okay.
I love it. Thank you very much.
Oh. Okay. This is, and I hope you don't mind that I shared this. He emailed this to me this weekend. This is Trade Small, Trade Often John from the Villages. He caught a python over the weekend.
In the Villages?
He's in Florida. Yeah. Do you know? Okay, so
John, all I'm saying is I would run. I wouldn't be being like, hey, check
they
this
get
out.
paid. I've met python catchers in Florida. If you, for every snake you catch and you turn in, you get paid.
How much?
500. It depends on how big they are. I think maybe it's like $500. John, you could let me know. But
there is no amount of money for me to pick up that snake.
When we were doing something in Florida, we met a girl who just caught a big snake, and she showed us pictures of it. It was huge, and she said anyone can go catch snakes and turn them in. They get paid for them because Florida's trying to like eradicate them.
Really?
Yeah. If you need some cash, Liz, all you need to do is go catch some pythons.
There's no amount of money. Trade Small, Trade Often John, I think you better get back on the trading horse before touching pythons.
Anyway, he's killing it because he caught a python over the weekend, and he sent in a trade. What's your assumption? What's your assumption for us today?
In honor of him, let's go to his first.
Let's go to his.
Okay, hold on. He was, where are
Chewy.
we? Chewy. There we go.
All right, let's see. What does it say?
Chewy, from Trade Small, Trade Often. Try some python stew. It's chewy. Speaking of chewy, with people apparently eating everyone else's pets, and the stock performing so exceptionally this year off its lows, how about a bearish to neutral debit strategy?
Okay.
An IVR of 7.
All right, let's jump in the platform and take a look at Chewy. Chewy's only $28. It's down $1 today. John, hopefully you put this on yesterday. Looking for a neutral to bearish strategy with a very low rank. He's on the right track with some kind of debit diagonal.
Yeah, so we kind of looked at a debit diagonal this morning. So here's the difference. It's got a very, very low rank.
Yes.
So I went, and you're kind of stuck. I went 16-day, 45 day, 16-day, 44 day.
Okay.
So I'm selling the 16-day for 55 cents. It's like 56 cents. Okay. It's the 27 put, and then to his point, you can do a debit where you're going to buy the 30. So you're outlaying $2.36.
Not bad.
For a $3 wide, very low drawdown, but you have some built-in rolls.
So you've got the 30.27.
I've got the 30.27.
Yeah, sure. 30.27, $3 wide. What we want to make sure is we're not paying over $3 for that. Yep. We have a couple rolls built in. This is a put diagonal, bearish trade, very low capital. The trade, $235.
Sure.
If you hit review and send, you will see how much buying power we have. You hit review and send, you can see $12,900 in option buying power.
Yeah.
If that becomes an issue, we can certainly go through the account and free up some buying power.
One trade will free up $3,000.
We can certainly go through the account and free up some buying power.
So that is sent.
Excellent.
Okay, so that's a debit spread in there.
Okay. Should we go back to what's your assumption?
Hold on, I'm going to make sure we get filled in these. I'm just going to pay up a little bit.
Now.
So we're filled in Chewy. Okay, we're filled in something. Okay. Going back to what's your assumption. I'm just going to make sure we get to everybody up here. So we got the Trade Small, Trade Often John. There's the SIBO, which we love. Thank you very much for retweeting
favorite day of the week. And who ever would have thought we would say Wednesday's our favorite day of the week? Not I, said the fly.
They didn't. Not me, said the bee. They didn't know we'd be at the SIBO. Okay. Now, Bob from Bob on Fire comes in. There is STZ as the only earnings play today.
Constellation Brands.
I don't know that I need to look at that, do you?
Well, Bob,
we
love your list. Maybe we'll take a look at it.
Did you see Nike?
Nike had earnings yesterday. They are down today. Down on what? Shoe sales? I'm not sure.
They literally just said we're not even giving guidance. They were just like, Vanetta this morning is like, they called Uncle. They were like, we're done, we're out. Like, they didn't even give guidance.
You know what? I can appreciate that because, okay, so my husband every quarter has to give guidance. Yeah,
That's going to be hard.
It is hard. It is.
We don't have to give guidance. What we have to guess is each day we guess where we think the market's going to be, and we were both wrong.
No, he constantly has to go give his report to everyone of his guidance for the next quarter. It's not easy.
No.
It's not easy.
That's what I'm saying. Our job, we only have to pick where the market's going to end. We don't have to say where we think the quarter.
I feel you.
Yeah, they just tapped out. Vanetta was saying that this morning, and I was listening to her.
Okay, what's next?
Okay, so then we're getting into the what's your assumptions of this. So we've got Meta. I'm just going underneath Bob.
All right, I can read it to you if you want to pull up the platform. Meta. This comes from Tim T from Knoxville, Tennessee. Is Knoxville? Oh no, your son's gonna be in Kentucky.
Yeah, he's not in Tennessee. The girls are going to be in. The girls are in Tennessee.
Okay.
Yeah.
Okay. Meta bearish, less than 20 days. This is his specification. Less than 20 days. What about a bearish call spread for the November 15th cycle? So this isn't even an assumption. Here's the trade handed to you on a silver platter.
Read it again.
No 15 expiration.
Less than 15 days. Less than 20 days.
Less than 20 days.
No expiration is 44 days from now.
He's bearish in less than 20 days, I guess. He thinks it's bearish in less than 20 days, but he's looking at a trade on the no 15 cycle.
Okay, so you're going through earnings.
A bearish call spread November 15 expiration.
Can we tweak it and make it ours?
Go.
Because if we're gonna say less than 20, if you tell me less than 20 days, my trade's gonna be totally different than running a call spread through earnings.
Go ahead, Liz. You're in charge.
So if we're gonna open this up, go to the 16-day if they want it in under 20 days.
Okay. Less than he thinks he's bearish for the next 20 days.
Okay, so I'll go one more out because Meta is pretty liquid. Let's go to the 23-day.
Okay, 23-day Meta right before earnings.
Right before earnings. And the only reason is I don't want to call spread through earnings in Meta.
I think his hope would be he'd get out of it before then.
I think so too, but if it's 20 days, you can get out of a 23-day before then, hopefully.
Sure. Let's see.
So I'm just going to simply go up to the expected move for the cycle and sell a $5 wide call spread.
All right, so you're taking his idea of a call spread, just moving it a little closer.
Yes, closer. Sure. So you're getting 127 or 130 for the 600, 605. What do you think?
Ship it.
Ship it.
Ship it. Okay, excellent. That was easy.
Let's see if we can get filled on that. Okay, so let's go back to what's your assumption.
Then we have Dios from Athens. Much of my family's in Athens right now.
What is Dios translated to? Is it days?
What? Dios mío. I think Dios is like God, right? Like Dios mío. Oh my God.
Yeah.
Anyway, Dios from Athens. Yeah, I have my whole my aunt, uncle, cousins, they're all on a Greek cruise right now, but they're currently in Athens.
No way.
Yes, they've been cruising the Greek islands.
What cruise line are they on?
Royal Caribbean.
Are they?
How's your we'll take a look at that if we have time later. The Royal Caribbean stock, is it still on its?
Because do you tell them to buy the stock before they get on the cruise to get the cruise credit?
No, I forgot.
I know, we got to do this. This is the best covered call this side of the Mississippi.
All right, so
I'm gonna go.
Is bearish Baba 45 DTE. Really want to short this. I'm not sure if it's too early, and that's kind of the fear with some of these Chinese stocks. Is it too early to short them? IVR is extremely high. Maybe a ratio put spread or a put diagonal. With the high vol, maybe a ratio put spread.
Maybe a ratio put spread.
If you're bearish and you want a ratio put spread, you're gonna make it as wide as you can without really needing to collect anything. You're just hoping it comes back down into it.
Yeah, I don't mind a ratio spread.
Yeah.
Now it's a $112 product, but take a look at the volatilities. I know they're small on the screen, but if you see where the earnings are November 21st, we're like 57, 57, 57, and then you go to 51. If you look at the volatilities on the side.
Okay.
Which I find odd.
Well, no, the earnings are no. Oh, well, because you don't have any weeklies yet. You don't have those weeklies yet. It goes all the way to 80 days, and usually when you're 40 days after earnings, you're already seeing a decrease.
And this is 5 days after earnings. That's true. So earnings seem to be in there. So you've got a 57 rank, but I think the rank isn't from earnings. I think the rank is from it being a Chinese stock. It's not necessarily bouncing up from there.
So it's red today. Is this the first day we're seeing a little bit of red in Baba?
Oh.
Bearish Baba. Let's look at. It's crazy because I was long some of these Chinese stocks for so long, and at some point I just got rid of them. I was like, forget it, I can't wait any longer.
I threw the towel in all of mine except for JD.
I mean, I kept Pinduoduo, but that was different. But like, I threw the towel in at Baba.
Yeah.
And my son too, he had Baba in his account, threw the towel in.
Now Baba's only a $112 product. I just want to see. I know they're bearish. I just want to see how much the 100 put is. I'm not putting that in because I know they're bearish. It's $2,600 on a $112 product. That's because the volatilities of these are going to be a little bit more inflated.
When they talk about a ratio spread to the downside, when you talk about put ratio spread, the risk is to the downside if you're doing a typical one, unless they're maybe flipping it and looking at more of a back spread like a zebra.
What do you think about a call ratio spread? Because it's bearish. If it gaps back up, then we're in.
Sure.
But if that's the case, I'd almost like to do it nearer term than 44 days.
You probably can. But what are you going to do? The 16-day? That's really near term.
That is near term.
I don't know. Price
Well,
on both.
so it's 34 million shares. Let's split the difference. Let's go to like the 30 days.
I don't think the weeklies are that liquid in these.
You don't think so?
I mean, you see how hard it was for us to get filled in Pinduoduo in the monthly.
Yeah, that's true.
So I think stick with October or stick with November.
October's so close. You know what I mean? So what if I did 20?
Just
Here, I'm
go
gonna
to
do
the 44 day.
I just want to. I'm in the 16 day right now. I just want to see what we can get. So if I did the 120, 122, so it's $2 wide,
Okay.
you get $2 for it.
Okay.
You're only going to collect 50 cents. This is bunk.
Well, and how much risk do you have to take? Because if you go to November, you're taking $1,900 in risk to collect $1.
We were pretty close.
That's how it's going to be either scenario, I think.
Can we come up with something that doesn't use $1,000 in capital?
In Baba?
Yes. Because we've been Baba'd before. We've been Baba'd, we've been Baidu'd.
I mean, if you want a bearish trade, then just sell a call spread.
Let's do. This is what our plan was, and I was totally spacing on it. Reverse big lizard with a fat tail.
Okay, fire it up.
We've got 100 rank, right? So reverse big lizard with a fat tail.
Are you in November?
I'm in November with 42 days. It's gonna be a very, very baby trade. Let me see. So I went to the 15.
Okay.
15 straddle.
But he's bearish.
I know.
And you're going up. You're like, we're trading 112. You're going $3 up.
So then take it to this 110. So, and then 110, buy the 105.
Okay.
You've got $12 in collection.
$5 right put spread.
And I'm buying the 120.
So you can make this as wide or as narrow as you want.
Correct.
So
and I wanted less than $1,000. Remember, I was saying I want less than $900. Here we have $600, $615 in credit. We've got $385 next loss.
This trade, if Baba drops down, you're collecting $613, and it's a $5 white spread, so you make at least over $100.
And the
if
other
it goes
one
up, you only have if it blows through, you only have $380 in risk.
Yeah,
it's very low risk. But if it goes down, you're only making $100. But if you're selling call spread, $5 wide for $1.30 or so, that's all you're going to make on that.
And when
anyway.
we were looking at those upside ratio spreads, we were going to risk $1,000 to make $1.
Right.
If it was to the downside.
Now,
so this is in my mind a lower drawdown.
Sure, ship it. I never complain about a big lizard. I don't know if you want to go to the analysis tab. Well, it's full.
Yeah, we can go to the analysis
just to show them what it looks like. When she said taking advantage of that 100 rank, we're selling at the money premium, and you can see the sweet spot is if we stay right here. But to the downside, we're guaranteed at least $116.
Now, and I'm glad you brought this up too, because I originally started us at the 115 level, which is fine, but
they're bearish,
that's bearish. You're right. So by their assumption, you should move it down. We're 112.75, so you can go if you're selling the straddle. It's either the 112 or the 115 because there isn't a 112.50. So I'm glad you brought up that point to bring it down there. So that peak, this is a bearish trade. We'll make money at 110. That's our peak. Yeah. Anywhere to the downside,
anywhere to the downside, we make money.
Yeah.
Okay. Next, after Baba, we have. If you go back to Twitter.
Sure.
Right after Baba, we have Rivian. So Rivian bullish. This is Raj from the Bay Area. I know the price can go lower, but as a contrarian, this seems like a good time to buy, perhaps short puts. So I'm in Rivian, you're in Rivian. Do we not have a Rivian position?
We do not have a Rivian position.
Well, thank you, Raj from the Bay Area. We're going to get into a Rivian position.
We do not have a Rivian position. Oh, wait, hold on. I have RIVA in there. RIVN. We do not have a Rivian position. It's a $10 stock. I'm just going to look at the chart.
I don't know why we don't. We usually do.
I think we've called on. I mean, I think it just rolled off and we forgot about it.
No, I think we probably had puts and something happened and we got out of it.
So it is very low. It's trading 10.53. Now, honestly, my Rivian position, I'm pretty sure I just got assigned puts and I've just been sitting there selling strangles around it.
Over the weekend when I was at Appearance Weekend, I met someone who was
I like the Rivian shop.
He was an engineer for Honda, and we were talking about all the different cars. And he was shocked. He was shocked when he heard, because we were talking about all the different vehicles.
Yeah.
And he was shocked that Rivian fell back down after, Volkswagen put all that money into Rivian.
I know.
Rivian popped up to 14, right? At least it popped, I think, at least 14.
24.
Really?
Well, no. Well, I don't know. I don't know which pop that was.
I think it was that second
19.
Pop. Okay, so Volkswagen's putting all this money into Rivian. Rivian runs up, and now it's right back down to 10.
Yeah. Yeah. You don't see many Rivians on the road, but that doesn't matter. We don't care. I'm bullish.
I think
What's
they're
this
nice
person's
looking.
name?
I like them.
Who is this?
This is Raj from the Bay Area.
Raj is bullish. I'm bullish. Jetty's bullish. We're just going to put a simple put spread in, right?
Okay.
Or simple put.
Sure, yeah, sell some puts.
So I don't mind going through earnings on this. You've got a 37 rank. Let's go to the November.
November, the 10 puts are $1. If you want to do a synthetic covered call, you can move them up and sell the 12 puts for $2.20.
Well, I'm actually okay with the 10. Take a look at this. You're getting $1.02 and you're putting up $3.67 to do it. That's pretty good.
That's not bad. That's not bad.
That's not bad at all. And if you even if you rolled it up to the 11, you're only getting an extra $1.50. I like the 10. I'm going to stick with the out of the monies. Your standard out of the money, 37 delta put.
It's interesting. So if you have a covered call long the stock, selling out of the money call against it,
like the 12?
Usually we say the puts use a lot less buying power, but here I don't think so. If I buy the stock here, buying the stock or selling the in the money put, it's almost the same amount of buying power.
Oh, well, once you get in the money, it is a little. The buying power goes up.
Right.
That's what we're looking at the Pinduoduo. But here, $3.68 for an out of the money isn't bad.
No, it's not. It's not. I'm just with the covered call, buying the stock and selling that 12 call is only $440. So it's kind of interesting because this price is so low. A covered call, or the short put are almost the same buying.
Well, because the $10 stock is taking 50% for the stock, and then you're getting $1 or whatever for it. Yeah, that's pretty good.
So me personally, I like the idea of having the stock and selling that out of the money call, because if the stock keeps going up and you can keep moving that call out and up and you can hold on to the stock for a longer period of time.
It's synthetically the same as the money.
I'd rather hit long-term gains than short-term gains if I could keep it going that long. If you can keep it going that long.
Oh, I see what you're saying. Meaning you want to buy the stock in this?
Sometimes I like to have the stock because if it rallies and you have it long enough, you can be on the, you're not paying the short-term taxes on it.
True.
But in this account, we're never in anything that long.
No. So yeah, that's why I'll start with, in this account, we usually follow the rules. We don't really, I'm not saying we don't think about taxes in here, but we typically don't.
No, we're just in and out of trades, out of trades.
Because we're at the Overtraders Anonymous.
But if something gets to the point of the buying power for the covered call or the put are the same, I'm going to do the covered call and take this and have the stock.
Yeah. No, I agree. I think that's what I said. I just have stock in my account, Rivian. I have stock and I have strangles around it.
Yeah.
Okay, so that's being shipped. I'm going to bring this down a bit.
All right, we have, the last one in Twitter, if you want to get back
Give me 2 seconds. I'm just making sure we get filled in a couple of these things. Just penning them down. And then, so in Twitter.
Okay, we had one more. And before we get to it, I'm just going to read, because we are running low on time.
Yeah.
A tweet came in from Cece's dad. How would we trade coin to the upside? We have a bullish coin position right now. Coin really took a big hit yesterday. I think it was down $4 or so yesterday.
Yes, it did. And that is on the #1 active SIBO list, wasn't it, Coin?
Yes, the most actively traded options. Coin is on there.
Here, wait. I can actually show you guys. Yeah, Coin. Check out this.
Look at that. So 195. Looking at the 195 calls. So on the left side, those are the calls, and got the puts on the right. 195 calls, and there's updating.
Oh, it's updating. Whoops, it's updating. So it went away. But here.
But Coin was one of the most active.
Yep.
18,000.
Yep.
Interesting.
I like that it's updating all the time. Okay, so yeah. Now we'll show how you get long Coin. What do we have?
Somebody's going to ask us. We're going to get emails of where did you see that?
It's on the SIBO website.
On the SIBO website.
It's for everybody to use.
On the SIBO website, you could search most active.
That's all we did. We're not that smart. We went to the SIBO.com, typed in most active in the search bar, and bada bing, bada boom.
You can see everything that's trading.
That's not what's happening around us.
No, it's the most active.
Yes.
It's the most active.
Yeah, I just want to be very clear about that.
And you see the date. You'll see the date. It'll say October 2nd, Coin, 18,000 calls, the strike. You'll see that. You'll see it all.
Yes. And then, so we do have a Coin position in right now. We have a diagonal. We're short. We're short the 192 and long the 182.
2 days ago. We put this on 2 days ago, but yesterday Coin took a big hit, which it's making a little bit of a comeback today, but it took a big hit. So
we should almost
we've only been in this for 2
that.
days. We just did it 2 days ago.
I know, but our short is worth 20 cents.
And our long is out of the money.
Yeah, that's what I'm saying. Like this, if you want to continue a long position, you've got to reestablish.
So yesterday, Coin went from about 178 down to 159. Coin had a massive drop yesterday.
And Frank the Great comes in saying that in Coin, the almost 10-to-1 calls versus puts.
Okay.
Okay, so what do you want to do with the coin position?
So let's adjust ours. Why don't we adjust ours? Close
Meaning
this
you got
and
to
put a
close
new
this.
one on.
Yeah, you have to close this. This is doing no good for us right now.
It's way out of the money. I mean, so we're not even feeling the effects of this up $3 today in coin because our calls that were at the money we're so far out of the money. So just put in a new diagonal.
So we looked at this, we closed it, we are looking at it with a fresh set of eyes. With Cece's dad, we're going to get long coin. Now, we were very near term. Do you want to go 9-day, 16-day again?
Sure.
So in the diagonal, you're opening up the 9-day. You're going to sell the 182.5, which is just at the money for the expected move, and then you buy the 16-day 170. It's $600.
So here's what I will say: when we go so near term, I like more than a week or so in between. When we're so near term, what would be a positive theta trade is a negative theta trade. We're losing too much theta on our at the money. We're paying too much extrinsic value on the at the money. It's no longer a positive theta trade.
But we were week last time. We were 9-day, 2-day last time. I just took it off.
I like to be. We need to make sure that we're getting. We need to at least make sure it's positive theta.
Okay, so keep an eye on this. If I'm going 16-day, 30-day, if you go 30 days out, you got to make sure you're not going over the cycle. You're spending $1,000. I think that was our problem.
What strikes are you doing?
So I just did normal expected move for the cycle on the 16-day. At the money's for the 30-day. It's $1,000.
So you're getting about $4 extrinsic value in the 16-day, and you're paying, $11 in extrinsic value on the.
I'm 170, 180. No, you have like $14 in the 30-day.
Oh, I was going the one. I'm just always really try to be really cautious with the extrinsic value. That makes sure we're getting enough, so we're not paying too much.
We're paying $1,200 in this trade.
Or just do a put spread.
That's part of the problem, and I think that's why we were 2-day, 9-day in the last one that we put on 2 days ago, because it's $1,000.
I know. You just want to make sure that you're not giving up so much extrinsic value that it has to move so far for you to make money if it goes up.
Yeah, let's just do a simple put spread, right? I'm going to go to before earnings. Let's go to the 30-day because there's lots and lots of volume here.
And you could also buy a call spread if you wanted to really be bullish. You could buy a $5 rate call spread and then sell a put spread and pay for it.
What cycle are you in?
I think with coin we could go to November. You don't think so?
You can, but you're going through earnings.
Okay, so if you stay where we are, and if you go in the 16-day and buy the 170, 175 call spread. And then it'd be so nice to just sell that 145 put to pay for it. I can't believe coin is using $6,000.
This is why we've been struggling with coin for a very long time.
Is very challenging.
So I'm actually just going to sell a put spread. We're just going to get non-fancy. I'm going to go down and sell the 55.50 put spread for $1.30.
And we're out of time.
$1.30. What do you think? $5 wide, $1.30, 16 days.
Sure.
That's a bullish trade.
That's it. Out of time. Fastest hour of the day. We have SPOOs up 6, pretty much exactly where they were when it was 10:15 and we were looking at the 10:15 trade.
We would have already been out.
Would it have hit? I don't know. All right, everybody. Thank you so much for watching. Tune in tomorrow. Wear your red Shirt Thursday.
Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We did quite a bit today. Do you want me to send this out?
I'll push.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm gonna be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right.
I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1.
I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5, just because I like Kentucky Fried Chicken.
Come on. Do you want to be KFC style?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. Yeah. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was
would
right
say.
there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
Oh, yeah. Tasty Nation, good morning.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mikey Butler, and of course Thomas Westwater in the house with us today for our Westwater Wednesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Thomas. Thomas, how are you, sir?
Doing good. Looking forward to this Lou Malnati's pizza that we got.
Is that what we got today?
Yeah, that's what we got. It's one of my favorites.
We got some of the Londoners London, South Africa, right?
London.
Are they all London now? I thought some of them.
There's 2 of them in London.
Okay.
Yeah, London's in the UK, not South Africa.
I thought we had some of our South African counterparts here.
Maybe we do. I'm not sure.
I thought it was both.
Yeah, we could. Good.
I'm not sure.
Either way, when we bring in, the foreigners, we give them.
We have to immerse them.
Yeah.
In Chicago experience.
Chicago culture.
Yes.
Yep. Speaking of, I went out last night. They wanted to get some barbecue, so I took them to Green Street Smoked Meats. We had a nice little crew.
A good one.
And one thing led to another. Conversation of Malort came up, and Don Guale was like, I want to try this. I need to try it. And I was like, please, no. Please, let's delay this till Thursday. And he ended up...
You say, please, no, because that is your kryptonite.
I mean, I don't mind it.
Yeah, you get a couple Malorts.
It's not disgusting to me, which I guess makes me disgusting. But yes, we gave him the Chicago handshake.
There you go. A little old style too.
Yeah. Oh yeah.
Beautiful.
No, but it was a good bottle. We didn't have the whole bottle, of course, but it was a fresh batch. You get that like really pristine gasoline flavor.
Oh yeah.
That's when you know it's a fresh batch. So.
Wormwood, right?
I'm not sure exactly. I know it's very floral, so it's they just take a bunch of flower petals and smash it in there. That's basically that's like what I describe it as to people. Like it's like chewing on a flower petal.
Yeah.
If I'm drinking a floral liquor, it's going to be Saint Germain versus Malort.
That's a smart
to each
choice.
their own.
Yeah.
I would say Malort, the initial taste is like a grapefruity taste.
Yeah.
The back end is like gasoline.
Pure gasoline.
Yeah, so it's like you get like this little tart floral, and then it's just pure gasoline.
You get notes of 93 octane.
Yes.
And you're set to go. You're good.
Straight diesel.
Yeah.
Well, I'm not doing. I'm not doing any on Thursday, so count me out.
There you go.
Well, that's what you
saying
think.
it now. Saying it now.
That's what you think.
Yeah. Yeah.
We'll see.
I'm a seller of that comment, but that's okay.
Yeah. But yeah, outside of that, we've got some moving markets.
Yes.
We had some. I closed a bunch of trades this morning.
Nice. What'd you do?
I closed the MicroStrategy call crab for $150.
Nice.
Closed the AMD call diagonal for $100.
Nice.
Closed the Nike put diagonal.
Yeah, you were the winner. You were the winner.
For now, you might win too because it's coming off the lows.
Yeah, I got a cheapy call left over. It's trading. I'm down $100 net. So I just have the 90 long call in November, 44 days to go till expiration. So I'm just holding on to that. I closed out of the 2 shorts, part of the crab trade. So a little lost, but I feel better that $100 went to your pocket.
$250.
Of the 250, 100 is my dollar.
Got it.
So I feel like it's a net win.
Yeah,
it's a $150 net win when you take into account that I lost 100 and you gained 250.
Yeah.
Because we're a team here.
If you did both, you came out on top. That's the real thing.
That's true.
Yeah.
We always talk bad on the double.
The double whammy.
Yeah. So, all right.
But you still have time, right?
I do. I have 44 days.
Oh,
so
you're fine.
I have a lot of time.
Yeah.
I have a lot of time. I was also fairly active this morning. Did a couple Johnny trades in Baba, oil futures, and Tesla. I closed out of the little SPX butterfly that I had, big wide butterfly into the October 31st. Did I put you in that one too?
Baba?
No, SPX, the wide butterfly.
Iron Condor.
We did the Iron Condor yesterday. I couldn't remember if I put you in this butterfly a little while ago.
No.
Took a little heat on there, but closed for a $100 change profit. It was a decent trade. But yeah, overall I'm kind of flat here. Definitely ready for some new positions if you got some.
Yeah.
That's it.
Beautiful.
E-minis up 10. We're basically at the high of the day today. 57.72, the high, about 2 points higher. We've had about a 50-point intraday range here, a little bit of volatility in the overnight session and into the morning. They were down like 30 or 40 from the open. We opened at 57.60. They got down to 57.24, so 36-ish was the low print for the day. NASDAQ up 100. We're back above that 20,000 mark. The Dow up 59 and the Russell up 4. So very muted day here with volatility. Futures at right around 20. We're at 1995 right now. And the lows of the day got as high as 21.15 on the vol futures. Oil higher, but was much higher this morning. It got up to like 72, 73, 72, 72.49 the high of the day. Right now we're at 70 basically on the dot, up about a quarter here. Bonds down almost a full point, about 26 ticks. You got gold down $18 off of yesterday's rally. Silver up 30 cents. And then Bitcoin doing a little reversal here. I think it got down to 60 on the dot was basically the low. 60,500 the low. We're up about 600 on the futures. Spot up about 782.
Love it. Yeah, it seems like we're in grind mode for a little bit here.
Yeah. Nobody does a better market recap than me.
Correct.
I think it's like almost like a racehorse.
Finely tuned machine.
I wouldn't say it's a racehorse. Yeah, you got to speed that up.
Do I?
Yeah. How about tomorrow? We'll try a little racehorse.
And coming out of the gate, we've got E-mini S&P 500 futures up 7 points. You got the NASDAQ up 94. You know, like that sort of thing.
That was good.
That sort of thing, but you got to keep going.
Yeah. I can't.
We got to ship you off to Wyoming and
take a
throw a
breath.
cowboy hat on you and have you at the auctions.
That could be a second job for you in your later years when you're retired and you kind of have that part-time job.
Yeah.
You could be an auctioneer.
An auctioneer.
See it.
Would be my calling.
Yeah.
If things don't work out here, guys, catch me down in Arizona selling cattle or something.
Yeah.
Is that where they sell cattle?
I don't know. I just picked one because my mom lives in Arizona. I went to a rodeo there. That was the only thing I could think of.
They have to then.
Yeah. So I'm sure they sell something there. Yeah. Watch some bull riding. My favorite was before the bull riding. That was really, really awesome. I mean, those things are huge. I mean, in person, they're enormous. But before, they had I think they call it like mutton busters or something, where they had little kids like sub 10 on sheep. And the sheep are big too. The sheep are like,
especially when you're a kid.
Yeah. And they're, riding them on in the little,
getting tossed, getting fully concussed.
Yeah, the kids were, the kids were doing it. It was pretty cool. It was pretty cool to see.
Love it.
Anyway,
good stuff.
Yes. All right, trip down memory lane.
Yeah. Glorious. Well, we're streaming live on YouTube as always. If you want to join us there, just go to Tasty Live. You can pop in your trade ideas, questions along the right-hand side chat. I see some people in there already. I've got the Cherry Picks newsletter link pinned to the top of the chat as well. But yeah, we've got some slides for you. It is Westwater Wednesday. We're talking futures. We're talking crude oil in this very event-driven space that we have these days. What's going on in crude, Thomas?
Yeah, so today we're going to be talking about, of course, geopolitical events and how they react to oil, especially with how they react to certain events in the Israel-Hamas war. So we're going to be looking at all the key events from this year, seeing how oil performs, and if you should trade it long or short. And I'll just tell you right now, it's short. You short it after, and
get it now because it's selling off already. They're front running you, Thomas.
Right. And if we actually go to this first slide, we could talk about it and talk about some of the events, and I'll walk you through this chart. So what it's measuring is I'll wait for us to switch to it, but pretty much you sell these events. Geopolitical events last a day, maybe 2 days, as we were saying.
We were joking though, but it really has seemed like it's been very short-lived.
Yeah, and
just like everything else.
Yeah.
Yesterday afternoon, Iran launched its retaliatory strike. It was pretty much the same thing we saw in April. These cruise missiles, other types of missiles, some drones. Of course, most of them were intercepted. The ones that weren't intercepted were just pretty much landed in either sparsely populated areas or pretty much cornfields or whatever kind of fields they got out there. And there was videos online people were posting. It was showing actual strikes, and people were presuming that their air defenses failed or were overwhelmed.
Yeah,
and they probably were overwhelmed to a point, but their system is very sophisticated. It's probably the most sophisticated system in the world.
Yeah.
So these missiles that are going into unpopulated areas, their system knows that these missiles, where they're going to land. They're tracked. In Iran's missiles, they do have some in-flight maneuverability to kind of counteract air defense interdictions, but they're not sophisticated enough to really. Israel's pretty much a step ahead.
Yeah.
Is what we're seeing. So. Everything was intercepted. I believe there was a few casualties, one death. I think from what I've heard, that death wasn't even an Israeli. It was someone in the West Bank, Palestinian. So their attack, they could jawbone. They could say, we struck back. Their newspapers are probably saying they killed a bunch of people. Yeah. But they control the media apparatus very tightly in Iran, and they just want to pretty much show their populace that. Hey, we did something. Yeah. But now Israel is talking about retaliating to the retaliation. So, we kind of get this
vicious
loop that goes. And what they're saying now is that they're going to target the oil infrastructure.
Yes.
So, Iran is pumping a lot more oil today than it did a few years ago. It's a little more important to the global landscape. So, of course, oil markets have reacted. But as we saw yesterday, we had this huge candle.
Can we jump to the slides too, guys?
Yeah, let's jump to
thank
those.
you. Yeah, just have those. Yeah, huge candle. Go on. Sorry to interrupt.
Yeah, so we had this huge candle. We still finished the day positive, you know. Today we're still a little positive, but again, we have this big candle again, or this big wick on this candle. And all right, so here's the chart. Let's talk about this because this is pretty interesting. This chart is showing every sell-off in crude oil from the biggest to the least significant over the 20 largest sell-offs, where oil still finished positive on the day. So pretty much if you looked at these on a candlestick chart, these are days where you would see that big wick lower, but we still finish higher.
Yeah, okay.
And, you know, I listed the geopolitical events that went with this. Of course, the April 19th attack, that was when Israel launched that retaliatory missile strike on Iranian military sites. Then you got yesterday's bar, that's in red. We had a pretty good sell-off. So these bars are representing those wicks, those upper wicks on the candles. As yesterday we saw, we had another huge wick, a down move. We still finished higher. Today we're showing the same thing. So it's showing that sellers, that traders like to sell into these geopolitical events. Yes, it incites some risk premium into the product. There's the threat of, you know, some oil supply disruptions, things like that. But, you know, we're really better off selling. You know, we go to some of these smaller ones from earlier in the year. Iran gives Hezbollah the okay to attack Israel. That was when kind of the whole Lebanon thing started. Lebanon started launching missiles, and Lebanon borders Israel right to the north. And now there's a limited ground invasion. That's kind of also factoring into the premium. March 6th, for instance, we had a 1.5 point sell-off. The IRGC Quds Force pretty much gave its proxies the okay to take more offensive measures back then. And you get all these events where they're significant, they raise the premium for oil, but then they sell off. Traders, you know, it's within 24 hours. That's why you get these daily candles down.
Yeah.
Let's go to the next slide and we'll look at the next day's performance 3 days after and 7 days after. So this chart's showing pretty much, I want to focus on the median performance. This is every bar we saw in the last chart. I'm taking the performance following those bars and averaging it, or you know, the median performance. So 3 days after, you get an average performance that's down. The next day you always get a drop, whether it's average or median. And then a week after, you're seeing a median negative move. So there's a couple days on the 7-day move that kind of skewed the data. So that's why I wanted to put median in. But anyways, in general, we see a 7-day move about 0.35 down, or 1/3% down, 0.29% of a move, or 0.29 of a point move. So, you know, this tells me to sell oil, and it's also good because we're coming right off this swing high from September 24th, and that was the highest since early September when we initiated that steep sell-off. So, you know, technically we're also at a good place to sell here. It makes sense. Now Israel, tonight they are probably going to launch some kind of retaliation. I think they can hit an oil field or two. I don't think they're going to try to completely obliterate Iran's oil infrastructure. If they did, then of course we're probably going to see a reaction to that. And you know, the proxy groups are saying if they do that, then they'll destroy oil fields in, you know, the UAE, Saudi Arabia, things like that, which it's kind of it shows you the desperation if they have to attack other countries that are considered somewhat neutral and they're not, you know, attacking Israel. But that's their only option because Israel's proven that its air defenses, you know, can stand up to these even overwhelming attacks. So it's showing some desperation on their side. That's not good. You don't want actors to be desperate or get desperate in wars. But I don't think it's going to escalate to that. Of course, if it does, we might see a move in the other way. If we go to the next chart, let's just talk about seasonality really quick.
And that move in the other way is getting priced in, so to speak.
Yeah, it's already priced in.
Volatility.
Sold it.
Yeah, volatility. If you in the platform, it's OVX, and then you have to use a colon CGI to pull it up. But in the last week or so, the crude oil volatility has gone from 33, 34-ish up to 45-ish. So you've had a 30% or so pop in implied volatility in the raw implied volatility, not the Ivy rank. Like the actual implied volatility is up 30, 35% in just the last week or so. So it's telling you that, like, you know, there's some movement, there's some risk premium on both sides of this trade, you know, at least in the near term.
Yeah, absolutely. We had EIA numbers come out like an hour or two ago. They showed a crude oil build, but we're writing that off. I think we talked about last week that this hurricane, it stops exports, you know, going through Florida. It stops those shipping lanes, or at least in this case, it didn't shut down too many rigs. But that stops oil from getting out. So you get less exports, you get more of a build in the stocks. So I think the market's kind of writing that off for this week. We'll see next week how this data moderates after, you know, these exports start flowing again. They've already started. But yeah, anyways, looking at seasonality, we see September, we get a little rise, but October, now the month we're in, and this is looking back to, I believe, 2004. So you're capturing, for October, you're capturing 16, 20 years of data. So 20 months, you get this median line, this red dotted line showing us that we generally come down in October. Mm-hmm. And, you know, we even continue that trend through November, through December. So this whole summer oil season where you get a seasonal uppick, it's over. So, you know, that kind of plays into the short trade here if you want to sell this risk premium. And, you know, for a trade specifically, you know, you look at these last 2 days, these candles, I think if we get another spike higher, that's where you want to sell it. Mm-hmm. You know, sell into
the
strength.
3-day rule in practice.
Yeah, this is almost perfect. So, you know, say tonight Israel does this strike. There's some headlines, oh, Israel striked an oil field, et cetera, et cetera. Oil pops a little bit. I think you pull the trigger, you sell it. You get another wick like this, and then over the next few days, the story kind of simmers, tensions calm a little bit, and then all this risk premium really starts evaporating out of the product.
Yeah.
Yeah, and that's pretty much my thesis for this week's trade. I'm curious also to who followed that yen trade last week, because if
right
you're still
there.
in it, you're cashing in on that thing. So
yeah, I did an out of the money call spread. I'm trying to work it for $100 or so profit here. So I did a small little Johnny trade type yen position, but we top ticked it, or you top ticked it last Wednesday, and that was nice. So yeah, I'm trying to get out of that one. As for oil, I'm in it. I did an iron condor in the Johnny trade. I did an iron condor a little bit pre geopolitical war event. Iron condor, but I think if you don't have a position on here, it's certainly interesting. And if you don't want to be, obviously the crude contract is huge, and even the micro is relatively big. If you don't want to be in either of those with static delta, call spreads are trading juicy right now relative to where they've been. Iron condors, if you want to skew it that way, you want to do skewed strangles. Those are also on the table so that you can kind of get a little bit of both. Maybe you get a pop in the after hours, you close out of your puts, you lean a little bit shorter. Who knows what's going to happen, obviously, but premium is juiced in the oil futures.
I love it. But yeah, I'm fully on board with shorting a micro contract if we get a pop back up to like 72, 71 and a half. Mm-hmm. So that's where we're looking.
And, you know, we should have had the show like an hour or two earlier, because this would have worked out a lot better. When I was doing these slides, I was like, oil's up. I'm like, oh, this is gonna work nicely. You know, we're at the September swing high, or the late September swing high.
That's okay. It'll work out perfectly. If we get the overnight move higher, we'll know for the morning. Just get it right on.
Smack the bid.
Yeah.
You guys in Natty Gas at all on the long side? It's making a good run lately.
I'm not. Wow. Huge move.
Have we got any of the 5% bars? Have they been? Well,
yeah, we did.
Did we?
A couple days ago.
But that one looks. Oh yeah, from where did we open?
That was Friday. I remember talking about it when I was doing my solo monologue. But I was like, I don't want to sell it. I don't want to short it here because of the seasonality. Now it's 50 degrees in Chicago.
Oh.
It's a little scary.
And I tried to warn Tom.
Seasonality is definitely coming back into where you probably don't want to sell into the strength for a little bit. Production, lower 48 gas production. I think last time I checked, it's right around 100 BCF. We really have to get up to around 103, 104 if we want to take this price pressure off, because these demand forecast, heating degree days and all that they call it, that's what we're going to have to produce if we want to at least stop these big withdrawals. So if you see production not rise over 101 in the next couple months, you're going to start seeing these really big inventory withdrawals. And, my gas bill's not going to like it, but I could see us going back up 3.5, maybe 4-ish.
Okay.
Some people are calling for 5 this winter. Possibly, it all depends what happens in Europe and stuff like that.
What's our winter looking like? Do we have like any of those? What was that polar vortex on the way for us, or what was the other thing that we had?
Polar vortex.
I remember the polar vortex.
That's when my eye froze shut.
Yeah.
And I had to run home.
Yeah.
So I was wearing shorts.
Just chapped lips,
Yeah.
like.
Yeah, but it's pretty normal. Like I used to walk a half a mile to the office, and my eyebrows would be frozen.
Yeah.
And that was like 5 years ago.
Yeah.
So.
Yeah. So the Farmer's Almanac, and I don't think this is the most scientific thing you could go off of. It's saying a wet winter whirlwind.
Okay.
Rapid firestorms that will bring both rain and snow. Little downtime in between. So. Seems like wet and like fluctuating temperatures is what they're saying.
Sounds terrible. Sounds
Sounds
literally
I'd rather just have really cold and keep the snow.
Yeah.
The slush is horrible. I hate
the
that
slush,
stuff.
the wet shoes, the bottom of your jeans get wet and they never dry.
It's terrible.
Give me the powdery snow or give me nothing.
Yes.
Well, yeah, I'll be looking to short this oil contract here, but yeah, Natty Gas, I'm probably not going to do any more trades in there to the short side this year. We'll see. But what about wheat and corn? Scramble Everything would like to know what you have to say about those.
Yeah. Speaking of scramble, the eggs were delightful.
Good.
Oh,
good,
yeah.
They were very yummy.
Corn.
I haven't had them yet. I need to secure them.
I'll bring you some tomorrow.
Perfect. There you go. The eggs were delicious.
I got some to give away.
Beautiful.
Yeah, we got WASD coming up not next week, the week after. So corn has been on a really good run.
Oh yeah.
I believe wheat's been doing pretty okay too.
Yeah.
Yeah.
See where the beans at.
The beans not bad either. So I haven't been too dialed into what's happening on the fundamentals over the past week, but I think this is those big short positions unwinding, people finally taking some of those off. No more downside. We broke a couple technical ranges there. For me, that would be a trigger to sell out of my shorts. So I think we're getting some of this retracement from this big move down we saw June, July, and August. And I want to give like a fundamental view on it right now, but it's definitely made a good run. So at this point, I probably wouldn't get long. I'd wait for a pullback. But if we're in a shifting market where we see these surpluses come back out of the market, I think we could retrace more. But I'm not sure that's the case right now.
Beautiful.
Could you attribute that big spike in wheat all the way up to 740 and then just an absolute smashing to the short side? Could you attribute that to farmers hedging their prices there? Or is it not enough volume to like really
I'm not sure.
directly to that?
That's interesting. I could probably look into that and see how, they've behaved in the past. It's looking like
imagine.
Yeah, it's looking like the harvest numbers are still pretty good for everything. Just a cursory look right here. So I think this is probably positioning related more than anything.
Yeah, it's interesting. Can we talk about your process when picking Johnny trades? do you simply start with scanning high IV stocks, or what?
Yeah. I mean, the couple things that I think about or look for, I mean, obviously whatever's happening throughout the, couple days of these last couple days, obviously oil for today has been, just like Thomas brought up today, it's definitely been a hot topic over the last couple days with all the geopolitical stuff that has been happening. So I went to put on a position there. I put one on in BABA, which was, obviously in play with all the China stuff that's been happening. We also featured that in the cherry picks yesterday. So if you didn't get that, we referenced Thomas's amazing article as well in the cherry picks. But so that led me to BABA. And then I used Tesla because Tesla had their reporting numbers this morning. So it just happened to be that all three of those trade ideas came from, very current stuff. If I'm looking outside of like what's moving and what's happening in the market in the recent time frame, I just go straight to the S&P 100 list, and I take a look at both the biggest moves to the downside and the upside. If I was just looking at stocks here, things that stick out to me. I mean, we put on that AVGO position yesterday. This is one where the stock has kind of had a little bit of a pullback, bounced a little bit. Volatility is relatively high. The actual implied volatility is relatively high at 42%. IV 5-day change, which is the change in volatility over the last 5 days, is up. If you don't have a position on it or you're looking for something, maybe there's a iron condor. If you want to sell into strength, you sell a call spread. I know I'm going long-winded here, but these are all just like things that you can gather from what's happening today. NVIDIA is another one. AMD might close out a position there. Those are things that I would look at. On the downside, obviously, we talked about Tesla. You want to get into a smaller stock, maybe PayPal. It's got an IVR of 58, 46% implied volatility, IV 5-day change up 10%. Maybe you sell some puts there. You go into Google, same thing there. I mean, all those things kind of lead me to those trade ideas that I throw out in the Johnny Trades and in any of the accounts or things that I'm trading. I mean, those are kind of the quantifiable things that we can trade around. I don't know if Google's going to go up tomorrow, but I know that its volatility is relatively high. It's liquid. It's down today. So if I'm trying to get long, it's better than if I got long yesterday. Those are all things that I can kind of put my hat on, hang my hat on.
Yeah, and I would say another couple of things. The average price in the S&P 100 is probably like $100, $120. So you can do a lot of different things with a lot of these products. There's only a handful that are over 500, and there's only a handful that are under 50. And you also have exposure to a lot of different sectors. Mm-hmm. I just put the sectors on the watch list here, just scanning through. You have consumer goods, healthcare, technology, energy, utilities. Like most of the sectors that you want to get diversification through can be had through the S&P 100 too. Mm-hmm. So it's a really good watch list to start for sure.
Yep.
Cool. Am I still rolling my FedEx calendar spread I bought before earnings? Oh, Kevin.
FedEx is probably having a. What is your. And sorry to cut you off.
Just immediately.
Well, FedEx, I just thought of FedEx, and then you think of all the shipping and stuff that's happening with the longshoremen.
The longshoremen.
What's the trade there? I keep saying it's got to be, you got to kind of have it baked in already. Like, I don't think you can arb anything out now, but is this like a short Walmart long BABA? Well, I guess that wouldn't even work.
So, I mean, yeah, it's going to affect the U.S. Domestically. If it lasts more than a few weeks, I think they're saying it could add like 1/10 of a percentage point onto CPI or consumer prices. If it lasts 2 months, they could add a couple more 1/10 of a percentage point. Shipping is, delayed a few weeks by the time it goes into the port, by the time it comes out of the port, to the distribution centers, to the stores. So you get a lag for sure. So if it's a couple weeks, the effect is very hard to see across the whole economy. If it goes more than 2 or 3 weeks, I think that's when you start seeing the effects. That's what the economists are saying. It's, the supply chains are extremely complicated. It's at face value, you say a product comes in, it goes to a port, it goes to a distribution center, but in effect, they're a lot more nuanced than that. So it's how the negotiations play out. There's already people calling on the president to end a strike. Of course, presidents have the authority to end strikes. It's been done before. Reagan did it with control tower workers. It's been done a couple times since, I believe, but don't quote me on that. And, it's right ahead of the election, so there's political implications. So you got people accusing of political interference. You got people on the other side saying
it hits everything. This is a wet dream.
If Biden does stop it, he's against the unions. If he doesn't stop it, he's against consumer prices. It's a little bit of a no-win scenario for him, kind of. But I think, you follow the process. You let the workers negotiate, and all you do is sit back and respect whatever decisions they come to.
Do you know any stock? I pulled up STNG. I know that's like tankers. That's not really it. But do you know any related stocks? They're probably not very liquid in terms of options, but I'm just trying to.
Scorpio tankers. Only Scorpios are allowed to work at this company.
Yes. True. Let's see. Isn't Zim one too?
Zim or Zin?
Zim. I don't know. Anyway, if anybody knows of any tanker stocks, shoot them in the chat for us. Maybe we'll find somebody. Okay, FedEx. Sorry. Back to you.
Back to the question.
Yeah.
So my normal trade size is around $1,000. This calendar spread was $500. It was instantly a loser with the big sell-off. I still have the long call, though, the 310 long call in November, because I don't see a reason to close it at 48 cents when that 48 cents can turn into $2 real quick if we fill the gap here. With that said, because I traded small enough, I was able to layer on more positions. So since the earnings trade, I have bought a 260, 270 call diagonal spread, sold out of it the next day for $150 winner, and because of your comment, I looked at FedEx. It's down closer to the lows of where I got into that trade. And I just bought another one. So I bought the 270 November call, sold the 280 October call against it for $7. If we get a reversal of $2 or $3, I'll close that for a $150 winner. So I'm just going to chip away at this thing, ideally. But if we continue to see some decent green bars to the upside, I'll be able to chip away at that loss pretty effectively. And if for some reason we gap up to 300 or 305, that November call at 310 will go to $2, $3, $4, depending on the size of the move. So, I'm just going to leave that one on. It's done, but it's still there.
Nothing, it's still there, but it's I
don't think about it.
That trade is over. You've already realized the loss. Mm-hmm. It's just a lottery ticket at this point. So now you're trading,
current price.
The current price, exactly.
So that's the plan. So I'm just going to keep doing these diagonal spreads and see if we can catch these reversals. But I'm basically entering in on sell-offs like this. Can you cover your setup on your Tesla butterfly from the Johnny trade?
Yes, I did the. It was pretty much a skip strike butterfly in Tesla and stuff that has a very high implied volatility and typically has call skew, which Tesla does have. You can be a little bit more flexible with this. So usually a skip strike butterfly. So I did the 265, the 280, and then the 305. So usually a skip strike butterfly, or what we would call one, is where your long spread is half the size of your short spread. So here it would be 15 by 30 is your risk. You can see your break even would be right at like 295-ish. You have $15 of risk. Your max profit is $15 and change, whatever your credit is. So it's a 1 by 2 in terms of your max value, in terms of your profit to your risk. So for me, I just moved this one strike in, and I did this for about 37 or 47 cent credit, something like that. But I basically just took off $500 of risk in exchange for 60 or 70 cents of credit. so that I just used $1,000 because I try to keep all my Johnny trades roughly $1,000 being like the max. You know, I've used a little bit more, like in my AMD strangle, I used $1,400, but I try to keep most of my positions at or under $1,000, more towards 500. So that's why I went with this strike instead of the skip strike. And so you have no risk to the downside, big old range to hit on the upside. That's it.
Love it. Can you set up and explain the strategy? Short a straddle in 1 month and short a strangle in another month in the same underlying. Is this a strategy that you use? Sure. It's just it's a deviation from what we typically do. First of all, the only way you can do this is if you can do multiple contracts in a product. So in like DraftKings, we could do this.
We doing what was it? Long?
Just a short straddle in 1 month and a short strangle in another. So just doubling the exposure from short premium.
Oh, I'm sorry, both. Yeah.
Yeah. So like, I would probably do a straddle in the near term cycle and a strangle in a further dated cycle.
Yeah.
So something like in DraftKings, like a 37.5 straddle in October and a 33.43 strangle in November. It's really no different. Like the risk profile is going to be very similar to just doing 2 straddles in November.
Yes.
But I mean, it's like if you can sell 2 puts, you don't need to do both on the same strike. You could do one closer to the stock price, one further away, and ladder them. So, yeah, there's nothing wrong with this. You just have to be able to hold and roll 2 contracts.
So I'm just pulling up a straddle and a strangle. It is essentially, as Mike said, doing 2 straddles.
Yeah.
But yeah, it's just a laddered position.
Mm-hmm. Another Tesla question. Happy Wednesday indeed. Currently holding the 265, 280, 310 call Brooklyn Butterfly in October.
I have.
Would you close and roll to November or roll the 310s to the 290s and add a November position?
I would probably do the second one. So I did this at 15-cent credit. Let's see what this is trading for. So I would have to buy in this risk. It would cost me net about $1 total because I did this for a 15-cent credit. I'd have to buy the 295, sell out of the 310, and I do that for $1.25. So it would cost me like $1.10 to have this butterfly on it. I don't hate that idea. Especially if you want to free up this capital to put on a new November position. This will certainly, it's more advantageous now than it was yesterday. This would have been a much more expensive roll down. So yeah, you could do that, and then it frees up the $1,300 in buying power. You could do an iron condor or something else. Once you make the adjustment to the equal with butterfly, it's basically over with. Like, you got to just hold that and see what happens. It's not going to move all that much until expiration. So I don't hate that idea, especially with volatility relatively high. 88 IV rank. I'm going to do that. You talked me into it. So we'll buy in this risk. Let's see if we can get. I don't make my thinking is like, okay, if I have this on for $1, it's going to trade for something. Like, my risk right now is like 50 cents going forward. All right, so we buy in that risk. We'll do an iron condor now that we had a little bit of a dip, which is quickly getting bought here. Let's see delta. We'll do like a 1 standard deviation type thing. On the upside, go to the 310. We'll do it $15 wide, so we're using basically that same amount of capital, a little bit less. Let's see if we get $4.
Do we have 395?
Probably not.
Do we have 390?
No, I'm probably gonna be like 385.
Ooh, I think you'll get 390.
392. There we go. All right, so we moved. bought in a little bit of, or we paid a little bit of premium to buy in that risk in the shorter duration. We sold some premium, much more premium out in a longer duration. Did it for net credit. So if the stock stays nowhere over the next 44 days, it'll still be profitable, even through buying in that risk if you take both positions
together. H. Montero getting a 200 IQ idea out here. The current port strike, if it lasts any longer, will create shortages and a rise in consumer prices. Will that bring back inflation? I did some homework, found out only Walmart and Costco diverge their shipments to ports on the West Coast to avoid shortages. That being said, thoughts on a long Costco, or if you want to get spicy, long Costco, short Target?
See, that's the sort of thing we, that's why we need these viewers.
Yeah,
they bring us the heat like that.
The West Coast, I guess, is a different union, so I think it's 50-50 split, like the shipments, though. So I'm wondering if there's the extra capacity. There must be some if they're diverting some of their supply chains, but maybe the workers over there get some nice overtime going the next couple weeks.
Interesting.
See, this is a tough one because it's going to be very capital intensive.
Yeah.
You got to do
I was looking at like a long calendar at 900 in Costco, and then a bearish put diagonal spread a couple times in Target just to notionally match them.
Calendar's got to cost you.
It's $1,100.
Yeah. It's like that's a tough one to play out. I don't know. The other thought I had was like doing like a $10 wide put spread in Costco, using $800-900 and then doing the put diagonal in Target. It's a tough one.
Yeah, you could do that for sure.
I like the creative idea though.
Yeah.
We do November. It's just tough because Costco's come down a little bit, but not a whole lot. I don't know. I don't love it. 24% implied volatility in Costco. I'll keep that in the back of my mind. H. Montero.
There you go. Have we seen the show Industry? Of course.
Yes.
Great show.
Great show.
It's an absolutely insane show.
Yeah.
But great. Just watched the last episode yesterday. It's quite something.
Yeah.
Quite something.
Yes.
What do we think about?
You're not an Industry guy. Have you seen Industry?
I haven't.
You should watch.
No.
It's on your list. What was the one I told you yesterday too? Oh, Penguin Show.
Yeah, Penguin.
Oh,
yeah,
Penguin.
that is on
incredible.
my list. I keep on seeing that.
That one's good.
As soon as I finish The Last of Us, I'm going on the Penguin.
Last of Us is great.
Yeah.
Yeah, the Penguin Show, I am very happy that it's so good because it just gives me another Sunday night.
HBO
show
doesn't
to check
miss.
out. Yeah, they really don't.
They don't.
Yeah.
They don't. Max.
Yeah, Max.
Sorry.
Excuse me.
Yeah, this isn't
that goes down as one of the worst rebrandings of all time.
I don't like it. But.
I'm not even sure why they did it, unless they wanted to get away from the old HBO. It was more scandalous. They had a lot of
Well, didn't HBO get bought? Isn't Max owned by
Paramount?
Maybe. I think one of them bought HBO, and it's basically a rebrand to kind of connect the dots.
Warner Brothers.
Warner Brothers.
Yeah.
Okay.
Either way, HBO doesn't miss.
Yeah.
Sorry, Max doesn't miss.
Yeah.
What do we think about an iron condor or a strangle in EA? Just backed off all-time highs. EA
Do we have a
Sports,
new
it's in the game.
What's it called? Vice City, San Andreas,
Grand
Theft Auto. Do we have a new one?
I think they're making one.
Is that Take-Two? Yeah.
I thought that was.
I think that's Take-Two.
Is it Take-Two? I thought it was EA. Oh no, EA.
Yeah, EA would ruin it.
Yeah.
Yeah,
they can't make a game that good.
Yeah.
EA would ruin it. They rush games. I can go on a whole spiel about how EA has destroyed some good franchises.
We have time. Which one is top on your hit list of what did they kill?
What was it? Call of Duty, I think.
Yeah, Call of Duty has been But Call of Duty has like Treyarch and some other ones that are like good.
Yeah. I'm looking forward to the new Grand Theft Auto.
Yeah.
I'm gonna have to find some time for that.
Yeah. I'm just waiting for the day where you can do GTA with the Oculus goggles, and you're just in the war zone that you create.
You got to get like the little like running pad though. Haven't you seen those? Like the one where you're like, so you can like actually like walk.
That'd be sick. That's where we're headed. We are headed for full immersive gaming, where people just hook themselves up to the machines and that's it.
Who says we're not in the Matrix already?
I've actually was saying that yesterday.
Could be plugged in right now.
I was touting we're in a simulation.
Who is our Neo?
You are sometimes.
Thank you.
But yeah, Strangle Iron Condor, $140 stock, earnings coming up. There's not much premium there, but in the buying part is a little elevated. So I'd probably go Iron Condor if anything, or just wait for earnings.
Yeah.
Coming up in 30 days or less. It's priced into the November 1st cycle. But yeah, something to keep an eye on for sure.
Yeah,
with
kind of surprising, it's only got 27% implied volatility.
Yeah, it's really low
for a tech stock.
With tranched positions with multiple contracts, are you aiming to make less faster or stick to 50%? It depends. Like in that strangle straddle example, your straddle will probably take a little bit longer to come in, but if your strangle comes in quickly, I might close that portion of it and then hold the straddle. So it depends.
Yeah. Two different expirations, so it's I mean, you gotta at least consider having some flexibility with the positions. You know, if the shorter duration trade comes in real quick, I mean,
it's still a short premium trade. There's no reason to hold it if it's at 30% in a day.
Yeah. But you got to look at each of the options, not the whole position itself, because you won't,
Can we sort cap size and vol? You can.
Dude.
Pretty sure. On the watch list. You can do market cap. You can move market cap in, and you can sort by market cap.
Oh,
yes. in the watch
filters.
list. Yeah, so you can bring in
market cap.
Yeah, you can bring in market cap and you can sort it. And then vol, of course, you can sort as well.
Yeah. Huh. Didn't know we had market cap in there.
There you go.
Vol is IVX, which is our 30-day vol calculation. It takes into account, just like VIX, around the 30-day mark. The implied volatility gives you an aggregate number. Very interesting. I did not know we had those on there. A number of things on there.
Yeah.
Sector, industry.
Yeah. You can chart on the web-based platform. You can chart two stocks against each other. Learned that yesterday too.
Wow. We'll have
so you can see, like, I want to see Apple versus Amazon year-to-date percentage. You can chart them. Together.
That's pretty cool. Like the pairs.
No, like the difference in gains or losses for each line, like the ones you do for the cherry picks.
Oh.
You can do that on the web-based platform.
Okay. Interesting. We'll have to use
popping
that.
off. Yeah. How about a Baba Crab? 125, 140, 155. December, November. Do you have this on?
I did the December 125. Yep.
So
short the November 140, 155.
Yeah.
345. It's marked at 340. It paid flat.
What's the adjustment if Baba runs out of steam and falls?
Nothing. I mean, it's the risk on this is $300, so it's and it's December, November, so you got 30 days of waiting, really, unless it really falls out of bed and then you lose $300. But yeah, there's not much to do at this point.
There you go.
The vol skew in there, or the call skew in there, is just out of control. So anything I'm not particularly bullish, but it's just so cheap to play the upside. With anything diagonalized or calendarized, it's just a really cheap shot. So I figure I'd take it. Why not? See what happens.
Yeah, it is. It is skewed up in there.
Yeah. I mean, when I was filming for it, I was looking at like the 95 put versus the 135 call. $1.24 versus 3.20, and they're both 20 points out of the money. It's got 3x value.
Literally. The future of gaming is essentially Quest World. I thought that was Westworld when I first read it.
Good show.
Yeah.
Great show. Would you go to Westworld?
Yes.
I think it's an easy answer. I would go there too.
Would you be the evil one or the nice one?
I'll be a nice one. But if someone tried to be evil unto me, then I would.
Yeah.
But no, I think it would be wild.
Quest World was a fun place. If I'm thinking of the right thing, which is similar to GameWorks.
GameWorks.
Which I brought you to.
Yeah.
Was
that Seattle?
Was that Seattle?
I think that was that was Seattle. After we realized that there's a GameWorks across from the hotel we stayed at after the Tasty Live show.
Have you ever been to one?
I don't think I have.
It's like a Dave and Buster's.
Okay, yeah.
But they used to have like I remember from my childhood, this like thing that you would like strap in. It was like 3-floor like first person shooter where you'd like go up and it, like if you cleared the section, it like bounced you up and it was like a competition with the other people. Like you had to get a certain amount of kills on each floor and it would bounce you up and it would like slingshot you up. And I thought they were gone, like the Disney Quest or the Disney one. Didn't do any of these game things.
I went to GameWorks all the time.
Yeah,
and Dave and
GameWorks.
Buster's.
I thought they were like all gone besides Dave and Buster's.
Tunnels of Fun. Remember that? That was like when you were like a kid though.
Oh.
That was like the one with the tubes all over the place.
Oh yeah, like the snotty, disgusting.
Yeah,
ones.
Just filled with pre-COVID stuff.
Yeah.
Yeah.
that was the original COVID. Was the McDonald's playrooms.
Just give me some skee ball and I'm happy.
Skee ball's good.
Yeah.
That's good.
Classic. Last one here. Any thoughts on STZ? Constellation Brands.
They have. Oh, they have earnings tomorrow morning. Yeah. Okay.
$7 expected move, very low. 3% of the stock price, when normally you see 5 to 10%.
Yeah.
So the premium is going to be. I'm not selling premium in here, like not naked premium. I think you could do a directional trade if you wanted to, but with that said, it's really not, it's pretty expensive to even do that, just because you're not collecting much at all in the short. So I think I'll stay away from this one.
Yeah.
This is one where like $7 just feels way too light for any earnings report.
I mean,
for a $250 stock.
Look at the even in the front weekly. There's nobody's trading this thing.
Yeah.
You have an open interest of couple hundred, and with earnings coming up tomorrow, this is peak liquidity, and that's 100 contracts. So no good.
I think that's it.
Cool.
Glorious. Well, thanks, Thomas, for the oil overview. I will keep an eye on that, as will Nick. See if we get a little pop in there. We can short it tomorrow. But yeah, if you want to reach out to us on the Twitters, I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. But we'll be back same time, same place, 11 a.m. Central for some trade ideas with Katie. Have a great rest of your trading day. We'll see you tomorrow.
Peace.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year is even better because it's 3.1415. I've never before, but this year, there's a couple other math people who just got a pizza oven, and so they're bringing everyone over, and we're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. Oh, just circles are great.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
We built Tasty Trade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. Tasty Trade.
We're back. It's still Wednesday. It's still October 2nd. I'm hearing things again. This is wonderful. I love how we start these shows, Anton, with music playing in our ears because people I don't think can hear it, but we come across as crazy. Maybe it's just me, but it's Futures Power Hour. Anton, I'm going to solve this audio issue on my end. Hopefully you're not hearing what I'm hearing. Anton, how is your day going?
Yeah, I don't hear anything. It does seem to be. I know you said you took your meds yesterday, this morning?
No, Jacob was just playing in my ear, something autoplayed on the website. But we're here now. We're starting fine. It's actually just me today.
When Jacob plays in your ear, yeah. Then you know that's something. Let's see. Yeah, markets are pretty interesting today. Not much going on, but we did have some volatility this morning. I brought this up to you. Maybe this will be an interesting conversation today. There's still quite a bit of volatility priced into today till the end of the close. I mean, almost 20 points. And with a market that's basically unchanged, I mean, down 7 points. Even the S&Ps were hovering around, unchanged and up a little bit. Now we're down a little bit on the day, but seems to be very eerie, if you know what I'm getting at. Expected moves are staying elevated, but doesn't seem like much volatility itself has come into the market yet. So either there's going to be some expectation for the latter part of the day, or it's just kind of or it's just the aftermath of this morning. So I don't know, but all things considered, it seems to be a pretty quiet day.
It does seem to be a pretty quiet day. There was a negative reaction overnight. Oil prices spike again. War causing trouble for the markets, perhaps. The port closures causing trouble for the markets, perhaps. Anton, why are bonds down? Maybe we're just starting to look through the looking glass here and say, oh, look, what, inflation expectations for the fourth quarter maybe need to be bumped up a little bit higher because of some of these idiosyncratic events. Anton, we're starting to see that filter through into those inflation expectations. If we can turn to the charts here, production team, war and port closures do spell trouble for these markets, perhaps. This U.S. inflation tracking measure is actually starting to turn higher for the month of October. Now, okay, you're going to say to me, Chris, it's only October 2nd, which reminds me of an exceptionally funny tweet that I saw earlier today, Anton. Someone, a junior analyst on a call yesterday, asked the CEO of a company that they're invested in, how's the fourth quarter coming on? It's like, fourth quarter started 12 hours ago. We'll let you know. Similarly here, yeah, we're only 36 hours into October, but this is updated in real time. These are real prices being piped through into the Cleveland Fed's inflation nowcasting tool. We're starting to see the month-over-month pressures build, 0.3% again from 0.11 perhaps in September. They're seeing it in PCE as well. The headline numbers looking like they could start to bump up. It's early days. This is nothing to be concerned about yet. But if you're a long bond person, this is one of the reasons why duration is your friend, where not going in the typical 45 in, 21 day out cycle could be beneficial, or at least efficacious under the present circumstances, simply because you now have these exogenous forces weighing on the market's overall perception of how inflation could proceed in the very short term. And as we know, inflation is embedded into the long end of the curve where we like to play around, Anton. So this is a material consideration moving forward. I know that I mentioned this to you this morning as well, but it feels like today of all days underscores that point more than anything else.
Yeah, it's interesting. When we were talking about bonds from the standpoint of looking at where the risk is, right? If you're long, because I think it was a couple weeks ago or a month ago, we were looking, after the Fed dropped rates, basically we were like, okay, well, what's like realistically, doesn't seem like anything standing against bonds continuing higher. And one of the, we wanted to play devil's advocate to that argument, right? And I think I forgot which episode this was, but I remember having this conversation, right? And you asked me, as trying to play that side of the argument, what will be the possible downside to this? And I said the only thing I can think of is inflation expectations, right, as interest rates go down, because everything else seemed to be very, very well set up for a continuation of the bond rally. And now we're seeing this is the potential downside. It's starting to materialize, right? So again, that's why we said, keep your duration long, don't get too overexposed, because when it seems too good to be true, generally speaking, there's always that thing you don't consider that actually could be a huge deterrent to seeing that position be profitable. And it does seem to, it makes the most sense that it's inflation and inflation only, because if interest rates keep going down, how could bonds go lower, right? What's the only thing stopping it? And well, that's, when interest rates go lower, inflation is the only thing really that can, or the largest key risk that does play into it. So again, this was expected. I'm not really surprised necessarily. This isn't something that's like a shock. This is something that I think was the all in the cards all along, right? This is what we were fading, right? If you're a bond bull, you're fading inflation before lower interest rates, right? You're fading inflation before the Fed turns around and says, "Oops, we made a mistake. Time to pump rates back up." So that's your trade. So again, I mean, I'm not really changing my outlook on this right now. Now, of course, if this progresses, what the potential downside to being long bonds is, okay, inflation continues, it spirals higher than expected, and the Fed's basically forced to reverse course. And if that happens, then of course that there's your downside argument to bonds. But otherwise, I don't think that's too much of a concern for me right now. What I'll do is extend duration and reduce risk that way.
If we're in a reflation world, Anton, as we've been talking about since the Fed meeting last month, then having a long bond position is somewhat antithetical to that view. Now, you don't want to put all your eggs in one basket, so being fully cognizant that if reflation is the correct idea, the long bond position is going to struggle in the short term. And that very well may be the case. We could be switching from reflation into outright inflation concerns, which is, as you move along the spectrum, poses a different set of outcomes for various assets. Reflation is good for stocks, right? But inflation upfront, not necessarily good for stocks, as we saw in 2022. You really need to see that you've crested and moved to the other side before the equity rally can start to kick back in. But Anton, we did have a bounce here today in equity markets, then started to fade a little bit here. Headlines overnight indicate that Israel is going to be moving forward with a more considerable strike than just a tit for tat here. Not just saving face or kabuki theater, but striking Iranian oil facilities or nuclear facilities. That really ratchets things up. Iran has in turn said that if Israel were to do such a thing, then they would in turn strike Saudi and Qatari oil facilities. So why not? Let's have a world war, shall we, Anton? In any event, the market continues to try to fade the geopolitical risk. We see here that there is another move off the lows, a lower low than we saw yesterday. So technically a new low for the week and the month on day 2 of this month. But not a lot of technical damage yet. Sure, momentum's been broken. We closed below the 1-week moving average yesterday for the first time, going all the way back to the middle of the month of September. But we are not moving below the 1-month moving average. And we are still holding up against the highs that we carved out at the end of August and the first trading day of September. It looks still like former resistance is holding as support. So if you are a bear, you're chipping away. But we're not quite there yet to substantiate anything other than waiting for an opportunity to look to deploy long deltas once more.
Right. And you know, I think that this is where being a trader comes, you have to put that trader mask on, right? If you're a trader, you don't really care about the stuff that could happen in the moment as much. Even you may put your trades and your positions around the fact that, okay, sure, this is a risk, but I have to take one side, right? You can't just stay out, right? As a trader, you always have to find ways to maneuver when volatility is high, because most of the times, well, let me rephrase that. Every single time something's happening, volatility is going to be high. And if we're going to trade in a high vol environment, we have to be accustomed to knowing that, okay, there's always something that's going to be happening when we put our trades on, always, right? Because otherwise, what's the point of, like, that defeats the whole purpose of trading. So instead of looking at, okay, this may be a fear, I'm going to get out or I'm going to change course, it's like, okay, well, what in my opinion, what is the best tool to use in this type of environment? Now, volatility is still elevated. It's on the lower end of where it was, maybe a couple months ago, but it's still kind of middle ground. It's not really sold off. Like we did sell off, like volatility was very low couple weeks ago, last week, but now we're starting to pick back up a little bit. And as we get closer to the election, it also kind of brings in that expiration as our current expiration we would normally trade is the expiration going into the election, right? So it's kind of like, okay, we have this kind of dichotomy. Volatility is not, like, realized volatility is not super high, but we're seeing some signs of elevated volatility as we go into this volatile time of the year. So it's like, what do you do? And I think this the plan is, for me at least, either extend duration at this point, right? We were saying at some point we're going to look to extend duration, or you can just get very, very small, smaller than you normally would. And then these events that may, normally shake you won't shake you at all. But I think selling vol into this is still a good idea. I just don't think that maybe the same size that you normally would. Maybe you reduce the size of how much you decide to do.
Anton, it was just a few days ago where the VIX was sitting below 15, and it looked like it was going to be plausible to rip off our first quarter playbook. You were pointing out that there were those kinks in the volatility futures curve because of what was coming in the second half of October, though. And just by nature of this being not general market uncertainty, but uncertainty tied to a very specific binary event, that is the presidential election on November 5th, you saw that volatility would likely stay sticky here and wasn't going to continue trending lower. So now that we've had our spike in vol, now that we're at a 19 in the VIX, we saw over a 20 yesterday, is this the place where you think it's worth fading? You say that you have to, as a trader, put your chips on the table. Sitting in cash is technically a trade unto itself, but then that's not really trading. So vol is dropping back in. We're holding technical support here. 29.3 IVR. What do you say about this? You're looking at this with fresh eyes for the first time. Is this a place where you take your stab at long deltas, or do you want to say, no, we're going to be looking to sell against the highs here? Let's sell some call spreads.
Yeah, it's a good question. See, for me, the issue isn't so much that it isn't so much that the price action scares me. It's more so just about the fact that you have clear volatility that's inflating regardless of what's happening to price right now. And again, that's because we're in this unique part of the year. Okay. So if you know that, what's a good stance to take directionally? Honestly, I don't think it would be the worst idea in the world to just stay neutral for a little bit. Maybe sell some call spreads, sell some put spreads. Because right now, like, even if you look in the vol curve, I mean, you're seeing, you go out a week, you're seeing 19% volatility every single day. For the foreseeable future, doesn't dip below 19. And again, if that's the environment you're playing in, do you really want to take a strong directional shot when you could, and as an alternative, take a neutral position because of the uncertainty that's present? Because realistically, I think more than ever, every single day now, I don't think anybody can be like, yeah, this is for sure we have a clear move to the upside, or for sure we're going lower from here. I think right now that is actually the least confident that people, I think this time should be the time where people wake up and say, I'm the least confident about price direction over the next 2 weeks. But the thing is, you have volatility that's priced in. So I would say I wouldn't take a directional shot. I would just try to go ahead and play the neutral game. Sell the iron condor. Volatility is there. You can do it. And then if you have a continuation of a move lower, or if you have a huge spike to the upside, then you can consider taking a directional shot. But as long as volatility is still here, I think it's a tough sell for me to get directional as opposed to just play the volatility game, the short volatility game.
It's interesting that you mentioned that, because when you take a look at the NASDAQ's range in recent weeks, going back to the July highs and the lows that you had here in August, we are effectively at the midpoint, getting close to it, of that range. Not there yet, right? So that's still about another 300 points lower, 400 points lower from here. But it is a place where if you start to dip down a little bit more in stocks and vol expands, you start to find yourself literally not just at the midpoint between the July high and the August low, but really you're talking about the midpoint of a 6+ month trading range in NQZ4, because the August lows did technically hit where we were in April. So this has been a long time, right? But stocks, for all of the new highs that have been hit this year, particularly from the S&P 500, the NASDAQ has been more or less stagnant here for weeks and months. And betting on that, at least continuing in the short term, may not be the worst thing. This is a pretty rough time of the year for stocks. Presidential election years, the first 2 weeks of October, it's the second worst 2-week period of the entire year going back to 1928. And October, broadly speaking, when you enter the month up 20% year to date, it more often than not produces losses. Like 7 out of the 9 times previously that we've come into October, up 20% year to date, the market has lost ground, and the average loss has been for 3%. So a little bit more weakness here in the front of the month, and recentering the range, yes, it may give you an opportunity to put on something more neutral if volatility expands. But my own disposition is, talking my book here, I prefer to see the market rally given what I have on, but I would actually look to buy on dips. I know I sound like a perma bull, and this has been the modus operandi all year, but I prefer to use it as an opportunity to buy on dips because the seasonality, if it's a presidential election year or not, you start to look into the window of, okay, what happens 3 months after the Fed starts its cut cycle for those maintenance reasons? Stocks tend to be higher. What happens in November, December after elections? Stocks tend to go higher. What happens in all non-election years? Stocks tend to go higher. So I'm not going to bet against those trends this year, even if the market's gone too far too fast. And October of cooling off for the next 3 or 4 weeks would probably be the best thing to set the stage for a year-end rally, as opposed to blowing off the top right now.
Yeah, and again, I don't think there's necessarily a wrong way to do it. Even if you want to play it neutral, but you want some bullish exposure, sell. Do a ratio of, a ratio iron cutter. You sell twice as many put spreads as you do call spreads, right? And that way, right, you still get the premium component from both ends, but you're not necessarily committed to having the price stay exactly in the range. You can afford some upside momentum to benefit you, right? So I just think that right now, I think you have to kind of put the first quarter playbook, which is long debit spreads, low volatility environment. You have to put that to the side a little bit.
Agreed.
And you have to look at the fact that, and again, this may be temporary. I think realistically, I think in a month it would be very reasonable to see volatility sell off again, and that Q1 playbook remain and get reinstated. But right now, it's like you're in this specific, unique month where you just say, okay, you know what, I may have been going into October with long debit spreads, low vol strategies, but you know what? I'm going to take those off temporarily, put some high vol strategies on just because of the environment I'm in, not because necessarily something happened to the market, but just because volatility went up, because that's what was it. But it didn't really go up. And I just want people to, volatility didn't go up. We didn't have a severe market move that caused volatility to go up. What we had was volatility in November was already elevated for this entire year. And we knew as we got closer to it, that was going to be at some point in October, was going to be our front month where we would place most of our trades. Well, if that's the case, this shouldn't be kind of like a surprise. Oh my gosh, I have to ditch my Q1 playbook to put on high vol strategies. Like, what happened to the market? Did the fundamentals change? Did the technicals change? No, but volatility was already priced to be higher. Now you're in this next month where you are trading the high vol season, which was expected for the last, well, realistically forever, because we knew 2024 is an election. November is the election time. So this isn't necessarily about changing. It's not a reactive move to markets. This is actually a proactive move. You knew that this was coming. Now it's time to actually place the trades and expect it with the current volatility, with the current volatility levels where they are, simply because this is where they are, not because of something fundamentally happening to price. And I think that's basically where that's the point I wanted to drive home.
Volatility typically comes here in October, just like it arrives in August and September. August is the month where you typically see the most vol expansion. And again, if you're looking at it in percentage terms, that makes sense, because if you spend March, April, May, June, July trending down, then getting a VIX that goes from 10 to 15 that's not a huge move. Whereas if you're starting at a 20 level, going from 20 to 25, it's not as big of an expansion. Okay, simple math aside, October is still a month where volatility tends to expand. Over the past 2 decades, it's been the month that's produced the 4th largest expansion in vol. Over the past 10 years, it's been the 6th largest. And we know that this tends to shape up during presidential election years. Anton, technically speaking, this is the crossroads, as we've seen so many times over the past year. When you get into this little envelope, at least for NASDAQ, the EMA cloud 2134, EMA is just going up the Fibonacci scale. We've seen the touch and bounce and touch and bounce and touch and bounce. And I'm not going to say that every single time because that's going to be repetitive. But it's also been the point of failure, right? The market has been treating this as trend support. And when we arrive to it and try to stage a bounce and fail, it's usually been a bad omen. It was a bad omen here in April. It was a bad omen here in July. This time around, we see a bounce. Perhaps this is the decision point once more. Failure here for the NASDAQ would potentially mean falling back below the September high that was set on the 3rd, which ultimately was pivotal for capping up price action in both NQ and in ES. And at that point, I think you'd be a little bit more concerned. But with yesterday's big down day and inside day here for the NASDAQ with a doji, if you were looking for driver continuation, this is not what you wanted to see. And it's almost like what I'm reminded of in gold here. When I say I'm reminded of this in gold, it's not about gold's price action. Today, it's about what happened back here in the middle of September. Green candle, doji, red candle that subsumes more than 50% of the first candle. That is a textbook definition of an evening star candlestick cluster. It's a topping trio of candlesticks. The next day, wide range, ultimately doji. That's not follow through. So was this a valid topping pattern anymore? No, they immediately failed. And then surely what happened? We continued to rally. This was the signal, the lack of immediate follow through on the pattern, that the topping pattern was not valid. So you go back to the NASDAQ right now and you say to yourself, okay, hold on. If this was a big bearish outside engulfing bar yesterday that breaks short-term momentum, we should see sellers come in today and take this off, cart this off the field. And it's quite the opposite. There's no follow through.
Yeah.
This is a difficult spot to get increasingly bearish if you didn't come into today or yesterday already bearish for the month.
Yeah, and you know what's really interesting, and I think that this is just it's an extra point to consider for any I guess bears or bulls. I mean, recently after the going into this quarter, I think people have become very oddly, and again, maybe I'm misinterpreting the things I'm seeing, but oddly confident about the S&P, about the market in general. When really, if you talk to some people, you know, even before, you know, last month or basically in July, like people were nervous about the market going into the election a few months ago. I talked to some people and they're like, you know, so what do you think about the market going into the election? This was a few months ago, right? Months ago. And I'm like, you know, I don't think there's much to. I mean, I was saying my book, and I'm bullish. I think volatility is low. I think you got to stick to the playbook, right? And all of a sudden, and maybe this is just what I'm seeing, a lot of that notion of fear around the election has kind of subsided. But we're closer to the election now than we were, you know, 3 months ago or 2 months ago. Because now it's like, I mean, how much of a bear case have you heard for the market recently compared to like July?
I mean, I talk to Ilya every day, so every day.
Well, yes, yeah, you're jaded in that case. Yeah, it's not a yeah, but I mean, right? I mean, it's just I'm just noticing less overall bearishness in a month where the same people who were bearish in July don't seem to be as bearish anymore, which is odd. You'd think it's the other way around. The fear should increase until the election, then it goes away. But it's in fact, it's actually the opposite. People are becoming more bullish in the same environment that they were bearish 3 months ago. So for me, that's actually not a good sign. If I'm bullish, that's not what I want to see. I want to see people get more bearish into the election if I want to see this rally continue. But that's just, you know, that's not what we're seeing. So I guess the only thing I can say is, the only thing I can say is, you know, bulls have to tread carefully here. I don't think that that's a reason to get necessarily bearish, but I do think it's a reason to just start to maybe take a little bit off, you know, start to go a little bit longer duration. Again, this is why I say longer than you normally would, smaller than you normally would, not just because of the volatility, because generally in high vol periods, we actually kind of want to do the opposite. We want to put more on. But in this case, it's this weird period where volatility is high, but it doesn't seem people are becoming more bearish. It's almost like the opposite. People are becoming more confident in an environment where you wouldn't expect that. And even 3 months ago, you had proof that people, like, you had every single bear, like, it was markets overextended, all this stuff. I haven't really seen as much of that sentiment recently. So again, it's just something, this is not a technical or fundamental, this is just more of a sentiment check. And it just seems like the market is, overall, people are becoming a lot more bullish when you least expect it.
People are talking. They're not betting that, though, right? I say that because I keep hearing, oh, the market is stretched, the upside positioning is so extreme, and I parrot that myself because sure enough, the hedge fund positioning is very long stocks. But that's a specific segment of the market here. The net speculative positioning for the most recent COT report is only 59,919 contracts on the long side. Just for a reference point, just going to I'm cherry picking a point in time this year. The high point for positioning for net longs in the S&P 500 futures for speculators was the week of April 22nd, 2024, when there was 189,951 contracts on the net long side. In terms of how big or small this position can grow, in May 2023, the net position was negative 435,558 contracts, the largest net short position in S&P 500 futures ever. My point is, we're basically just short of 60K right now. We've seen a lot bigger of a long position this year. We've seen a significantly larger net long position in the last year. There is a ton of room for people to come in and trade this market still, right? This is not an overextended market from that point of view. Valuations may be high, PE ratios may be high, although certainly nowhere close to where they were during the dot-com era. The futures positioning here isn't remarkable or tells me that this is, everyone's on the bus and there's no one left to pick up to drive us to the next stop. So as far as I'm concerned, dips, opportunities, I fear here, we're not going to let those, we're going to let the authoritarians in the Middle East tell us how we should be running our capital markets, Anton. Come on.
No,
such a ridiculous idea.
It's interesting. I didn't know what the positioning was. So I'm glad you said that. But yeah, it's just it's just this weird, right? And again, usually in general, whenever something isn't like, whenever you have kind of like conflicting things you're seeing based on your own fundamental philosophy of trading, which, for example, is like, okay, if you're a contrarian, right? What you want to see is if markets go higher, people get more bullish, there's your reason to go short, or vice versa. The market goes lower, people are just collapsing, and all of a sudden you just want you want to find a place to get long. However, this is seemingly like the opposite, right? You have this dichotomy of markets not overextended, but people don't seem to be as bearish anymore. In a time where you saw people be very nervous 3 months ago in anticipation of this time. So whenever I have those conflicting kind of narratives, that's when I tend to take my position off a little bit, because I'm not as confident. And that just, all that may mean is I just have to take some time to reevaluate, and that's fine. I don't see that as an issue. But
I like the confidence remark, by the way. That's the most important thing. I remember going back to June last year. It's like positioning is the largest net short position ever, and this is a seasonally bullish month. Like, odds are, I feel really good about being long right now. Whereas in October, the seasonality is conflicting, the technicals are looking messy, the positioning is not in a place where it's really stretched one way or the other, and so it's like fog of war. There's just a lot of cloudiness there right now. And when you don't have all the arrows pointing in the same direction, it probably means size down. And that's modus operandi for you. You've been saying that for the past 2 weeks. As we approach the election, with the kink in the volatility curves related to the election that won't dissipate, instead of doing a 2-lot trade, do a 1-lot trade, right? Instead of doing a full 1-lot trade in ES, go down to the micros. Do 5 micro contracts instead of 1 full ES. Find ways to keep your skin in the game, but take down your exposure because the market's going to be open on November 6th, 7th, 8th. We want to make sure that we have everything in order so we can survive through then, make some money along the way, and then really take advantage of what would be really a new world November 6th onwards.
Exactly. And I think if you start doing that now, it's a lot easier to adjust, right? Because like the worst thing you want to happen is like you just take all your chips in through the election, something doesn't go your way, and now all of a sudden, not only do you have to manage those losing positions, but I have to reestablish all of them anyway, because now there can be a huge change in volatility or price direction or whatever you call it, right? Whatever you're looking at, and it's not a comfortable place to be, right? If you have the opportunity to take some size off the table with knowing that you're going to put it back on very soon, I think it just makes for a smoother transition, right? Because I would guess that a lot of traders that have been putting on positions through this whole year have been putting it on knowing that the election would be a pivotal moment in their accounts and that they would have to that is something they were expecting to adjust and all that. But if that's the case, then this is the time to start to reallocate those positions, take some size off and do that. Because if you were expecting this to be the pivotal moment, like, why would you hold it through unless you were so confident about the outcome, which I personally think there's no way you could be confident about either outcome. Or even if you were confident about the outcome, knowing what would happen after is like, I mean, it's even, I would argue that's impossible to know anyway. So it's like, it's kind of like an earnings event. Trade this like you would an earnings event. And I think if you do that, it'll be a lot smoother of a ride.
Anton, bonds here down bigger earlier, but they're meandering around the same exact levels they've been meandering around for the past several days at this point in time, really since the middle of September when we make our way through that Fed meeting. We see here ZN is off by, a healthy 8.5 ticks. ZB is down by 26 ticks here. Oil up, port closures going on here in the U.S. Longshoremen of America, the most powerful union in the country, apparently, demanding 60% plus raises. Hereditary gig. Okay, I understand why they're fighting for it. Not bad work if you can get it. Either way, though, inflation problem. Supply chains are not stressing yet, but at day 2 of a strike, it means now we probably have somewhere in the neighborhood of 8 to 10 days of backlog at the ports. That's how quickly this thing starts to pile up. About $7 to $10 billion of lost economic activity, which not a big deal for now, but a week goes by and those numbers start to add up and become more considerable. And if we do that every single day for the entire quarter, then we could eliminate a very healthy chunk of growth, if not all of it. And that presents a stagflation situation where growth is now sapped and prices have skyrocketed and people are getting laid off. So it's a nasty mix. It's just not something that you want to deal with. There's talks of the strikes coming to an end perhaps in the next few days. Negotiations are ongoing. Nevertheless, higher oil prices, supply chain issues, bonds, enough of a reason to pull back, alongside commentary from Federal Reserve officials where they are telling us that everything is pretty good. We don't necessarily need that 50 basis points in November because the labor market's holding up, Anton. Why do we need to go 50 if the labor market's fine? So the past few sessions, even prior to this escalation with Iran firing missiles at Israel yesterday and oil prices spiking up, we did see that bonds and rate cut odds, they did take a step lower last week, and they've stayed lower this week. So, look, long bonds, as we've long expressed, time is your friend here. Don't do the typical 45 and 21 day out. The 2 or 3 days of trading this far this week more or less substantiates this. I'm going to be rolling at 45 days. I'm currently in at 51. At 45, I'm going to kick out to the ZBH5 contract expiring December 27th. That way, we still have the exposure and don't worry about any near-term convexity due to cross currents of war, supply chains, presidential elections, reflation because of central banks, what have you. We have the bonds in that upright position waiting for liftoff whenever it may occur.
Yeah, and when it comes to bonds, I think you have to see what happened in the last couple of days, right? Bonds did act kind of like a safe haven to stocks. I think that's important to know. And if you're going to be putting bonds in your portfolio now, or at least you have them, right? You have to kind of start looking at them as a potential hedge to equities, and not necessarily. I mean, it could be a hedge depending on what position you have on, but basically a position that is not positively correlated to equity. So negatively correlated positions, kind of like volatility and price, right? It's like in that case, if you have a long equity portfolio and you don't necessarily want to buy puts to protect it, maybe bonds will act as that proxy hedge in the short term, which means you can be comfortable with, leaving both those positions on together. Of course, the flip side to that is if inflation does become a concern, then both of those positions get hammered, and then you're double whammied. So there's a flip side. Nothing's free, right? So it's just again taking a look at both sides of the argument. If you're going to fade the inflation scare, then I think you could confidently stick with long stocks, long bonds in the same portfolio, and both of them are considered a growth positive to your portfolio. If you're going to see some kind of geopolitical tensions, bonds will act as a hedge to your long stock portfolio. And if there's inflation, then you get double whammy. So it's just understanding where your risk lies and what you want to look for.
Anton, in April, when we saw these geopolitics flare up between Israel and Iran, ultimately, while the oil price spike went on, we did see that bonds effectively bottomed out. They went through this weird churning period, right? Where, okay, so oil prices are coming in, that's going to be good for the yield component, but bonds are losing their edge as a safe haven because the risk is being diminished. So you get this slinky period of back and forth. Maybe that's what's transpiring here now. Perhaps not. We haven't seen the escalation finally finish up yet. Either way, though, if we can just meander around here and then we make it to the other side of the geopolitical risk, bonds will probably need some time to take their footing, right? Safe haven bid comes out, inflation expectations come down, demand balances out both ends, you get churn. And so the tug and pull in the short term prevents any significant directional movement, I would guess. I would posit if it's anything like what happened in April. And I bring up April because when was the time before that Israel and Iran fired missiles directly at one another? Oh, wait, never. So we don't have a big sample size to guess how the market's going to react around this. We have to go off of recent history. And recent history is that there's a tug and pull between inflation expectations coming out and the demand for safe havens being depleted. Time is your friend if you want to be long bonds, unless some bad economic data starts to come down the pipeline, which if it's going to, we didn't get the memo today. ADP expectations, or the employment change rather, beat expectations. 140K versus about 120K expected. It keeps us on pace for about a 170K non-farm payrolls on Friday, which would be right around this year's trend. We've added about 186,000 jobs per month in 2024, and keeping us close to that removes some of those fears that the Fed is cutting for reasons other than maintenance. Anton, as we turn through the precious metals portion of the show, gold prices are off ever so slightly. Silver prices are up ever so slightly. Copper prices continue to surge because, of course, they continue to surge. That's what's going on with Chinese equities, A-share, FXI. What's another 6 or 7% between friends, right? So the China trade is still very much in focus right now. Growth names are very much on fire. Anton, I know you haven't been a participant in this move in gold, but what are you seeing now with the 70.1 IVR as we hesitate here at price levels that we've been trading around for, what, day number 7 now?
Yeah, it seems that there is another form, it seems like the same thing that was happening in the middle of August, right? You just kind of make your new level, you start to consolidate, and then you continue to move higher. And you're right, I don't trade gold. If I had to pick a position, it would still be short premium, both sides. It's hard for me to stick with just being bullish. Again, if you had an iron condor in the last few days, maybe made some money because the vol did go lower today. Gold and volatility are inversely correlated. I'm sorry, positively correlated, unlike equities where they are inversely correlated. I'm going to pull up GLD.IVR. And if you do that, you will see that the volatility rank for gold has sold off considerably today as oil as excuse me. Did I say bonds? I'm sorry, gold. I said gold. Anyway, gold volatility rank opened at 75 today or 76, and then proceeded to sell off to 70. So again, gold sells off, vol sells off with it, and for short premium, that's good. So if you're going to play this, I like playing it the Iron Condor way because again, it's like if you had been tested, but you get a down move, and if you're tested, generally you're tested to the upside because your calls get tested, and then it kind of hangs around there, and then gold goes lower. I like that because now I get the vol collapse, and my Iron Condor goes out of being tested. So I like those pot odds basically, right? I'm basically fading a complete explosion to the upside in gold. Even if gold goes higher and I have my Iron Condor on, all I need is a slight move lower and I get a lot of that premium back, right? That's why I like that short Iron Condor in gold. Now, of course, recently, I mean, if you've been doing this over and over again, hasn't been the best trade because, well, gold's been going up a lot, but I don't know, at some point I think it's got to break, and if you're going to be selling premium, I think it's a lower risk trade. It's a much lower risk trade than being directionally exposed to gold, and you can size it up that you're not risking a lot of capital on a dollar per dollar basis because you can set up an Iron Condor where your max loss is whatever, and you can adjust that to your liking. So I think it's a good way to play gold if you don't play it often. And volatility environment, I think it's still very much there that you can do it. So that's my take. I know you probably have a different take. You're more of a directional metals guy. So,
well, GVZ here. This is something, unfortunately. Is it updating in real time? Yes, it should be. Let's go to the daily chart here. Right now, currently sitting at, what do we have here? 16 points. Yeah, that's not pulling in. That doesn't make sense. Got to check why that feed's not working out. GVZ gold volatility right now, I have 18.04 on my chart. I was looking at another platform, seeing why it's not piping through. But let's go to, this still emphasizes the point. Even if we're at 18.04, which would be closer up to this area on the chart here, Anton, the weekly time frame, right? Gold vol, even at 18, is sitting at the high end of the range where it's been over the past year. If we stay at these levels, because we're moving away from the peak over the past 52 weeks, which is in October of last year, the IVRs are actually going to start to bump up a little bit more if raw volatility stays at these levels. If you make your way through December, staying at an 18 in GVZ will mean that the IVR is going to go up more and more. It's an artificial inflation of IVR is my point, because if we look at GVZ, the tracking, you can plug this into your platform, it's supposed to track gold volatility as measured by the options chain for GLD. We've seen GVZ at levels that were in the 20s, in the 30s, and the 50s going back to COVID. So I struggle with the idea that we look to the IVRs right now in gold and say, yeah, these are really inflated. They're really inflated because we're coming off of a low base. And the spikes that happen to anchor us into a 70 IVR, they're about to disappear over the next few weeks. And so volatility just sticking at these levels will start to actually look like it's been going up on a relative basis. And I think that is not make it more appealing to sell calls at all. You can't do it.
Yeah. So. Well, I don't want to clarify that. I don't think I'd ever sell calls in gold, period. Right. Okay. This would be a defined risk trade. Okay. But however, the volatility effect, it's interesting you point out, but for me, if I'm looking at volatility in gold and it's not going up, yet gold continues to trudge higher, that's actually a better reason for me to sell premium here, because that means that even on the upside, when gold goes higher, volatility isn't going higher. But when gold goes lower, volatility does come in. So that, again, that's another reason why I would go into a short premium position in gold, even if it's an Iron Condor, because again, this is pot odds, right? If gold goes up, record highs, continues to make record highs, but it's at 18 or 17, and we've seen it at 50 before, or 20 or 30, but it's not really moving. But then when gold goes down, we get a little bit of a sell-off in vol. Yeah, I'm going to go sell premium because that makes it even easier of an argument, because if gold goes up, I don't have to worry about volatility getting juiced up as much. unless of course there's a huge capitulation. The interesting thing with volatility is it doesn't go, and that makes total sense, by the way. Volatility will not go higher unless there is another level of magnitude that gold moves. If gold moves by the same magnitude over the same period of time, like let's say 1% a week, vol isn't going to go higher because the magnitude of the moves haven't changed. So again, we're used to gold continuing to go higher, That's what the vol's priced in right now. So as long as that doesn't keep happening to the same magnitude, even if it's a little bit slower, vol goes lower. And as a short premium player, that's what I want.
Anton, as we make our way over to energy, there's been a sizable reversal in oil once more. We did peak our head back above $72 a barrel this morning in the CLX4 contract. We're now back to $70.33 a barrel. It's a 0.72% gain. Yesterday was the second largest intraday reversal that we had seen in oil this year so far in terms of days that closed green and percent loss from the high. The other 2 days are April 12th and April 19th, which when we look to the charts, that's the high for the year. And then the reaction high when Israel responded to Iran on the Ayatollah's birthday. Nevertheless, Anton, we see that there's a big reversal here right into familiar levels where the market's been capped off previously. We now have a 97.2 IVR. Geopolitics aside, oil was trading yesterday morning at $66.33 a barrel. How is this anything other than a layup opportunity to sell some calls here and look for a reversal lower to recent lows before trying to establish some long deltas once again?
Again, oil is one of these things. It's like it just continues to kind of pin a point and somehow comes back to it. Volatility rank now almost 100%. I mean, I don't think there's a better time to sell premium here. Iron condors, again, I only say iron condors when I do this because I would never do naked positions in oil or gold.
Oh, no.
But
we don't have a death wish, not right now.
But yeah, right. But again, I don't see any reason why that's changed. It sounds like a broken record, but again, volatility going higher, oil still remains in the middle of a range. It's like the best thing you can expect. So for me, I'm just going to take it and listen. As long as it keeps working, I don't see any desire to change what has been working.
You know, I know some people complain like, oh, it's a broken record. Oh, like you're not being original. Oh, you're not thinking of anything new. That's what discipline is, right? Repeating the same thing, staying on the same course, not letting other things distract you, not losing focus.
Right. This isn't CNBC. You know what I mean? Like, if you want entertainment, go watch them. But we're going to talk about trading, actually. You know what I mean?
Here's what's so fascinating about the technical structure right now of oil, getting rid of this other trend line from the lows we had in December, marking the December 23 low. All right. We consolidate into a triangle here in late summer. We break down. We lose the June swing lows. We lose the August swing lows. And subsequent rallies, we have now been forced into this little bit of a box, right? We have this little area here that has effectively become this nice little zone of resistance. Former swing lows throughout the summer months, the uptrend off of the August intra-month lows. I mean, it's been working. The downtrend from July and August swing highs. This has been a kill box for fading oil moves. So perhaps, listen, Israel hasn't responded yet. Rosh Hashanah is starting. This period where between Rosh Hashanah and Yom Kippur, who knows if there's going to be a significant escalation around the holidays. We know last year, the October 7th attack is the anniversary is coming up. What if Hamas or Hezbollah or Iran has something planned to mark the anniversary? We don't know. So the odds that vol sticks around, at least for the next few days, I would think persist. But if you get up into 72 again, right, you can make the argument that barring the onset of World War III with an IVR at 97, we have to look to sell call spreads. Have to. Mm-hmm. And we have to do something directionally neutral. And I know that's difficult to suggest here, but listen, if you're at 72, you're about $8 off the low, which means you're about $10 off the high, which means you're at the midpoint of the recent trading range, going back over the past year effectively. And you got 100 IVR in the middle of the 52-week trading range. That is the close your eyes, put on the iron condor, go fishing type of mindset.
Right. Right, and that's, I think, right. There's some things you have to watch, and then there's some things you really don't want to watch. And oil is one of those things you just don't want to watch. You would be, if you had the balls to, or excuse me, if you had the cojones to not.
Oh yeah, no. Just saying it in a
right.
different language, I suppose that makes it. It's fine. No HR violation here. It was in Spanish.
If you had the guts to, I don't usually speak like that too. I don't know what got into me. If you had the guts to just like sell premium in oil and close your eyes and come back in 2-3 weeks and take it off, it probably would have been the most profitable trade out of any asset underlying that you could have done, which is fascinating because it's the least place you'd expect. Like oil is one of these things where as soon as you hear stuff about the Middle East or any geopolitical tensions, oil is like the thing that you're like, oh my gosh, like what's oil doing? Oh my gosh, like oil price, because you see it on the news because everything's tied to gas. That's talked about commonly. Right. But that's ironically what makes oil such a volatile asset to trade. And because there's so much noise, it's no surprise that it ends up very close to where it starts on every single, like most time periods. So it's like, ironically, it makes sense why it's the most profitable short premium play you could have done, despite all the noise around it. So it's like, this is where that now this is where you put your trader cap on. That that's the case. So what's the most logical thing to do? Do your best to shut your eyes and just do it, and then have your profit loss targets in place. If something happens, you take it off, whatever. But you have those in place, but more times than not, it's going to be a profitable, or excuse me, has been a profitable position. We don't know what's going to happen in the future, but that's what you have to base your trades off of.
Anton, you mentioned gas prices here. Let's head over to gasoline futures. Okay. Right now, the national gas average is $3.196. Where were we a month ago on September 2nd, excuse me. September 2nd, we come into the market at 205. Okay, so they're right now between the RB futures and the AAA gas average is basically $1. We'll call it $1.20 for the sake of this, which means a month out from now, this is part of the reason why these port closures, do they really matter? From a certain extent, do they matter for the market, for the election? If it takes a month for these things to go down the pipeline and actually impact pricing, I don't know if there's a trade there still. We were trying to talk about this yesterday on Let Me Explain. What's the trade? The market's always discounting the future, but this is an unquantifiable risk. How do you discount it then? What's the tipping point? But we're heading into a window where it's more of an economic risk and not something that can move the needle for the election, perhaps, because we're getting too close to that month out. Anton, we need to keep moving, though, because we have a FX segment to talk about quickly. The carry trade is indeed back. It was never dead. It was taking a brief hiatus. Back in early August, it became clear that yen positioning had reversed itself. We've covered here on Futures Power Hour a number of times about how yen speculative positioning flipped from the most extreme net short ever to back into net long territory. So no more problem. Last week was quite the roller coaster. One candidate said that they would prevent the BOJ from hiking rates ever again, and they won the first round of the LDP straw polls. Then you get to the second round of voting, and a man named Shiba comes out as the victor, and he has previously talked about support for what the BOJ was trying to accomplish. That is until last night, when he said very plainly, he does not think that the BOJ should. The Japanese prime minister is weighing in on the situation now, and the yen is tanking. We also see that Japanese inflation rates are plummeting. Core inflation is back into negative territory month over month. So what justification do they have to raise rates again? Anton, their neighbor to the west is pumping money into markets and reflating asset prices. We're going back to 63 here in the yen at some point in the next few months. The carry trade is absolutely back. So we're putting on the carry trade. Let's do a long put vertical. We're going.
You've been waiting all session to do this, haven't you?
I've been sitting here like we're going. We don't need 37 days. tantalizing waiting. We want to do this. We want to go out to 93 days. Oh, let's see here. Let's flip you over. Come on. You're saying that this is this far out of the money. We want to go this and do a little bit of that. What is this probability of profit, Anton? I don't even think it registers. There's no liquidity here. We're going to have to figure out a way to structure this. Anton, the carry trade's back. This is why I've been waiting to do it, because I can't figure out how to do it. Reverse mortgage, the home, cash out refi, short the yen. Okay. I know how we're paying for Christmas this year. What's next on the calendar?
These are the thoughts that go on in your head at like 2 a.m. You probably have a pad and paper by your bed, so you're like, ooh, Futures Power Hour, closing statements tomorrow.
I have crazy thoughts going through my head during Futures Power.
Oh gosh, that's too funny. Oh, you're muted. Now you just, out of excitement, you bopped your headphones and now they're not audible. Well, I can take the. Is it me? I can't hear me, or is it Chris?
It's Chris. We're trying to figure it out.
Oh, okay. Well, I will take it then. Here is the calendar for Thursday. Here are your trading spotlights. Futures markets are fantastic. Thank you for watching. I did not do that well, did I? You want me to take it out? All right. Well, anyway, I'll take Chris's. This is going to be my moment to shine. Got the calendar for tomorrow. You can pause it and take a look what you got here. I'm not going to go through it. We do have Truth or Skepticism coming up next with Tom Sosnoff and Dylan Reagan. Thank you so much for watching. And Chris, we'll see you back here tomorrow. Have a wonderful day. Good luck trading.
Hello, everybody. We're back. It's Truth or Skepticism. I'm Tom Sosnoff, and he's Dylan Radigan. Looking sharp today. What's going on?
This is my first day. Let me tell you the facts, okay? Not to get too off course right out of the gate, but this is my first day in the officially installed Milan studio with lights and a microphone and high speed and cameras and things. So this is the first presentation of myself from a more a better equipped environment, shall we say. So I thought I'd wear a nice shirt for you as well.
I was just a little worried. You're becoming very Milan.
You don't mean to get all fashionable, you're saying? You're concerned about
I don't,
a Milanese fashion creep.
Yeah,
That'll be bad for the brand. Bad for the brand.
I don't want you to be one of those guys that like
you don't
changes
mean to go
your whole.
Like I could start doing a lot of things.
Yeah, I don't want you to change your whole. I don't want to see like a whole transformed Dylan Radigan, Milan fashion boy, that kind of thing. Can't handle it.
You want to keep the Adirondacks in the boy. You don't want all this Italian silk and satin and feathers and whatnot.
100%.
What if I got into sometimes some of the youngsters will still rock the headdress even. It gets real interesting around here. I gotta be honest with you. It could get weird.
No doubt about it. Anyway, looking forward to having this chat today. And
likewise.
Dylan, the idea came to us through a bunch of customer emails that we were getting and on AI and they were coming in. We launched our Tasty Bot, which is kind of an AI, little bit of it's a way to search our site, and rather than go through kind of the traditional email route or support route or call some toll-free number, you can just go to, our Tasty Bot and ask any question you want. And basically we have...
It's a virtualized customer service, at least a layer of customer service.
Well, we've essentially fed it everything that anybody ever wanted to know about Tasty, including from our research all the way down to account opening to questions on products. You name it, every single bit of content and data and every paper we ever wrote, everything we basically fed it into the bot and or fed it into the machine learning software, and now we have this kind of pretty cool AI bot. Anyway, the question came down: what does this mean for companies like us or any other company, and what's going to happen? What does the future of job creation look like in a world that's powered by AI? I think that's kind of the
it's a
cleanest...
profound and critically important question, and I'm very excited to discuss the matter. I think your Tasty anecdote is good. I also think the port strike is a great canary in the coal mine, in the sense of the automation of the Asian ports, the resistance to automation of the American ports, and the resistance to that. I know that's not AI explicitly, but it's the same principle, which is if the robots can do things, what happens to the people?
Yeah, but how ridiculous is it to even think that you can, hold off technology? And how? I
mean, it's absurd. I mean, I think that
of course.
If anything, so can I just tell you? Can I cut to the meat of this real quick, because I've got a real clear shot on this.
Okay, go ahead.
And I want to.
I have a bunch of. I have my own personal stories about this too, which I want to just kind of weave in here. But go ahead.
So, and it's not to rush through it, but I do think that on this one, you and I are going to largely agree. Listen, stopping technology to protect jobs is a misguided and losing proposition, and it's bad for everybody at the end.
100%. 100%.
So come on, okay?
Yeah, that's easy.
But here's what I'm interested in discussing, and from my perspective. So protecting the jobs is idiotic, full stop. But protecting the workers is essential. And so I think that where we get tripped up is we think to ourselves, well, the only possible way to respect or care for the labor force, whatever the labor force may be, whether it's at a port or in customer service or in marketing and whatever the threatened to do at the auto plant, with the factory, whatever it is, that protecting old jobs, which would be the ultimate, would be like protecting the whale fishermen who make the whale oil for the electricity, or protecting the horse and buggy, obviously. But I do think there's a massive obligation, not obligation, I think it is in our collective self-interest to protect the workers. And I think that there's an interesting discussion to be had based on what does this phrase "protect the workers" mean? Because obviously that can be interpreted as, oh, well, just give them a bunch of money and leave them alone. And that's obviously not going to work. And other can be interpreted as invest in their re-education and help them get a different job, which sometimes is great and sometimes is completely insane and unreasonable. So anyway, I'm interested to talk to you about that little bifurcation on separating protecting the jobs from protecting protecting the workers, in the larger sense of that word. That's what I'm somewhat fascinated by, because I believe that's the fundamental political, social challenge of the next 30 years.
Okay, I'm not disagreeing.
So my question to you is, how would you protect the workers?
Okay.
I know my point is that we're going to agree on a lot of this, but when you get into the weeds, how do you go about separating, how do you not take the economy hostage to protect obsolete jobs, and at the same time not annihilate the stability and basic security and opportunity for tens or even 100 million human beings all at the same time?
Understood. So I am a free market capitalist. And what you are kind of walking on the edges here is around a system that I don't necessarily believe in. And I'll explain.
Well, you're assuming a specific path. I'll protect the workers any way you want.
I'm assuming I've already lost you to a European mentality, which I'm trying to avoid getting myself in trouble here.
But this could be UBI. This could be a tax on the AI.
I understand.
Tax the robots. Tax the robots. How about that? Tax the robots.
In 1998 and 1999, I'm standing in the S&P 100 pit, and with another 400 or 500 guys, and mostly, and screaming my lungs out because that's what I'd done for the previous 18 years. And there's some upstart exchange that's about to hit, that's opening their stores, that is going to not have a trading floor. They're actually going to do everything electronically, and they're going to introduce technology where we had always done things by open outcry. And this is 25 years before now, so it's 25 years ago. And the exchange, the Chicago Exchange, took the position that A, nobody's going to use that exchange. B, the firms that have always done business, they're going to continue to do business the way they've always done business, and they're not going to change the way they facilitate orders and execute orders and negotiate orders and all that stuff. And nobody is going to use a fully electronic exchange because the relationships that we have are far too valuable. That was the story they said. Within 6 months, we lost 40% of market share.
The volume on the floor of the New York Stock Exchange was actually faster than that. I was on the floor in the transition.
But in the option world, derivatives world, we lost 40% of market share within 6 months. Within a year, we lost 60% of market share. The writing was on the wall the whole time for me because I never believed that I never believed you could hold back technology, and now the exchange, as much as it was a member exchange, so as much as they would have loved to have a way to protect the members and protect their franchises, they obviously couldn't. And what happened after that is they reinvented themselves, but the members were all out. The exchange went on to become
lives on, but
not only did it live on, it became worth
got bigger,
10x, 20x, 50x of what it was worth 25 years ago. 25 years ago it was $1 billion exchange. Now it's a $25 billion exchange. So the move to technology and not trying to protect the inefficiency of doing everything manually was the right move. The point I'm making here is I lived through this, and I left at that point because I realized that I didn't want to be a dinosaur, and I didn't want to get swept out, with the garbage. This is the same situation that's happening right now. And it's not reversible.
No, I disagree. Can I just intervene? Can I just tell you why it's a little different? I just because I think I don't want to go. I like where you're going, and I agree with what you're saying. But I just want you to integrate a little bit of nuance and a distinction between the story you described and the one we're in right now, as I perceive it. Although I think the metaphor has merit, and it is only that the volume of jobs in this next transition is so big that it represents it is a bigger challenge purely because of the scale. Anyway, I'll let you continue, but I would say that this is a larger scale.
I don't agree with you. I think that's a little bit ridiculous because the volume of manufacturing jobs that we have lost over the last, few decades, just the pace of those jobs going away is accelerating, but you can't, it's undeniable.
The acceleration of that pace is critical.
Okay.
Right. The accelerated pace is essential. But anyway, I'll let you continue.
Agreed to everything. It doesn't matter. We don't have to fight over the little nuances. Right. My point is that we don't have an obligation. We have an obligation to explain to the workers what is happening and why. That's where the obligation is. We do not have an obligation to protect workers. See, that's where I differ from you. I don't feel like we have an obligation to protect workers. I feel like we have an obligation to explain what is happening and then to let people, because it's a free market, you decide what do you know, I'm very happy as an employer, I'd be happy to pay for whatever we needed to if it came down to training or if it came down to, you know.
But that's a worker protection. You're contradicting yourself, right?
I'm not contradicting myself because
I mean, but it's a little bit you are. I'm saying that you're saying as an CEO, I care about my employees and I would invest in helping them if it was a logical thing that I could do.
I think
which I would say is worker protection.
I think explaining what is happening is the most important thing, so people can decide, you know, what they want to do and what they need to do next to protect themselves. I don't think in a true free market we have an obligation, you know, to do that as employers. I think you can only do so much, and I think there's also some responsibility has to be borne by the workers themselves. Like I said, I realized at some point, hey, I was a dinosaur. And right now,
but I get that, but that's why I think the scale matters. Which is again, obviously, there's a million stories of people that have made transitions and saw the writing on the wall.
There's millions and millions and millions.
But if I'm going to fire all of the port workers in 1 week,
but you're not going to fire all the port workers in 1 week. That's not what this is coming down to. That's not the question.
Or I'm going to fire the entire editorial and marketing staff of every Fortune 500 company in 1 week. And I'm being extreme, obviously, with my
none of those things. But those are not real examples. That's not what's happening.
The rate at which those jobs are at risk is changing at the highest it ever has. And the more they resist it, I guess I'm not. I don't even want to. Why would you not be in favor of a robot tax? Why do you want one person to have all the money? But because the other thing I take issue with is your idea that this is free market capitalism, which is a misrepresentation of what this is. Because what this actually is a corrupted kleptocracy where a few billionaires control the government and all of the policies, and they have all of the money.
You're assuming that AI can do things. It doesn't have emotional capabilities. It doesn't have, there's no personal side to it. It doesn't, like, we can't even figure out how to
why give the single inventor of the robots $1 trillion? Like, why allow, how is that, why have three people each with $1 trillion and then 200 million people with $10 when you could tax the owner of the robots? I understand providing rewards to the.
I just don't understand what you're talking about. That's not how this stuff works. That's not how the system works.
That's how it's worked so far. Mark Zuckerberg, Jeff Bezos, Elon. You have a few people with preposterous wealth, not because they're the smartest or the best ever, even by their own admission, but because they were very talented and very good, but also very lucky and in the right place at the right time, and happened to be, it wasn't MySpace or it wasn't whatever. The alternative was, it was this one thing.
They made the right decisions in the right economic cycle at the right time in history, and they all
and so that they should be allowed to have a monopoly forever and everybody else should get nothing because they did that?
No, but that wasn't the topic we were talking about. I mean, that's not.
But I'm saying that's the risk. I'm saying, why would you not tax the robots? Why should there not be a robot tax?
Yeah, but we're talking about AI, not really robots.
AI is a robot.
Not really.
Absolutely, yes, really.
I'm not seeing the same thing.
How about we tax AI?
Tax it.
AI pays taxes for its work and its value. I mean, anyway,
why can't you just tax? Why don't you just fix the tax code and you tax AI where AI is successful based on the corporate profits? So I don't understand, like, how do you tax something?
No problem. No problem.
Then you tax the success of the companies. You know, the problem is right now is not that you don't need to tax AI. You need to tax Meta. You know, you don't need to tax AI. You don't need to tax AI. You need to tax Microsoft. And that solves your problem. But I don't understand where you're. I don't understand.
I guess what I'm getting at is to the degree to which the technology displaces large pieces of the workforce, that taxing that technology or the value from that technology in a way that then provides transitional resources to the workers who are displaced strikes me as a rational thought.
Yeah, but you're never going to be able to tell who's displaced for what purpose, and I think what's ultimately going to happen is what always happens, and that the workforce transitions. And so whereas, I mean, listen, for the most part, AI is not going to displace any kind of manufacturing, very little on the manufacturing side, very little on the unskilled labor side or anything like that. It's not even going to apply to that. It's almost all going to be some white collar roles that have become incredibly bloated and that can easily be replaced with software. And I don't even think it's that nearly as big a market share as people think it is.
Yeah, I don't disagree with all of that. Although I just think when the rate of change is super high, it just depends on the velocity. If you're not rolling over too many jobs,
everything now, the rate of change, gamma, which is the rate of change, is so fast for everything that the idea that we're going to slow that down, intentionally slow that down, is ridiculous.
I'm not suggesting that. I'm suggesting to acknowledge that gamma is at an all-time high, but human beings are not capable of extremely rapid change at scale because they're still human beings. And as such, there needs to be an awareness of the fact that gamma is at an all-time high, which is different than it was 1, 5, 10, 20 years ago, which then creates more risk to greater political instability and even violent actions by human beings who are gravely impacted in a negative way by the scaled gamma of the transition, and that you're better to avoid the civil unrest and violence that can be caused from such things by anticipating it and offering some transitional resources.
I'm not opposed to transitional resources, and I'm not opposed to education and things like that. But the idea that there's an obligation to, I just don't, I mean, if anybody is not seeing this and they think that there's a risk, then they should be doing something about it right now.
Yeah, I don't disagree with that. It's just the gamma. It's just the scale. Just the gamma and the scale that gives me some anxiety. Otherwise, I'd be like, I would be like, let it work itself out. But I just don't. It's like I can only have so much throughput at so much per hour, and if the throughput gets too high, I think that it just needs a different approach. And I'm concerned about the size of the throughput, basically.
You do agree that the rate of change is very positive for everybody.
Of course.
Because there's nothing worse than a slow rate of change, which takes generations to move the needle. Then you go back in time like it's
But I'm not saying that. I'm saying the way that you drive a car, that's going 200 miles an hour is with a different technique than the way that you drive a car that's going 20 miles an hour. And so to suggest that there's just one set of rules for driving a car at any speed means that when you drive it at 200 miles an hour, it's going to crash into a wall, blow up, and everybody inside will die. Whereas if you understand that there are different rules for operating a motor vehicle when it's moving at 200 miles per hour, in terms of how you brake when you turn and how you anticipate the road ahead, because it comes up on you much faster than when you're going 20 miles an hour. And that's my concern, combined with the fact that I have zero confidence in our political leadership on either side of the aisle.
Okay, I mean, that's fair. I just think that a violent rate of change is incredibly bullish for people that want change. It's like you can't have it both ways, is I guess my point. My point is you can't have it so that you don't want to introduce new technology, but on the other hand, you want a ton of opportunity. You can't have both.
But no one is suggesting that we want it both ways, right? We absolutely not suggesting that. I'm just suggesting we need to live in reality, which is rate of change is at an all-time high. Velocity, number of participants is an all-time high, and that comes with unlimited opportunity. In most exciting time in the history of the world, and also hugely dangerous on a social level if you do not acknowledge the risks in that transition and you leave huge percentages of the population out of the field of opportunity, which I believe is happening in a lot of parts of the world. And I believe that most of the solutions to solve for it are lousy from the politicians, because they tend towards a centralized government response, which is going to be horrible. Can I offer one other comment, just a different voice that exists in the back of my head? And one of the venture capitalists, I don't know who it was, he's probably an asshole, excuse my language, but whatever, his argument was, AI is going to make the cost of everything go down from $1. Everything that costs $1 now will cost a penny. And so you may having $1,000 or $10,000 will be the equivalent of having $100,000 or $1 million after the AI transition. And so that the mitigating factor with AI, as he was arguing it, was not even so much about the jobs or the transition or the opportunity field, although I'm sure he would argue that that's intact, but that the integration of the AI, even if you work less and you make less money because there's less work, whatever that means, that the cost of existence will collapse. The cost of a car, the cost of a house, the cost of a farm.
Yeah, I don't get that argument at all. I don't see it as, I don't think it's that transformational. And I don't see it, I don't see that. I can't even, I'm having trouble seeing it on any level right now. Like, I just don't see it.
Yeah. There's a lot of people, and I'm not even saying that I do see it. And that's why, for me, I've transferred the discussion into a broader scope of beyond AI to just high rate of change, high rate of technological implementation, the absurdity of this port strike, because obviously we should automate the ports, obviously. I mean, what are we doing? But also, obviously, there are many workers at those ports who, some investment, I believe, we have an obligation, this is where you and I differ, but I think there's a social obligation as a country to create some sort of an investment, like a transitional support for those workers. So we're going to automate I would say, let's automate the port. Let's tax the port operations for the next 5 or 10 years on the use of those, on whatever the savings are, and make an educational or sort of pension, early retirement, depending on the profile of the individual. I'm just saying that I think that those conversations have to occur. AI, no AI.
Yeah, I don't think modernizing ports and through the use of technology is necessarily an AI thing to start with. And so I think that this is just a normal progression of, just better. And
but it
so
brings up technological displacement. It still brings up the Paul Bunyan technological.
Yeah, it brings up the technological displacement of workers. Yes, absolutely. I'm not sure that we have, that's been the case for the last 100 years. It's just been a slow process. Now it's being accelerated, which, you keep talking about the rate of change. I couldn't agree more, and I've been using that discussion, rate of change, on everything. And I think that people are just going to have to get used to it. I'm not so sure that we have an obligation. If people don't see things changing around them, then that's a problem. But I'm not sure that, I feel like in the U.S., we see that quicker than anybody else in the world because we have more opportunity. And I just feel like, we're not letting the markets work for themselves, which is what we need to do, which is to basically say, hey, you know what? Here's what's happening. This stuff's going away. This stuff will stay, and let's just move forward. I mean, I don't know what else there. I don't think you can address every single person. I'm not trying to be cold about this. It's just that is what we're facing.
No question. But the consequence of mismanaging it, in my opinion, is catastrophic.
Really? Mm-hmm. I think the consequences.
Meaning, if you have alienated, if you have 80 million people without a job, they're going to get angry and go to violence.
Of course, if that was the case, but that's not going to be even close to the case.
But I'm saying that's the risk.
I don't think that is the risk. I think the risk is actually the other side of it. The risk is that you don't make the changes you need to, and you lose the business and destroy the economy. That's the risk. And so,
but two risks can exist at the same time.
Of course, but the real risk is always that you don't move forward. The real risk is never that you try to stay in.
But I'm not suggesting anybody tries to stay. I'm saying you have to acknowledge you are moving forward. You can't not move forward, but moving forward is you can't move forward recklessly. You need to move forward with self-awareness. That's all I'm saying.
Okay. Yeah, we're just gonna have to agree to disagree on. I mean, we both think there's a problem.
It's like a guy who goes hiking and ignores the trail sign that says this is a very difficult trail. It's like this will be no problem, and then all of a sudden gets halfway down the trail. Might be a problem.
No, that's not what that is. It's not even close. That's a horrible example.
Perfect metaphor. Perfect metaphor.
Not even close. But
bullseye.
Okay. Anyway,
right. I don't. So can I ask a different thing while I got 2 seconds with it, even though I know that this is not what we do on this program?
I have 3 minutes
can't help
left.
myself.
Sure.
All right, China, Super China. What are we doing? What are you thinking? What do you think about all that little Super China action?
You're talking to somebody that's been super bullish in China forever. Like I've been on the China bandwagon from the beginning of time, I feel like.
I feel that's true as well.
I think it's on a very short-term basis, it's overdone. On a long-term basis, China's probably still cheap relative, but on a short-term basis, it's overdone. But I think the bigger issue here is, I think there's a huge issue, and the huge issue is that the writing was on the wall for this for the longest period of time. The Chinese government is bottom line incompetent, and they set themselves up for disaster for multiple years, and now trying to turn it around because they realize that they screwed up. This is like a manipulated marketplace that is so lame and so bad that the only way I look at China is you have to trade it to take what's out of it just based on price extremes, but there's nothing really there long term because they have not put the structural changes in place to make China a viable place to invest in. Not even close. So China to me is just a trade, and it's been my favorite trade for a long time, but it's just a trade. It's not a long-term investable economy.
You're saying that on a long-term basis, this is actually just more evidence that China's nuts and can't be trusted.
Right.
It's just nuts the other way now, so it's going up.
They're
so
nuts.
Like, okay, great. But it's a very unreliable counterpart.
They decided that they wanted to mess with free markets, and it backfired. And now they're deciding again, we've got to go back to the way things were because everybody hates us. And so they're trying. But you know what? They're such a screw up, and they're not trustworthy. They just don't have any integrities. They have, at times, amazing technology, but this is a political thing. This is a government thing. They're just flat out incompetent.
And you're saying once the trust is lost, for your good luck to you.
I mean, as an investor, private equity, venture, market structure, whatever it is, I don't know how you can trust them. At any point, they could just come in and change the rules. And that's the beauty of the U.S. markets is it's really hard to change the rules. It's pretty easy in China.
Contract law and currency.
There
Make
you go.
the U.S. that should be the American bumper sticker.
I have run out of time today, Dylan, because I've got to do something. But thank you so much. This is a
pleasure.
Tough discussion. It's not easy, how we fully integrate AI into the workforce and how and what it looks like a couple of years from now with respect to displacement. By the way, I'm on the other side of displacement, which I should have mentioned from the start. I think AI is going to create a gazillion more jobs than it's going to take away. So when you talk about AI and job loss or job creation, whatever, I look at this as the net result of this technology is going to be a very positive impact to the economy, which is going to be a very positive impact to job creation.
I agree with you.
Okay.
I agree with that. I actually agree with that. And that's again for me it's Paul Bunyan and the wood chopper. And which is normal, the exchanges, we've been over this, I won't rehash it. I think the only issue is the velocity.
Yeah, okay.
I think that velocity and scale, managing velocity and scale, and not idiotically trying to prevent the flow. It's like, we're going to break the dam. Either you can have an organized flood or you can have a disorganized flood. That's all I'm saying.
Beautiful. I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism, and we will be back next Wednesday. Thanks so much, Dylan.
Nice to see you.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover a strangle. I'm gonna look at AMD. It's been a bread and butter trade. It's one that I can put on some naked premium on in this Johnny Trader portfolio. It is going to use a little bit extra buying power, but I'm very, very light on positions here, so I'm okay with that. Stock has been trading between 140 and 180-ish for the better part of 2024. You can see this is kind of our range here. You have had some big spikes to the upside. I think this is a perfect short premium position for this sort of account. So I'm going to look at somewhere around a 1 standard deviation strangle here. So on the downside, maybe the 135 strike. We're looking in the August expiration, 51 days to go till expiration. We're going to look at the upside, maybe a tiny bit of short delta because of the skew here at the 190 strike. It trades around $5 and change. It does use more buying power than I typically like to use. I like to use about $1,000 in total risk on this in this portfolio. But given that I have so few positions on, I think it's time to add some short premium and put a little bit extra risk on here. So I'm looking at roughly a 1 standard deviation strangle. You can see pop is about 75%. When we look at the curve, our at expiration risk profile here. So we've got roughly, 30, 40 points on either side of the stock. So big wide range to hit over the next 50 days. $5 in premium. I'd like to get about $1, maybe $1.50 in profit out of this position. That would be my target for when I close or potentially roll out in time. So we're going to try and get filled here. 512, we'll start there and see if we can get a fill. No fill at 512, we'll cancel and replace this one. We'll go down to 511, we'll give them the penny. No fill there. We'll adjust this again, go down to 510. No fill there. 509. What's up, everyone? We've got a trade adjustment to make here into what has been a little bit of a down move after a huge move higher in AMD. So AMD down $5 here on what is looking like a weak market. You can see the stock has had quite the rally since we put this trade on. We put this trade on the 26th. If we go and look back here, it was trading somewhere around 160-ish. So the stock has rallied very, very significantly. We can actually pull up, if you right click on the order chains here, you can pull up the market snapshots, which will tell us a bunch of information about the stock. So at the time of the trade, it was at 159.50. You can see my overall delta exposure was only 5 short deltas, 5-6 short deltas here. You know, had a very high theta, of course, because it's a big position. IV rank at that time was 30. It's now 80. So you've had a lot of things work in our favor in terms of volatility, time decay. We've gotten hit by some delta, though. Into this down move, though, and this pop in volatility, it's an interesting point in time to consider rolling this position and rolling up that put. If we go to the trade page to look at our position, you can see this put, which we originally sold, you know, at about $2.10 here, all the way up here. When we look at the chart of the option, you can do that by right-clicking here, go into View Chart. You can see most of the value, if not all of the value, has come out of this trade. The stock has come down. If we pull up the change field, which gives us an idea of how much the option prices have changed. Obviously, we're making a little bit back on this call, but you can see we've gotten a little bit of juice pumped into the downside. That's a function of this move as well as a change in volatility. So we're going to take this put and try to flatten out our delta a bit. So if we look at the position here, if you remember, we started with 5 short deltas. We've now got 35 short deltas. So let's try and bring this back down to something a little bit more manageable. We'll say, 15 or 20 deltas, which would be a roll of about 10 or 15 deltas. So to do that, we would take this put, which is at the 135 strike. We could roll it to the 150 strike. That'll pick up about a net of about 8 deltas. We want to get about 10 or maybe 15. So let's go to the 155 strike. This will net us out 12 deltas, collect another $2 and change in premium, which is a relatively high credit here. Let's try and route this at the mid price, 226. No fill there. Let's try and do that again. See, the markets are moving with a little bit of a bounce here. 223. Fill there. Go to 220. All right, so we got that in for 220 here, just rolling up that put. So that'll give us pretty decent credit on that position here, reduce some of our delta, and help manage the position. So going forward here, we're going to have the 155 put, the 190 call, strangle, relatively delta neutral. You can see our overall delta on this position is a total of 22 short deltas, so we reduce that by about 12. What's up, everyone? We've got some adjustments to make in AMD here. The stock is near the lows. It's having a nice little rally today, up $4 or $5 at one point this morning. You can see it's had a lot of chop back and forth in this 150 to 170-ish range. We're out a couple $100 here, but lots of premium left in this position. So we've got this at the money put. When you look at the delta, you got about a 47 delta there. On the call side, we are short the 190. That's got about 10 deltas. deltas. So we've got about 30 to 40 long deltas here, net on this position. When we're managing a position and we're rolling down or up the untested side, we want to reduce our overall delta exposure by somewhere around 25 to 50%. So we are long right now, 30 to 40 deltas. We'd want to pick up 10 to 20 deltas on a roll down of this call. So when we go to buy back this option, you click the ask price here, trades at about $1. It's a 10 delta, so we want to pick up somewhere between 10 and 20 deltas. We could go to the 175 strike. This would pick up 12 deltas. We can go to the 170 strike. That would pick up about 18 deltas and cut our overall position down to about 20 long deltas. So I'm going to roll this down to the 170 strike here. It's going to trade somewhere around this 273 mid price. Here you could see the delta. I'm picking up 18 short deltas against the 48 delta long call, so we're cutting this down significantly, and it'll add some more premium for us over the next 25 days as well. So we'll try and route this at 277, the mid price. We'll see if we get filled here on this order. And there we go. We got filled. So now we've got the 155, 170 strangle in AMD. We've got a total net credit of $10.06. It's currently trading at $12.62. So we're out about $200 and change here, but we've got a lot of time and a pretty wide range to hit here, all else being equal. So our break-even points will be somewhere around 145 on the downside. On the upside, it'd be around 180 because of that $10 in premium we have. So we'll see if this works out over the next couple weeks. What's up, everyone? So we've got a closing order today in AMD, which is up $14 and change here after earnings. E-mini S&P 500 futures having a very strong day here, up 60 points. NASDAQ up 400 and change. The chip stocks have been moving. So after earnings here, we've had the perfect move, right? So we had an in-the-money put at 155, an out-of-the-money call at 170. We sat with a little bit of long delta here just to lean a little bit directional into kind of the bottom end of the range. So this position, it's trading at 864. You can see we've collected $10.06 in premium throughout this whole duration with the roll up and the roll down. So it's time to go with this position. 16 days to go till expiration. We're going to take this position and close it out for hopefully a nice little profit here. So we put that in at the mid price, 850, closed it out, $156 profit on this strangle. This stock has been moving. It's been in the money on the put side, in the money on the call side, a little bit of both, a lot of pain along the way, but staying mechanical, reducing your delta exposure, collecting extrinsic value have all mitigated that loss for a nice little win here. Comment below on what strategy you'd like me to cover next. If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover an iron condor. What's up, everybody? We've got some trades for this next little session here. E-mini S&P 500 futures down 62 points here. Big sell-off. NASDAQ down 370. I think it's time to put on sort of a core position here with a iron condor in SPY. So SPY, one of the major indices, of course, the biggest one of the group, trades at 547 right now. When we look at the chart, it's had a significant sell-off here, back down to kind of the range that it's been trading in since around June. Volatility has upticked significantly. You can see volatility futures at 1565. I think it's time to put on an iron condor, so we're going to go into the trade page here. go to the 58-day expiration. So we're going into September. It's a little bit longer duration than I typically like to do, but given that we've had a little bit of a down move and a pop in volatility, I think it's time to take advantage of that. So typically we go somewhere around the 20-ish delta for those short options. I'm going to look here at, let's call it the 525 just for a sort of round number. As for the spread width, I typically like to go to about $10 wide here, so I would go and buy the 515. On the upside, we're going to do that same sort of exercise here, go to around a 20 delta, let's call it the 570 here, and then I'm going to go $10 wide to the 580. You can see it's going to trade right around 1/3 the width of the strikes. This is typical for this duration when you're in the 40 to 60 day time frame. If you're selling around a 20 delta for the short options, going $5, $10, $15, $20 wide, you'll typically get about 1/3 the width of the strikes, which sets you up with around a 50 to 60% probability of success. So we're going to sit here with this spread. We'll go in around the mid price of 341. We'll see if we get filled. And of course, we can cancel and replace as needed. We'll go down to 340. All right, another penny here. And there we go. We got filled at 339. That'll be our iron condor, $10 wide. We're going out into the September expiration. All right, so we got to make an adjustment here in our SPY position. So we've got volatility exploding here into what has been a huge move in the market. The volatility futures at 21.28. You've got the E-minis down 120 points here. A big move in the market as a whole. So we have a position on an SPY. It's an iron condor that we put on the 24th. So it's been about a week, and this spread hasn't moved a whole lot. And that's because of this massive pop in volatility that we've had. So we've got this position that's now a little bit tested on the downside. But the real thing that I want to take advantage of today is this pop in volatility. The volatility, VIX itself sitting at 26. It got into the 30 handle earlier today. I think you got to do something in terms of rolling calls down. And the reason we want to do that is because even if you get the bounce back, that whipsaw type move, it tends to come with a volatility contraction. And when you're talking about a VIX at 25 to 30-ish range, it doesn't get much higher than that normally. Of course, it can get higher. You can see big moves to the downsides in terms of, crash scenarios or like COVID, stuff like that, where you get those massive moves to the downside. But for all intents and purposes, 30 VIX is a very high point. So for me, I've freed up some capital on my short delta GE position, and I'm willing to put a little bit more capital at risk here into this adjustment. So what I'm going to do here is I'm going to roll down the call, and I'm just going to roll this down naked. So this is going to be a much wider spread now. It's going to be a 20-point wide spread, and I'm going to use the $800 that I took off from my GE position to finance this buying power here. And again, the reason I'm making this adjustment is because I want to capture some of that volatility into this move. So I'm going to roll down from the 570 to the 560 here, pick up a little bit of delta into this adjustment. If you wanted to, you could go and buy a call here to reduce some of that risk and reduce some of the buying power that you're using here. You could buy something like the 575 and make it a 15-point wide spread as opposed to the 20-point wide spread. But I'm going to go with just the roll down here. I'm going to do this at $2 or just under $2, 191 here. See if I can get filled here and pick up a little bit of short delta into this move. Filled at 190, so 191. So I did the original trade at 339. I've got $1.91 in credit on this roll down. I've now got a much wider call spread relative to the put spread. I've got a total premium of $5.30. I'm using about $1,500 in buying power on this position, which is more risk on the upside. This spread has a lot more volatility exposure than the original spread because of how wide that call spread is, which should help me if there is a little bit of a bounce here and a little bit of a contraction in volatility.
What's up, everyone? We've got an absolutely wild market right now. E-mini S&P 500 futures down 154. They were down 250 at one point today. You can see this bar today. Absolutely wild on the E-minis and the market as a whole. It's been a swift sell-off here with a massive pop in volatility. VIX hitting the 30 mark, getting even up close to the 40 mark today. So we've got a couple positions that we got to take a look at. One position in particular, our SPY iron condor. Now with the move today, this roll has helped us significantly. And with this pop in volatility, it's helping this whole position, even though it's fully or close to fully in the money. So you can see these markets are very, very wide. And we're going to try and close this out and maybe take a 90-cent profit on this. 440 is where I'm thinking we'll get filled. We'll see if that happens in practice here. But we've got this $10 wide put spread and our wider 20-point wide call spread that has gone to trading about $1 here overnight. So let's see if we can route this order. And with markets like this, with volatility really exploding, big price movements, you can see the market is moving 5, 10 handles a clip. I tend to go well below the mid price because you never know where you're going to get filled when these markets are this wide. SPY typically has penny wide markets. In times of volatility, those are going to widen out, especially because we've got the markets moving so significantly. So let's route this at 420 and we're going to work our way up and see where we get filled here. So no fill at 420. We'll move this up another 5 cents, 425. No fill there. 430. No fill there. You can see the market selling off a little bit, which is going against our position, making this position more expensive to buy back. 435. No fill there. Let's see if we can get hit at 440. That was where I thought we would get filled. Nope. 445. No fill there. Let's see if we get filled at 450. Nothing there. Wow. You can see these markets are moving significantly, and this actually has some long delta. So an up move would help us on this fill. We're actually seeing about a 10-point down move from when we originally started this little exercise. 455, we'll see if we can get 75 cents out of this. There we go. We got a fill on that. 445 on that. We actually got price improved to 450. And again, this is live action price, trying to work price here and get filled on a position. $4.50 into a massive down move here. In the market, that put spread was 5-10 points in the money, but because of how high volatility has gotten, the extrinsic value in that at the money put spread really buffered that loss to the downside, and hence why that position was ended up being an $80 profit, which you would not expect into what this market has been looking like today. So closing that one out, that iron condor after a roll down for a small $80 profit, but a decent profit into a position that you would think would be a terrible position at this point. So good trade. That was a crazy one, crazy market. Just stay small always. Manage positions when you can. Work your prices there, and take the market as it comes. So we'll see you on the next trade.
If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
This is English. You should watch him read.
From the smart mouths at tastylive.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Hello, everybody. Well, early today, we're going to have a double show, double feature, late night double feature picture show, right? RKO in the back row. So it's going to be fun. I've got an extra lot of charts to show you today, and we won't have to have the frenetic pace that we often do. And I've done this show for way over a decade. I've lost track, and I've mastered the 15-minute thing. We'll see how 30 minutes goes and see how my timing goes on this. So we should be all right. I've been around the block a couple of times when it comes to looking at stock charts. Before I begin, a couple of things. One, I appreciate all the nice notes I've been getting about my book. It's free, so the price is right. If you don't like it, I'll give you a full refund. But yeah, if you want to check it out, it's my first novel, Solid State. So just Google Solid State Tim Knight, and it'll come right up. And the other thing is, for those newer to the show, the charts we're looking at here is my own creation. And I wanted to answer a question that comes up from time to time about them. So I created slopecharts.com, and everything you see every day for all these years of slope charts. On occasion, somebody would like, your chart doesn't look like mine. I'm looking at TradingView or whatever. And 5 years ago, the price is totally different than yours. Well, there's a reason for that. It's because my data is better. We split adjust, obviously, everybody does. We also dividend adjust the data. And it's very subtle. In my opinion, not adjusting for dividends is just a different version of not adjusting for splits, which would be insane. Added to which, sometimes people use arithmetic charts, which is one of the 7 deadly sins. It should be logarithmic. So that's why that question's come up more than any other. The data, is your data wrong? It doesn't match. No. It's a better chart. It's adjusted as it should be. Well, we might as well get started because there's nothing going on today. But I got to tell you, I actually am pretty fond of this market. I'm a bear, you probably know. And what I don't like is like when the market's collapsing. And that may be a very strange statement to hear, but I can't stand when the market's collapsing because that means that government help is right around the corner. What I prefer is when things seem calm on the surface, like right now, but there's actually a lot of rot going on underneath. And that's where I like to hunt around like a little mammal during the, was it the Cretaceous period, and find those opportunities, because I know the meteor is coming and I got to survive until then. So it's been going all right. We've been finding those little nuggets here and there that have been working out, even though, you know, the ES is green right now, the NQ is green right now. We're at lifetime highs this week. Meh. There's always good opportunities. So let's look at some stocks on this like 8th day in a row of blasting higher thanks to China, whose stock market's closed, by the way. Here's the spider. We have been going nowhere. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of nothing. 10 trading days of zilch, nada, bupkis, whatever you want to say, because there's where we were 10 days ago, 10 trading days ago. That's 14 days. And then here we are now. Nothing, nothing, nothing. So what will it take? Well, what it'll take for things to get kind of saucy and salty would be a failure of this breakout zone, and more importantly, a failure of this channel midline. Break these two and things start to get a little more fun. The diamond is also hanging out in the land that excitement forgot, and so we're just lingering up here. And I would say that if you look at the Hindu, and I've got data back to 1900, this is 125 years, an eighth of a millennium of Dow goodness. This red line is the most generous line for the ascendancy of prices, and we are even above that. That's how high we are. I have indicators galore, not by say indicators like economic data, historical data, that has never seen levels like this. I know I sound like one of the presidential candidates where like never before seen, but it's real. Never before seen. Higher than ever. Higher than the internet bubble, higher than the housing bubble. The housing bubble is this big compared to the bubble we're in right now. It's nothing. It is nothing compared to what we're doing right now. And there's so much power behind this everything bubble that we've even pushed above a line that goes back for a century. So things are rich, and it is going to be an awfully interesting 2025, I guarantee. Now, yet again, FXI is blowing the doors off Earth. I naively thought that since the Chinese market was shuttered, that FXI would just kind of hang around for a while. No, because Hong Kong's open and it's still raging. You know, short squeezes, and there's just this explosive move. This is not the first time we've been through this, of course. I noticed that back in May, we had this fella right here. Let's zoom in on that. In May, when kablooey, like so. It started mid-April and it ended mid-May. So it went on for about a month. So a month of just ripping higher, and observant viewers will notice that the whole thing disintegrated and fell below even the breakout level. So we're undergoing now something I think is pretty similar. The bottom here was on the 9th of September. We're on October 2 now. I'm not as hung up on time as I am on price. So I'm not saying, well, exactly 1 month, that's when it'll terminate. No, it could be today. I don't know. But I'm simply pointing out there's an analog there. Whoops, hello. What are we doing? Can you still see me? I can't tell if you can see me. This thing just barfed. Okay, I think you can still see me. My producer, please say something. Maybe I'm not sharing. Sharing is caring. Let's do that. This happened once before. Don't fear AI. Computers are broken, barely functional machines. Don't fear AI. I'm telling you, take it from someone who's been with computers since 1979. They ain't nothing to be afraid of, all right? Just saying. Anyway, the point being that FXI is, I hope I'm still on, but I'm going to assume that. FXI, I think, is not necessarily toast, but I didn't get rid of my Chinese shorts. Yesterday, I dumped PDD. I mentioned that. I had puts on PDD, JD, and YUMC. I got rid of PDD. I'm glad I did. But the other two, I was a little worried, like, are these going to survive the day? And you know what? They have. In fact, I bought more JD. So so there you go. In fact, let's look at those directly. Here's PDD, ripping higher like so. So kicked that to the curb yesterday. But I'm still hanging on to JD.com because I continue to believe that this Chinese market thing is going to flip. And I'm still on Yum China, YUMC, which my older brother was the vice president of international marketing for KFC, and Yum spun out from that. And I think Yum is like Kentucky Fried Chicken and Taco Bell. And I'm not quite sure what the stimulus package from Chairman Xi is going to do to people's chicken consumption. But judging from YUMC, it's going to be explosive. So yeah, Yum China holding on to those puts. The big victory today for me is, one last thing. Yang is a thing, and it's gotten very popular. This is the triple bearish on China ETF, Yang. And it has collapsed, understandably. This has gone in very short order from almost $10 down to $2.99. But look at the volume, just absolutely berserk. A couple of weeks ago, this traded $1 million here, $1 million there. Now it's in the hundreds of millions. So tremendous interest. Oh, good heavens, look at that, I just jumped up. My data was catching up. So yeah, Yang is where a lot of people are piling in who are a little skeptical of this mega rally. What I was getting at earlier was the big success of the day was Nike. Ironically, this is my least favorite chart of my positions. I had 14 positions, and this is the one I was the least enthusiastic about, but it's the best performer. The puts are at 50%. It's not a very clean chart. It's cleaner now. It's a lot cleaner now. It wasn't that clean yesterday, but we are down on this. They had earnings last night, and they have suspended their what do they call their projections, their forecast. So that's taken a bit of a tumble. So we've got a right triangle pattern here, and I'm hanging on to those puts as well. I'm going to cheat a bit. How are we doing on time? We're a third of the way through the show, and I'm like a fifth of the way through symbols. So maybe I shouldn't be quite so chatty. Let's pick up the pace a little bit. Tesla, that quartet of resistance worked. Got a little bit above it. So we got 3 Fibonacci and this long-term trend line. It peaked its little head up above here, peaked its little head above here. A report came out this morning of their deliveries, I believe, very positive, and that's in the price right down. So we're sinking on this, and thus far, that magenta descending trend line you see there has held things back. So it's continuing to work as God intended. Robotaxi is on the 10th. Which I guess is next Wednesday, is it? No, next Thursday, excuse me. So we'll see if that makes any difference. We'll see if it's a buy the rumor, sell the news kind of event. That's my hunch. I have no position. But that I've got to believe a big chunk of the excitement is related to that announcement. Retail land, as it were, I think is starting to break down some. That's as I mentioned earlier, we little mammals scurrying around looking for opportunities. This is where I'm seeing one of them. Amazon has broken its trend line, as you can see there. I've got puts on that. Costco has been sinking for days now. It peaked a couple of weeks ago, got up to 923. It's down to 879 now. I'm not pursuing this because these don't tend to work. You know, stocks have personalities just like people do. And what Costco does is these little teases and tricks, and the bears are always disappointed. So I ain't touching it again. No, thank you. But it is weak recently. Another one that I am long puts on is Shopify, SHOP. So Amazon, Shopify positions on both of those suckers. Crude oil has had a very powerful week, but early today I did a post speculating that probably that's about it, because we've got this very strong resistance zone right here, months and months and months of overhead supply. And so I actually had no energy positions this morning, but I did get back into Schlumberger, which we'll look at in just a sec. This is USO, which is kind of the ETF proxy for crude oil, sealed this gap up beautifully and has been reversing hard away from that. But yeah, some of the individual stuff in energy land that I think is appealing on the short side is APA. I call it Apache because that's what they used to be called, but here's APA Corporation, ConocoPhillips, COP, like so. And as I said, Schlumberger. So just to repeat, had no energy positions of any stripe this morning, but I'm back into Schlumberger just to mix it up. I'm maintaining 14 positions. And in general, the XOP ETF is a nice broad composite of stocks like that. And it too has sealed up twice its gap. It sealed it up here, and it almost sealed it up here. And that almost is important because it couldn't even muster the strength to match its prior high. So yeah, I think energy could be an interesting bearish zone in the coming days. Now, I've repeated over and over that bearish as I am on equities, there's two financial instruments that I'm an enthusiastic bull about. One is bonds, which have been weak over the past week or so, but these are long-term ideas, and bonds have had a pretty good few months here. So bonds and gold, precious metals in general, and gold in particular. As we look at gold by way of this continuous futures contract on GC, and this goes way back to, well, it's a good quarter century of data there. We had this long, virtually uninterrupted bull market, years and years of consolidation, during which two bullish patterns formed. The first bullish pattern is right down here in green, and then the superset of that is up here. And this is one of the cleanest cup with handle patterns I've ever seen in my life, probably the cleanest. And once it finished getting out of the handle, then it just blasted higher, relaxed for a while, and blasted higher again. And so long term, I think this is going to do great. And short term, yeah, there's going to be times when it eases back, although it certainly hasn't been doing that much lately. There's barely a downtick in sight. I mean, I guess I should count myself lucky that I bought puts on Friday and sold on Monday, because that was one of the few times it even hiccuped a little bit. Here's GLD, the ETF for gold, and it's hanging out right near lifetime highs, like so. I'd also mention silver by way of SLV, managed to complete the bullish pattern, which is everything under that line, conquered this trend line. And now the challenge is, can it muster its way past this recent multi-year high? Right at the moment, it's kind of banging around those two zones. This is resistance and this being support. Getting away from precious metals, I would also say that copper, which is not that precious at all, but still a valuable commodity, has been thrilled at China's doings. It's been very strong lately, and it's been following pretty much FXI the whole way, its path. But in spite of that, I do continue to think that a mildly interesting bearish setup is XME. And those of you who watch my show for a while have seen the XME GDX ratio chart over and over again, which implies that on a long-term basis, being short XME and long GDX is the way to go. And so, and it's interesting to note that, copper is flying higher, and still XME is a little weak right now. It's a little bit red. So the key resistance is this dashed line right here. Getting above that, I'm going to scurry right out. But as it is now, I'm maintaining long puts on XME. All right, I'm going to slow down again. I mean, this is like the Olympics. We're going to time this just right, except we're not going to have any bizarre theatrics going on behind me, as far as I know. We have not talked about crypto in a coon's age, as we say in Louisiana. So let's just take a peek. this is Bitcoin, and you can see some interesting phenomena going on here. Phenomena one is that the speed of the ascents has been getting longer. Has been getting, how do we say this properly? The speed's been reducing. The ascents have been getting slower over the course of many years. I'll just point that out. So like this, extraordinarily fast. And then took longer here, and longer here, and longer here. And notice how, in addition, and this is logarithmic, of course, but notice how not only is the time tend to expand, but the percentage gains are getting more muted. So this is much bigger than this, is much bigger than this, is much bigger than this. And then, and I'm going to stay at this great distance right here, this head and shoulders formed, and we fell. And that's when FTX got blown to smithereens. Now, we had a big drop here. This peaked at almost 70,000, and it fell down to the teens incredibly. It got done like 16,000. And it has spent years slowly working its way up. So this bull market's been very slow, and all it's managed to do is equal the prices that were set 3 years ago, 3.5 years ago. That's not much of an achievement. Added to which, for a while now, when did this peak? The lifetime high on this was back in March, so it was over half a year ago. Since then, lower highs and lower lows. And you've seen, as I have, all the charts, which are very convincing, that show that it's like a foregone conclusion. It's just simple arithmetic that Bitcoin's going to be worth, and I've seen $1 million a coin, $5 million a coin, $30 million a coin. All I can say is that we're at the same price now. In fact, let's examine this. We're at about 60,000 now. We were higher than this, way back here. Way back here. Yeah, this is 3.5 years ago. So just a straight line across. And not only has it not gained anything, it's actually diminished somewhat. But I think the reason is flawed, because the reasoning you usually see, if we can call it that, is, and I'm not making this up, they will literally take the value of all the cash, like the M2 money supply or something like that, divide it by 21 million, and that equals blah. It's some huge number. And they say, well, that's what Bitcoin's going to be worth, because it's going to entirely replace M2. So I think it's wrong-headed. And I've been doing this long enough to know that it's probably safer to talk about religion and politics than about crypto, because they are zealots. They are absolute fanatics about this. And if you dare say that, I don't think it's worth $60,000, or at least it doesn't look like it's done great over the past 3.5 years, they will say, well, it went up 50,000% from 2009 to 2018 or something. It's like, great, get me a time machine and I will build you a statue. Who cares? What's it doing now? What's it done for the past 4 years? So my point being that Bitcoin seems to have really sputtered out in terms of it being a champion. I think that through 2021, it was clearly a superstar. Since then, faded rose. Ethereum, everything I just said, but probably even worse, because this one isn't, roughly the same price it was years ago. It's a fraction of the price it was years ago. It's been a complete, not a bomb, but a dud. I think a dud would serve it nicely. So that's Ethereum. Let's look at semiconductors a little bit. And ARM. Got puts on ARM. A little bit nervous because we did find support at this trend line. This trend line has to break in order for things to get cooking more on the downside. As it is now, it's simply diminished in the same way it did here and in the same way it did here. So I'm maintaining position. As I mentioned from time to time, these are all minimum January 17 puts. I've got 103 days, I think, minimum on them. So I'm not sweating too bad, but it's kind of a must-have to break that trend line. NVIDIA, no position, but of course this is key to watch because of this triangle. If it breaks down below this triangle, that's going to flow. to a lot of other sectors very, very quickly. And there's still a lot of zeal around this, of course, because just today it was announced OpenAI is now valued at $150 billion. So a company that makes a couple billion a year in revenue, with all the enthusiasm and pressure to buy into OpenAI as a customer, a couple of billion in revenue, and they lose from that $5 billion a year. So this organization, which excels at raising money and losing it, is now worth $150 billion to new investors. So that mania is still alive and well. It is reflected in NVIDIA's price, which isn't too far below its lifetime highs, but watch that triangle. It's important. Couple of more obscure ones I don't mention very often in semiconductor land. LRCX Lam Research. This one broke down nicely below that tent zone. And this is kind of a long-term play because you just see here, this goes back for decades. And there have been occasions like here and here and here where we've had setups that look toppy. And this one is most akin to this one because it mushed up against that long-term trend line. So if you're going to have an analog, I would say it's around about here, which was, well, was that 2000? Yeah, that was at the tippity top of the internet bubble. So that's what this equates to chart-wise. Another bit of an obscure one is Lattice, LSCC, which has this nice little setup here, which I would say is similar to this one. I don't bring these out that often because they're just not that heavily traded. The options aren't as good, but the charts are pretty, and they're not. The markets aren't so bad that it's not worth sharing. So yeah, there you go. And one last one in this obscure museum, Simtech, SMTC, and you've seen this from time to time, but just to re-explain it here, the idea here is kind of a complex failure because this is a beautiful bullish setup. It burst forth from this, and we can see in retrospect, peaked shortly after the burst. Here's the key, pushed back into the pattern, which you do not want to see. And once it did that, it's just crumbled not only through this whole pattern, but even outside the pattern. That's how weak it got. And the cool part is that it blasted higher, thanks to all the reasons everything else has blasted higher in recent months. But look what it's doing. It got back up to this congestion zone, and now it's looking a little limp. So yeah, this is down today. Even with the incus up 66 points at this moment, this sucker's still down more than 1.5%. So cool. Alphabet. GOOGL, Google, the most of us call it. Want to talk about this a bit. Obviously, heavily traded, one of the Magnificent Seven. And those of you who watched me for a while know my charts are really simple. In fact, they're so simple that even something like this, which is a multi-year trend line, let's just kick that to the curb because it's ugly. We want, you and I we're gonna be the cleanup crew today. We want the fewest objects possible to gain any insight beyond just a raw price chart like that, because you're going to get no insight from that. We want to see something with embellishments on it. And so this comprises the entire history of Alphabet. And an anecdote I'll mention, since I have the luxury of time right now, this just goes to show don't necessarily listen to experts. And I've shared this before years ago, but days before Google's IPO, the San Jose Mercury News had a big feature article about with Steve Wozniak asking him his opinion because he's one of the icons of the Silicon Valley, co-founder of Apple, founded other companies after Apple, and very plugged into all things tech. And the IPO back then, split adjusted, obviously was like $80 a share, and he declared it way too expensive. I'm not going to get any. Don't do it. And as you can see, I don't think there's a single person who's ever bought Google that had a loss. I mean, I guess if you bought here and you sold a few days later, you'll like the distinction of the only person ever lost money on it. But besides that, this thing has been just a straight rocket ship higher. Absolutely amazing. On a split adjusted basis, we've gone from, what does this work out to? We've gone from $2.50 to $165. And more recently, and the reason I'm showing you this, because I have puts on it now, is this pattern right here. Because my belief is that if we're going to do a you are here kind of thing, is something like this. this zone right here. This is very compressed time-wise, but the idea is the same. You've got this big congestion zone, all this overhead supply, a tumble, a push higher, and then plunge-a-rooney. And I think that's what we're doing right here, like so. So that's my my stop loss on that one on Google. I don't have a position in Lilly, but I watch it with interest because it's actually already, as of yesterday, broken down, or a couple of days ago, broken down more than 10% in just a few weeks. The lifetime high on this was last month, and it was kind of wiggling and wobbling, but we've been starting to break down on this. And keep in mind, Eli Lilly is one of the champions of this bull market. So once again, we're seeing one of those little fissures underneath a very, very calm surface, just to mix metaphors. So let's wrap it up. Final minute of this epic mini series. Peek another peek at silver here. This is a long-term continuous contract, not SLV like we were looking at earlier. Looks long-term very bullish. It's beaten this blue line. We've got a nice little base right here, looking sharp. And from a narrative perspective, silver versus the US dollar, yeah, looks pretty good. The ES itself, the Fibonacci here, if we get some serious selling going, and I mean really serious, the next major support to look for is this Fibonacci level here, around 54.64. Similarly, the YM, the Dow, if science fiction arrives and we actually get some really serious selling, I would look for this fib as major support, for the balance of the year. But just to wrap things up, put a bow on it, where we're at with the S&P 500, and this is a much shorter term notion, is this line right there. That is support. That was the breakout zone, and one day like yesterday would do the trick. Oh, hey, my dream come true. Not really. My chart just went berserk. How about that? A flawless show, and then it barfs all over my screen. Okay, well, you know what? I like that bar, so we'll end it right there. So thanks for joining me for this long period of time, and I'll see you with our petite version tomorrow. Bye-bye.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition. must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, my friend, we are back for the last call. We've got E-mini S&P 500 futures, big old shop fest, nothing burger of a day. They are currently up 4. You got the NASDAQ up 70, the Dow up 40, the Russell down 4, the Russell bucking the trend a little bit. Oil having a big old range today, /CL 70.64. We're up about 1% here, 80 cents. We had a move up to 73-ish. Volatility futures have remained sticky around this 20 handle. You got the bonds down 26 ticks, gold down 12, taking a little bit of a breather, and silver moving the other way, up 33 cents. And then Bitcoin, a little bit of a reversal here. It was up 600, 700 bucks at one point today. It's now down 1,500 to 60,000. The spot down 1,100. What say you with today's action?
Crude oil and the impacts of geopolitical stuff going on.
24-hour rule.
Yeah, we might see a continuation of some more things tonight into tomorrow, but definitely volatile in the oil space. But yeah, weird to see a little sell-off into the close here. It feels almost abnormal. Does it not?
I don't know. I was hoping we'd see a little bit more vol coming out and a little bit higher, but we're not getting that right now. Volatility has just remained at this 20 handle. Even when we look at like the vol curve or the vol futures through the end of the year, we're still in a little bit of a backwardation, but it's basically flat. If you look at like the X contract going out to November, it's sitting at like 19 and change. You got the Z in December trading at 1875 and change. So volatility has remained sticky. I think that's something of note. You obviously have a lot going on through November, elections and whatnot. Tomorrow you do have some numbers coming out. I think we have employment numbers, if I'm not mistaken.
Tomorrow is PMI, jobless claims.
Jobless claims. And then
unemployment on Friday.
Yeah, it's Friday.
So maybe that's baked into a little bit of this, but yeah, a little bit of a chop fest.
Yeah, SPX tomorrow, one day, 37 points. But yeah, I mean, 72 points through Friday, only 2 days left. Still a decent amount of implied volatility considering at the beginning of the week it was 100 points. So it's still holding on to implied volatility for sure over the next couple days, which I think reflects likely those numbers, but also the geopolitical stuff too. Yeah. A lot of people in the YouTube chat talking about China names. I know we've seen a big move in the China names. I think yin and yang, the 3x bullish, 3x bearish products might be.
I saw somebody tweet about this.
It might be the best two product ticker symbol combo in the history of the markets.
These are, I mean, triple leverage stuff is fun to mess around with. The main ones I think that are most tradable would be like an FXI or KWeb. Those are kind of the most liquid ways to get broad-based China exposure. But those are moving significantly as well with everything like, you know, Baba, Baidu, JD, Pinduoduo, which is PDD. I mean, they're all kind of going nuts to the upside here, and the upside volatility is off the charts. In terms of the skew in the calls, it's off the charts.
Yeah. We've still been active today, though.
Yeah.
I closed a bunch of trades this morning. I had a bearish Nike trade that was a nice winner. Closed an AMD buy the dip trade. AMD and MicroStrategy were both buy the dip trades.
It's too easy
from yesterday. It's just we're conditioned to do it, and it's been working out at least in the short term. But yeah, closed those for about $100 each, and then got into a new FedEx trade, a post earnings sell off FedEx trade. Bought the 270 call, sold the 280. Bought the 270 in November, sold the 280 against it in October. Call diagonal spread, just a cookie cutter setup there. But looking for a reversal of today's move, and looking for a quick exit there.
Some of the other big movers of the day, we had Nike, which had earnings this morning. It was down, to about 81-ish, I think was the low of the day. 81.77, the low of the day. It's popped up a little bit, 83.37. We also had Tesla numbers come out this morning. I saw they were basically in line, maybe a little under expectations for their deliveries. It's sitting around 250 right now. It got as low as 241. I was looking at the rest of my list here. Like, you have some pullbacks in like Walmart and Target to the upside. Some of the chip names, AVGO catching a little bit of a bounce. NVIDIA as well was up $2 or $3 today. Qualcomm is up there. Any of those stick out to you?
Qualcomm, I think, is interesting. They have earnings in a couple weeks here, but yeah, it's
6th or projected to be the 6th.
Yeah, but yeah, I mean, it's one of those products that we've talked about a few times where we're near all-time highs. You know, what are you looking to trade? And especially in like the E-minis, NASDAQ were kind of off the highs, but Qualcomm is one of those names where, like, if you believe it long term, it's near the bottom of its range, at least for the summer.
I'm getting flack for my extra button.
Yeah.
That came undone. Sorry, guys.
There you go. There it is.
Too much skin, too much hairy chest getting shown here. I'm really sorry about that. I know this is a family show, so apologies to all the families out there watching.
Yeah, we call them 2 chains off air.
2 chains. There you go. I do have 2 chains. And as for where Tom and Tony are, they are on the golf course. I have not gotten an update. Let me see if I can. I'll text my dad right now to see how that's going.
Yeah, normally when I see Tom leaving early, I'm like, okay, he's going to do some kind of business-related thing. I asked him today. He's like, I'm going golfing. I'm like, wow, you really are transitioning to the golden years here. Just an afternoon session here.
Yes.
Tesla taking it out in the chin today and yesterday.
Yes.
Down over 15 points from yesterday's high.
Near the higher end of where it's been trading.
Yeah. I think it'll be interesting, especially with the election and some of these products that are sort of correlated to some names that have been thrown around. But like, there's likely going to be some big movement in the election cycles. We can already see it in SPX. about a 5% expected move in either direction over the next 35 days. It's pretty big. But we'll see what happens with some of these stocks that could be implicated in future things. It's Bitcoin too. I think Bitcoin's going to be the talk of the town. Maybe we'll see some volatility there. 11,000 price range in either direction over the next 58 days in the November cycle, which is pretty big, 20%.
Yeah, but we were looking at with Ryan on Monday. He gave us some insights into just the implied volatility in Bitcoin. It is not as high as it typically is, getting back to the higher end of where it's been trading. So might be a trade there. The one that we've been trading a lot is MSTR. Now that it's done its split at a $150 to $70 stock price, it is very tradable. Massive call skew. We've been doing like butterflies or crab trades, call diagonal spreads, stuff like that. Coinbase being the other one that you can mess around with those sort of trades in, because you do typically see some call skew in here as well. So if you're looking to play into the Bitcoin pump, those are probably the two ways to do it.
Yeah. Is there anything else you're looking at through the end of the week here?
Well, I wanted to highlight a little bit because we didn't get a chance on the show today with Thomas, but if you are looking at oil futures, so /CL, obviously the ticker for oil, it's had a massive range. We covered it throughout the session today with Thomas. The CBOE changed the tickers for the implied volatilities of these products. So it's actually, OVX-CGI is how you can pull up the oil volatility, the CBOE calculation. It's a VIX style for the implied volatility of oil. Over the last 2 weeks or so, it's gone from the low 30s up to the high 40s. And that might not seem like a huge number in itself, of 46% implied volatility. But when you're talking about it in a percentage terms, oil implied volatility has gone up about 30% in just the last couple sessions on all the things happening in geopolitics and whatnot. So if you don't have a position on it, we talked about trading either MCL or crude. I was looking at crude options via an iron condor. I didn't really want to get super directional here, but if you don't have a position on it, it's certainly something that's interesting now with the level of volatility that we have. I did a trade in the Johnny Trader account, so you can get small enough with the options, do a 50-cent wide or a $1 wide. It would be $500 in risk or $1,000 in risk on those two with spreads in the oil futures. So very approachable for all account sizes. If you don't have a position, definitely warrants taking a look.
Yeah, and we're trading at highs now of implied volatility in this product. So
yeah, 87 IV rank in oil futures. So it's there.
Yeah. So yeah, I think this is obviously reflecting implications or potential things that might happen in the next couple of days here overseas. But all we can really do is sit and wait and see how the markets react.
E-mini's up 7. We can get a rally into the close. Is that the MO for today?
We got about 13 minutes.
Yeah.
We've seen it happen before.
Oh.
I don't know. It feels like we could chug along to the upside. But yeah, I would say anything within the realm of oil and miners, things like that are definitely front of mind. China names, Baba. I know you've had some trades in there. Big move to the upside.
Yeah, those also have massive skew. I was mentioning that on our show today as well. But if you look at the skew in Baba, if you look at any of the expirations, you go 20 points out of the money. I just pulled up December here, or even 30 points out of the money. You go to the 90 strike, it's 25 points out of the money. You go to the 140 strike, the puts, the 90 strike put trades at $1.27, the call at $4.30. I mean, you're talking about 3 or 4x premium to the upside, especially if you look at delta. So that's another way to look at skew. If you pull up delta on the trade page, and let's say you go to a one standard deviation, basically 15 delta, 16 delta, 95 strike on the downside. On the upside, it's 160. So your one standard deviation move is not normally distributed. It's to the downside, it's 20 points. To the upside, it's 45 points. So there's definitely some premium to be had there, similar to like when we were talking about MicroStrategy or Coinbase. You have that upside skew. It lends itself nicely to crab trades or diagonal trades, calendar spreads, stuff like that. Anything with a time component to it. So, if you're looking to play those underlyings, definitely interesting right now.
How about a UVXY put debit spread?
Ooh.
Playing for a downside move.
I kind of like that idea into the end of the week numbers and just kind of the fact that we've had a little bit of a pullback and volatility has still stayed bid.
Mm-hmm.
I mean, I think if you're going to play these sort of products, UVXY or anything that's got like a 2x, 3x, 1.5x to it, usually do it on a short duration. So I would probably pick like the weekly or maybe even going into the October monthly if you want to give yourself a little bit of extra room here. But you could set something up like the 30-25 long put spread.
Mm.
I'm looking at October, the monthlies, but you could do this a little bit tighter in the weeklies if you want to get do a sort of instant pain, instant gain type trade.
Yeah.
Like you're going to risk 2 to make 1 pretty much because of the nature of these products. So you do something like buy the 29 strike in the weekly and sell the 26.5. You do it at a $1.60-ish debit for the put for the long put spread, and then you have a max profit of like $100. So you put up 200 in risk to make 100. The 29.27, $3 wide.
Mm-hmm.
Maybe something like that. Let's see if I'll be the test pancake. I got filled at 192, so you probably get 190 if you try it.
The instant fill, the old instant fill.
In the weekly, so a little vol crush into the end of the week.
Yeah. I mean, I like the weekly play just because the vol is there, and if you get a big move up in the market, this UVXY is going to collapse, I would assume. So you can get paid quickly on that and not have to hold it through expiration of a further dated cycle. With 100% IV product, you're likely going to have to do that unless you're going on a really short time frame.
Yes. In terms of earnings, nothing really on the docket yet. We have a couple more weeks until that season starts to ramp up. You got Levi Strauss today. Tomorrow morning, STZ, which is Constellation Brands. Not really interested in either of those. We looked at STZ on the show. It does not look very liquid, so
yeah,
it's a pass. It's a no for me, dog.
Mm-hmm. Yeah, banks are next Friday before the open.
There you go.
Which is ominous. Trying to sneak it in there. Friday before the open. But yeah, Delta, we've seen a big run up recently. But yeah, that's the only one that is on this list and the earnings list on the Tasty platform that is even remotely interesting. We actually looked at Constellation Brands. They have earnings tomorrow morning, STZ, but this is a no from me, Doug, because it's such a small expected move. It's a $250 product with a $7 expected move. I just don't see it. I mean, I don't.
It's got mid-20s implied volatility. That's what you get.
Yeah.
Like, you're not getting paid to take any risk.
Yeah. And even if you're being directional, which is what I would do if I was trading this, you're not getting paid to really sell premium against it. It's really hard to get a directional exposure where you're collecting a lot in the short option because there's not an expected move that's really priced in any meaningful way. 3% of the stock price is really low for an earnings announcement. So I'm going to hold off, but I'll keep my eye on that one for tomorrow morning, just see what happens. And we'll remember that it was a $7 expected move regardless of what happens.
Whoever gave us the Target Costco pairs trade during the show for the shipping trade,
Long Costco, short Target.
Yeah, Costco I think was down like $5 or $6 when we were looking at it. It's now basically unchanged. It's up $1 on the day. Target near the low of the day here, about 20 or 30 cents off the low, trading at 150-ish. If anybody has any other potential port shutdown trades, we are all ears.
Yeah, that was an interesting one.
Yeah.
That was H. Montero, I believe.
Yeah.
Yeah. How wide does a bid-ask spread have to be that you won't get an instant fill? A couple pennies.
Yeah.
But when we place it, when we place a multi-legged trade where you instantly get filled, that probably tells you that you might have been able to get a better price. Is that like by a penny or two?
Maybe.
If you
yeah,
let it
you
sit
could have
for-
worked it a little bit. Yeah.
That's the point. But
It's more the fact that, you don't want to get auto filled. Like it makes you feel like, it's a bad trade. Like I want somebody to fight me for the order. Like, I'm trying to get $3. I want to have to pay down to $2.98 because I feel like the computers are scared of me. You know what I mean? Like they're scared of my $3 price. They're going to only give me $2.98. If I go in at 3 and I'm instantly filled, price improved at 301, I feel like I'm a sucker. So that's how I feel about the instant fill. The technology does it all for you. You get the best fill possible. It's a psychological thing in my book.
yeah. SPX Iron Condor, placed that a couple days ago.
Another good call out. Yes.
5,400, 6,000 shorts.
Yes.
20 points wide. That one's
It hasn't
basically, it hasn't moved, but it's chopping in the right direction, we'll say.
Yeah. Another good one to take a look at if you don't have anything on. Just given that vol is at 20 and is relatively high. Wide iron condors, wide strangles. If you got a bigger account size, they're definitely in play. You got we use the November monthly, so to speak, expiration. It's not the AM settled one. I try to avoid those, but being able to go 200-300 points out of the money, sell kind of a quote unquote core position for a much juicier premium than we're typically used to. E-mini's up 3 here, nothing really moving. Actually, oil catching a little bit of a bid here into the close. I mean, you got to imagine there's a little overnight premium baked into that. I know that there might be some retaliations happening in the Middle East, so maybe that's getting baked in here.
Thoughts on CCJ or URA?
Yeah, these have been sort of hot topic over the last couple weeks.
Yeah.
Had a trade in here, I believe.
In URA or CCJ?
CCJ, I think we did this on like a fast market or something. Yeah, I did the 38.44 strangle and closed it for like a 50 or 60 cent profit. You do the same kind of thing, 45.55, $10 or $5 out of the money on either side in November for $2.73. Use $500 in buying power. Let's see. I'll tell you what I get filled at.
Yeah, CCJ, big move relative to implied volatility. That's for sure. And
all right, I'm at 270.
There you go.
For the 45.55 strangle. So delta neutral, $5 out of the money on either side.
Beautiful.
Yes.
Yeah. Some other products were in Micron. That was a call diagonal spread we entered. That was a couple days ago into this little sell-off here. Micron is on its 5th day of posting a red number if it stays below here.
After it got to like 115 on earnings.
Yeah. So taking a little upside shot there in a defined risk way with a 100-107 November-October call diagonal spread. And did a similar thing in Coinbase, but went with a crab trade. Long the 175 in November, short the 185, long the 195, short the 185 twice in October. But yeah, I wouldn't mind if we chop around here. Wouldn't mind if we see a little bullish move in some of these tech stocks, but it's kind of where I'm leaning right now.
I hear you. E-minis up 2 here. NASDAQ up 44. Dow up 43. Russell down 2. Not much moving here. Been a quiet day. I mean, just looking at the volumes in the E-minis, 1 million cards traded. So it's not like a super light day, not our half day type trading, but it's certainly not as much as we've seen over the last couple sessions. I'm sure that will increase tomorrow and Friday with all the economic numbers that come out here. That's pretty much it. Volatility not moving. 2010, it's actually upticked like a nickel or two. Bonds basically unchanged from where they've been.
Yeah, Microsoft, another stock that is really selling off from the highs, recent highs. Down almost $60 from a couple months ago. But yeah, it's a weird market.
Weird market. Nothing happening.
Yeah.
And it doesn't look like anything's going to happen in the next 30 seconds. E-mini's up 1. Inside, outside for the rest of the week. 76 points, SPX. What you at?
I'm going to say inside.
I'll give you a 40 or 5,800, 5,600. Inside, a 56.25. SPX.
Yeah, inside.
Okay, inside. I think that's the play as well. Low vol crush into the end of the week. We'll see if that happens. E-minis unched. Are we going to close with a 0 handle? You got 15 seconds here. Come on. Give it to us. Basically unch. You got the NASDAQ up 34. Dow up. There we go. E-minis up 1. That's it. Oil up $1. You got volatility futures down 45 ticks. Bonds down 21 ticks. Gold down 10. Silver up 35. Bitcoin down 1,400. That was a boring day in the markets. Hopefully we get a little bit more juice in the next couple days. But what do you think we take a quick little 90-second break, come back with the boys in overtime?
Love it. Go Mets. METS Mets.
He's probably listening. Thanks for hanging with us. We'll see you tomorrow.
Peace.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500. Specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat.
I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
No, let's take a look. They did not hold that rally at all. Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this to me. And then you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All of that for basically an unchanged day. It is Wednesday. It's October 2nd. It's 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan, new studio in Milan. We're here to take you through the rest of this hour as we wrap up the futures trading day. It's another day where oil prices scream to the upside, starting us moving higher. Ultimately, we see that this is a market that stabilizes over the course of the U.S. session. Stock prices here, the S&P up by 0.08%, NASDAQ up by 0.29, the Dow Jones up by 0.12, and then the Russell's off by 0.08. So not much going on there. Volumes were pretty light, 1.17 million contracts traded on ES itself. But when we look around, it's a day where those higher oil prices and day two of the port strike here on the east coast of the United States may be starting to filter through and bump up inflation expectations in the market. But we do see that bonds have a rough session. There's a mixed performance by the commodity sector, although the China trade is not dead by any stretch of the imagination. We can take a look at A-shares and FXI in a little bit. We head over to the world of FX, and despite last week's rumors that the new Japanese Prime Minister, Ishiba, would not interfere with what's happening at the Bank of Japan, he did say yesterday that the BOJ is probably done hiking rates. And the carry trade is officially back now. So let's pump those bags into the end of the year, I suppose, at least if the BOJ has their way, or at least the new Japanese Prime Minister. But guys, geopolitical risk is afoot. That is very true, at least in the short term. Israel hasn't responded. Ilya, I have no way to transition this without sounding like a total jerk. As someone who's more familiar with the holiday calendar coming up than I am, as a Gentile, how does the Rosh Hashanah Yom Kippur window ultimately impact the timing of the event risk that we have lingering around now? And I say that because it seems like there could be now a week grace period where Israel keeps this potential retaliation in the hopper, and thus the markets stay on tenterhooks.
It doesn't really seem like we have an expansion of geopolitical risk today. It seems like the dust is already settling. I mean, take a look at crude oil. It's had a wild ride today, but ultimately, what does it do after yesterday's shenanigans? CL is a goose egg. So when you look at all of this, what do you find? We get back into the highs overnight. We talked about this on the show yesterday, that Asian markets, European markets hadn't really had a crack at the news that Iran did this. What did we see overnight? Look at that long wick on the CL candle. We came right back up to the highs, tapped him again just to make sure, and then came right back down and settled, a little changed and a little lower. So it doesn't really seem like the markets are going to continue to fret very much here. Holiday calendar for those of us celebrating notwithstanding. I don't think this is anything where the markets, we're just looking at the price action here, where they're going to sit and wait and go, oh my God, they might do something in the 10 days between Rosh Hashanah and Yom Kippur. Obviously, that's an unlikely window as it is, and what Israel has shown, if anything, is a penchant to surprise. So clearly, that's something that's helpful to their rebuilding of deterrence campaign, and from pagers to walkie-talkies to high-profile assassinations, everything has kind of come through a fog to throw the other side off. And to do this here would be unlikely. So whatever the response is going to be, such that there is, we'll see. We heard from the Israeli establishment today that they thought the response needed to be significant, but not so as to trigger a regional conflict. And so the appetite from both sides now is clear. We heard the president of Iran, Pezeshkian, say exactly the same thing at the UN when they gathered in New York, that they will not be goaded into a regional conflict. Neither side wants this. Everybody has to save face. So it doesn't look like crude oil cares. I don't think we should either. Not until something actually occurs. And everything that seems to be lining up here doesn't line up to this will become a regional conflagration unless something goes off script. That's of course possible when missiles are going back and forth, but I don't think either side wants to go there.
Dylan, oil does close higher than it traded yesterday into the close. We see here that it's up 1.58%. In the CLX4 contract, it's back to $70.92 a barrel. But it did trade back up into an area where the market keeps rejecting it. We see that the lows that we had in June, August, which then flip over and become resistance here in September, now October. Likewise, the uptrend off of the August swing lows, that's been resistance twice now in the past 2 weeks. Is the play here now until we see some further escalation here henceforth? 99.7 IVR, that's pretty darn high. If we get another spike into 72, start looking to sell some calls or just do it right now. Because I think that you're already sort of
waiting for. I mean, the thing is, the only thing that I don't understand in this entire discussion is any hesitancy of any kind. You're got this crazy IV. They're not going to do this. I mean, they're doing what they're doing. It's not that they're not going to do this. What they are doing is what they are doing, and they will do more of this. Doing this is horrible and scary and unsettling and all sorts of negative emotions, but what it is not is a disruption to the flow and availability of oil, and it will not be. So you can talk about who wants this or who wants that or what this is or what that is or what Netanyahu will do or what Iran will do or what they're going to do with the leadership in Lebanon after the assassinations. I don't know. There's going to be it's a mess, and it will continue to be a mess. It will not disrupt the flow of oil.
And it will not be, from the looks of it, a bigger mess than what the markets have already benchmarked and factored into the prices as they stand. So,
and implied volatility relative to itself is at 99. If you do not sell, even a condor, if you don't listen, if you think that I'm too cavalier about the risk, okay, but then sell the condor. For me, I'm long the put, and I'm making money on a volatility expansion in the put, and I already overpaid for volatility going into it. So that's how out of control it is. And so, the only path here is to sell premium and, set your strikes. Manage your risk. I think you sell the calls. I think you sell the calls pretty close to where, within 10% of where it is now. Take a rich payment, but again, to each his or her own. But this to me is a screaming opportunity. Screaming.
I mean, I was looking at structuring, selling a call spread. It's still, the pricing is still not offering great risk reward for how I look at it. So I'm still on the sidelines here and sort of waiting for the markets to rebalance such that I could get a good risk reward structure locked in. And so it goes. But in terms of what I'm looking to do, it's either selling calls or buying puts. Either way, I'm betting on downside.
But at this IVR, why would you not do a premium selling? Just out of curiosity.
It just doesn't add up to good risk reward once you start looking at your max loss versus max profit estimates. It just doesn't give you great risk reward at this point.
I mean, because I just feel like the risk is you buy the put, you're right, everything goes your way, but volatility comes in and you're still down money.
Right.
Or flat.
Yeah. I mean, essentially,
the put buyer's dilemma when you got an IV like this, in my opinion.
Yeah, I mean, you look at this either way, and you're just not getting great risk reward. So, is it worth it to do here? Probably soon, but I haven't been able to really go through a pricing exercise and find something where I go, yes, I will take risk at these levels.
There's part of me that's overthinking this. It's total galaxy brain.
And yeah, I might be overthinking it.
No, but it's like, okay, so it's a holiday coming up, so Israel wouldn't strike. That's exactly what they would want Iran to think. And so then they're definitely.
I mean, he was giving a speech at the UN when he hit go on the iPhone for the biggest collective assassination in history. So, come on.
And I don't think it's a mistake that when he gave that press conference yesterday, either Bibi was sitting next to the head of Mossad. That seemed like a pretty meaningful signal, right? About and given the context of the conversation. Like, if you hit us, we're going to hit you back.
I mean, I think the message is, I am the Messiah. I am everywhere. No, you are safe nowhere, and I can kill you at any time. I mean,
right. This is that rebuilding of deterrence that we're talking about.
Beepers, walkie-talkies, and the targeted. I mean, this is the most effective messaging for "I am your overlord, and you live and die at my will" that has ever been communicated, in my opinion.
I mean, I think that this week, 2, 3, 4 holidays coming up, right, Ilya? Sundown today?
Sundown today, depending on how you observe it, it's 1 or 2 days, and then 10 days elapse, and then Yom Kippur. And that's a 24-hour endeavor.
No, and I think
this is
but it's on a weekend this year, actually. Yom Kippur.
I'm looking at 2 days to expiration, Dylan. Like, we're just going to say that this is that if something happens, it's going to be short-lived, and quite frankly, it's not going to happen before the end of the week. We could look at 2 days to expiration. Risking two and a half to make one.
2 days and just let it burn off till Friday on a Rosh Hashanah bet.
Why not? It's a 99.6 IVR. What do we have to do here?
I know. I love
the typical tasty way would be to go at 45 days. So we'll go to that here. What this would look like with the. We want to go to 45 days. I said. There we are. Let's look at this here. Sell the call spread. I need to do it this way. 1, 2. Pop you out here. This is pretty rich too. Forget the next 2 days, right? There could be an attack on Friday, prices spike up. We see on Saturday morning, nothing happens. The market comes back in. 71, 73. You may even want to go a little bit wider just because to get a little bit more space in between your deltas. But you're then risking 2 to make 1. You have a little bit more time on your side to be correct that this is the near-term top. So high convexity will be right or wrong in the next 2 days on the first order. But there is a way to structure this still closer to the 45 in, 21 out, effectively saying that the downtrend will remain, the underside of the uptrend here from the August lows will hold. This little kill box, anytime oil gets into 72, right, this is a place to look to fade it in the short term. Positioning aside right now, because it's a completely different type of trade setup. Both can work simultaneously if they're structured in different time frames. I would think if we get a rally into 72, you got to treat it as close to the midpoint of the 52-week high-low range, and that's a great place for a condor. above 80 and below 64, maybe even a little bit further below 64, like 62, selling the guts down there. But oil with its volatility, Dylan, I mean, right, this is the time when mechanically, I think that you just got to jump in with 2 feet and trust the mechanics of the trade strategies that we know we should apply during these situations and just hope for the best in terms of the probabilistic outcomes.
I mean, the interesting thing is that volatility went to 99 or relative to itself, and the price is still kind of just jaggering around. It's perplexing.
Yeah, I mean, it seems like you have the implied vol telling you people are still fresh off of yesterday's exercise. They're still sitting on tenterhooks here, but nobody's prepared to say that this is actually the go big regional disruption. Let's actually price that in sort of thing. I mean, this is an understandable disparity between the underlying and the options market, where nobody's prepared to say, yes, it's go time, regional war, but at the same time, everybody's worried that maybe it is. And so
I think there could be a region
readings.
I think there could be a regional war and it still wouldn't affect the flow of oil.
But that would probably have to be discovered with some lag, right? There is a freak out function there initially.
Sure.
I mean, as we just saw,
like 22, February
right,
22, February.
Right. I mean, Russia invades Ukraine. You get a crazy spike in wheat. You get a crazy spike in energy because the biggest producers of both just went to war with each other. And it lasts what? Barely a month. And then starts coming off. Of course, it gives Europe an inflationary jolt that then takes a year to rebase out of
the retail side, they exploited it for a year. But yeah, anyway, the point is it's not happening now. I
for the market's part, they were like, okay, but that took about a month.
This is a screaming call spread sale, one way or the other.
Yeah, I mean, it just, for me, it becomes a matter of these spreads need to tighten a little, that this market needs to kind of climb down off the tree where it's been hiding since yesterday. And then that's going to be a setup.
Yeah.
It is the predominant story today. We have oil prices moving up. They did come back down a little bit. We also have ultimately then this port closure still going on. They're trying to negotiate. Bonds looking a little bit heavier in today's session. China continuing to unveil more and more stimulus measures, tweaks, concepts of stimulus, as it were. FXI now another 7.25% gain. We still have not posted a close below the 1-week moving average since the stimulus measures were announced, 147.9 IVR, but you got to be real brave to step in front of a freight train as far as I'm concerned. The past week, China's still going full reflation. They're coming off of a place where, as Vic pointed out last night, going into the last few weeks, the total market capitalization of Chinese equities was less than $1 trillion. And so now that all the stimulus is coming in, it's been effectively a green light for stocks to see significant value expansion. Chinese equities had done nothing in 2024. They're now the best performing equity market in the world, just because of what's happened in the past 2 weeks.
Part of this effort was to quite literally direct official channels to buy local stocks. And this is China, so they were directed not exactly in the most if you'd like, here's an opportunity. We'll provide the funding if you'd like. That's not the tone with which this message was delivered, clearly, and that's not how things in China work. So, yes, of course, it's been a screamer, but also it's important to look at what is the underlying signal here. Is it the underlying signal that investors are voting with their are voting confidence with their dollars? Yeah, not really. Or at least not certainly, as you might expect in open and free markets, where what you're really getting is a true signal of supply and demand or at least you hope to, rather than basically the PRC Central Committee mandating people go and buy stock.
Dylan, do asset prices need to be tied to fundamental logic in this case?
I mean, that you're asking me a rhetorical question.
I am.
And so I will give you what you're looking for, which is obviously they do not. That's been long as well established at this point. In fact, nothing affects asset prices more than central bank policy. And central bank policy is the single greatest driver of asset prices.
Except in China.
With the but again, regardless China, no China, nothing is less relevant to asset prices than fundamentals, especially in any short or even slightly intermediate time window. Especially in a market that's so liquid and so high, so much velocity. Sorry, Ellie, go ahead.
No, I want to agree with you. I mean, in the case of China in particular, you don't have a liquid market, relatively speaking, so it's easy to push around. If officials want to mandate it higher, they will, and they have. We've seen similar efforts when we saw what they did with expanding stimulus earlier in the year, the spike from let's call it April into mid-year, and that of course failed because the stimulus didn't deliver, because in China monetary stimulus hasn't delivered for 3 years. This is not the West's reaction function. The reason this has been so violent is because they promised fiscal support. And if they make good on that, then you have your fundamentals. Everything is aligned. Everything is in agreement. The problem with the hopium here is they haven't said anything specific. They've essentially delivered what was the equivalent of Mario Draghi saying, we will do whatever it takes to safeguard the euro. For Mario Draghi and the ECB, yes. For Xi Jinping, who's allergic to fiscal stimulus from a philosophical perspective, maybe yes, maybe no. And so that's the question still here. That isn't to say that these stocks aren't going higher, but I wouldn't buy it with your money.
Oh, hell yeah. I'd buy it with your money, and then I'd borrow against that money to buy more of it. Yeah, look at emerging markets for the first time. Dollars coming in. Yeah, Fed rates may not come down as much as people hope for because things are going too well. If it's inflation that's coming about, then who tends to be the beneficiary of that? That emerging markets that dig the commodities out of the ground and ultimately send them as processed goods or finished goods to the West. So at the tip of the supply chain, those equity markets still should do quite fine. EEM here closing at a new yearly high. Not just China. We can do EMXC to take China out of the equation. It's obviously not as impressive. It is
it's
unchanged on today's. It's unchanged on today's session, 0%. But it's a day where equity markets.
But it's been down for a few days here.
But this is we just were 3 days off of all-time highs after a breakout where we've now returned to the breakout point. It's hard to. It's the stimulus pump is primed right now in China.
It's been primed for 3 years. It hasn't worked. The question is it going to work this time?
I don't think that's actually the question, though, right? Because we've seen from every other time that this has been primed. The market runs with it for a few weeks or months. We don't need to answer that question until like December. That's not today's question.
It does, and I agree to your point. If the strategy here is I am going to ride the wave of speculation that China will get it to work this time, that's one kind of strategy. If your strategy is it will work this time, and therefore this has implications elsewhere downwind, other than the very small sandbox that is the Chinese stock market, That's a different idea. Hence, you see that even in the past 5-6 days, as Chinese stocks have surged, we just looked at it a second ago, emerging market stocks over the same period of time are down when you exclude China. U.S. markets are down when you exclude China in the same period. The Australian dollar, a proxy for Chinese growth, is down in the same period. Copper is down after a spike in the same period. So everything that isn't the insular sandbox that is mainland stocks, which the PRC can mandate, is telling you, we're not so sure. Now, that doesn't mean they can't continue to push mainland stocks higher. They can. But what you're doing in doing that, in buying that at this point, is you're swimming against the current of opinion outside of China, as seen in the Aussie dollar, in copper, in other emerging markets, as we've just listed. And so who knows how long you have there? Maybe a while, maybe less. They're rallying on a rumor. The Politburo didn't say anything. They didn't give any specifics. They'll squawk something a little bit different in a week, and it goes the other way. Or they won't. But I don't want to take that risk. That seems like an invitation to get run over.
Dylan, in my world, if Blue Horseshoe loves Anacott Steel, I'm buying Anacott Steel. And right now, if the CCP wants to pump...
You're talking my language.
If CCP wants to pump the bags of Chinese equity holders during Golden Week to paper over the horrible news headline that a nuclear sub may have sunk.
Yeah.
Come on. This is a propaganda machine. Of course, that's what's going on here, right? We have this national crisis.
I mean, my only question...
I mean, they've pumped it. It's there, right? Like, it's up a lot.
That's my concern.
It's
I just don't know enough. With oil, I'm much more comfortable taking the position. That's only because of recent experience, having increased my confidence. I would love to buy China. I wanted to buy China a couple of days ago. You two talked me out of it. My only question is, should I buy it now?
I'm effectively short
Don't give me that furrowed brow. What's that?
I'm effectively short China because I'm short the Australian dollar. And I'm not going to say it's working. It's very preliminary yet. It's starting to work.
If there's pullbacks into the 1 week moving average, I think you got to buy dips right now until momentum breaks.
Would you buy it right now, no matter what? I wouldn't
buy it. I wouldn't buy it right now. I would wait on a pullback because it is a little extended from the 1 week. But if we see tomorrow that, like, look what happened 2 days ago. We got a breakout here. We had a day of pause. We get another day tomorrow where we just kind of like slide sideways. I think you gotta be long on the other side of it still. It's a momentum play. That's what you're rolling. You're rolling the dice here. You're just seeing how far can it go and how long can I take the ride for.
Right. No, I completely agree. If that's what you're doing, if that's your strategy, Godspeed. That's not the kind of trade I want. But that doesn't mean that it's a bad one or that the idea doesn't make sense. You've already seen what the PRC can do by squawking in the right direction. Nothing is to say that they're going to stop squawking in the right direction, and how long the external market's pessimism in this, because that's palpable, how long that takes to sort of take the wind out of the sails here. Who knows?
Is that IV rank, Lodge? Is that a real number, that 147? Am I seeing that correctly?
You are seeing that correctly.
Yeah, I mean, if this is what you're after, basically saying, look, momentum here is strong. They can keep talking this up until they can't, and I'll be long as and until. Sure, that's just not the kind of a setup I look for.
Dylan, if we want to make the bet right now that you're still going to ride up that 1 week moving average until something changes, that's 32.94. The 44 days to expiration, selling right around the 32.94 area, right? That would give us perhaps a 64% probability of profit. You can risk a little bit less than 3 to make 1. You could change this ever so slightly, give yourself a little bit more, and it goes about closer to 3-1 in terms of risk to reward there. Either way, though, that's the key feature here. If you are looking right now and you're thinking about getting exposure to Chinese equities through something like, or in a manner consistent with the Tasty methodology here, the 45 in, 21 out, there is a November 15th expiry that tomorrow when the market opens will be at 43 days to expiry. And even so, if you're getting a 60 to 70% probability of profit and you're getting a 2-1, that's a pretty decent way to do this in a riskified manner without having to overpay for the, long call exposure, as it were, because if the market, let's just say, rallies up and then stops, you can still make money on the short put spread. If you're long the call spread and vol comes in, and we keep rallying and vol comes in, people know this with the earnings, right? You've seen where you buy out of the money calls for earnings and the stock price goes up and then your earnings expire close to worthless. That's the theta decay. Think of it in the same manner here. So I think the short put spread is better to capitalize with the 147.7 IBR. Don't pay up for the premium. There's a little bit of liquidity here. We can see the open interest across the strikes that we've obviously just blown through very quickly here in recent days. So have to imagine that more liquidity is going to start to come in on both the call and the put side, particularly on the put side as we begin to move up more and more. Obviously, there's healthy volume for the calls, 10, 15, 20% higher than where we're currently trading, which I suppose is to show that there is still a good deal of belief out there that this market will continue to go up. Guys, let's move the conversation forward here, though. We've been talking a little bit about Iran and China. Unfortunately, we can't round out the axis of evil with a story about North Korea. As far as I'm concerned, we can talk about the energy sector performance here today. Your top performing sector is SMH. Your worst performing sector on the session goes to XRT retail. It's really a tale of two different outcomes right now, insofar as semiconductors and retail are probably two of the things you want to see going hand in hand. So if it's speculation about AI or growth, there's not a consistent drumbeat there on this Wednesday session, although it's a Wednesday session with not much volume in the markets. Guys, a few weeks ago, going into NVIDIA earnings, there was an SMH iron condor that was put on. Granted, it wasn't the sexiest trade in the world. I don't consider iron condors to be the most appealing thing. You make your money with high convexity effectively, at least as far as I'm concerned.
You know where I stand on this. Directional. But
SMH, for all the warts and bumps it went through at the start of September, I was ultimately a few days ago able to take it off right at the midpoint of the range where it's been trading from the July high to the August low. And with a 55 IBR, I can't help but think this looks like a pretty good spot to put that trade back on right now. October being a month where seasonality, really, you can pick and choose your narrative there. Typically it's good, but during election years it's not. But those good years, when it's good, it's really good. Well, what if we're 20% plus after September and it's not good? This seems like a good place to chop and grind. Volatility is elevated for the rest of the month because of the presidential election. Why do we need to take significant directional bets outside of any of the indexes? And why not just look for range trading here now for the next few weeks and capitalize on the vol while we have it? Ilya, what should we do with names like this with the volatility as it persists?
I am a lot more interested in what's going on in the NASDAQ at the index level than I am in the sector ETF. I mean, this shows me a little bit of a reflection of how NASDAQ looks. I mean, obviously, there's the July top, there's the shallower August top. This is coming off that August top, much like NASDAQ is. And it does look like the near-term sequence of higher highs and higher lows has been violated here. So you maybe have some room for a little bit more of a pullback. But ultimately, I think the index just provides a cleaner reflection of this same thing. I mean, the price action there is very analog. Just look at the past two candles on or three candles rather, on what you see here. You initially attempt to close above August's high. You do that. The following day, it turns out to be a false breakout. You come down and you close back under August's high. Since then, you continue lower. the past 3 days, you get a pause, breakdown, and then today you get a retest of the underside of the preceding green candle, as if to tell you with clarity, hello, yesterday's breakdown, that was the real move. This is the retracement now. The next leg is down. Now, if you look at NASDAQ, it'll show you a very similar picture, just a little bit cleaner. So I like the ability to do this with futures overnight, the flexibility to be able to get out if something goes haywire, especially in such a weird geopolitical climate. That's attractive. But look at this NASDAQ chart. It's the same thing.
So NASDAQ that's finding support on its 1 month moving average. It was a bearish engulfing bar yesterday with an inside day today. And I'm reminded, you mentioned the lack of follow through. I don't know. Maybe it's like a spidey sense kind of thing. But and it also could be my permeable pro-American, I'm a patriot bias speaking as well. There was a topping candlestick pattern here in gold. This is just purely instructive. If something is going to be a topping pattern, if something's going to be a bottoming pattern, there is a very specific definition to how things should proceed, right?
That's
Words have meanings. In the case of an evening star candlestick cluster, big green bar, doji or shooting star, red bar that encompasses at least 50% of that first green bar.
Textbook.
But you get a doji as the next candle. That's not follow through. And then sure enough, inside day, big green day. Okay, so this wasn't a top.
As different from the NASDAQ, where the follow through has already materialized.
But
that's exactly right.
That already happened, right? We're talking about the last 2 days of candles. Yesterday was a bearish outside engulfing bar. Today is a green
previous
day.
one it was the previous engulfing bar that starts us though. The one like SMH, which shows you the break above August's high fails. It's that bearish engulfing. And then you get a pause and follow through. In an SMH, it's not an engulfing because there's a gap.
No, right, the gap.
And so with the gap, if you were to kind of mentally fill that in, that's more like a dark cloud cover, a candlestick pattern, or a Harami candlestick pattern, were this to be continuous. But it's not. There's a gap. So with that in mind, what are you left with? Basically the same thing. That you try to get through August's high, you fail and fall back in, and on that failure, you follow through. Now, maybe you don't follow through tomorrow. Maybe not the day after. I suspect you do, but let's see. In any case, I'm looking at this and saying it's working to the downside until it's not.
Dylan, as a way to capitalize perhaps on a market that's going to chop around here for the foreseeable future, maybe that's what October has in store. Volatility stays elevated.
I mean, yeah,
Maybe the
this seems like a
geopolitics.
tasty trader's delight, right?
It's you know what? It worked at the end of August ahead of the Nvidia earnings. There was a rough patch there. Don't get me wrong. There was a really rough patch there. But then the market bounced back and we ultimately settle in. And I'm one of those people who, if it's not broken, don't fix it. I'll keep going back and back and back. It's like with the ES call spreads earlier this year. Like it worked, November, December, January, February, March. April was crappy, but then the conditions arose for it to work again in May, June, and then not July, and then August, not again. So then I backed away for a little while, right? But until I get punched in the face 2 months in a row trying something, there's no reason not to do it again as far as I'm concerned. Here, it's, again, about 2.5 to 1 for a 60% probability of profit, where you're looking at a market that says we're not going to break the lows that we had in August or the highs that we had in July, at least for the foreseeable future. 21 days in terms of a trading calendar, that's going to bring you, roughly speaking, to the end of October, which means you can take this off right before the election, before the reason why all this volatility is baked into the cake finally pops off. So I'm going to be sizing this up for tomorrow. I like going $15 wide from the guts to the wings. That's selling the 220, selling the 270, going out and buying back the 285 and the 205 on the calls and the puts, respectively, 60% probability of profit. It brings some directional neutrality to my overall composition, Dylan, which, again, when you're bringing new strategies into your portfolio, the constant consideration is how does this impact my beta weighted deltas, how does this impact the correlation of all the assets that I'm holding? Because you don't want to inadvertently put 10 eggs in the same basket when you're laying on these new trades. So for me, because I have a net long delta bias for the most part, this is something that actually helps because it differentiates my time horizon and my holdings. So I'm very comfortable.
But
with
I just like, I feel like it's, I mean, and not in a negative way, but I feel like the oil discussion, the China discussion, and now certainly the SMH discussion, you're looking at the same dynamic, which is expanded volatility and a churn. And you can pick a side, or you can run a condor and do a 45-day, 21-day entry and exit. I mean, it seems like a good time to learn how to be a tasty trader, insofar as there's volatility to be had, and it's not.
There's certainly that. There's certainly that. If there was a time to look for vol extraction, these are the readings you want to see. I would only caution that we don't know that the vol expansion has ended just because the geopolitical risk has ended. We have a bunch of U.S. economic data now in the window tomorrow and Friday that is of consequence. And we saw earlier this week when Powell spoke, given what he said, which was aimed at cooling the market's dovish jets, stocks didn't like it. But we also know that U.S.
a mess.
Yes. We also know that the markets took the Fed's message as reflationary, which means they don't want to hear from the Fed that they're going to cut less, and they don't want data that's going to tell the Fed to cut less. Meanwhile, the data has been good.
Who's the day that you speak of, by the way? Am I part of that day? I'm fine with the Fed telling us this. This is fine. Who's the day here?
Look at the response from the S&P 500 at exactly the moment that Powell spoke on Monday.
That's fine. That's nervous algorithms who are seeing words on the screen and don't have the.
I mean, you can say that.
I'm going to say that
just like I can say they. But the price action is the price action.
What do you mean, you people?
How does an algorithm get nervous?
That's right.
They have
it's the nervous algorithms. Don't worry about it. It's an unfortunate byproduct of the super collide. Nervous algos.
Though, you see these large language models read the headlines that come out and they impute certain things based on the speech. Like you can go on your
suggesting that their personality profile tends to be anxious and a little nervous. Maybe
they're all risk averse.
Maybe they're like surfer bros.
They must have been trained on my content.
Maybe they're like, hey.
No. Sorry, no, that's not how they are.
Nervous.
We both know that. They're nervous as hell. That's why they're like in and out of the market in 6 nanoseconds these days.
They're hopped up. They're ready to go. They're ready. They're real. They're ready to do whatever they need to do yesterday.
Dylan, by the time the nicotine from the Zyn touches the inside of your mouth, okay, they've already been in and out of the market 50 times.
By the time you light your first Marlboro Red to think about what you want to do next, they've already come and gone 50 times.
In and out, already there. Regardless, though, innuendo aside, look, I think this S&P chart today, we have that bearish engulfing bar yesterday. Doji today at the 1 month moving average, holding above the September highs. Guys, choose your way, Western man. Dylan, tomorrow's price action. Are we buying here and saying that the 1 month moving average is going to hold? Or is tomorrow the day that it breaks and stocks finally crack heading into non-farm payrolls?
In what world does a competent human go face first into the direction of the equity indexes 2 days, with the jobs number on Friday, and this level of sort of the absence of clarity that we currently have, and the absolute garbage from the bond market the last couple of weeks? I don't see how you do that. And especially when you could just be non-directional and sell volatility. I can't have any part of it. I have no idea. It's a mess. I don't want anything to do with that. I'll sell your premium.
Any part of it. Okay.
I can't have anything. I can't attempt. I don't even bring up my name.
Okay.
No, I don't know. The stock market is the most mysterious to me at this point in terms of its direction. I'd sooner have an opinion on Mexico.
Okay, Ilya, I think I know what you're going to say, but let's give you a chance.
I'm short because it's working. S&P is down off the highs. That's making money. NASDAQ is down off the highs. That's making money. The dollar is up off the lows. That's making money. About the only place where I have short dollar exposure is against the yen, because or a long dollar exposure sort of flipped over, because the yen is clearly not wanting to follow through on those gains after we have the change in prime minister. The yen initially rallied. It's since come back in. So about the only risk-on exposure I have, sort of traditionally risk-on exposure, is I am long the dollar against the yen on the spot side, because my yen exposure now lives on the spot side after the indignities of trying to manage risk in 6J at the beginning of the year. So I'm effectively short 6J, but I'm doing it on spot side. Other than that, I am short the euro, short the Aussie, short the pound, long dollars, short via verticals, MNQ and MES.
You want to buy
and
the
short
stock
Europe
market
also.
tomorrow. You want to buy the stock market tomorrow. I could tell from the tone of your voice and the way you asked me the question. You're like, let's do this. I can see it in your eyes.
Did it work for those people previously? Yes, it did.
Yes, it did.
Yes, it did, actually. It actually did. Okay. Yeah, you know what? I'm far more compelled by something one of our loyal viewers sent in. If you watch us on YouTube Live, we forgot to say hello. From Stephen Powell, Madman's Delight trade. Buy the 6J H5 93 DTE 0064 put. Let's go. Okay, so let's go see this. The 93 DTE 64 put. 64 put. Well, obviously we're not going to, the yen's not going to zero, so like that, don't ignore the max profit there. But it's a compelling, this is something that I do want to talk about, because the last few weeks there has been this joke, not joke, that we're potentially talking about a return of the yen carry trade. The positioning in the markets suggests that there's no risk there to that right now. Fundamentally, in middle of July, right, just to backtrack here for a second, you have one of the largest net short positions ever in the yen. It's now a net long position still. So that's not a significant factor. The carry trade's been completely unwound. To that end, though, last night, the new Japanese Prime Minister, Shiba, effectively said that the market doesn't need to worry about the BOJ anymore. We have this inflation data that's just come out from Japan showing that headline inflation, core inflation, month over month, starting to slide back into negative territory. So the BOJ hikes, and we're now getting more deflation. They're probably putting this back in the can for a little while. If the Chinese government is pouring stimulus, if the BOJ is sending signals from a political channel, at least the political channels are telling us that the BOJ can't do more, the Fed's cutting rates, oh my gosh, there's supply chain issues. This is hugely inflationary. 2022 is a freaking nightmare for the yen. 2023 and 2024 were freaking nightmares for the yen, okay? In part because of the rise of commodity prices. This is a currency of an island that imports everything. 90% of their imports for energy come from abroad. It's all valued in dollars effectively. Why isn't this going back down to where we were earlier this year, guys? This feels like the high convexity macro layup trade for the rest of 2024.
I mean, I'm essentially short yen here now, and I've been. So I had it on before the election news, and the Shiba news didn't spook me out. I'm glad I held on because I thought ultimately it was an election that gave a status quo, not status quo change, which would have been what would have happened if the more dovish candidate emerged. So I'm happy with this. I think this looks right. It certainly lines up with the reflation idea. Certainly lines up with what we've seen in gold, in the curve, in copper, in break evens. I just don't extend that conversation to equities.
Because you're still
because they're
Soviet
going
at heart.
down.
You're still Soviet at heart. That's why.
And as soon as they stop going down, I'll buy them.
You know, I'm watching the Americans right now in my free time, Ilya. You and I have to have a conversation after this.
I couldn't make it past the second episode of season 1 because I didn't feel that they were Russian enough. It didn't seem credible.
Tomorrow, Dylan, you know, you mentioned that Momo monkeys like myself are looking to buy. To Ilya's credit, one of the structural issues that we see here in the short term is when we punched through the highs that we had back in July, we started to treat the former highs as support. And since then, we pulled back in there. So if we can actually see tomorrow, you get through 57.90 or so, you pull through those earlier highs that you had on July 16th, 57.85 to be exact, you have a lot more of a compelling case than to head into the weekend going up after non-farm payrolls, because this is the market going through a whole, is it good or bad that the Fed's cutting?
Right.
Forget the context of the current conversation. We know that one thing that works, it's been working for years. Prove me wrong, right? The market needs to prove us wrong. If it's a good jobs report and stocks decline coming out of a good jobs report, you buy the weakness every time. Doesn't matter that we're not going to get the rate cuts. That means economic growth is going to be higher and will deliver more than whatever the rate cuts would have offered. It's a good thing. I insist. It's a good thing that more Americans have jobs. I know, sue me. But I think it's good for the equity market too. So if there's weakness on the other side of it, I would like to buy it, Dylan. You're right. I'm going to do this until I get punched in the face. Although yesterday,
but you're going to buy it going into the number.
I'm going to buy them coming out of the number on a week. Well, we're doing a few things here. I'm going to be buying one.
Plus, not to mention, I'm going to do that yen madman. Tell our viewer, I'm in on the madman there. But anyway, back to the equity market, the big show here.
I think that we have a legitimate chance of a bounce tomorrow. I think staying long against today's low is a way to scalp. If you want to scalp tomorrow's market, that's how you do it. You treat today's low as a low. If you're out of there, you've then also broken below the initial September high in ES, and that sets up a more meaningful pullback towards probably 56.65, 56.70 heading into non-farm payrolls, which also then could be a fantastic setup for the non-farm payrolls number, whereby if it is good, there's so much fear already baked in heading into it, then it becomes a more reasonable technical buying opportunity with a better risk to reward at the support trend from the August and September swing lows. Either way, though, my long-term exposure, I still own the 6,000 calls. I am perfectly content looking to add more deltas on pullbacks right now, because the two things that just occurred have not changed that make me so bullish. Anytime the Fed's cut rates, when the stock market's been within 2% of all-time highs with the S&P, the market trades higher. That's number one. And number two is the Fed just cut rates in a quarter where we did not start a recession. And momentum's good. 2.5% to 3% real GDP. Anyone would have signed up for that years ago. That is the case that we need to talk about. Years ago, when the Fed started hiking, if you said by October 2024, the unemployment rate's still going to be below 4.5%, inflation's going to be with a 2 handle, and stocks will be at all-time highs, no one would have believed you. No one would have believed that story. So yeah, Dylan, things that never happen are happening all the time, and we've never seen 6,000 S&P before. So I will be a bull. I'll be a believer. We got a lot of easing in the pipeline, guys. What
if the number comes in light, Papadopoulos?
I am out. Screw the U.S. economy. American workers are done. Okay, I'm joining.
Nobody's talking about the bond anymore. You're going to try to get out of this hour without a bond discussion of any kind?
We mentioned bonds, port strikes, and oil prices moving up. It's a drag in the short term. I'm not ready to roll my positioning, but for ZBZ4, I have my plan here. I'm just sticking to my plan. My plan is that 45 days to expiration instead of going 45 in, 21 out. We're going 45 out. and then we'll be going, 80 in and continuing to go out to the longer duration to buy time right now as the market perhaps experiences some conflict with the reflation idea. But if reflation's correct, bond's going to lose, but then everything else is going to do well. Silver's going to do well. Gold's going to do well, right? Stocks will do well. So yeah, this might take some lumps, but the vast majority of everything will be moving in the profitable direction. And if I'm wrong, then, well, hopefully it's deflation and not inflation outright. Otherwise, everything is screwed. And I got some splaining to do to my wife. Where did the money go? Why don't we have a house?
Nobody's talking about the first female leader in North American history, by the way. We didn't even talk about that.
I mean, we've known that, though, right?
Listen, it officially happened, okay?
It did officially happen.
You see the picture? It was a nice picture.
It was.
And then I know you own the market. You own the Mex. At least a couple months ago, you were EW.
Oh yes, my long-term view is very.
Are you still in there?
Not the short-term tactical, but certainly the longer-term allocation. Absolutely.
Anyway, you're trying to do your job, Chris. I'm sorry.
I'm really not.
Okay.
I'm not, because overtime's out of time, right? So this has been the episode for Wednesday, October 2nd, 2024. For Dylan Radigan in Milan and Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. We'll be back tomorrow, same time, same place, here on Tasty Live every Monday through Thursday, 4 p.m. Eastern, 3 Central. Although because it is Thursday, it is the abridged version. 4:30 Eastern tomorrow, it's the prediction trade. We're going to be having on Alan Lichtman. Have you heard of the 13 keys to the White House?
This is going to be so awesome.
He's our guest for this week, and he's fighting with Nate Silver, so we're going to use it as bait to get Nate Silver on for next week, hopefully. So join us tomorrow. Otherwise, after this break, Ilya Spivak's back with Macro Money. Stay tuned.
See you there, folks.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Shalaka. Man, he hit the boards hard on that. Wait, this is football, right? Woof. Woof. Take one. Hey, baby. I like the looks.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes.
Stock markets take a breather after yesterday's literal fireworks as Iran strikes Israel and the markets panic. But we are once again facing a busy macroeconomic calendar with data on the hopper tomorrow and, of course, on Friday that might bring us back to volatility. I'm Ilya Spivak, head of global macro here at Tasty Live, and this is Macro Money. We're going to unpack all of that here. We spent yesterday in the wake of Iran's attack talking about how that might extend into the release of the ISM report, which comes to us tomorrow. Today, we're going to take a look further afield and see how all of this fits with what is probably the biggest piece of event risk for the week, September's U.S. jobs report. So as ever, the question for us, not so much the academics of the situation, whether this or that definition of jobs growth or the unemployment rate or this or that is real or not real or well-founded or not well-founded. As ever, our question is about the market's reaction function. That is to say, if we were to get good or bad data, would stocks like or not like it? And so with that, let's consider where we stand and just do a bit of inventory about what's actually occurring here. So we know that the markets concluded in early July when the Fed began to signal that it's ready to cut rates, that they felt the Fed was behind the curve. And this much is readily on display when we take a look here at where the July top is in the S&P. We can see very clearly here that what happens is into that July top, you are looking at a building of Fed rate cut expectations for 2025. That's the yellow area that you see there, even as the outlook for this year, for 2024, in the gray there, is holding static. Now, why is this occurring, and why is it that when the Fed actually starts to talk about needing to cut, which occurs right here as Fed Chair Powell testifies in Congress to this effect, why is it that this is a downturn, and why is it that going in here, all these rate cuts are building out? You can see the overall tally of cuts is growing from here, where it bottoms at negative 76 basis points. It nearly doubles to the start of July, where this actually occurs. So why is that? Well, look at the way that economic data was performing. And we can see that from mid-April and into early July, where the Fed makes its announcement and very clearly bottom ticks this, which we'll get to in just a sec. In just a second here, the Fed says right around here that it's prepared to go. Notice what U.S. economic data is doing in this period. This is a Citigroup index that measures its performance relative to expectations. It's deteriorating, and as of early May, it's actually tending to undershoot relative to baseline forecasts. So the message that the markets are receiving is that the economy is doing less well than expected. So not surprisingly here, the markets say, well, until this point, the Fed is reluctant to cut. It's worried that deflation isn't happening fast enough. So the markets say, well, that means more cuts next year because you're going to realize that you're late because the economic data is already deteriorating. So when the Fed actually makes this statement here and gets the conversation going and focused on rate cuts being not just some future thing, but imminent, at that stage, the markets go, well, you've finally found the weakness we've been looking at for 3 months, and ostensibly you've recognized something that is so ominous that you've been compelled to act. And that's not good news for growth. And so what you see here is stocks come off as things get more dovish. Now, fast forward, and what you find is that some of those fears about the strength of the U.S. economy and the motivations then for the Fed to do what it was doing at that stage, that's turned out much more well supported. We just looked at this a moment ago. Notice since July, there's been some anchoring in the way that data has performed relative to forecasts. And then late August into September, the data actually starts to get on the mend. So much so that now it's actually crossed back over the zero line, suggesting that for the first time in 5 months, U.S. economic data is tending, or has now a tendency, to beat forecasts as opposed to undershoot them. This is a very different sort of environment. Now, notice here, if the markets were going to be concerned that the Fed is scrambling because they've already missed the window, this is not that narrative. This is a narrative of a U.S. economy that's looking stronger than anticipated. We see this in the latest batch of PMI numbers from S&P Global. Notice here, we've been basically holding at the high from May on this composite index. And of course, as ever, this is done in the logic of PMIs. So above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And what you find here is that you had a jump in U.S. economic growth back in May. That's here. And then for the subsequent 4 months, September included, you've held those levels. And that's because the service sector, the largest part of the economy, has shown up more robust and offset weakness in the manufacturing side. Just earlier this week, you began to start seeing the ISM version of the same kind of PMI data. This is from the Institute of Supply Management. So far, we've had the manufacturing numbers out. Here is the forecast for the service sector numbers due tomorrow. Now, we can see here the manufacturing side was a little bit lighter than expected, ever so slightly, 47.2 versus ultimately the consensus forecast at 47.5. But this is holding generally steady, and as we discussed on the show yesterday, the internals of this report actually looked quite positive. We saw the first decline in prices in a year, or this year. The last time we saw a decline in the price index was December of last year. We saw welcome signs in lengthening delivery times, in falling inventories, in the production index almost coming back to growth, in new orders falling at a slower rate. All of that seemingly suggesting that the under the surface dynamics below this number are generally starting to look a little bit better, even though at the surface you're basically holding steady. But weakness in manufacturing need not be a problem for the overall story here, at least from the Fed's perspective, because of course they're judging this at a very high macroeconomic economy-wide level, because as we just saw here, we had the deteriorating manufacturing from S&P Global. It was much more dramatic than what we're seeing here, where things are basically steady. But as long as services is going to be strong enough, the overall growth rate holds up. Services, of course, accounts for between 70 and 80% of the economy. So when we look for what's likely to happen here with the service sector index, as long as we get somewhere within the realm of expectations, much as we did with the manufacturing side, we again get a story of an economy that's steady. And again, looking back here, this is what steady means. Steady at solid levels. It would be much the same sort of conclusion here were you to land, give or take, as anticipated. At the same time, the Atlanta Fed's closely watched GDP forecast, although it's ticked a bit lower to 2.5%, still well above where consensus expectations are, and still looking at reasonably strong numbers. So we're still looking here at a situation where, despite the fact that we've downticked from 3 to 2.5%, if this is going to be right, then we will have grown 2.5% in the third quarter after a 3% gain, stronger than expected, in the second. That's not bad news. That's good news. That's relatively healthy. And of course, the markets have reasoned that we are going, against this backdrop, to be adding stimulus on top of an economy that is not doing poorly. And of course, what that means is that we are, in essence, looking at a situation where if the economy were shy of demand and the stimulus, that is rate cuts from the Fed, if that were to be something that was looking to counteract some sort of weakness, then we'd be looking at a story of relative positivity and a story of inflation coming up from low levels. That is not what the markets are saying. They're saying what these rate cuts that the Fed has now initiated going to do is stoke reflation and give us once again something that might limit the Fed's appetite for rate cuts. And you find this very clearly here in what we've seen over the course of September, as the Fed really started to signal that the move in last month's policy announcement will be to do the jumbo 50 basis point cut, which of course they ultimately delivered on. We see gold higher. We see the spread between the 10 and 2-year yield, the slope of the yield curve, steepen because long rates rise, even as the markets position themselves for a more aggressive Fed, because this is being viewed as reflationary. The expectation is, well, this will make for a need to have higher rates in the future. We see that the 5-year, the 10-year break-even rates here are at the highest that we've seen them since back in June. So all of this seemingly speaks to higher inflationary pressure. And then, of course, we posit that alongside now expectations that the Fed is going to cut by a further 50 basis points this year, once in November, once in December, ostensibly, and then another 115 basis points are baked in for next year. That's about 4 cuts and a 50-50 shot at a fifth, and ask ourselves, well, if the economy is doing strong, if we are looking at the markets endorsing that and saying, well, this will be reflationary then, given how much easing the Fed is now expected to do, if we were to get data suggesting that indeed there is a disconnect, well, then the amount of easing that the markets expect might be diluted. In fact, you already see a little bit of that starting to happen. And of course, you already see a little bit of weak need dynamics from the stock market against that backdrop. Now, of course, geopolitics is a part of that decline as well, and we'll take a look at it in just a second. But nevertheless, the creep is starting to occur. And if indeed this is now the way of things, and U.S. economic data has scope to beat relative to forecasts, then our expectations for what this U.S. jobs report that we have coming up on Friday, the expectations for what that is going to give us here, those might be a little bit light relative to what is actually liable to occur. Now, let's take a look at what those expectations are and consider where the markets are biased. And what we find, of course, is much as we did with the PMIs, much as we did with the ISM numbers, relatively steady conditions. Here is jobs growth expected at 145,000 non-farm payrolls rise. That's a barely noticeable uptick from the 142 recorded in August. Jobless rate seen holding unchanged at 4.2%. So steady as it goes here. But again, if this is now the way that things are going to trend, then there's upside risk here. And if there's upside surprise risk, well, then we may well see this move further upward. And of course, the operative question therefrom is, what does this mean for stock markets? Now, we already had a bit of upside surprise on this data this week. Job openings numbers higher than expected. 8 million versus 7.6 million, or 7.67 if we round it. If we round it, expected. The ADP measure of payrolls growth. This is a private sector estimate. 143,000 jobs added in September, according to their numbers, versus 120,000 expected. So there's already some signs that jobs data is outperforming forecasts. If that's what we end up seeing here, and these numbers register higher, this may well shift into a still less dovish setting because this starts to look still more reflationary. And now the question, does this pose a risk for stock markets? Should this be something that we are concerned about? And here, the main sort of consideration, as you might anticipate, comes from sort of relative positioning. It isn't so much that it is bad news that the economy would be adding more jobs than expected. That's certainly not the case. It is more a question of whether the markets are prepared to take incremental further exposure on risky assets on that basis, and whether that is something that is going to be an upside motivator or a downside motivator, not so much for the economy, but for risk taking. With that in mind, it is important to consider, as we have earlier this week, when Fed Chair Jerome Powell came out and said pretty much this to the markets and said, we don't need to go fast on rate cuts. We're facing a dual risk, not a singular risk just to the jobless market now. We're not singularly focused on labor conditions the way we were singularly focused on inflation from 2021, 2022 through basically to the middle of this year. No, we are looking at a balanced set of risks where we don't want to let inflation reaccelerate, and we don't want any further pain to labor market conditions. So we are cutting, but by no means are we in a hurry. And of course, he asserted loudly, as a matter of fact, that the Fed doesn't think that they're late. They don't think they've fallen behind the curve. And when those comments came around, stocks didn't like it. Now, one reason why that might be is, as we've talked about earlier this week, this is a chart from The Economist, courtesy of data from the IMF. We find that this rate hike cycle has been unique relative to every single other one since basically the advent of the modern financial system, when the dollar depegged from gold in the early 1970s. Take a look at this chart. This represents the change in the Fed funds rate. So this is rate hikes. And then this is the change in interest payments made by non-financial firms, so non-banks. In other words, this says when the Fed hikes rates, companies have to pay more to service debts because rates are higher, the cost of money is higher. That's what slows the economy. That's what brings down inflation. This is why rate hike cycles tend to be accompanied by some degree of economic weakness. Notice how this current rate hike cycle vastly differentiates from every other one. Whereas payments on interest by the private sector increased in every other instance, or at least stayed steady. In this case, they actually fell. Now, how is that possible? Well, we had rates very, very low and lots of non-traditional stimulus like open-ended QE in the wake of COVID. At the same time, the global economy was shuttered. So companies didn't really have a whole lot of money to spend, relatively speaking, with everything offline, but lots of opportunity to borrow for next to nothing. And so the cash reserves that they've built up were substantial. That's how you now end up with a situation where even though rates have gone up, interest outlays have gone down. Because companies are flush with hoarded cash after the pandemic. But those loans tend to have a refinancing window of 3 to 5 years, which should bring us to right about now. If the cost of capital starts to reset on these loans as we go into next year, that would be about a 5-year window, then even as the Fed cuts rates, companies are facing higher borrowing costs. The Fed would need to essentially cut back all the way to zero for that not to be the case, even as it's cutting, because, of course, the rates that were available in the heart of the COVID pandemic were essentially free money. And we are very much not there, even if the Fed cuts twice the amount currently expected next year. So what we have here is a palpable concern that as these refinancings occur, if the Fed were to cut less, they would present a greater risk. And perhaps that is why the markets are looking at the rate cut tally and saying, we prefer more versus less. So if this data is going to surprise higher, as has been increasingly the case, then the S&P 500 here might get a little bit soft, just as it tests support at about 57.21, having pulled back off the high just above the 5,800 level. And if we can push through here, and then also the highs that we see here going back to August at 56.65, well then this is going to look not like a pullback, but like capitulation and a reversal downward. And that is macro money for today. As ever, we are here every Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things are likely to go therefrom. I am on every Wednesday with Victor Jones for The Price of Truth. That includes today, certainly, so come check us out. Back on with Chris for Futures Power Hour on Fridays, on with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting on the platform formerly known as Twitter at Ilya Spivak. Thanks very much for joining. See you soon.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
If you missed the live show, here's our cherry on top weekly recap.
We also went to Universal Studios, which was really fun in Hollywood. So we drove to LA with our rental car. You can't do that if you don't have a rental car, can you? No, you can't.
Drove from Vegas to LA.
Well, actually, my wife drove because I had food poisoning. So
I have heard it all. Heard it all. I am done. I am done here.
You live in Florida.
Yeah.
Don't they have Universal by Disney? I know they do.
That place sucks. No. They don't have Super Mario World, and they don't have the trolley tour. They don't. Can you just listen? They don't have the trolley tour, which was my favorite. That was pretty cool.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, my quant, Glenn.
I'm back. Thanks for having me.
Yeah,
again.
welcome back to the show, Glenn.
Thank you. I know now that we have Frank back on Mondays, he's a real heavy hitter. So I appreciate you still letting me up to bat.
It shouldn't take away from your abilities, though.
Okay.
He is a heavy hitter.
He is a heavy
Shout
hitter.
out to Frank, though I saw he left his computer here at work. Not quite sure how he's going to work from home all night if he left his computer here. But
It is a mystery.
If he's watching, we'll talk to him tomorrow morning.
Forward
First
him a
thing.
couple emails.
Yeah.
On company culture.
How you doing?
I'm doing pretty well. Middle of the week. We've had some exciting storylines financially. Good to keep track of. Been hitting the gym. You've been hitting the gym.
Yeah, I saw you down there.
Harder than I have.
I saw you in the gym. I applaud the effort. I think though that you're missing some equipment or some apparel, I suppose. We need to get you a tank top.
Yeah.
Okay.
Yeah. For context, I'm in the gym, trying my best in a little quarter zip, conservative quarter zip. And
Very
then,
conservative.
And then Mr. Grace comes
Too
down
conservative.
there in the bathroom locker room for 0.2 seconds and boom, out in a very tasteful running tank top that you have to see to believe.
Yeah.
And instantly, made me feel things I hadn't felt all day. I was maybe a little insecure.
We're going to relaunch the Tasty Crypto store.
Okay.
We're going to bring it back. We're going to have one item, and it's going to be a very skimpy tank top for men and women, all sizes.
Well, you
need a tank top.
You will have at least 5 pre-orders.
Absolutely.
That I can guarantee you.
Absolutely.
And then if there are any pictures of you modeling it, that might be another 5 from me alone.
Yeah, they'll be $45 a piece, and I will be the model. Glenn, Lone Sophos in the chat, just got out of the gym as well.
All right.
Hell yeah. If you are watching this on YouTube, which you should be watching it on YouTube because that's the way that you can interact with the chat, we are live. Hit the like button, subscribe to Tasty Live, the channel, but I guess do one better. Get over to the Tasty Crypto YouTube channel. That's where we post all of these videos after they air. Subscribe to the channel over there. Help us out a little bit. Keep us employed for now, I suppose, if we get more subscribers, more likes, more views on the videos here. But if you are watching in the chat, shout us out. Let me know, I guess, what you're up to. We got some people just getting out of the gym, just getting done with a pump here for Tasty Crypto. Not quite a pump in the market today. We're going to talk about that in just a second. But I've got something special planned for you, my friend.
Oh, what could that be?
Well, we haven't done this yet. We've alluded to doing it on the show. We always run out of time because we waste our time talking about this BS.
Waste.
Well, we're going to do a Tasty Crypto platform demo. The browser extension, the wallet that we've built here on the Tasty Crypto side. We talk a lot about the capabilities that it offers. We've shown some of the things that you can do with it. I want to do a little bit more of a deep dive today, Glenn, and show everybody how to install it, how to set this up, how to access, again, some of the on-chain opportunities that we talk about. That said, also check out the mobile version of the wallet. So we're going to walk through the browser extension here on the show. We've got some stuff we're working on so that we can start to show this on the mobile app on air. We just don't have that ready yet today. The mobile app is a lot more fully featured.
Oh, yeah.
I would go so far as to say it's better. It's a lot better, not to take away too much from the browser extension, but a lot more capabilities on the mobile app. So check that out if you're interested. Before we get started, though, a couple other housekeeping items. Sign up for the email, please.
If you haven't already, there you keep them coming.
Yeah, subscribe.
I had a little. Can he keep it up? When you're on like a really big hitting streak.
Last week was pretty good.
Can you keep it up? And yes,
Not
you
gonna lie.
actually can.
Yeah.
Might be the best crypto email you read all week.
Oh, well, thank you. And we're going to talk about this as well. But through the browser extension, through the mobile app here, the Tasty Crypto wallet gives you the ability to connect to Tasty Trade. So if you have crypto at Tasty Trade, you want to transfer it, you want to withdraw it on chain, do something with it, then you want to bring it back, exchange it, you can use all of that functionality. You can access that functionality here in the wallet. And if you were not familiar, tastytrade offers crypto for spot cryptocurrencies. I think it's got a great service, personally,
For sure.
in terms of the offering. So check that out. You need to enable crypto trading on your tastytrade account. So if you haven't enabled crypto, you need to enable crypto. That'll give you access to the offering, and then you'll need to enable crypto transfers as well to withdraw it. But once you do all of that,
Okay.
then you can log right in the
You're
Tasty
off.
Crypto app
You're running.
and connect these things together and do whatever you want on chain.
Synergistically.
Exactly. So we're going to talk about that in just a second, but Glenn, before we do, let's just take a quick look at what's going on in the market here. It was all good just a week ago.
Do we have to?
This is a fascinating pattern. We've
It's
talked
so bizarre.
about, we've talked about the 50 to call it 70 range. It's more like 52 to 68, but let's 50 to 70. And month after month now, we've seen the exact same price action to start the month, regardless of what the catalyst is, right? We could point to maybe some geopolitical risk here as one of the drivers over the last couple of days. But if you go back to, and I've got the chart over here on my other screen, if you go back to basically August, same thing, up there, 68,000, dumped all the way to the bottom of the range, recovered, end of the month, dumps all the way back to the bottom of the range, recovers all of September, best September for Bitcoin prices since 2013, I believe.
Really?
And here we are again, start of October, Uptober, we thought seasonality is supposed to kick in. We did a whole show on that on Monday. Go check it out on the Tasty Crypto YouTube channel. But here we are, we're dumping, man.
Well, yeah, maybe Uptober needed a little softer
You gotta
start.
get in at a little bit lower price.
Yeah, we're letting everybody aboard.
Yeah, I like how you're thinking about that.
You scoop back around, pick up the kids you left behind.
Yep.
And then it's Uptober from there. But yeah, no, a very interesting point you raised that, yeah, every time we look at it, it's like you can kind of, oh, well, this is kind of a unique storm of conditions, if you will. But yeah, month after month, kind of the same story coming out of a lot of these major crypto coins.
Yeah, holding on to 60 for now. We'll see if that holds overnight and into tomorrow. You do have some economic data coming out this week. Obviously, you got the jobs report. But 60,300 spot price, a little bit higher here since I put these slides together. ETH 2370, Litecoin down, Bitcoin Cash down, Solana down. No surprise. This all kind of trades together.
Except I am surprised at the consistency of this ETH outperformance to the downside. It has to be, it's not just a Bitcoin dominance. It can't be.
Well,
What's
look,
going on?
I mean, ETH has a much higher volatility. I think when you look at Bitcoin dominance, you look at just where flows have been. We'll use the ETFs as an example, which we were just talking about. Very big flows last week into ETFs. Seeing a lot of that just reverse here to start this week. But ETH needs to, I think, it has to find itself almost, right? It doesn't really have the same narrative in terms of what's driving the institutional flows into these ETFs, right? You've definitely seen an increase in popularity there. Obviously, we can measure that by looking at the capital flows. I think over time, at some point, you will see some ETH outperformance. We might also see that story center around Solana outperformance of ETH. I think this is going to, again, take some time to play out. We aren't even 200 days post Bitcoin halving in April. But I largely just chalk this up to a much higher volatility than what we see in something like Bitcoin. And so for now, on the downside, obviously those moves are going to be larger. Should we see that script flip, then I would imagine you see pockets of outperformance at time, right? At least that's what we've seen in the past. So keeping an eye on that. But it has been, again, Bitcoin over everything. A little bit of outperformance here recently when we look at Solana, and certainly when we look at Solana versus ETH. You can see that's up at the bottom of the screen, up 11% on the month. But yeah, reversing the gains from last week here, red on the screen for the week, and has been, to start the week over the last couple of days. But that said, we talked about how structurally not much has changed here. You're getting a bit of a bounce. The trend on a weekly basis, a little bit longer time frame, obviously, is bearish, has been bearish for some time. A little bit of pop in volatility here as well. So if we just look at the expected moves, on a forward basis here over the next week, what's a one standard deviation move given these vols and the spot price? Bitcoin looking at 46.90 takes you to 65 on the upside, 55.6 on the downside. ETH 207, still above 2,000 on the downside there, but
Close.
A lower high of 25.77. And again, not able to break above that 2,700 level.
Just
we talked
touched it.
about this,
Yeah.
right?
So close.
So that trade, if you've been really just positioning around this range and buying, larger dips, and by larger dips, I mean somewhere around the 10 to 15% moves to the downside. If you've been buying those, I mean, for now, you've been rewarded. You just have to take profits when you have them at the top of the range.
Sure.
But we're right back where we were, kind of mid-September right now. We'll see if we push lower or not. What do you think? Do you think 50 is in the cards again, or at least a 5 handle here on the Bitcoin spot price?
I don't know. I mean, maybe this week a lot of international news, but domestically, I don't know if what will send people into a panic. I know we can't chalk it up to just one jobs report or one economic data release, but I mean, if the storyline comes out that we really aren't cutting as much as everybody thinks, maybe some of this is people are selling their Bitcoin. They're definitely not getting back into it. I think maybe we do see some 50, because earlier this year we definitely dipped 52, even got below 50. When was that? Earlier this summer?
Yeah, I mean, look, we had the kind of volatility explosion to start off the month of August, and then prior to that, over the summer, over the weekend, we did see at times a heightened geopolitical risk, missiles flying in the Middle East, and we saw, I think at that point, there was an opportunity to buy things like Solana underneath 120 in the teens. You saw very quick moves in illiquid markets at times. It's proven to be an opportunity to buy the dip. We'll see if that's the case here. I am hesitant to step in on that very first move, given just the research that we've put together and what we've shown very, very often, and it speaks to or highlights the volatility that everybody's aware of in this asset class. Very often it moves 10% or more in a week. Quite often it moves 20% or more in a week. Those levels, though, tend to be kind of the area where you're a bit extended. Obviously, you have seen moves in the past where there's a lot of forced selling and you get that 20% move that turns into a 40% down move, and you look like an idiot if you bought it at 20%. But quite frequently, those moves, the larger size moves, are actually to the upside. Right? We see much more of those than we do big downside moves. But your big downside moves around 20% typically present buying opportunities where prices are a bit higher 1 to 3 months afterwards. And we'll run through that research again. Again, we don't have a ton of data. This hasn't been around that long, but of the data that we have, that's how it's traded, and we'll go off of that for now.
Yeah, I mean, if you're looking, we talk a lot about those momentum indicators and how they've been flashing from neutral to red to neutral.
It's been super choppy.
If we're talking about the long term, though, these monthlies really haven't changed from green. Does that mean, if you're strictly following these indicators, that on a long-term basis, every outsized down move is a buying opportunity?
That's the way. That's the way that I use it, at least. And it doesn't necessarily mean that it's a buying opportunity. Obviously, these are backward-looking, and there could be further downside. But just to give yourself an indication of, are we in a bullish or bearish trend over longer-term time frames? If I'm in a bullish trend and I'm getting these big moves and nothing's changed, I might look at that as simply, okay, if my view is that this is going to be higher at some point in time, this is on sale. It presents a better opportunity than it did maybe a month ago or 2 months ago, right? When that changes, though, that's also a very important signal to pay attention to, because if I see something, and it depends on how quickly this moves too, if there's a lot of momentum behind it, but if we very quickly shift or transition, whatever the term is that you want to use, from that bullish environment, and we really skip over neutral, there's high volume, a ton of selling pressure, and on a longer term time frame, like a monthly, if you start to see it move like that, get out of the way. You might get that dead cat bounce, and quite often you do get a little bit of a bounce there. but it tends to be the beginning of what is usually a more drawn out trend one way or the other. And so
Gotcha.
when we saw these all flip to the upside, it was a good buying opportunity at that point in time. And that was back, almost, I want to say, all the way back to kind of the beginning of the year.
Yeah, crazy.
Right. And so if you were able to follow those signals then, and that can be slow moving at times, backward looking, but it's kept you in that trade to these levels. Now you're obviously off of the highs, but we're still much, much higher than we were when that trigger popped up here. But
definitely.
We got 13 minutes, Glenn. Let's
All
talk a little bit about the tastycrypto wallet here today. So if we can jump over to our browser view, this is where you go to download the extension. If you're not familiar with this, it's a Chrome extension. So you got to go to the Chrome web store, search for tastycrypto, or go to tastycrypto.com, click on the download button. It'll give you the landing page, and depending on if you're looking at it on a web platform or on your PC, you'll get the web app. If you're on a mobile app, then you'll obviously get the mobile download.
Cool.
I have installed this, so it says remove from Chrome, and you can see that I've installed it because it's in the upper right corner. And if anybody wants to check out the tastycrypto website, we'll just go over to that really quickly if I can spell it properly.
5 stars on the extension.
Yeah.
It's pretty good. That's up there. I don't think they let you get to 5.1. You got to try really hard.
I think 5 is the ceiling.
Oh, all right.
For now.
Well done. For now.
But this is the tastycrypto website. So again, this is where you can also access it. You can see here, available in the Chrome web store. But I have it in the browser, and I just want to walk through some of the capabilities here.
Yeah.
If you don't have this. Do you have this on your browser?
I have the mobile app.
You got the mobile app. Okay. So you're in business. You've got the more powerful version of this. They told us we're not allowed to make recommendations on the show, so I can't recommend that anyone go and get the mobile app. But if I had to pick between the two, I would probably go mobile.
You go mobile.
What's nice about this is you can have both.
This is, one password, one login.
It doesn't exactly work like that. That's an important point to call out. So what happens here is you have to set a password for the application itself.
Okay.
Now, this is not your seed phrase. This is not how you recover your wallet. That's the 12-word seed phrase that you're going to have to write down when you set up the wallet. Don't lose that, because if you lose that, you also lose access to the application. There's no way to recover it. This is self-custody. I would say it's similar to you've got a safe. In this case, it's digital. You lose the combination. I suppose you could get out a jackhammer or a blowtorch or something. You could probably get into your safe. You lose the combination to this, there's no getting into the safe.
Which is the seed phrase.
That is the seed phrase. Not trying to scare anybody. The password is just for the application.
And that you could theoretically retrieve?
You could lose that. As long as you have the seed phrase, you're okay.
Okay.
Don't share your seed phrase with anybody ever, because if they have the seed phrase, they can, in theory, access your crypto, do whatever they want with it, and not good.
Yep. Even without that application password.
Yes. Yeah. Application password also, there's a vulnerability there. If I gave somebody my password, just like if I gave somebody my password to my bank account, this is decentralized. There's no one you can call up that's going to help you recover your password or anything like that. You're kind of on your own here. It's the way the technology works. There's some advancements that are coming that we'll obviously look to implement at some point, where you can abstract the seed phrase a little bit. On the mobile app, you can upload it to the cloud, and you can secure it via your biometric, Face ID, fingerprint, whatever it is.
Interesting.
So there's, again, a little bit better experience, in my opinion, on the mobile app. We've spent a ton of time on that. But this gives you a good chunk of the same functionality. So all that said, the passwords don't translate between the different apps. What's stored or accessible
Password
here.
for web browser extension.
Yeah, so what I don't want people to think is that, okay, if I set this up on my browser extension, and then I download the mobile app, and if I just enter the password into the mobile app, it's going to open it up and give me access. No, that's not how it works.
You need to
import your seed phrase.
Yep. Okay.
Exactly. So real quick, this is what it looks like. And the browser extension gives you access, or gives you a wallet address, private key, on the Bitcoin network, the Ethereum network, and now on Polygon.
So you can create a wallet through the browser extension?
Yes.
Or import?
That's correct.
Can you do both?
You can, yeah.
Okay.
And this will give you the ability to manage multiple wallets in one application. So you can see that we have one imported in here. If I wanted to create another one, I could do that. I could change the name of it. I could delete it. but you can manage multiple wallets. So maybe you have a wallet where you're specifically using it for something in DeFi, liquidity pools. You have another wallet that you use for just holding some balances of tokens, whatever it might be. You can manage multiple wallets here, which is nice. That said, the mobile app also gives you access to Solana, which is not on the browser extension yet, coming soon. And very soon, in the next update, the mobile app will give you access to the Base network from Coinbase.
All right.
Do a lot on there as well.
Cool. Yeah, that one's growing.
Yeah, a lot of networks. We continue to add. We've got more layer 2s coming, Optimism, Arbitrum. So in the next couple of weeks, you'll see a lot more there.
Nice.
But this is going to let you view balances very simply, very straightforward. You can view your balances here that you hold across these different blockchain networks. So you can see we've got a little bit of Bitcoin, got some ETH, some other, as you might call them, shit coins, a little bit of USDC. You can see there's some USDC on both Polygon and on Ethereum. So depending on the network that it's on, you'll get a little icon or indicator there. A couple other basic things. You can view NFTs, display NFTs here. You can view the activity associated with each one of these chains. So you can see that I've transferred some crypto from tastytrade, have received some NFTs, received an NFT here from creating a liquidity pool. So you can see all of that here in your activity, and you got the ability to filter and that kind of thing. I mean, it's pretty straightforward. Again, the browser extension does not do as much as the mobile app, and we'll focus on that here soon.
But if you're doing stuff with this wallet address in other arenas, on other platforms, you can still see all your activity.
Absolutely.
From that wallet address.
Yes.
Here.
And two things I want to show. Everything there. Yeah, two things I want to show here in terms of how you can use this, right? So earlier I mentioned that you can buy crypto at tastytrade, the brokerage. You can buy crypto at any brokerage or exchange. And if that exchange, which tastytrade does, gives you the ability to withdraw it, you can send it to this address that you control, and then you can use that crypto on chain. You can use it to create a liquidity pool, to stake with a decentralized staking service like Lido. You want to buy an NFT, you want to swap tokens, you can do all of that.
As opposed to withdrawing, meaning just converting to cash.
Exactly.
Like
Yeah, this allows you to stay on chain, stay in the crypto, go and do your crypto stuff over here on chain, take advantage of whatever opportunities you perceive.
But do more than just buy and sell.
Exactly.
Amazing.
And then move it back, use the exchange functionality at the brokerage or whatever exchange that you prefer to use.
So you can send it back to the brokerage.
Yes. Yep. Yeah. The deposits are available.
Okay.
Withdrawals are available. We have 4 tokens at tastytrade that are available. tastytrade is adding more features as we go. There's a lot that's in the works. But let me show you just a couple things here, Glenn. I think you're already familiar with this. But let's say that I want to access a different token that's not available through the exchange I'm on or the broker that I'm using. As long as I have ETH, I can swap that into USDC, or I can swap it into any other token. If I have USDC, US dollar stablecoin, I can buy other tokens on chain. The way that you do that is you click on the swap button and swap from, in this case, let's swap from USDC. We've got $15 worth of USDC. We've got a lot of nice improvements that are coming to this interface as well. It'll make it a little bit easier to use. But you can see the USDC that I've got $15 worth. If I want to buy another token, I can search for it, or if it's one of these that pre-populates, for whatever reason, if I want access to that, I want to speculate, I just think it's an interesting idea, or I want to hold a meme coin, whatever it might be, you can do that here through the platform. So maybe I want Arbitrum, another layer 2 network on Ethereum. You can swap in terms of the dollar amount or the overall token amount. And then once you do that, you're going to review the trade in the same way that you typically would with your brokerage. And this is going to utilize decentralized exchange to conduct that token swap. So we'll do this a bit more on the show going forward. I wanted to show that for a second in terms of capabilities. And then the other thing that I want to show you here is how you can add crypto very easily. And what I mean by add is you can transfer it from your brokerage account at tastytrade. If you click on add, we have a couple integrations. You can buy crypto through Transact. That's a service that I believe is powered by Zero Hash. You've got PayPal. So if you have a PayPal account, you have a crypto balance with PayPal, you want to move it out or to this wallet address, I suppose.
So you can circumvent the brokerage.
You don't have to use tastytrade.
You can just...
I like using tastytrade personally, but we have some other service providers in here. If you have crypto with tastytrade, you can log in. I've already logged in.
Nice.
Once you log in, it'll show you your accounts, And then once you go to the account that you have crypto in, and again, we've got some improvements coming to this. I get that it's just the account. You know, how do I know which one has the crypto in it? We got some nice stuff that's coming. But once you select that account, you can see the two different balances that we allow you to take control of with the Tasty Crypto wallet. Tasty Trade will give you the ability to withdraw any of the 4 tokens. So Bitcoin, ETH, Litecoin, Bitcoin Cash. This wallet does not support Litecoin or Bitcoin Cash at the moment. So it's Bitcoin or ETH. If I click on ETH and I want to transfer $5 worth of ETH, since I'm logged in, and it might ask me here to use my authenticator. So let me just take a look and
it's a good precaution.
And open this up. Yeah, so there's the 2-factor authentication that's involved. But let's say I want to move $5 of ETH on chain here, and I will enter the authentication code so we can see this work in real time. Once I do that, it's going to initiate that process. I could transfer it. So you're going to pay that network fee or the gas fee there, right? And that's going to be something that's variable. It's going to fluctuate depending on network congestion on Ethereum. But I have now initiated that transfer from the brokerage to my wallet address here that I control through the Tasty Crypto app. I can view this in the activity, so you can see that transfer's in place. Should happen in the next minute or so. And then once that happens, you'll see my balance is going to increase with Ethereum here. And I can then go to something like, let me show you one more thing here. We'll go to Uniswap right before we wrap this up. We got a couple minutes. Go to Uniswap, and I can connect to the browser extension. Well, they've moved some things around on me here. So sign in. I clicked the wrong button. Click on Wallet Connect. This is how you can then use that Ethereum that I just transferred, right? So if I click on Wallet Connect, it's going to give me a code that I can copy. I copy that code just by clicking on this. And if you have the mobile app, you can just scan this. And we've also got some integrations we're working on where this on the mobile app will just happen automatically. So, you know, a little bit of a process here, but we've got some improvements coming to it. But if I copy that address and I go back to the self-custody wallet, the browser extension, I click on this link in the upper right corner, and then I paste that address in here. This is going to allow me to sign a transaction that will establish that connection, okay? Now, previously, I have set some stuff up in here. We've talked about this on the show. On the Polygon network, because again, this is multi-network, which is nice about it. We've got a ton more that are coming. I need to switch to Polygon. When I do that, it should load up here. Might need to just refresh the page. But when I switch to Polygon, it should show me, and it's showing me now, the pool. Now, the pool's out of range. Obviously, the price went down quite a bit here today. But this is the pool that I set up. You can see the fees that we've generated off of it. The total liquidity is down a little bit from where we started. But you can do all of this with the wallet right here on the browser. So if you have crypto at Tasty Trade, or you want to buy crypto at Tasty Trade, or through PayPal or another provider, you can withdraw it after you've purchased it, withdraw it to the address you control on chain. Now you can do things with it, and then you can reverse that flow. Let's say that I want to sell the ETH that I have, the fees that I've generated. I want to turn this back into fiat currency. I want to put it back into my bank account. You can do that through the brokerage. Yeah, I mean, I don't know why you'd want that fiat trash, but you know what I'm saying.
Yeah, super cool.
So yeah, so that's a quick demo. We've run out of time. Victor Jones is up next with the Price of Truth. If anyone has any questions about this, has any feedback, feature requests, anything at all, love to talk about this, send me an email, ryan@tastycrypto.com. Hit us up, support@tastycrypto.com. Hit us up on Twitter, but get a hold of us. Let us know what you think. We really would encourage some feedback. You know, it's still kind of early stage. We got a lot of cool stuff that we're working on. That's coming soon. And also make sure to check out the mobile app. It's got a lot more in it that I think everybody's going to like. But that's going to do it for our show. Glenn, as always, thank you for joining me here today, my friend.
Thanks for having me.
I'll be back on Monday with Frank. Until then, I'm Ryan.
I'm Glenn.
Peace.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on tastytrade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the tastytrade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock